Hello everyone, myself CA with Grover. So I'm a qualified practicing CA and I'm going to take care of your examination paper called CA Final ka Advanced Auditing Assurance and Professional Ethics. So as you all know that we are here for the marathon of almost 35 to 40 hours for this particular examination. First of all, let's understand about this examination, what this examination is all about. The name of the examination itself says that it is Advanced Auditing and Professional Ethics, along with the word called assurance has been added in between these two things. First of all, though, we need to understand what was the purpose of bringing some changes in this examination. Why? Because let me tell you one thing. I qualified my CA final in the year 2012. At that point of time, we used to do the various set of standards which used to be called as the standards on auditing, standards on assurance engagement, standards on related services, standards on review engagements, right? But within in the last 7 to 8 years, these standards were eliminated from your final portion. I don't know why, what was the reason the icai had to remove this from your portion, but let me tell you one thing, that was a very incomplete knowledge which was getting delivered at the final level. So again, in the new syllabus that is starting from the May 24, icai has reintroduced these different types of standards. So in these different types of standards, what the icai is going to ask you is what it will let you know कि boss, assurance is not always going to be a reasonable assurance. It is not always going to be an assurance which we always deliver on auditing subjects, right? Assurance can be of different levels. Say for example, if you are going to get engaged for the assurance engagements of prospective financial information. Suppose one client comes to you and he has prepared a prospective financial information. Say, for example, project report is there where he has prepared the projected financial statements. So he wants you to give an assurance to a financial institution, to the lending institution, yes, whether his prospective financial information is looking prominent or not. At that point of time, you are not going to apply the SAs, the standards on auditing. You are going to apply the standards on assurance engagements, right? Now, let's say, for example, there's another client, another company, which comes to you saying that, sir, our financial statements are ready and the audit is going to take place in the coming 15 to 20 days. Can you please review our financial statements so that we can understand whether our financial statements are looking as per the applicable financial reporting framework or not? So that's why at that point of time, as a practicing CA, you are being hired neither for any auditing assignment, not for any assurance assignment. You are being hired for what? You are being hired for review engagement. Which engagement, everyone? Review engagement. Is it clear to all of you? Now, at that point of time, when we are engaged for the review engagement, we are not supposed to give the reasonable assurance. We are supposed to give the limited assurance, which is very much lower as compared to the reasonable assurance. क्योंकि reasonable assurance is the part of an auditor. Our part is only to review the financial statement, not to audit the financial statement. So that's the reason SREs have been introduced. Which have been introduced? SREs has been introduced, standards on review engagement. Then we have the standards on related services. What was the purpose behind that kind of engagement? So as you all know that there are different types of engagement. Sometimes we are being hired for auditing services. Sometimes we are hired for assurance services. Sometimes we are hired for review services. Sometimes we can be hired for compilation engagements. Which engagements? Compilation engagements. Suppose a chartered accountant in practice or a member in practice is being hired for what? He is getting hired for preparation, helping the entity in preparation and presentation of financial statement, assisting the entity in preparation and presentation of financial statement. For those kind of engagements, neither you are going to use SAs, nor you are going to use SREs, nor you are going to use SAEs. You are going to use SRS, standards on related services. So different types of assurances are required at the different level. That is the reason the word assurance has been added in your portion. I hope you all understood. Now the name itself has been changed to Advanced Auditing Assurance and Professional Ethics. Already it was advanced auditing and professional ethics. What was the reason behind adding the assurance? That is my first perspective I would like to clear with you, right? So that when you are coming into the zone of this marathon, so that you can understand ki, boss, we are not doing only advanced auditing and professional ethics. We are doing advanced auditing, assurance and professional ethics. I hope you all understood, right or not? Now, the next thing which I want to let you know is that there is a marathon of this 35 to 40 hours. What I'm going to deliver it to you. First of all, you have to understand very fact that I'm going to cover almost your 100% portion. There are only 2 to 3 topics, like say for example, audit planning chapter or some of the 200 seating standards, which I'm going to let it on you people to do it on your own. Remaining 99.99% of the portion I'm going to deliver in this 35 to 40 hours. Now, in this 35 to 40 hours of marathon, how we are going to deliver you? How am I going to deliver you? I'm going to make you understand कि boss, this subject, which is one of the nightmare of the students. Now, let me clarify you कि why students think that कि this subject is a nightmare. Why they are unable to clear this subject in the very first go? Because the approach towards the subject is very much different. We think that it is a theoretical subject, but no, my friend, it is not a theoretical subject. It's very much practical in nature. It's not at all a theoretical subject. You can't go just by like reading the theory which we used to do at intermediate and foundation level and proceed for the examination. Today, icai is competing with the world's largest accounting bodies called AICPA. So it is a bloody requirement that icai has to match its standards according to their requirements. So that's why RCI also, in the last 6 to 7 attempts, if you'll see, the standard of asking the questions in the examination called auditing has been raised. I don't know about the other subject, but I can guarantee you that when it comes to auditing subject, the standards have been completely raised. Now they are no longer asking you straightforward questions. They are asking you the interpretational questions, analytical questions, right or not, where they will deliver you the situation. You have to pick up the situation. This situation is of SAEs, SREs, SAs or SRS, or is it a SQC relating to your quality control? You have to pick up a situation, and once you picked up a situation, you have to deliver the answer accordingly. Am I getting clear to you? Right or not? So in this 35 to 40 hours, I'll make you understand how we can conquer this subject called auditing, advanced auditing, assurance, and professional ethics. Right? Now, how we are going to proceed with this? Before the beginning of every topic, I'll make you understand what are the contents inside this topic, what we are going to cover. After that, I will ask you some set of questions in between also, which you can deliver the answer in the comment box, and I will give you the answers for the same at the end of the video. Am I correct? Now, next important thing which you have to understand that, boss, you have to be very much regular in this marathon. It's not like that ki you just switch on a marathon and you are not feeling like and you are doing another subject. Once you are into the zone of auditing, be completely into the zone of auditing. Complete this 35 to 40 days of marathon right away. Now, benefits of this marathon is one time before the examination, you can go through it, and during the examination also, you can go through it. Almost before, like, say, for example, before the auditing examination, you will be having the another examination, right? You come by the evening 6, 7:30 at your place. Am I correct or not? Switch on the marathon. After taking 2, 3 hours of rest, switch on the marathon by 9 or 9:30 or 10. Right or not? Then completely up to 1 or 2, just go through the marathon. 4, 5 hours there itself only will be completed. Next day, complete whole day will be there with you. Just proceed with the marathon. We can assure you the quality which we are incorporating in this marathon, you will not find it anywhere else. And that's what I'm going to deliver to you. 100% coverage, I will let you know, and I'll make this subject very highly smooth for you. That the fear you have for the subject called auditing, ki sir, we will not be able to clear this, we will not be able to understand this, we will not be able to retain this. I will make you retain all the standards, I will make you retain all the things which you need to carry forward to appear in this examination and clear it in the first go. I hope I made myself very clear. So let me make you understand what way I'm going to deliver you. So this is the coverage. You can see that we are definitely going to cover a very humongous topic called professional ethics, followed by the digital audit, which is a brand new topic which has been added. And don't mistake it by understanding that this topic is nothing but the new version of the subject called auditing in automated environment. No, it is completely different. So many topics have been added. Blockchain, there was no blockchain. NFT has been added. Non-fungible tokens have been added. RPS, robotic process automation, like that. So many new tools have been added. Then we have a ESG audit, which is basically a mix of environmental, social, and what do you say, governance audit, where they will be letting you know that in India also people are becoming aware of being eco-friendly, aware of becoming greenhouse gases. People are becoming aware of, social responsibilities, the corporates which they have to deliver towards the society. The journey started in 2009 and finally in 2022-23, the ESG audit has been made compulsory. Why these developments you need to know so that you can deliver the main thing in the examination. You have to understand one thing very clearly. I hope you are understanding everything. Next thing, we will be understanding the different types of standards. We will understand SQC1 in your chapter called quality control, followed by standards on related assurance, review engagements, which we have a review of financial information. One chapter is there. Then we have standards on assurance engagements. We have the assurance of prospective financial information and other assurance services. We have standards on related services. So what about the essays? Essays are already the body part of your subject. So I need not tell you separately. Essays are being delivered or considered in the different chapters. Like we have general principles and general responsibilities of an auditor, risk assessment and internal control. We have audit evidence. We have completion and review. Different chapters are there, which includes your standards on auditing. Right? After that, we will be doing a very important chapter called investigation, due diligence, forensic auditing. We will do the audit of NBFCs and banks. We will do audit of PSUs. We will understand internal audit. In this particular standard, in this particular chapter, I will deliver your total 600 series. We will also understand CARO and 700 series. In the chapter called audit reporting, we will understand group audit, that is audit of consolidated financial statement. Only the name has been renamed. Otherwise, there is no change in this particular chapter. Risk assessment and internal control will be definitely having 315 and 330. And along with that, we have the audit evidence and completion and review, which is going to take care of your 500 series. And after that, we have the general auditor responsibilities and principles, which is going to take care of your 200 and 400 series. So this is what we are going to understand. Again, I'm telling you, what we are going to get is 100%, almost 100% coverage we are going to get. I will be asking you the set of questions. Benefit of that is you can do it before examination and during the examination also. I'll make it that easy for you. And most importantly, we will understand how to crack the auditing subjects in a single go. We will have a discussion on various questions also so that you will get an idea what we are going to get in the examination hall. Am I correct? So I hope we are good to go now. Now let's start with the particulars relating to this particular marathon. Let's start with the first chapter called what? The Professional Ethics and the Code of Ethics, issued under the which act, everyone? Issued under the act called Chartered Accountants Act 1949. Is it clear to all of you? Yes. Hello everyone, how are you all? This is your faculty CA Rohit Grover, and I'm here for taking up your marathon for 35 to 40 hours in relation to your very favorite subject called Advanced Auditing, Assurance and Ethics, which most of the student thinks that is a troublemaking subject, but I'll make sure that in this 35 to 40 hours of marathon, you'll be getting the best output of this subject, right? So what I'm going to take care is, like, I'll be taking care of the full coverage of your portion, except some few topics which are very much easy that you can take care on your own, right? And making sure that all the new topics have been added. As you all know that so many changes have come in the subject of advanced auditing, assurance and ethics, starting from its name only. Earlier we used to call it as advanced auditing and professional ethics. Now you can see that the word assurance has been added in this subject called advanced auditing, assurance and ethics. So first of all, without delay, let me tell you the difference, like why the word assurance was required to be added in this particular subject. As you all know that so far we have only done standards on auditing, right? But along with the standards on auditing, here we are going to do SAEs, standards on assurance engagements. We are also going to do SREs, standards on review engagements. We are also going to do SRS, standards on related services, right or not? So different types of assurances you deliver when you take up an assignment as per SAEs, SREs, and SRS. So that's the reason. That's the reason. We also have a new specialized series called SA 800 series, where we know that how to do the audit of special purpose financial statement, single financial statement, and summarized financial statement. We generally don't take care of these kind of assignments when we are generally in practice, right? So being these specialized areas of assurance, review related and specialized areas of 800, we needed to know that what a chartered accountant in practice, a member in practice, or a professional accountant in public practice can deliver the different types of assurances, right? So like say for example, in the auditing we give the high level of assurance, then in the assurance we give assurance engagements where we give the little bit lower level of assurance. In related services we give the word limited level of assurance, because there the procedures are also going to be limited. So the reason behind adding the word assurance was to let you know that why these different types of assurances are required for the different types of audit engagements, right? So that is the reason. First I wanted to start it with the name itself only, what are the major changes came in the name. So the word assurance has been added. Marathon is going to be there for 35 to 40 hours, everyone. Now, in these 35 to 40 hours, I will ask some few things from your side. Point number one, you should be already having the required knowledge of the subject. You must have gone through your complete regular batch of auditing, or you must have gone through at least a revision on your own. Then you should sit for this marathon. Second thing, you have to be a good listener when you're listening for this marathon, and moreover, you need to continue this marathon. Don't allow any other subject to come in between. Give sufficient time for other subjects, but when you're spending this 35 to 40 hours on this particular subject, then understand what I'm trying to deliver and how you have to present that in the examination. Then the third thing is coverage. Coverage is going to be full coverage, except some few topics which I think that you can manage on your own. And definitely at the end, I'll give you some useful tips. Obviously, I will not let you know any kind of super 30 or super 50 kind of questions, because I believe that this would be completely unjustified on my part if I'll tell you these are the super 30 and super 50 questions you should do and these will appear in the examination. No, I can only tell you the weightages of those particular chapters, because I don't want to take the blame, because ultimately I feel that icai is completely responsible for preparing your examination, evaluating and examining, and giving the marks. So we don't have to challenge any kind of things which are given in the icai material. Whatever is given in the icai material right there in front of you, I can guarantee you people, you just go through this marathon and try to compare it with icai material. The biggest disclaimer right now before starting this marathon, all of you, make sure that this whole marathon is made of ICA material only. The 100% ICI language has been used, my own specially delivered in the class handwritten notes of almost 300 to 400 pages, which I make the student write in the class. That too directly from ICI material. I do give my own material also, but I still prefer them to go for the ICI material, because I think that the ICI has done a very great job in preparing these materials, and you will find so many illustrations supporting your new topics as well. So overall, my suggestion is that nothing is going to be better, anything better, nothing is going to be better than ICI material. So, and whatever the chapters you're going to see and do along with me, everything is as per going to be the ICI study material, because I think that whatever the ICI expects from your examination, whatever the ICI expects from your presentation, that is what I'm going to deliver you and make you understand why it is too much important for giving an importance to the ICI material, right? Now, let's talk about the coverage. Coverage may we are going to have a full-fledged coverage on professional ethics, followed by a very new chapter, as you all know that. But most of the students feel that this is the extended version of automated environment. No, digital auditing and assurance is completely a brand new chapter where you will be having the knowledge on blockchain, NFTs, data analytics. New tools have been added, new things have been added so that you can understand how you have to proceed with this particular subject, right? Next thing you need to know that third topic which we are going to cover is known as ESG audit. Now, in the ESG audit, you have to make sure that in the ESG audit, you are going to learn the sustainable development goals, 9 principles. You will understand how environment, social, and governance audit has become a very revolution in India. Now, when it was what do we say, voluntary, how it became compulsory from 2009 to 2022. What is the total journey of the ESG audit in India? That I will throw some picture on you. Then SQC, standard on quality control. You already had that at intermediate level, and we are going to do. We have a chapter called quality control chapter, so we are going to understand accordingly. Then SRE, standards on review engagements, which are broadly speaking two in number. Then three SAEs we are going to do, and two SRS we are going to do. SRS are basically called the compilation engagements, where you are being hired for the compilation of financial statement or agreed upon procedures you have to go for. SAEs as basically for the prospective financial information. Like that some entities go for a loan and they give they give their project reports and all for that purposes. And SREs are nothing but called review engagements, where a reviewer will be hired before an audit takes place, so that company will come to know that what are the early possible corrections and remedial actions they should take in finally preparing and presentation of their financial statement. SQC along with SA 220, though, you have a dedicated chapter called quality control. Investment due diligence and forensic auditing, very important chapter. Definitely this topic and this topic, they are definitely going to ask you the question from this. Followed by audit of NBFCs with little bit of its amendments. We are going to understand like classification of the NBFCs. Last time already it was amended, that we'll do along with audit of banks, audit of PSU, public sector undertakings, internal audit, in which I'll be including your 600 series. That also I'm going to vanish it over there. Then most importantly, CARO along with SA 700 series, which I'm going to deliver it for you. Then we have a group audit, that is nothing but called the audit of consolidated financial statements. Then we have risk assessment and internal control, that is SA 315 and 330 we are going to understand here. Then we have audit evidence and completion and review 500 series, in which completely will be over. That these are actually two chapters. Audit evidence may upper part of the 500 series has been included, and completion and review may lower part of the series has been included. Then followed by general auditing responsibilities and procedure chapter, where your 200 and 400 series will be taken upon, right? So this is what is going to be the coverage, and I'm telling you this is going to be your 80 to 90, I would say 90% of the coverage we are going to have in the next 35 to 40 hours. So be with me and then enjoy the full series. And let me tell you one thing again and again, it is completely as per the icai expectations and icai material. Nothing has been compromised, not even a language has been compromised, because I do not believe that giving you the compromised language will fetch you the marks. I think we should believe that whatever is required to be delivered shall be delivered as per the ICAI's requirement, nothing else, right? So let's start without delay. So today we are going to start with your 15 to 16 marks of portion, which is going to be known as professional ethics and liabilities of an auditor chapter. But before entering into this chapter, let me tell you one thing. In this particular chapter, liabilities of an auditor topic has been removed from your portion, right? But still they are using the word liabilities of an auditor. But when I look at the ICA material, there are no sections relating to liabilities of an auditor has been given. But I will still provide you the important sections and will make you understand how you can go with this particular head. Professional ethics we are going to do it in three manner. We will understand the overview of the new code of ethics. Along with that, we will also understood the old professional ethics, which is completely exhaustively there in your portion. And along with that, we will also understand the no-CLAR provisions, which that has been added in your examination, right? Now, without wasting the time, let's start with the first thing. Now, see, first we are going to start with overview of the new code of ethics, which is divided into actually what? 4 parts. Now, sir, what do you mean by overview of new code of ethics? Let me tell you first the understanding of that. Presently, the code of ethics which you have in your portion is the older version, right or not? The new version of code of ethics has already been introduced by icai but not yet been notified to come into the examination. So only the overview has been added in your portion, in which you need to understand ki what is the new code of ethics. By the time you people will get qualified, I think in the coming 1 or 2 years, new code of ethics will be planted by the icai. So you should have at least a little bit of overview of the new code of ethics. That is why it has been added in your examination portion. So new code of ethics deals with what? First of all, the major changes. Now, in the old code of ethics, which we are going to do at the later stage exhaustively, you will find that we call them as members in practice and members in service. Members in practice, the one who is a chartered accountant holding a COP, and member in service, the one who is a chartered accountant but not holding a COP, he is into the employment. But in the new code of ethics, we call them as PA in PP and PA in service. Now, what do you mean by PA in PP? PA stands for Public Accountant, Professional Accountant in Public Practice. What is the name? Professional Accountant in Public Practice. And second person is known as Professional Accountant in Service, right or not? So, this is a MIS, Member in Service, and this is MIP, Member in Practice. So, instead of calling MIP and MIS, we are going to call them as Professional Accountant in Public Practice, and MIS will call it as Professional Accountant in Service, right? This is the major difference you should know first. Second thing, now it is broadly classified into 4 parts. As you all know that in our old profession ethics, there are total 2 schedules divided into 7 parts. But this is no schedule and all. This is directly divided into 4 parts. Now, part 1 deals with what? Part 1 deals with what are your fundamental principles as a professional accountant, what is your code of ethics, and what is your conceptual framework. Again repeating, part 1 deals with 3 things: fundamental principles, code of ethics, and conceptual framework. Now, this part is applicable to whom? This part is applicable to professional accountants in service as well as a professional accountants in public practice. So basically, MIS is also included, MNIP. See, professional ethics means what? These are the code of conduct which you need to follow. So be it you are in service engagement or you are in practice engagement, always you need to expect that you need to be within the boundaries of your what? Fundamental principles, integrity, objectivity, and all. You all have to follow code of ethics. Either you are a MIP or MIS, either you are PA in PP or PA in service. You all are representing ICA. So ICA expects you to have a code of ethics. Second thing is what? Third thing is what? Conceptual framework means what? Where they will be telling you what are the schedules, what are the parts, what are the sections we need to follow as a. So basically, this particular chapter is going to make you understand what a chartered accountant in practice deals with and what a chartered accountant in service deals with. If we are not providing our service ethically or professionally, then what kind of actions can be taken on us, right or not? Then let's start with the part number 2. So part number 1 was on fundamental principles, code of ethics, conceptual framework applicable to professional accountant in service and professional accountants in public practice. Part 2 deals with additional material matters relating to providing professional services. Now, what does that mean? Let's say, for example, if you're a professional accountant in service, again repeating, if you're a professional accountant in services, if you're doing a job, if you are getting engaged or if you are employed or if you are contracted on a job platform in which entries in either your position is executive position. What do you mean by executive position? The position where you will be continuously being under the employment, or you are in non-executive position. So what they are saying that either you are a professional accountant in service. If you are a professional accountant in service, either you are in executive position or you are in non-executive position. And if you are engaged in this industry, commerce, service, non-profitable sector, public services, in professional and legal bodies and education sector. So if you are holding any executive position in this sector or if you are holding any non-executive position in this sector as a PA in service, professional accountant in service, basically member in service, the boss, part 2 is applicable to you. But it doesn't mean that part 2 is not applicable to professional accountants in public practice. Professional accountant in public practice are also covered, but only those professional accountant in public practice are covered who are engaged for such same services but as an employee in a CA firm. In which form? CA form. So if you are a MIP, member in practice, and you work in a CA form as an employee, so you are also covered under part 2. Otherwise, if you are not a CA in practice and not employed in a CA firm, so you are not covered here. So again repeating, PA in PP is covered only if you are employed as an employee in a CA firm and giving same set of services which a PA in service is giving on the left side. So see, practicing a professional accountant in service and professional accountant in public practice, both are covered in that, but he is either engaged, employed or contracted. Who? Professional accountant in service, and on the other side only being engaged for services as an employee in a which service? CA firm. So part 2 also deals with both the professionals, but it is more dedicated towards the professional accountant in service as compared to professional accountant in public practice. Now, what does the part 3 deal with? Part 3 is completely dedicated to professional accountant in public practice. So basically those who are the members in practice are going to deal with part 3. So part 3 mein whatever the regulations will come in future, every regulation will be applicable on the professional accountant in public practice. Is it clear? So part 1 applies to both. Part 2 also applies to both, but more it is inclined towards a professional accountant in service than to professional accountant in practice. Professional accountant in public practice is also covered in part 2, but only for engaged for services in a CA form. Then only he is covered. Part 3 is completely dedicated to whom? Part 3 is completely dedicated to professional accountant in public practice, right? Now, what is part 4? Part 4 talks about independent standards. Part 4 talks about independent standards. Means what? They want the PA in service or PA in public practice to be more independent. So they have broadly classified this part 4 into two subparts, part 4A and part 4B. Now, what is part 4A? It deals with those standards which are to be applied when the PA in PP engage for auditing and review engagement. First of all, so you need to understand, sir, what do you mean by auditing, review and assurance engagement? Let me give you a broader picture first. Now, try to understand this particular chart, which I am going to put it in front of you. Now, see, if you are a professional accountant, if you are a professional accountant in public practice, there are, broadly speaking, two types of engagements you can be engaged into. One is known as assurance engagement, and one is known as compilation engagements. One is known as assurance engagements and one is known as compilation engagements. So what do you mean by compilation? It means you are not going to give any opinion. So these are non-opinion based engagements. These are what? Non-opinion based engagement, where you don't have to express an opinion. I'm not saying you don't report. You report, but you do not give any conclusion. You do not give any opinion. So these are non-opinion based engagements, right? And what do you mean by assurance engagements? Where you have to draw an opinion. So these are opinion based engagements. So one public accountant in public practice, professional accountant in public practice can be engaged in two types of engagements. One are called as assurance engagements and one are called as what? What do you say? Compilation engagements. Compilation engagements are non-opinion based engagements where you will be issuing a report, but actually you are helping the entity in preparation of financial statements. So obviously, if you are a preparator of financial statement, you can't be its auditor, and therefore you are not going to give any kind of expression of opinion. So those are known as compilation engagements. Assurance engagements may you draw an opinion. Now, assurance engagements are broadly classified into three. What? Right or not? Broadly classified into three. Some are auditing assurances. One are assurance engagements where you give the limited assurances, and one are what? Review one. One are what? Review one. So I will go for this one. Now let me write review first and then assurance. You will understand why I am writing like this. Right or not? So SAs where you follow SREs and you follow SAEs. If you are into any auditing engagement, if you are into any assurance engagement, If you are into any review engagement, sir, what do you mean by auditing? What do you mean by review? What do you mean by assurance? Just wait for the right time to come. Anyways, we are going to cover all those standards. So there you will understand what do you mean by auditing. See, auditing may we give a high level of assurance. High level of assurance means we express an opinion. Review may we give a limited level of assurance means less than auditing. Less than auditing. And assurance engagements may we also give assurance, but we give assurance on PFIs. What is PFIs? Prospective financial information. SAEs are generally applied in those engagements where you are going to express an opinion not on the current historical financial informations. You express an opinion on prospective financial informations, means those financial informations which are going to be in future, like project reports and all those things, assumption based, forecast based, like hypothetical assumption based financials. On that you are engaged under SAE. So you do not follow SS in that case, you do not follow SREs in that case, you do not follow SRS in that case, you follow SAEs, prospective financial information. Whereas when we talk about SAEs and SREs, they both are connected with HFI. Now, what do you mean by HFI? Historical financial information means financial statements are already prepared, financial year is already ended, and you are preparing the historical financial statement. On the basis of that, we express our opinion. But let me tell you one thing, review takes before auditing. Like say for example, financial year has happened, or quarters of the 2 quarters or 3 quarters of the financial year has happened. We are going to hire a chartered accountant in practice who is going to come and going to do the review of the financial statement, so that finally before preparing the final preparation of financial statements, HFIs, we can get to know some minimal changes which we need to do in our financial statement. That is called review services, right? And obviously auditing services are going to take place when the financial statements are completely readied and handed over to the statutory auditor. But whether it is review services or it is what auditing services, both are conducted on HFI, historical financial information, whereas assurance services are conducted on PFI, prospective financial information. Now, sir, what about the compilation? Compilation is neither on HFI nor on PFI. You are here being engaged to do agreed upon procedures and to do preparation and presentation of financial statement. So basically, management is hiring you to help them in preparation and presentation of financial statement. So obviously, if you are involved in preparation and presentation of financial statement, you can't be the auditor for the same. So that's why they are non-assurance based engagements, non-opinion based engagements. We call them as compilation engagements. Or you have been hired to do agreed upon procedures. Suppose one investor wanted you to check something particular item on that particular client. Like suppose there is one big investor, he wants to know the credit worthiness of the company in which he is going to invest a huge amount of investment. So he will tell you to go there and let me know ki whether this particular company is eligible enough to take care of my investment or not. उसे बोलते हैं agreed upon procedures. What do we call them? Agreed upon procedure. So either you are being engaged for agreed upon procedures, or you are being engaged for preparation and presentation of financial statement. You are being actually engaged for what? Compilation engagement. So this is what you need to have a good knowledge about this. Like professional accountants in practice either can be for assurance engagements, can be for compilation. Under the assurance, there are three types of insurances. Assurances you give by compliance of SAs, assurances you give by compliance of SREs, assurances you give by compliance of SAEs. How SAEs are different from SAs and SREs. SAEs are being basically used when you are being given the prospective financial information, and auditing and review engagements you use when you are given the historical financial information. Under the compilation engagements, you are either being agreed upon procedures you are being hired for, or for the preparation and presentation of financial statement. So these are compilations are non-opinion based engagements, and assurances are opinion based engagements or conclusion based engagements. I hope you got the clarification. Now, why I invested a time in this making you understand? Because you need to understand that the part 4 of the new code of ethics talks about what? Part 4 of the new code of ethics talks about independent standards. Now, independent standards are of two types, 4A part B and 4B part. Now, 4A may, it deals with those standards which are to be applied by the practicing accountant or practicing chartered accountant who is engaged either for auditing or review engagement. So, you can see that auditing or review engagements are basically done on HFI. So if you are being hired for doing any engagement on historical financial information, so 4A will be applicable to you. Now 4B talks about which independent standards? It talks about those independent standards when a professional accountant in public practice is engaged for the engagements other than auditing and review engagement. Now what do you mean by other than auditing and review engagements? It means attestation services, PFI related services, or you can simply say compilation, where you don't have to express any opinion. So either it can be PFI, prospective financial information related engagements, which are future project report based, or you can be called as compilation for attestation. Anything other than auditing and review engagements are covered under part 4B, and everything which is relating to auditing and review are covered in part 4A. So this was all about the 4 parts of new code of ethics. So what are the 4 parts of new code of ethics? One is part 1, which talks about your fundamental principles, codes and conceptual framework applicable for both. Either you are a PA in PP or you are a PA in service. Second part talks about additional matters required to be reported by PA in service who is either engaged, employed in executive position or non-executive position in following areas. And it also covers a PA in PP who is engaged in what? As an for services which are to be provided in a CA firm. Part third talks about additional matters which are completely dedicated to professional accountants in public practice, and part 4 talks about independent standards. Now independent standards are broadly classified into two: 4A, 4B. 4A talks about what? Those independent standards which are related to your auditing and review engagements, and 4B talks about what? Those independent standards relating to the engagements other than auditing and review engagements. Right, or everyone? I hope this thing you should always keep it in mind. It will help you to have a clarity throughout the auditing subject. At least you will get to know that what is actually happening and what is going to be the part of your complete portion, like essays, SREs, SAEs, and SRS. What is the reason behind calling them a different types of standards? Why not all essays? Why not all SAEs? So for every type of engagement, different types of standards have been incorporated by whom? ICAI. I hope I made myself very clear. Now, what is the new code of ethics also cover? It also cover various set of sections like we have in the old code of ethics, like section number 26, section number 27, section number 4, section number 6, 7, 8, 21. In our code of ethics we have, right, disability of member, right, cancellation of COP, maintenance of branch office. Like that, in the new code of ethics also you will find some sections, but in those sections which you will find in the new code of ethics, they will be broadly classified into 3 areas. So in the first part of the section, you will find they will introduce you to the section, what this section is all about by giving the heading. Second part mein they will tell you the requirements, what is the requirements of this section. And third part mein they will tell you how this section shall be applied to a member in service or a member in practice. So in the new code of ethics, whatever the standards we are going to get, whatever the sections we are going to get, they are going to be broadly classified into 3 parts: introductions, requirements, what is the requirement of the section, and how it is going to be applied on a MIP and MIS. I hope you all are very much aware about the things which I'm telling you, right? Let's understand, sir, what are the fundamental principles. These are the same fundamental principles which you have done at our intermediate level. Fundamental principle number 1, integrity, objectivity, professional competence, confidentiality, and professional behavior. So what do you mean by integrity? Sir, integrity means be honest, sincere, truthful, fair, and straightforward. Again, repeat: being honest, be sincere, be truthful, be fair, and be straightforward towards your work. It means not to get engaged into those kind of particular engagements which are, pushing you towards compromising your integrity, which is pushing you to become a dishonest person, which is going to result into any misleading information where your negligence might be involved. So try to avoid those kind of engagement where your integrity will be what? Compromised. So integrity means be fair, be honest, be straightforward, be sincere, and be truthful towards your work. Take it very seriously. Don't prove any gross negligence, right? Like, say, for example, giving the modified opinion on the above is a compliance of what? Integrate. Say, for example, you have been engaged for an engagement which is highly misleading. You saw some areas which are omitted, and you see that management's negligence is what? Involved. So obviously, we will not give the unmodified opinion on these kind of things. When the material misstatements are involved, when the ROMAM is very high, internal control system is not good, we will definitely express which opinion? Modified opinion. So that shows our integrity. Ki according to the situation, we should not compromise on our honesty. According to the situation, if they're doing well, we will give a positive opinion unmodified, and if they're not doing well, we'll give a modified opinion in the form of qualified adverse or disclaimer. That is what you mean by integrity, right? Second thing is known as what? Objectivity. Now the question arises, sir, what do you mean by the term called what? Objectivity. Now objectivity means being impartial and being unbiased. This is what you mean by objectivity. Being impartial and unbiased means what? Let's say, for example, you have to keep yourself away from the gifts and favors which are given by your client. You are not going to compromise it just because you want to accept it. Are you getting the point? And never follow any directions and any wishes of the management. That will also help you, that will push you towards compromising your what? Integrity, compromising your impartial and unbiased attitude. So what we expect from a PA in PP and PA in service, ki either you are in job or you are in practice. The boss, you need to carry an attitude of impartialness and unbiasedness throughout your services. Either you're providing your services to the client or you're providing your services to your employer. Is it clear, everyone? This is what is expected in the objectivity. Next point. What do you mean by professional competence and due care? Well, professional competence and due care means what? You should have the good knowledge of your professional, ethical, and technical standards. You have to educate your staff as well. Make sure that not only you should know the quality control, your total staff should know the quality control. Give them the adequate training and give them the adequate education. Let them enter and do follow your CPEs, continuing professional education hours. Do upgrade yourself, do update yourself according to the new requirements, because you know that today in the market, if you are not providing the services, right or not, in an updated manner or upgraded manner, the boss, the time is not far when you will be faded away out of the market. So you have to make sure that you should update yourself, you should update your skill, you should update your competence. Rather, so I will say that today more than qualification, I think skills are required to be updated. Like, say, for example, after getting qualified, you should do so many professional courses which are being right away given by the icai itself. We have DSA, Diploma in Information System Audit. We have Insolvency Professional. We have a registered valuation. Like that, hundreds of courses are being offered by whom? icai. So we are expecting you to have the knowledge of your which standards, PET standards. Do attend the programs, trainings, and seminars so that you can uplift your skills or upskilling your staff. Then you should be always updated with the necessary amendments and revisions, right? Then make sure that you should have a continuous professional development. What do you mean by continuous professional development? Keep on learning and doing the new things. Next one, we also expect that your staff, employees, etc., all should be what? Professionally competent. You have to educate your staff in such a manner that they should not feel like they are undervalued. They should also feel like they are professionally competent and shall declare their inherent limitation. And one very important thing, what makes you professional is when you tell to your client and tell to your employer, boss, these are the inherent limitations of our profession. Like we know that when we do the audit, we do the sampling, right? During the sampling, obviously not all the frauds and errors will be detected because we have not done the full checking. We have done the test checking. We have done the sample checking. So it is our moral responsibility to let our client and employers know that, boss, these are the inherent limitations of our professional services, right? So this is what makes you professionally competent and due care. Next point is confidentiality. You already know that you should never speak about the inherent confidential information which you have gained, sensitive or confidential information which you have gained either from your client or from your employer to any outsider. So you are under an obligation to maintain and keep your mouth shut unless the two provision comes. Either you should take the client permission to speak about their sensitive information, or there should be a requirement of what law. Like say for example, during the audit you got some, and very important thing in confidentiality, do not make the misuse of that information which you acquired. Do not blackmail your client on that. Do not try to take the illegal advantage of having the access over the sensitive information. That is what this particular fundamental principle is focusing upon, right or not? But they are saying that okay, you can take the permission of the client to speak out, and unless there is a requirement of what law, you should not speak about the sensitive information or confidential information of your client. But this principle has little bit given us the more vision. What this principle has told us, ki boss, if any inspection or investigation is going on, then you have the right to speak up. You can break your confidentiality because you are under an inspection or under an investigation. Point number one. Point number two, if you are also a party to a case, if you are also being, the sword is hanging on your neck and you are being also being called upon by the court, and then at that point of time, obviously to save yourself, you have to open up in such case. If any peer review or quality control review is happening on you, by the way, peer review is something which is conducted by the peer review board of ICAI, and quality review is something which is conducted by the quality review board of a central government. Are you getting the point? So these two things happen on you. They both are known as basically audit of auditors. So at that point of time, yes, you can share the sensitive information of your client or confidential information of your client with them, and it is their responsibility, who is conducting the peer review and quality review, that they will maintain confidentiality on the things which you have told them. So there is no problem if you can open up in the peer review. So basically I'm telling you, these are the broadly speaking 5 cases under which you can open up. You can break the confidentiality and it is allowed, other than those 2 cases of required by law or prior permission of client. Next one, if there is ethics provide so. Suppose your ethics are pushing you, ki boss, you should talk about it. Are you getting the point? And last but not the least, most important thing, no clear cases. If it is a public health and safety related sensitive information, and you think that keeping your mouth shut will bring millions of lives on stake, so then in that case you can open. Suppose you got to know that your client is having a huge idle funds and is using it for terrorist financing, is using it for criminal financing, right? And he's using some drugs in his medicine. Suppose your client is from pharma sector and the content of that is very much going to be damaging on the public health and safety. These are the areas where you definitely have to open up. Are you getting the point? Now see, that is called when your ethics pushes you to do so. When it becomes mandatory during under the raid or investigation by the which authorities? Statutory authorities. Suppose the raid has happened and you know that during the raid they will definitely approach the chartered accountant's office for knowing the what do you say, for knowing the confidential information of the client. So definitely if it is a requirement of law, you have to open up. So these are the areas under which you can break your confidentiality, but most of the cases you should keep your mouth shut. Next thing, he shall not take. Now what they are saying, professional accountant shall not take the personal advantage of it. We shall not take the personal advantage means you should not take illegal advantage of that. You should not blackmail. Ensure to maintain it irrespective of being a present past auditor. They are saying that it doesn't matter whether you are a present auditor of a client or a past auditor. As you know that after 5 years or 10 years of rotation, we have to shift from one company to another. But that doesn't matter whether you are a present auditor or a past auditor. What they are saying that it is your responsibility to maintain the confidentiality all the time. And not only you, your entire team hired experts shall also maintain the what? Same. Everyone is expected to maintain the same confidentiality. Is it clear to all of you? 100% clarity. So this is called your principle number 1, integrity, objectivity and confidentiality. What is your principle number 4? Now, yes, one more point. When you are breaking your confidentiality, make sure that the person to whom you are telling should be an authorized party. Do not disclose anything to a person who is not authorized to receive your information. Are you getting the point? And try to understand one thing. If you're breaking the confidentiality is bringing a big damage to the third party, it is bringing the huge injury to the third party, then you can also keep your mouth shut. In that case, you need not break your confidentiality. Communication could be made in oral or in the which form? Written form, and then the content or the content in which the context in which, not the content, the context in which it shall be disclosed should be taken care of. So make sure that you should not disclose it in any other context. Now you should be very much sure about in which context you are going to deliver your what? Confidential information. Now next point is very important. The next one is known as professional behavior. This is highly important for the chartered accountants in practice and chartered accountant in service to behave. See, remember one thing. What is the idea behind Chartered Accountants Act 1949? And what is the idea behind professional ethics? What is the idea behind this code of ethics? They all expect you to behave professionally. You should not get involved into any kind of assignment, any kind of engagement, or any kind of conversation which is going to bring a disrespect to whom? Which is going to bring a disrespect to the, what do you say, our profession, our council, our guidelines, our icai. So never ever should behave in such a manner which is providing a disrespect to the council. Are you getting the point? So they are saying that do not get involved in any such activities which may provide disrespect, discredit to the council and your work. Because you should not be only independent through your mind, you should be independent through your mind as well as what? Appearances. That's why in the Chartered Accountants Act 1949, under the professional ethics which you are going to do, you will find out these many guidelines. We have website guidelines, how your website should look like. We should have advertisement guidelines, these are the things you can advertise, these are the things you can't. Logo guidelines, so that you should not overdo your logo things. And write-up guidelines, biodata guidelines, and network guidelines when you're joining a particular network. So make sure that you should not ever bring any disrespect or discredit to your work as well as the council. That is what the major idea behind this particular first fundamental principle called what? Professional behavior. Now next thing, and you should also not comparing yourself with the other one. Okay, that will be looking unprofessional. So these are the various things which are expected from a CA in practice or CA in service, right? So this is what the total 5 set of fundamental principles which are expected from you. And yes, next topic which you have to understand that yes, what are the threats to your professional accountancy? The next topic is what are the threats to your professional accountancy, and that we'll take it in a short break, right? Now, one very important thing which you need to understand in a professional behavior is sometimes what will happen. As you all know that we have done some threats at the intermediate level, like self-interest threats, self-review threats, this familiarity threats, advocacy threats, intimidating threats. So what will happen? Sometimes your threats will come in front of you and your fundamental principles will come in front of you. Always remember, whenever you think that if fundamental principles you have to apply, but laws and regulations are there. What are there? Laws and regulation. So when the laws and regulations and fundamental principles are getting a conflict with each other, they are fighting with each other. So you from inside think that this is the place where I should follow my fundamental principles, but the law and regulation is prohibiting you from doing that. So always remember, we chartered accountants, we member in practice and member in service are not bigger than law. At that point of time, what we should do? We should try to allow law and regulation to prevail over our fundamental principles. So remember, in short, I'm telling you, whenever there's a conflict between fundamental principle and laws and regulations, make sure that laws and regulations shall be allowed to prevail over fundamental principles. That is a rule number one. Rule number two, what I'm trying to tell you is, see, if there is a internal conflict between one principal and another principal. Generally it doesn't come, but in case it comes, suppose you are going to fight, you are having a fight between integrity and confidentiality. On one side, integrity is pushing you to be honest, and on another side, confidentiality is telling you, Rohit, don't disclose this thing and that thing, otherwise the injury will happen. So you are fighting between one principal and another principal. Again, repeating, the first incident which I just now disclosed is when there is a fight or when there is a conflict between fundamental principles and law and regulation. Let the laws and regulation prevail over your fundamental principles, because we are not bigger than what? Laws and regulation. But now if the conflict arises between two fundamental principles, between integrity and confidentiality, or between confidentiality or objectivity, anything, then in that case you should better consult with the other partners in the firm, or better consult with the TCWG, like audit committee of the entity, who are taking the full responsibility for accountability and responsibility. If you are facing these kind of issues, then better to consult with the institute in case the things are not resolving. Or if still it is not resolving, take a which advice? Legal advice. Again, repeating, when there's a fight between fundamental principle, laws and regulations, allow laws and regulations to prevail over you. And when there's a fight between one fundamental principle and another fundamental principle, then these are the four steps you need to take. Consult your other partner, consult TCWG, consult with the institute, and seek a which advice? Legal advice. Right? So this is what brings an end to your new overview of what? Professional ethics. Now we are going to understand the threats, everyone. Threats, you all know that there are total 5 types of threats. You know that self-interest threats, when you develop a financial relationship with your employer or with your client, so this threat affects you. Then you have the self-review threats, when you have to review your own work done, or when, say for example, you were a director in one company, and or your partner was a director in that company, and now you became the statutory auditor of the same company. So in that cases, which kind of threat will appear? Self-review threat will appear. Advocacy threat appears when you have promoted or advocated your client and employer in such a manner that you compromised your objectivity, in that you became partial, you became biased towards your client, and your towards your what do you say, employer. So you will face the which threat? Advocacy threats. Familiarity threat means when your close family, friend, relative, or your house member is working in an entity where you are an auditor. So you will not be able to do the work properly, because you will always be sensing the familiarity threats in such cases. Why? Because suppose if you are going to go against your client will say that, okay, if you'll go against me, if you'll give me the modified opinion, then I'll make sure that I'll throw your relative out of the job. So these kind of threats are known as familiarity threats. And then we have the intimidating threats. What do you mean by intimidating threats? Intimidating threats are those threats which will appear, like, say for example, if you are too much dependent on a particular client, and he is giving you and he is threatening you of being replaced, he is threatening you to punish, he is threatening you to get penalized, he is saying that, okay, we will replace you if you will not do the things according to us. So they are asking you basically to compromise on your fundamental principles by influencing you more. That is called intimidating threats. What do we call them? Intimidating threats, right? So whenever, see, this is all nothing but the intermediate way we have done. In when you come across these threats, what is your responsibility? Right? That we have to understand in this one. Whenever these threats will come, there are three things you need to do. Identify your threats which you are fighting with, evaluate it by the informed third party, get a word with the third party, and then try to address those threats, either to eliminate those threats or to reduce them to the lowest acceptable level. Now, how do you evaluate the threats? We identified the threats. A threat could be a self-review, self-interest. It could be advocacy. It could be a what? What do you say? Intimidating. It could be a what? Familiarity threats. But now we have to understand how these threats are going to be evaluated. Remember, always remember, when you are in this kind of situation, you need to get it evaluated by a person who is more experienced than you, who is more informed than you, who is more knowledgeable than you. He can let you understand, boss, this is what the situation you are going through and this is what you should have done. Are you getting the point? To see what they're saying. Ensure that after evaluation, there must have been reduced to the lowest acceptable level. But make sure that threats are reviewed by a third party. Which party? Third party who shall be more reasonable and more informed than you. Are you getting the point? The third party should be enough reasonable and knowledgeable that he shall be in a position to tell exactly. Are you getting the point? कि अब ध्यान से सुना. See, you are fighting between your principles and threats. Threats are not allowing you to follow your principles, but at the same point of time, you know that you have to follow your principles, integrity, objectivity, and all. Now, the fight is going on between threats and principles. Sometimes you are unable to analyze what I have done is right or wrong. Get it reviewed by the third party. He will be able to let you know better. Boss, did you give more preference to threats over your principles, or did you give more importance to principles over your threats? He will make you understand what you are doing. Instead of you evaluating yourself, get yourself evaluated by the third party. What they are saying, the third party should be enough reasonable and knowledgeable that he shall be in a position to tell you exactly were the principles given more importance than what threats, or the threats were given more importance than what principles. Are you getting the point or not? Then only you will get to know that now if I'm giving more importance to my threats than principles, the boss, I need to either eliminate them or need to reduce it to the lowest acceptable level. Right or not? Now see, once you have identified your threats, either of those five, then you got it evaluated by the which party? Third party. Now it's time for you to address your threats. How do you address your threats? There are two solutions. या तो अपने threats को eliminate कर दो. Either you eliminate your threats or reduce it to the lowest acceptable level. Sir, how do you eliminate the threats? Eliminating the cause of the threat. Eliminating what? Cause of the threat. Like say for example, in a very hypothetical situation, I'm telling you, suppose your relative is, working in a company. Are you getting one? Your relative is working in a company. So see if this something can be done, whether he can leave the company or not. But that is a very extreme kind of expectation you are going to have from your relative. Just because you wanted to do the audit, so he should throw away his job. So eliminating the cause of the threat means what? Don't compromise your objectivity. Simply suppose the client is trying to give you a favor and is trying to get and put you into the situation of advocacy threats. Then simply say, no, I don't want to do it. I will not accept your favor. I will not accept your gift. So one client will come, another one will come. But at least you will be answerable to yourself from inside. Okay, boss, yes, I have said no to that person. That is how you eliminate the cause of threat. Right? Or by ending the association to eliminate the threat, you simply resign or withdraw from the engagement when you know that the integrity of the management is not matching the wavelength what you are carrying. Then there is no point of continuing with that particular client. Then it's better that what you should do, it's better that you simply ignore the client and simply say that I would like to disengage unless it is not permitted by the law and regulation. So this is how you basically take care of your threats. So this is called elimination of threat. What is the second one? Reducing the threats. What is the point number one? Reduce how we can reduce the threat to the lowest acceptable level. Engage an appropriate reviewer to review the work done. Just now I told you in 220 we do EQCR. Once you are done with the audit and you want to know that whether you have given more importance to threats over the principle of principle over the threats, then get it reviewed by the EQCR, Engagement Quality Control Reviewer. Or do one thing, keep the different engagement teams for the different partners with different members in every engagement. Do not do the same client every year. This year you have done, next year allow your partner to do it. Next year allow your next to next year allow your third partner to do it. Right or not? This is how you can do the internal rotation. This is how you can reduce the threat to the lowest acceptable level. Then engaging either another firm or partner from the another firm. Or say for example, if you think that boss, you are a sole proprietor, you can't eliminate or reduce the threats, then outsource it to some another firm. Get it done by the another firm or hire the another partner of the another firm, so that at least you don't have to face that threat, or not to get involved in such engagements which are what highly confidential. If you think that you will not be able to maintain the confidentiality, then better to avoid from such kind of engagements. No? Better you should get avoided from such kind of engagement. Not to getting involved means what? You do not take up those environment if you think that you will not be able to maintain the confidentiality. Then assign more and more time to the qualified aspirants to be on what? What do you mean by that? You can let your more qualified assistant to spend more time on the entity rather than you spending it. See, problem is with your threats, not theirs. So assign more and more time to your qualified assistants to be on what? Audit. This is how you can reduce your threats to the lowest acceptable level. So far what we have done, let's conclude in 1 hour what we have done. We have understood what do you mean by new code of ethics. We have understood what are our fundamental principles. We have understood what are our threats. We have understood how to evaluate our threats, and we have also understood how to get rid of those threats either by eliminating them or by reducing them to the lowest acceptable levels. I hope you all are understanding, right? Now, the next topic which we have to understand is known as NOCLAR. What is the name of the topic? NOCLAR, non-compliance of laws and regulations. Now, in this particular topic, I will say that you will find out that there is a fight between your confidentiality and your, what do you say, SA 250. Now see, try to understand in this particular topic, NOCLAR, which is known as non-compliance of laws and regulations. You will always find out that this is a revolutionary step which has been taken by the ICA. Now, ICA is saying that most of the times auditor finds it very difficult should I maintain confidentiality, because if you will not maintain your confidentiality, you will be called as you have violated your fundamental principles. But at the same point of time, the area in which you are maintaining confidentiality, if it is too high in nature, it comes to the public health and safety, it comes to the terrorist financing, it comes to the money laundering, it comes to the environmental protection, it comes to the data theft, it comes to the insider trading, it comes to the instruments of banks and financial institutions. The boss, you don't have to give the priority to your confidentiality principle. Go over it and go for a NOCLAR. So NOCLAR is basically giving a right to a member in practice and the member in service. If you find any unethical practices are happening at your client's place or at your what employment's place, it is your responsibility to open up, directly have a communication with the regulatory authority, go and talk to the SEBI, go and give tip to the income tax department, because that is a matter of public health and safety. Now I'm just giving the overview of the NOCLAR first. What NOCLAR is asking from you, so either you are a member in service or you are a member in practice. If you think that there is something very much unethical happening at your client's place, then don't think about your what? Don't think about your confidentiality. Then get over your confidentiality and go for a what? Go for a NOCLAR, go for a communication directly with the regulatory authorities. So NOCLAR helps you in taking over your confidentiality areas. But there are some few areas only where you need to expect to follow what? NOCLAR. That is called non-compliances of laws and regulations. Is it clear, everyone? Okay, so let's proceed with the NOCLAR provisions, right? We have already covered the professional ethics overview, new code of professional ethics. Let's start with the NOCLAR, okay? So in the NOCLAR, what I was saying, that anybody in the class is having an idea what NOCLAR is all about, other than the full form? Yeah, see, NOCLAR is all about non-compliance of laws and regulations. Now, one thing very much clear you need to all have to understand in your mind is that NOCLAR is basically has been introduced to make sure that MIP or MIS, whether you are working in a company or you are serving your client, the moment you will come across any intentional thing is happening in the entity, be it your client or be it your employer, then and that particular event what they are doing, which is happening at your client's place or at your employer's place, that event is basically giving a rise to the public health or safety, or giving a rise to the anti-money money laundering activity, or giving rise to a environmental protection, or data theft or any other such kind of activity, then NOCLAR says that boss, forget your confidentiality and have the NOCLAR over and above that. Are you getting the point? So NOCLAR is basically giving you a right in case you see any event which is either of the 7 or 8 things which we are going to read matching any of those criteria, then in that such particular cases you don't have to give the importance to your what do you say confidentiality. You just have to break your confidentiality and just simply proceed with informing it to the required regulatory authorities कि boss, this is what is happening in the particular event. Right or not? So basically the fight between the confidentiality, should I maintain it or not, that has been resolved if any of those 8 circumstances have come. Now let's understand what do you mean by NOCLAR. What they're saying, NOCLAR, it is an act of omission or commission done by whom? Either it can take the shape of omission or it can take the shape of what? Commission. Done by whom? Done by either your employer or done either by your what do you say client, either done intentionally or unintentionally. Either it is intentional or unintentional. Either it is done intentional or unintentional. It doesn't matter. Is it done by your employer or is it done by your client? Done intentional or unintentional? Was it an act of omission or was it an act of commission? Anything which is leading to any of these criteria will be considered as what? NOCLAR. Now see, it is an act of omission or commission done intentional or unintentional by the client, by the employer, by the management, by the employees, by the TCWG of the client or employer, to be reported by a PA in PP and PA in service. What they are saying that either you are a member in practice or you are a member in service. Either you are professional accountant in public practice or professional accountant in service. Boss, if you think that this particular concept of NOCLAR is getting involved, then in that case you have to reduce your confidentiality ka fundamental principle and give the preference to the NOCLAR over that. Am I clear, everyone? Clear? Now see that whether it is a NOCLAR or suspected NOCLAR. So what they are saying, if you see any event of omission or commission done intentionally or unintentionally, either by your client or your employer or the employees or TCWG or management of your client or employers, and if you think that that is a particular NOCLAR or that is a particular suspected NOCLAR, be it you are a PA in PP or be it you are a PA in service, professional accountant in service or professional accountant in public practice, what is your responsibility? Your responsibility is to make sure that this particular information must be given to the regulatory authority, because it is not a case of now a small evasion of taxes. It's a clear-cut case of public health and safety. Right? You need not maintain the confidentiality. Next one. Purpose is not to ignore the cases of non-compliances. We are not saying that we will ignore the cases of non-compliances. No. We are going to concentrate on the bigger cases. Bigger cases of non-compliances. To strike a good balance between maintaining the confidentiality and disclosing. See, I'm not saying that you definitely have to break your confidentiality until and unless it is not touching your particular concept of public health and safety or environmental theft or data theft. Till that time you don't have to apply what? NOCLAR. Till that time you can maintain your confidentiality. But if you think that yes, particular thing is happening and which is not at all acceptable, then go and disclose everything to the regulatory authority. Good thing about here is you need not take the permission of your management and TCWG in this case. Directly you can spit out everything to the regulatory authority. Now, applicability. As per the International Ethical Standard Board for the Accountant, internationally it is already being implemented. Let me tell you one thing. What is the implementation of NOCLAR in India? Implementation of NOCLAR in India is a very restricted one. Is a very which one? Restricted one. Let me tell you one thing. India may still NOCLAR is only applicable if you're a PA in PP or a PA in service in a listed entities. India may still NOCLAR is only limited to PAs in PP and PAs in service in the listed entities, and that to those listed entities whose net worth is 250 crores or more. It is not applicable to every company's PA in PP and every company's PA in service. Now see what they are saying. As per the icai code, it is restricted to PA in PP of a listed entity having a net worth of what? 250 crores or more. If your net worth is not 250 crores or more, then in that case, you need not go through the obligations of NOCLAR. That's what I'm trying to tell you. Are you getting the point? And one more important thing, if the PA in service is in the listed entity, So either you are a PA in PP or you are a PA in service. Both of you should be belonging to a listed entity. Is it clear everything? Is it clear everything? Right, everyone? Now, next thing. But the question is, sir, कि PA in PP का तो we understood that listed entity whose net worth is 250 crores or more. PA in service के is there any provision? Yes. PA in service, if you are holding this position in the organization, what position? You are holding a position of senior professional accountant post. What is your position? Senior professional accountant post. So this could be a MCQ question. Yes, this could be an MCQ question. Ki boss, you are a professional accountant in service. Being a professional accountant in service, you are working in a company. Am I correct or not? Now, your position is only just there as an employee. So if your position is just there as an employee, so obviously you will not get an access to the strategic goals and objectives of the entity. So this particular thing is not applicable to you. It is applicable to you if you are holding a senior professional accountant post, that too in the listed entities, not in all companies, only and only in the listed entity. And this is what the definition of senior professional accountant post has been given, be it a CEO, CFO, MD, manager, whole-time director, CS position, all those kind of positions you should be at. Then only no-club provision will be applicable. So basically, no-club is what? No-club is letting you know that, ki boss, in case the need arises, you have to get down with the confidentiality and proceed with the no-club, give the preference to the no-club over your confidentiality and proceed to the regulatory authority stating anything wrong which is happening at your client's place or at your employer's place, right? Next point. What is the coverage of no-club issues? Now see, the moment you see any of these 8 areas, the boss, it is a no-club. Now, let's say, for example, you saw any fraud, bribe, and corruption. It is a no-club. It means confidentiality need not be given a importance. If it's a case of fraud, bribe, or corruption, directly go for no-club. If it's a case of money laundering, including criminal and terrorist financing, right? You know that ki money laundering means making your black money into the white money. It is nothing but consisting of what? It is nothing but consisting of criminal activities. So you have to understand that if it is a case of money laundering, including the criminal and terrorist financing, then also, boss, it is a what? No class. Next thing, data protection and theft related issues. If it is data protection or theft related issues, then also it's a no class. If it's a environmental protection related issues, then also it's a no class. If it's a SEBI related issues, SEBI में insider trading related issues, तो boss, it is a no class. If it is a bank and related financial institution services and products related issues, then also it is a no class. Suppose the banks are giving any particular kinds of bonds which are completely against, or they are doing any activity which is against the public safety, then also it is a no class. Or if it's a case of public health and safety, suppose in a pharma company you saw that they are making a medicine which is not at all good for the entity, then in that case also not at all good for the entity as well as the people at large. So they are including some hazardous chemical in the medicine or something like that, anything you came across. So at that point of time, you don't have to maintain your confidentiality. You have to proceed with the no-CLAR. It's a case of public health and safety. And if it's a case of what? Tax evasion matters. So boss, then also it is a what? No-CLAR. Next thing, areas not covered in no-CLAR. What are the most important thing you have to cover is ki these 8 areas mein above what we have done, you have to go for a no-CLAR. But in case if you will come across these 3 areas, you don't have to consider it under no-CLAR. Point number 1, which are prohibited by law. See, anything which is prohibited by law and regulation, you are not bigger than the law and regulation. If the law and regulation has prohibited a particular event to be disclosed, then in that case, you are nobody to disclose it by taking the shelter under the no-CLAR. Saying that no, 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 I'm going to provide this information under no-CLAR. No, not allowed. Okay, it is strictly prohibited by the law and regulations. Second thing, areas of personal nature. If the company is doing the tax evasion, that is a case of what no-CLAR. But if the CEO of the company is having a personal tax evasion, means he is not paying his taxes, not the company's. His taxes may he is doing personal evasion, that is not a case of no-CLAR. Are you getting the point? That is again not a case of no-CLAR. Next thing, it's inconsequential in nature. What do you mean by inconsequential in nature? Its impact is very less. Very less kind of impact is there. So boss, that is also not a no clause, right? So if it is prohibited by law, if it is of personal nature of evasion, or its impact is very small, so these are not called what? No clause. Is it clear, everyone? Next point. What is not expected from a professional? Now, what will happen is you have been given the power of the no clause, but doesn't mean that you have to behave like a judge. Let the judge take the decision making. You are not a law expert. Are you getting it? You are not a law expert. That's why you are not allowed to have the decision making on something. I hope you are understanding all, right or not? See, it's a very simple thing. You are not a law expert. Your responsibility ends when you have reported that, sir, there is a case of no clause. Whether that person is taking care of that no clause or not, that is not your problem. That is the judge who is going to decide, is it a serious irregularity or is it a non-serious irregularity. You are not going to tell to the judge, sir, this is a clear-cut case of no clause. Your responsibility was to report, and your responsibility ended when you reported. Let the judge or let the officials understand the seriousness of this particular case. Is it clear to all of you? 100% clarity. Second thing is what? He make sure that he is not under any obligation to investigate and ensure the completeness of no clause. Again, I'm telling you कि reporting the no clause ends your duty. You don't have to investigate further. You don't have to take it personal. Are you getting the point? You're not an investigator. You are just an auditor or an employee in a company. Your job is to let them know कि boss, I feel that this is a case of no clause. Let them take. Reporting is your only duty. And you are not an expertise in law judgments. Let the court decide the seriousness. So this is not something which is expected from you as a PA in PP or PA in service in the no clause. Is it clear to all of you? Yes. Now, next one. Now, when we talk about the no clause, there are so many things you need to understand. That is called the difference between 250 and what? No clause. Now, what do you mean by difference between the 250 and no clause? Now, so many of the students will get confused between, sir, is 250 and no clause both are same? No, there are so many differences between 250 and no clause. Let's understand the difference. Number one, 250 only covers the auditing assignments. 250 only covers the auditing assignment, whereas the no clause says that either you were on a review assignment, you were on an assurance assignment, you were on a related services assignment, you were on auditing assignment, you were in any other assignment, no clause is applicable. So that makes no clause wider in nature. What in nature? Wider in nature. Remember, 250 is only and only going to cover what? Auditing services. If you're an auditor, then 250 applies. Consideration of laws and regulation. No clause applies in every kind of engagement. Second thing, second difference is no 250 is applicable to practicing CAs only, whereas the no clause covers both PA in PP and PA in service. So that again makes the broader coverage of what? No clause. Again repeating, 250 covers only members in practice, whereas the no clause covers both members in practice as well as members in service. Next one, it includes those non-compliances relating to financial statement which are directly impacting or indirectly impacting. We know that 250 talks about those non-compliances which directly impacts or indirectly impacts your financial statement, but the scope is very much wider here in no clause as it covers both financial and non-financial matters which are related to what? No clause. If it's a case of environmental theft, data theft, criminal, terrorist financing, which are not covered in the financial statement related non-compliances. Are you getting it? So majority of the cases में 250 का concentration is only on financial matters, whereas the no clause का case is on financial as well as non-financial matters. Next one, it does not define the meaning of the stakeholders. So in the 250, you will not find the meaning of stakeholders whom you have to report. Here, the stakeholders have been defined, which is known as public health and what? Safety. It is being clearly indicated in the no clause that when you have to go for, when you don't have to go for. Next point. In this case, first we report a non-compliance. Now in the 250, what do we do? In the 250, first we'll report the non-compliance to the management and then to the TCWJ, and then if the need arises, we may go to whom? We may go to the regulatory authorities. But in the no clause, you have a direct access to go to the regulatory authorities. You need not wait for the management or TCWG ka compliance. Next one, what is the course of action to be taken by the PA coming across no clause? Once we come across the no clause, what we shall do? Same thing like an audit. obtain the better understanding of the nuclear issue. Second thing, address the matter properly with the adequate supporting evidences. Remember one thing, people will only listen to you when you have an evidence in your pocket. Next thing, seek the expert's advice. I already told you, you are not an expert. So make sure that if you think that a particular expert's advice is required, go for that expert's advice. Then check if any further course of action it demands. Check if it is required to be reported to the regulatory authority or not. Check if there is any imminent breach that is significant of law, something certain about to happen. If you think that something is very much certain about to happen, then don't take a delay. Immediately and on urgent basis, you have to report it to the NOCLAR and prepare proper documentation for the same. Like what we do in auditing. Remember one thing, people will only believe you when you will give them the evidence. Giving them the evidence is the only solution. So obtain the understanding about the NOCLAR, have a collection of proper evidences, see whether you can properly address this thing or not, and if any imminent breach is there. What do you mean by imminent? Anything certain is definitely going to happen, then to definitely you have to go for a NOCLAR, and that too on an urgent basis. And you have to prepare the proper documentation for the same. Now, what do you mean by documentation? Same as per 230. Whatever the communications taken place between you and the authority, between you and the management, between you and the TCWG, everything is required to be documented. How you came across your evidences, frauds and errors you found, whatever the supporting evidences you got through the process of NOCLAR should be the part of your documentation file. But most importantly, these three documentations are extra which you need to consider. Point number one, how management or TCWG responded to the matter. Make a note of it. What do you mean by that? So, first time when you told them, sir, this is a case of NOCLAR, how they responded, just simply make a note of it. Are you getting the point? How the matter of the NOCLAR has been handled by the management or TCWG, understand the response, how they behaved at that point of time, make a note of it. Right? Second thing, get your course of actions, judgments, deviations, decisions taken reviewed by a third party. Now see, understand, for you it might be a case of what? NOCLAR. Maybe you might be wrong. So it's better that whatever the evidences you have collected, whatever the plannings you have made, strategies you have made, get it reviewed by somebody else. Right or not? Like same thing we did it in the case of threats. Are you getting the point or not? What course of action you have to take it in case of threats? Either eliminate the threats or reduce it to the lowest acceptable level. But before that, you need to get it evaluated by the more responsible and the more informed third party. Same is the case here. There's no harm in getting your evidences or documentation reviewed by the third party. At least you will get a better clarity whether the person who was taking care of your person who is doing your review will be able to let you know, boss, was it according to his judgment also a clear-cut case of NOCLAR or not. Are you getting the point? So this is what the two major things you have to understand. So that additional documentation you have to prepare so that you can understand yes, you have done your obligations towards what? NOCLAR. So that brings an end to another small concept called what? NOCLAR. I hope you understood. So let's say for example how the question comes. In the NOCLAR the question comes, suppose you are doing an audit of a pharma company. So when you are doing an audit of a pharma company and while doing the auditing, you came across their manufacturing process, में little bit of chemical content which leads to poisonous things is more. Are you getting the point? And now you know that if somebody will consume that medicine in the future, it will be a clear-cut case of what? Public health and safety or not. So yes, that is definitely a case of what? NOCLAR. Are you getting the point? Now, I will suggest you that in your icai material, you will find that after every concept or here and there, you will find some questions. Are you getting the point? I want you all to go through those questions. And I will also put up some questions during the class, which you can write the answer in the comment box. Am I correct or not? And at the end, I will give you the proper answers for those particular questions, right or not? Now, let's understand the main topic that is called Code of Ethics now. So everyone, let us start with the new topic called Code of Ethics now. So as you all know that we have covered the overview of new Code of Ethics. We have also covered the NOCLAR provisions, and now we are going to cover the Code of Ethics, which is exactly there in your portion, right? So understand one thing, it is very simple topic. What we are going to cover is like what are the various sections which are involved in this particular topic. What are the two schedules के 34 clauses which are included in this particular topic. Then I will make you understand some council guidelines also, and I will also make you understand some self-regulatory measures. So these are the four things which we are going to cover in the code of ethics. So let me tell you one thing. For your code of ethics and new code of ethics, what is the difference? This is exhaustively and completely included in your portion, whereas the new code of ethics ko only overview. If you remember, we have done it previously, part A, part B, part 1, part 2, part 3 and part 4, right or not? But here we have two schedules divided into 7 parts, right? Along with the disciplinary mechanism, along with the sections, along with the council guidelines, and along with the self-regulatory measures, we are going to understand it. Is it clear, everyone? So let's start with this particular thing first. So in this, first let us start with some sections. Let's wind up all the sections at one place. Then we'll move ahead with the disciplinary mechanism. Then we'll move ahead with your clauses. Then we'll move ahead with your guidelines and self-regulatory measures. Now, the next 2.5 hours, we have to constantly agree upon having a concentration on this particular topic. Now, what do you mean by a chartered accountant? First definition, section number 2, subsection 1. The one who is qualified as a member of what? icai. So obviously, if you want to call yourself as a chartered accountant, you should be a qualified member, and your name should be appearing in the register of members. Like in the Companies Act, once you become a member, do your name appear in MGT1 register of members or not? Here also in the same way, with the ICA, we have to register, we have to enroll our name in the register of members as per section number 4. Then only we can call ourselves as a chartered accountant. So we should be a qualified member and enrolled our name in the register of members as per section number 4. We'll be calling ourselves as a chartered accountant. Next point. Whom do we call a member deemed to be in practice? So this particular topic is going to let you know what types of practices we can get engaged into. So chartered accountant in practice holding a valid COP is not only going to practice in auditing. There are so many things you can practice. The purpose of this definition is only to let you know what things you can practice in your profession. Like, say for example, we can engage into the practice of accounting, we can engage into the practice of auditing, we can also engage in the practice of preparation of financial statement. This is what I was telling you, where SRS will come. Standards on related services, compilation engagements. Which engagements? Compilation engagement. So we can also involved in the preparation of financial statement. We can also engage in the practice of compilation of what? Financial information. So there are so many practices you can do. Generally, students have a very restricted knowledge, thinking that okay, chartered accountants are only allowed to practice in what? Auditing and only in accounting. No, there are so many things you can involve into compilation, assurance. There are hundreds of things you can practice. You can practice in accounting, auditing, financial statement, financial information. We can also be involved in verification and certification of financial accounting. We can also be involved in presentation and certification of financial facts. Project reports may also we can also be involved in. We can also be involved in rendering any other professional services or assistance and such other services as the council may allow from time to time. So what the council does, that council keeps on updating our list of practicing professions which are practicing CA can do it. Are you getting the point? Now, why I'm again and again talking about practicing CA member in practice? Because we are talking about the definition of member deemed to be in practice. So if you are doing all these activities, so we will consider you deemed to be in practice. Now, there is one point which you need to understand, that it's not always correct to say that you are practicing in your auditing and accounting only. Let's say, for example, there is a CA firm which has appointed you to train their article assistants, and you are ACA and FCA. Then also you will be treated as a member deemed to be in practice. Again repeating, let's say for example, there is an ACA or an FCA engaged for the purpose of training of what? Article assistant in a which firm? CA firm. That also will be treated that you are in practice. So remember one thing, this can very well come in your examination in the form of what? MCQ question or a particular question where there was one ACA, associate chartered accountant, or a fellow chartered accountant who was engaged by the CA firm to train the article assistant. So that also will be treated as a member deemed to be in practice. Now, last line pe let's concentrate again. What is the last line? Such other services the council may allow for time to time. So council recently has section where they have one section, section 2, subsection 2, clause D. which is known as MCOS services, management consultancy and other services. Remember one thing, MCOS services you can't provide if you're already a statutory auditor in some entity. If you're a statutory auditor in an entity, MCOS services cannot be provided with. As you all know that we have section number 144, prohibition or prohibited services. Do you remember that in the company audit chapter mein we used to do section number 144, such set of services which a member in practice is not allowed to deliver. Same thing, we are not allowed to deliver the services of MCOS if we are already working as a statutory auditor. But that is not the only list. Now see what they are saying. If a CA in practice is already holding below mentioned following positions, MCOS services are prohibited to be rendered. First of all, what is MCOS? Management, consultancy and other services. There's a huge list of MCOS services which you can provide, but you cannot provide if you're already holding these positions. Position number one, you are a statutory auditor, you are a tax auditor, you are a tax representative, right? You are already on the advisory on tax matters. So again repeating, if you are already a statutory auditor, tax representative, or you are advisory on what? Tax matters. If you are already engaged for these services, MCOS services are not allowed. Next thing, if you are already acting as a liquidator, trustee, receiver, administrator, arbitrator, or executor somewhere. So, being holding these positions, you are not allowed to provide MCOS services. Always remember, MCOS services can be provided if you are not holding these positions in the entity. Now, let's understand, ki, sir, what do you mean by MCOS services? MCOS services ka definition is very huge, but I'll make you understand in the perfect manner. Say, for example, you can also be engaged in financial management services. Sir, what do you mean by financial management services? You can help the client in compilation of cash flow statement, fund flow statement, capital budgeting, capital structure, cost of decision, and feasibility study reports. Now, try to understand one thing very clearly. It's very evident that this is nothing but the chapters which were there in your financial management chapter subject. So, if you are not able to remember this, just make sure that you mention the chapters of your financial management and the particular thing will be over. So what is the thing you can do? You can go for a financial management services, CFS, FFS, capital budgeting, capital structure. But remember one thing, you are not going to make it. You are assisting the entity in preparing it. That is again a compilation engagement. Which engagement? Compilation engagement. Now, next second thing, you can also be involved in management accounting services. So, what do you mean by management accounting services? Inventory management, material handling, market research, management accounting and software applications, cost control related issues, and management decision making, cost optimization decisions. So, these are also the MCA services you can be engaged with. Again, repeating, if you're already providing the auditing services to that entity, MCOS services are not allowed. MCOS services can only be allowed if you're not an auditor in that entity, right? You can also be involved in auditing services, sir, but just now you have said that auditing services, then MCO is not allowed. These are different auditing services, my friend. These are not the normal statutory audits. Now, read the name first. If you are engaged in management audit, if you are engaged in operational audit, if you are engaged in, what do you say, energy audit, if you are engaged in environmental audit, if you are engaged in quality control audit, ESG audit, so boss, these are the areas you can also provide the entity services. Are you getting the point? I'm not talking about the statutory audit. If you're a statutory auditor, tax auditor, then in that case, you are not allowed. These kind of audits may you are allowed, be it a management audit, because all these are the functions of internal auditor. Right or now, mostly these are the functions of internal auditor. So management audit is not statutory, operational is not statutory, quality is not statutory, energy, environmental, these all comes under the MCO. So these auditing services you are allowed. Other than that, any other services are not allowed. Now you can also be engaged for policy making and training programs. Suppose you are helping the entities in making their business and corporate policies, corporate planning. You can also helping them in behavioral sciences. You are helping them in diversifications. You are also helping them in job description and evaluations. All that also comes under what? MCOS. right? Next, you can also help the entity in HR management. What do you mean by HR management? Human resource management, letting them or helping them in hiring, selecting and recruiting policies. Am I correct or not? Setting up the incentive plans and wage plans for their employees. You can help them in preparing the wage plans and incentive plans. Then IT related selection of hardwares and what? Softwares, helping them in EDP, electronic data processing, training to their employees to be fully automated. That kind of services also you can provide. You can help them in becoming automated employees. You can help them in understanding how the automated environment works. All that comes under what? All that comes under these services, right? Then we have advisory and what? Consultancy services. Which services? Advisory and consultancy services. Remember, when I'm saying advisory and consultancy services, what does that mean? You're not going to get engaged in them. You are going to help them, advise them, and they will take consultation from you. You are not going to do it. Like, say, for example, you will not prepare the prospectus. You will help them in preparing the prospectus. You are not a doer. You are a consultant and you are a advisor. You are not a doer. Are you getting the point? Suppose they want you to give a consultation on, okay, sir, we want to go for advertisement. We want to go for advertisement. So you can let them know okay, who is the best advertisement media or publicity channel available in the market. You can't advertise. You don't have to take the poster of the company and saying that yes, I'm this and I'm that. You can only just help them in letting them know who is the best advertisement media. So you are either an advisor or you are a consultant, nothing more than that. Right? Now see this point. Drafting of prospectus, consultant to issue, compliance of formalities with the RSC, SEBI and LODR, helping them in publishing of publicity of issue, helping them in consultancy for advertisement media. You are not going to advertise, you are going to help them. Then conference arrangement, bankers to issue, collection centers, consultant of selection of underwriters, insurance and financial advisory services. All that comes under what? This all comes under the advisory and consultancies, right or not? Next, additional services like you can also provide insolvency professional. You can also provide administrative services like what? Word processing, submission of forms, preparing statutory forms, right or not? Intimidating the clients on statutory dates. You can be their, alarm system, letting them know the key cutoff dates, when this has to be filed, when TDS return has to be filed. All that also comes under what? MCO services. And but in these areas, you can act. See, just now we have done the areas where you can be an advisor or consultant, but in these areas you can act. What? How you can act? You can act as a registrar to issue. You can act as a share transfer, share transmission, and share transposition agent. But remember, this is your prohibition list. This is your which list? Prohibition list. We call it as pub. You can't provide portfolio management services. You can let them know who is the better portfolio manager in the market, but you're not allowed to be their portfolio manager. So you can be a consultant for their portfolio management, but you can't do the portfolio management. You can't be their underwriter. You can't be working as a broker. So pub, portfolio management, underwriting and brokerage. These are all completely prohibited under the MCOS services. So basically what is the idea behind MCOS services? MCOS services are those services which are other than your auditing, statutory audit, other than your what? Tax audit, other than your representations in tax department, other than your advisory matters on tax and other than liquidator arbitrator. If you are into those kind of positions already, the boss, you are not allowed to perform what? MCOS services. So list is huge. I will say that you just simply go through the list once and automatically 5 to 6 points you will be able to understand, right? Now, what is the next topic? Sir, section number 4. Just now we have done who is called a chartered accountant. Sir, chartered accountant is a qualified member of ICA who also enrolled for the register. Now, what do you mean by enrolling for a register? Remember one thing. You have to enroll in the register member as an ACA, Associate Chartered Accountant. What is the name? ACA, Associate Chartered Accountant. And if you have completed 5 years of your practice by holding a COP as an ACA, then again you have to enroll as an FCA, fellow chartered accountant in the register of members. Again, I'm repeating, after clearing your final exams, after clearing your training, and after clearing your GMCS training, you have to get a membership number, right or not? And you have to enroll as a member. If you want to call yourself as a chartered accountant, you have to enroll yourself in the register of members. So, register of members, what we have to enroll? You will be enrolled as an ACA, Associate Chartered Accountant. Plus, if you will do the 5 years of continuous practice, so from ACA, you will be changing yourself to what? FCA, Fellow Chartered Accountant. Are you getting the point? Now read this point. Following are the ways by which an ACA may turn into an FCA. ACA to FCA on application. Remember, ICA itself will not convert you into ACA to FCA. You have to apply to the ICA. Ki, sir, I have completed my 5 years of practice. Now please enroll me in your register of member as a what? FCA, not as an ACA. Now see, after serving 5 years of continuous practice, you can be an associate member. Sorry, you can be a fellow member. You have done a 5 years of continuous practice as an associate member. After that, you will be treated as an FCA, fellow chartered accountant. Again, repeating, I say will not do it on your own. You have to file an application. Second thing, there is one another way also by which you can become an FCA. Suppose you were not in practice, but you were doing the engagements in the job which are very similar to a practicing CA, and you have the experience certificate of that relevant experience. Are you getting the point or not? In case you you can produce to the ICAI council ki boss, even though I was not holding a COP, but I have worked like a COP. I have worked like a COP fellow chartered accountant, and I have a minimum 5 years of experience. But major thing is here also you must have enrolled first as an what? ACA. Getting enrolled as an ACA is mandatory in both the cases, either direct case of becoming an FCA or indirect case of becoming an FCA. Being ACA is mandatory. After being ACA in the first case, if you are in continuous practice for 5 years, you will become an FCA. But after becoming an ACA in the second case, if you can show the relevant experience of working like an FCA in the market, then council may allow you to become an FCA. Now read this point. You are not in practice, but registered as an what? Associate member holding not less than 5 years of requisite experience like a practicing CA to be presented to the council. If you are able to present to the council that ki, yes, I am a 5 years old practicing, I'm not a COP holder, but I have worked like a what? COP holder for continuously how many years? 5 years. So then in that case, we will allow you to become a what? Practicing CA in the form of FCA. Am I clear, everyone? Yes? Right? So what I was saying that there are two methods of becoming an FCA. Method number one, directly if you can say that ki boss, I was a ACA, I have a continuous practice of 5 years. So after your application, you will be considered as an FCA. Second method is what? Ki you were an ACA but not holding a COP, but you are carrying a relevant experience of working like an FCA for minimum what? 5 years. You can submit that certificate to whom? Council. Council may allow your name to be enrolled in the FCA. Are you getting the point? Council may consider it for an FCA status. Is it clear, everyone? Next thing. What do you mean by a COP? A member holding a valid COP can only practice. What do you mean by that? अगर आपको practice में आना है, if you want to come into a practice, तो you need to hold a COP, certificate of practice. And remember one thing, you have to be a member first. How do you become a member? By enrolling yourself in the register of member, plus you are holding a COP. It means you are an associate chartered accountant plus COP. You will be called as a member deemed to be in practice and member in being a practicing CA. Are you getting the point? Next point, section number 7, designation as a chartered accountant. Remember one thing, once you hold a COP, you are not allowed to use any other designation other than what? Chartered accountant. Boss, remember one thing, chartered accountant designation can only be used if you are holding a COP in CA. Like say for example, I am multi-qualified, I have done my CA, CMA and CS, but I am holding a COP in CA only. So I can call myself as a chartered accountant. I cannot write my word cost accountant. I cannot use a designation called company secretary. I cannot use a designation called tax consultant. I cannot use a designation called ROC expert. I cannot use a designation called member of parliament. I cannot use a designation of member of legislative assembly. I cannot use a designation certified public accountant if I have done a CPA from America. Always remember, if you are holding a COP of CA Institute, you are only and only allowed to use one designation. What is that designation? Chartered Accountant. That is what Section 7 is saying. So only one designation is allowed. Again, what is the name of the designation? Chartered Accountant. Nothing else than that. No other designation is allowed. Only the Chartered Accountant designation is allowed. Sir, what about the CA, CS and CMA? We have done these various other qualifications. No problem. You can write the abbreviations of that suffixes after your name. You can keep it like, I can say CA Rohit Grover, Chartered Accountant, BCom, CS, CMA, DISA. All these things, abbreviations are allowed. But full form may only one designation is allowed. What is that designation, everyone? Chartered Accountant. Only one designation. Is it clear? That is what they're trying to tell you in section number 7. Is it clear to all of you? Right? Now, now there are some like, yes, you are allowed. Now see this point. Having a treaty between ICA and Bar Council of India, LLB, chartered accountant can be practiced together subject to the separate stationery. Now see, there is one small guideline which has been issued by ICA, small clarity given by that. Okay, ICA is having a treaty with the Bar Council of India. If you are doing LLB and LLM, and you want to do practice in law and you want to do practice in chartered accountancy, both can be practiced together. Yes, this is the only exception where the two professions can be practiced together. Okay, they have a treaty between them. The Bar Council of India says that if the ICA does not have a problem, and ICA says that if the Bar Council of India does not have a problem, we may allow our member to practice in both the professions at the same point of time. But only remember, chartered accountancy and LLB, LLM is only allowed to practice together. Other than that, no one is allowed to practice together. Like CA, CMA cannot be practiced together. CS, CMA cannot be practiced together. CA, CS cannot be practiced together. Only the designation. If you are holding a COP of CA Institute, you're only going to use the word called chartered accountant, nothing more than that. Is it clear to all of you? Yes, sir, we are absolutely clear. Then move to the section number 8, disabilities of the member. What do you mean by disabilities? If you're not completed the age of 21, you can't be called as a member. If you're unsound mind, you can't be called as a member. If you're undischarged insolvent, you can't be called as a member. So you are not 21, you are unsound mind, you are undischarged insolvent, you can't be called as a member. But remember one thing, if you are a discharged insolvent but you have not obtained the certificate of your insolvency was due to the misfortune only, then also you will not be called as a member. If you are a discharged insolvent, you must have obtained a certificate from the court that your insolvency was due to the misfortune only. If you do not have that certificate, so then also you are not a what? Member. You are not a member if you are convicted and served an imprisonment for an offense of moral turpitude. Are you getting the point? So then also you are not a member. And if you are guilty of professional misconduct and other misconduct, the boss, then also you are not a member. All these 6 points together is known as disability of member. Moving ahead, section number 20, removal of a member. Remember one thing, if you are going to be removed as a member, there has to be so many reasons, and reasons are same. Just now we have done in disability, except the first reason, 21 years wala. Except the first reason, remaining 5 reasons are equally applicable to remove you as a member. Are you getting the point? Point number 1. What is the provision? You are unsound mind member, removed. Second, you are undischarged insolvent, removed. Third, discharged insolvent but not carrying a certificate that your insolvency was due to misfortune only, removed. Next one, offense of moral turpitude, removed. Professional misconduct or other misconduct, removed. These as it is, point number 2 to point number 6 above are there except the age wala point, right or not? Now, if the member is dead, they will remove you. Next, if you voluntarily applied for your removal, definitely they will remove you. And non-payment of renewal fees. Non-payment of which fees? Renewal fees on or before 30th September, they will remove you. So, in case of removal, there are total 8 points. 5 we have borrowed from the disability and remaining 3 extra. What are the 3 extra? You are dead as a member, you are, applied voluntarily, and you have not paid your fees on or before 30th September. Now, cancellation of COP, all the points which are applicable in removal. Sir, removal mein we borrowed 5 points for disability section number 8. And removal mein section number 20 mein we had 3 more points. So 5 plus 3 total 8. Yes, as it is 8 points will also lead to your cancellation of COP. Is it clear? It will lead to cancellation of COP. Sir, what do you mean by that? Unsound mind, you're removed as a member, COP cancelled. Undischarged insolvent, removed as a member, COP. Then discharged but not carrying a certificate, removed as a member, COP also cancelled. Then moral turpitude, removed as a member, COP also cancelled. Then dead, removed as a member, COP also cancelled. Then professional misconduct or other misconduct, removed as a member as well as a COP cancelled. Then I forgot 2 more. Voluntarily applied, COP cancelled as well as removed as a member. And last but not the least, you have not paid your fees of membership number and COP on or before 30th September, so removed as a member and COP also will be cancelled. But remember one thing, in COP, if you will pay your fees at the later stage, it can be restored again. Are you getting the point? Next point, maintenance of branch office. Very, very important. Section number 27. बहुत important section है, ध्यान से सुनो. What the provision is saying that ki boss, if you are carrying a branch, if you are opening a second office, so ICA says that ki your second office must be maintained and headed by a member of council. Matlab he should be a CA who should head your second branch. Simple rule. If you are maintaining 2 offices, in the first office, so definitely there is a CA, you, and if you are carrying a second office also should be headed by the member of the institute. But there are some few exceptions given to this rule. In case you are under these exceptional scenarios, then in that case, second branch is not required to be headed by the another CA another member of the institute. Now, what is exception number 1? Exception number 1, if your second office is in the same premises, same building mein second office, first floor pe first office, fifth floor pe second office, in the same building, the second office is not required to be headed by the another member of the institute. Second one, if it is in the same city, if it is located in the which city? Same city, then also it is not required to be headed by the another member. So what am I saying? It's in the same building and it's in the same city. And most important point, if your second office is within the 50 kilometers from the end of the city's municipal limits of the first city in which your first office is located. Very simple. Suppose your first office is located in one city, say for example, Hyderabad. Am I correct? Hyderabad ka city ke, now let's say for example, let me give you one example. Now this is the Hyderabad's municipal limits, right? My first office is located here, right? And it takes 12 kilometers to complete the municipal limits of the first city. So these 12 kilometers. Then after the municipal limits are over, 35 kilometers away, the second city has started. 35 kilometers away, the second city has started. The municipal limits of the second city has started, and inside the 18 kilometers of that city, my second office is there. Now try to understand this example. First office was in city A, right or not? It was 12 kilometers inside the city. So these 2 circles represents the municipal limits. Which limits? Municipal limits. So this is municipal limits. And this one is also municipal limits, right? Now see, first office is within the city. Now from 12 kilometers from my first office, the municipal limits of the city 1 will be over. So these 12 kilometers we don't have to consider. 50 kilometers ka distance. Now read this point. Second office is within 50 kilometers from the end of the municipal limits of the city where the first office is located. Municipal limits of the city, from here we have to add 50 kilometers. Are you getting the point? So these 12 kilometers which is within the city are not going to be taken care of. Suppose my office first is city A. These 12 kilometers will not be considered. How many kilometers away the second city ka municipal limit starts? 35 kilometers plus 18 kilometers I have to go inside the city to reach to that office. So 18 kilometers plus 35 kilometers, is it 53? Yes. Now the second office is required to be headed by the another member of the institute. Had it been 12 kilometers, let's remove 18. Let's say for example it is 12 kilometers, then 35 plus 12, it will be what? 47. So it is less than 50 kilometers. The second office may new member is not required. Is it clear to all of you? 100% clarity. And let's say for example, now this is my second office. This is my first office. Let's imagine city B may my first office is there, and city A may my second office is there. Now these 18 kilometers are of no relevance. Now 35 kilometers plus 12 kilometers, total is coming how much? 47 kilometers. The boss new member is not required in the second office. So second office when new member, when it is required, only and only if the second office is 50 kilometers away from the end of the municipal limits of the first office, right or not? So I would say that if city A to city B, if you will calculate, yes, member is required. But if it is city B to city A, suppose city A is the first office and it is a second office, then you can see that yes, member is required. But what if city B is my first office and city A is my what? Second office, then we do not require. No second office member is required. Is it clear to all of you? 100% clarity? Yes. Okay, so I hope you all understood like what is the provision relating to the second office. Now there is one small topic also. Ki what if your main office is located in the hilly area? Now suppose my main office is in the hilly area. Am I correct? Then in that case, icai has a provision ki boss, if your main office is in the hilly area, because in the hilly areas during the winters, due to the snowfall and all, the transportation and so many things will be blocked. So they are asking you that ki yes, you can open a second office in the plain area. Second office in the which area? Plain area. But remember that when you're opening a second office in the plain area, there are 5 conditions are required to be satisfied. Condition number 1, allowed to open. Read the condition. Allowed to open the second office in a nearby plain area. Whatever the nearby plain area will be there, where your hilly area gets over, there you can go and open your plain area office. But remember, in the second plain area office, you need not get it headed by a member. So this is the fourth exception where the second office is not required to be headed by a member in council. The first one, if it is the same premises, not required. Second one, same city, not required. Another city, but the gap between the municipal limits of the first city and the second office is less than 50 kilometers, then it is not required. But if it is 50 kilometers or more, then second person is required. Fourth is, if your first office is located in the hilly area, you can open the second office in the plain area. But the condition number 1, it should be nearby plain area. Second one, maximum tenure of 3 months. You cannot open this office for more than what? 3 months. That is the second condition. Third condition, ensure to keep the main office open for the correspondence and communication. It doesn't mean that you have just opened a plain area office, you will not open your main office. Main office will still be what? Open. Remember, main office will still be what? Open for your correspondences and communication. You can't shut down your main office. Next, whenever you can keep the board at the second office. So second office may obviously you will keep the board for your name, but only for those 3 months. Whenever those 3 months the office is open, you can keep your board. Other than that, you are not allowed to keep your board. So it doesn't mean that after 3 months when you will close your second office, you cannot take your board. You have to take your board along with you. You cannot keep your board in the second office not more than 3 months during that time when you are doing practice in the plain area. Next point, before opening and after the closing. Whenever you are going to open the office in plain area and whenever you are closing the office in the plain area, so before opening and after closing, make sure that you give a proper intimation to whom? ICAI. So what are the 5 conditions? Nearby plain area, maximum 3 months. Or main office will be open for the communication and correspondence. And yes, the board to be hanged at the second office, which is plain area office, is only maximum the duration of 3 months. And last but not the least, before opening and after closing, you shall be intimated to whom? I say. Now there are some few sections which are very simple sections, which are penalty based sections. You have okay, in case you are allowing this or allowing that, then this is going to be the penalty. Now see, section number 24, falsely claiming to be a member. Suppose there is a person who is not at all a member, but claiming to the outside world that I am a member. Then in that case, there is a penalty. You are not a member, but claiming to be a chartered accountant. Now, what is the difference between this and that? Here he is saying that I am a non-COP holder, but he is not even a member. So, not a member, but claiming that I am not a COP holder, but I am a chartered accountant, I am a CA, then also you are guilty. And here you are not a member, but claiming to be a chartered accountant. Here you are saying I am a CA as well as holding what? COP. But what we came to know that boss, you are not a member, or you are a member of the institute, but claiming to be a chartered accountant. It means what? You are a member, but not holding a COP. So you are not a member and you are claiming to be a CA. You are not a member, you are claiming to be a chartered accountant, showing that I am holding a COP. You are a member, but not holding a COP, but claiming to be a chartered accountant. Then in that case, your first time penalty is going to be up to 1,000 rupees. And if you will do it second time onwards, it will be up to 5,000 or imprisonment up to 6 months or both. So this is called section number 24. 24A is saying that you are cheating to the outside world by saying that my degree, my diploma and my qualifications are very similar like a what? I say. You made a stamp, you made a logo, which is quite similar like an I say. You are saying that I have done one accounting diploma, which is very similar to whom? I say. So if you are going to make this false claims, you are deceiving the people, cheating the people that your degree is very much equivalent to the I say, so you will be falling guilty under section number 24A and the penalty will remain same, that is fine up to rupees 1,000 and for subsequent time up to rupees 5,000 or imprisonment up to 6 months or both. That is what your section number 24 and 24A was all about, right? Next point. Suppose you are a company which is going to engage in the practice of accountancy. We already know that company and body corporates cannot engage in the practice of accountancy. In ICA or in Companies Act, both the acts mein, Chartered Accountants Act or Companies Act mein, both the act mein we know that we are not at all allowed to be what? We are not at all allowed to be engaged in the accountancy or auditing practicing by incorporating a company. It is completely a violation of section number 141 subsection 3 over there, and in the Chartered Accountants Act section number 25. So what they are saying, it is not allowed to open a company of chartered accountant engaged in accounting practice. However, MCC is allowed. Now regarding the MCC, I hope some of you might be having an idea, some of you might not be. Now, what do you mean by MCC? MCC means Management Consultancy Company. What is the meaning of MCC? Management Consultancy Company. Yes, you heard it right. Under the Chartered Accountants Act 1949, you can open a company, but neither accounting practice is allowed nor auditing practices is allowed. Only and only MCOS services. Back now, section number 2 subsection 2 clause D, we have just not done the MCOS services. If you want to open an MCC, management consultancy company, you can only and only provide MCOS services, not allowed to provide auditing services. If you want to provide auditing services and accounting services, then it has to be either a sole proprietor, a partnership firm or an LLP. Company under the Companies Act is never allowed. Company under the Chartered Accountants Act is allowed. That to the name of the company is MCC, Management Consultancy Company. And in case you are opening for any other purpose other than MCOS purpose, then boss, first conviction pay your penalty is 1,000 and second conviction pay it is 5,000. So again repeating, Companies Act mein company is not allowed, but under the Chartered Accountants Act, company is allowed. The name of the company is MCC, Management Consultancy Company, in which only MCOS services are allowed. Auditing services are not allowed. Is it clear, everyone? Now, allowing someone to sign the documents other than the member of the institute. Now you are allowing any person to sign your documents, be it and on the behalf of your firm or on the behalf of your name. then in that case, the boss, it is a very, very, very heinous crime. You have to go through a huge penalty. That is what section number 26 is talking about. Again, repeating, you are allowing someone who is other than a member of institute. It means he is not at all a CA. Even if he is a CA member, institute is saying it's okay, but he is not at all a CA, and you are allowing that person to sign your what any kind of documents. So first time pay penalty is minimum 5,000 and imprisonment of first time penalty is minimum 5,000, maximum 1 lakh. And second time, if you will be caught red-handed doing that, then minimum 10,000 and maximum 2 lakhs, and you will be going up to a imprisonment up to 1 year. What? Both. This is in case of subsequent. Are you getting the point or not? फर्स्ट टाइम के केस में रिमेंबर, फर्स्ट टाइम के केस में इट्स अ मिनिमम फाइन ऑफ 55,000, मैक्सिमम व्हाट 1 लाख. सेकंड टाइम के केस में मिनिमम 10,000, मैक्सिमम 2 लाख, और imprisonment up to 1 year or both. Second time के. This is section number 26. So 24 was what? Falsely claiming to be a member. 24A was deceiving the people by showing that your qualification is as much as equivalent to ICA. 25 was what? Opening a company to engage in the practice of accountancy, and 26 is what? Allowing other than member to sign your documents, right? Now let's understand the last topic in the sections. With that, our sections part will be over. That is called KYC of the client's information. See, it's a very simple thing. Try to understand. You are a CA in practice and you are being engaged for auditing, assurance related, so many types of services. So it is mandatory for you that you should maintain the client register. Which register? Client register, and keep the KYC of your client be ready with you, be updated with you. KYC means what? Know your client. So about your client, these are the following set of guidelines which have been issued by the ICA, which you need to follow when you're maintaining the client register. So in your register, what details in the form of KYC should be present in your register? Read the point. Name of your client, nature of your client's entity, right? Description of the client's business. So what is the name of your client? Is your client is a company or a body corporate or a proprietorship or partnership firm? What are their line of activity? Business. Name of the ultimate parent of your client. What is your client's main parent? And the ultimate parent's auditor's name also you have to mention. Again, repeating, name of your client, name, nature of your client's business, and nature of your client's entity, name of its ultimate parent, and name of its ultimate parent's company auditor. Name of the parents, if you have so many other parents also as a holding companies, and affiliates, how many associates, how many subsidiaries, and how many joint ventures you have. Next one, PAN of the client's company and its SIN number, corporate identification number, 21 digit, which is a combination of alphanumeric number. DIN of your directors, all the directors of that company along with their DINs, and in which other companies they are also holding the with their names and addresses, and number of directorships held by them in other companies as well. So that is all about your directors. Then type of the engagement served. What did you serve to your client? Was it a auditing services? Was it a assurance? Was it a related? Was it a compilation services? All that type of services which you have served. Everything relating to your client, from its name to what you have served to your client. Then type of engagement served, cases of non-compliances of laws and regulations. So if you found any no-clar cases or non-compliance of laws and regulation cases, then in that case you have to define over there. And most importantly, financial and operational information of your client. This is what we call KYC guidelines, which are issued by whom? ICAI, right or not? So very simple KYC guidelines. Make sure that all that information about your client must be present in your register of clients. Is it clear, everyone? Yes. So with this, our section part is over. Which part is over? Section part is over. We are going to move ahead with our disciplinary mechanism part. Which part, everyone? Disciplinary mechanism part. Okay, so now let's start understanding the disciplinary mechanism which is there in our professional ethics and Chartered Accountants Act 1949. Now, first of all, though, you need to know that, okay, sir, what do you mean by the term called disciplinary mechanism? See, if any member in service or a member in practice is not delivering his services properly, suppose he is guilty of any professional misconduct or other misconduct, in such cases, what happens is we as a auditee or we as a client have a right to make a complaint against that MIP or MIS to the disciplinary mechanism authorities. Now, there are total 4 authorities comes in our disciplinary mechanism. One is called DD, Disciplinary Directorate. One is called BOD, Board of Discipline. One is called DC, Disciplinary Committee. And one is called AA, Appellate Authority. Now see, whenever any person wants to make a complaint against a MIP or MIS, member in service or member in practice, now he has to first make a complaint to DD. DD stands for Directorate of Discipline or Director of Discipline Department or Discipline Directorate, any name you can give. The first person is known as DD. Sir, who is DD? DD is a person of council. He also acts as a secretary of board of discipline, right or not? Here board of director, it is not there, it is board of discipline. Second thing, he is not alone, he can also be accompanied with the various staff and what employees. And most important thing, his name is Directorate of Discipline or Discipline Directorate, anything you can name him. So the first person where we make a complaint against the member in practice or the member in services against their attitude or against their integrity, or someone has broken your confidentiality. So this is the first person to whom you have to make a complaint. DD stands for Directorate Discipline. Is it clear to all of you? Yes, sir. Now, what DD Directorate Discipline will do? He will carry out an initial investigation. Which investigation? Initial investigation. If he will think that this member in practice or member in service is guilty, let's keep it aside. He thinks that he is guilty, then we'll come back to that later on. But if the Directorate Discipline, DD, thinks that member in practice or the member in service is not guilty, he has no power to shut down the case. The case will be forwarded to BOD, Board of Discipline. Board of Discipline will carry on the further investigation. Board of Discipline will carry on the further investigation. If the Board of Discipline comes to the conclusion that what DD was saying, after his further investigation, he agrees that what the DD was saying was right, this member in practice or member in service is not guilty, then immediately the case will be closed. But if the Board of Discipline does not agree with the Discipline Directorate, but he thinks that yes, member is what? Guilty, then he may ask the Directorate Discipline to investigate further. Or if he thinks that upon the further investigation, the case belongs to Schedule 1 cases. Now, in the Schedule 1, there are total 4 parts. Remember, Schedule 1 mein there are total 4 parts, including 19 clauses. Which clauses? 19 clauses. If the MIP or MIS is guilty of professional misconduct or other misconduct in the Schedule 1, the BOD himself will take care of the case. But if the member in practice or the member in service is guilty of Schedule 2 or both, Schedule 1 as well as Schedule 2 or only Schedule 2, then he will forward the case. Who? BOD will forward the case to the DC, Disciplinary Committee. Remember one thing, DC takes care of both the Schedule case and Schedule 2 case. Whereas the BOD takes care of only those offenses, only those misconducts which are relating to Schedule 1. So if it is a Schedule 1 related guilty, then BOD only will take care of the case. But if it is Schedule 2 or both, the case will be forwarded to the DC, Disciplinary Committee. This is when the DD found out that member in practice is not guilty. So let's understand who is the first person to whom we have made a complaint. DD. DD thinks that during the initial investigation, this MIP or MIS is not guilty. If it is not guilty, he does not have a right to shut down the case. After that, he sends the case to the BOD. BOD conducts a further investigation. If the BOD agrees with the DD that yes, he is not guilty, then the case will be closed. But if the BOD thinks that yes, he is guilty, he may ask the DD to do the further investigation. And after the further investigation, if we will come to know that this case belongs to the professional misconduct or other misconduct in the Schedule 1, then in that case, BOD himself will take care of the case. If it is relating to Schedule 2 or both, then DC will take care of the case. BOD will forward the case to the DC. Is it clear to all of you? Yes, sir, 100% clear. Now, what if in the beginning only DD ascertains that member in practice or the member in service is guilty, then he will do the further investigation. After the further investigation, if he finds out that member who is guilty belongs to Schedule 1, then he will immediately forward the case to the BOD. But if he thinks that member in guilty is belong to schedule 2 or both, he will forward the case to the DC. Now, what the BOD and what the DC will do? Now, BOD and DC will also do their further investigations. Suppose BOD did the further investigation on the basis of DD saying that ki member in practice or service is guilty, but he found out that that member in service or practice is not guilty, then the case will be closed. Same, the case will be closed if he will found out that he is not guilty. Now, actually, she is written wrong here. Not guilty, guilty. Now, if the DC also feels that after the further investigation, according to the DD, it is guilty, but according to the DC, he is not guilty, then in that case will be closed. So, case will be closed here, case will be closed here. Is it clear, everyone? Yes, sir. Now, next point. But if after the further investigation, BOD thinks that schedule 1 offense which he has committed and yes, he is guilty, then what are the 3 powers of BOD? BOD can reprimand the member. What do you mean by reprimand the member? He can give the last warning to the member. Or they may go for a suspension of that member, their membership number and COP will be cancelled up to 3 months, or they may also impose a fine up to rupees 1 lakh rupees to that member in practice or member in service if the BOD thinks that that member in practice or the member in service is guilty. If they think that not guilty, case is already closed. Same thing, if the DC thinks that, who thinks that? DC thinks that ki member in practice or the member in service is not guilty, obviously case will be closed. But if they think that ki they are guilty, then what are their powers? Same power. First power is same, reprimand the home member. But what was the suspension BOD could do? Up to 3 months, they can do it any time period. Even permanent suspension can also be there. Yes, permanent suspension can also be there. Right or no? Minimum, obviously 3 months, more than 3 months, but up to permanently. And what was the imposition of fine by the BOD? It was up to 1 lakh rupees in this case, right or not? And he can impose up to 5 lakhs. This is what the difference between BOD and DC. So who is more rigorous? DC is more rigorous, more strict authority as compared to what? BOD. Now, this is how the disciplinary mechanism takes place. Now, let's say, for example, if the member in practice or member in service is not satisfied with the order given by the DD or with the order given by the BOD or DC, and even the DD is also not satisfied with the order given by the BOD or what? DC, they all who MIP, MIS or DD can make an appeal to the AA. Can make an appeal to the AA. What is AA? Appellate authority within 90 days. Within how many days? Within 90 days of order passed by the BOD or DC, they can make a complaint to whom? AA, appellate authority. But remember, if you forgot to make the complaint within 90 days and you want to make a complaint after 90 days, you should have a sufficient reason to make a complaint. Then additional 90 days also can be provided to you. Are you getting the point? Now, once you have made an appeal to appellate authority, what the appellate authority will do? Appellate authority will listen to both the parties. Right or not? And these are the following powers of appellate authority. Appellate authority may cancel the order of DD, DC or BOD, set aside the order, or it may confirm the order, or it may change the order. What do you mean by change the order? It may confirm that yes, the penalty imposed or suspension imposed is not cool. So it may increase or decrease the penalty or suspension. It may change the order. Or if it thinks that BOD or DC has not done their work properly, it can also revert the case back to them. Please go for further investigation. Is it clear? Next one, or any other order it thinks fit. This is called disciplinary mechanism. So DD is the first authority where we file the case. DD thinks that you are not guilty, but they do not have the right to close the case. DD forwards the case to the BOD. BOD thinks that it is of Schedule 1, so he will take care. If it is relating to Schedule 2 or both, he will forward the case to DC. But if he thinks that the member in practice or service is not guilty, case will be closed. But if the DD in the beginning only thinks that guilty, if it is belonging to Schedule 1, it will be sent to the BOD. BOD has the 3 powers: reprimand the members, fine up to 1 lakh and suspension up to 3 months. But if the BOD thinks that ki member is not guilty, case will be closed. And if the case is belonging to Schedule 2 or both, then DD will forward this case to DC. DC also feels that ki member is not guilty, case will be closed. But if the member is guilty, reprimand the member, imposition of fine up to 5 lakhs and suspension could be more than 3 months as and when it thinks fit. For whatever the period, it may go permanently also, right? Next point is what? If MIP or MIS or DD are not satisfied with the order passed by whom? Passed by the BOD or DC, they may go within 90 days of the order to file an appeal with whom? AA, appellate authority. If the appellate authority thinks that ki your boss, the case filed, if the appellate authority after listening to the parties have 5 hours to be taken care of. Power number 1, they can set aside the order, confirm the order, change the order. If thinks that ki case should be reverted back to DC or BOD because they have not done their initial investigation properly, it can revert the case or any other order it may think fit. Now, let's understand the composition. Ki who are these people? DD is an individual person. DD is a what? Individual person. He is a member of council or the officer of council. But he can be accompanied with the staff members and other members. And yes, one more thing, one more role he plays is he acts as a secretary of Board of Discipline, right? This is what you needed to know about what? DD. And he's the one who conducts the initial investigation. Now, coming to the BOD. BOD has 3 members. 3 members mein first member is what? Presiding officer, who is having the knowledge of disciplinary matters and having a good knowledge in various disciplines, and followed by 1 nomination of the council, who is a member of council, and 1 person nominated by the central government who is having the knowledge of various disciplines. So in total there are 3 BODs, 3 people in the BOD. 1 is presiding officer, 1 is the icai nominee, 1 is central government nominee. But yes, 4th one is what? The secretary of BOD, who is nothing but the DD, director of discipline, is also going to act as a secretary of BOD. Coming to the DC. Now, DC is consisting 5 members constituted by the council. The first member is called presiding officer. This presiding officer can be the president or vice president of ICA. Now, 2 nominees of the ICA and 2 nominees of whom? Central government. But you can make as many DCs you want, but BOD is always 1. But you can make as many DCs you want for the smooth functioning of the disciplinary mechanism. Then there comes to the 4th one, AA. Who is AA? Let me tell you one thing. Appellate authority is not constituted by the ICA, it is constituted by the central government. कौन constitute करता है? Central government. We have 5 people. We will not call the first person presiding officer. We will call him as a chairman. Sir, who is the chairman? Is or retired judge of the High Court can be the chairman, followed by 2 members of the ICA nomination. Sir, are they the same members? No. Little bit of difference will come. These are 2 members of ICA who have completed at least 1 full term. Sir, what do you mean by 1 full term? They must be in practice for at least 10 years and they are not the sitting member in any kind of board, council or committee right now. Are you getting the point? And 2 nominees of central government. Same, that is the provision same. So appellate authority में 5 members, DC में भी 5 members, BOD में 3 members, disciplinary directorate में 1 member, right? Powers and all those things we already understood, right? Now, this is what we have to start. Now, the major core. So your section part is completely over. Your disciplinary mechanism is completely over. Now, the next topic which we need to start is your major core part, where we'll understand Schedule 1 and Schedule 2. Schedule 1 may having, you know that you are having 19 clauses divided into 4 parts, and Schedule 2 may you are having 15 clauses divided into 3 parts, right or not? Now, this is the structure you have to understand. So, there are 2 schedules, everyone. Schedule 1, Schedule 2. How many schedules? Schedule 1 and Schedule 2. So what are the 2 structure, everyone? Schedule 1 and Schedule 2. Now, Schedule 1 may you have Part 1, Part 2, Part 3, Part 4. So how many parts are there in Schedule 1? Part 1, Part 2, Part 3, Part 4. Now, Part 1 talks about professional misconduct relating to members in practice. Part 2 talks about professional misconduct to the members in service. Part 3 talks about professional misconduct in relation to both. And Part 4 talks about other misconduct relating to both. Now, Part 1 may you have 12 clauses. How many clauses? 12 clauses. Part 2 may you have 2 clauses. Part 3 में you have 3 clauses and part 4 में you have 1 clauses. So 12 plus 2, 14 plus 3, 17 plus 2, 19 clauses are there. Again repeating, schedule 1 में total 4 parts, part 1, part 2, part 3, part 4. Part 1 में 12 clauses, part 2 में 2 clauses, part 3 में 3 clauses and part 4 में two clauses. Now, part 1 talks about professional misconduct relating to MIP, member in practice. Part 2, professional misconduct relating to MIS, member in service. Part 3, professional misconduct relating to both generally, right? And part 4, other misconduct. Is it clear, everyone? Now, coming to the schedule 2, it is divided into total 3 parts. You can see that part 1, part 2 and part 3. The total how many parts? 3 parts. Part 1 talks about having 10 clauses, part 2 is having 4 clauses and part 3 is having 1 clause. Now part 1, who is having 10 clauses, is professional misconduct relating to members in practice. Part 2 is talking about professional misconduct relating to both. So it means there is no dedicated part for the members in service. And part 3 talks about other misconduct relating to both. So in total there are 15 clauses here and there are 19 clauses here. So in total 34 clauses you have to do, divided into 7 parts, 4 parts in schedule 1 and 3 parts in schedule 2, divided into 2 schedules under the Chartered Accountants Act 1949. Is it clear, everyone? 100%? So let's start. Okay, so everyone, let's start with the schedule first, right? We already have agreed like schedule 1 includes like 4 parts, right? And schedule 2 includes what? 3 parts. In the schedule 1, we know that there are total 19 clauses divided into 4 parts, where the part 1 is going to talk about professional misconduct for the members in practice, right? So let's start with the clause number 1 here. Now we are now doing the schedule 1. In the schedule 1, we are doing the part 1. And in the part 1, we are doing the clause number 1, right, everyone? So let's start with the clauses. Now see, clause number 1 says that if you are allowing any person to practice in your name, now read this point, if you are allowing any person to practice in your name or in your firm's name. Basically, this clause says that if you will allow anybody to practice in your name or in your firm's name, other than your employee and other than your partner, it means either the person who is practicing in your name should be your partner or should be your employee. These only two people are allowed to practice in your name. Again repeating, out of all the people in the entity of your own firm, only these two people are allowed to practice in your name. Either he should be your partner or he should be your employee. But the most important thing is they should be CA in practice. They should be in CA in practice. So it means even if you are having a partner, but if he is not CA in practice, you are guilty under 111. Even if he is your employee, but he is not a CA in practice, again you are guilty under 111. So major requirement is what? He should be your partner or he should be your employee. He should be your partner or he should be your employee. But the most important thing is either of them, either your partner is practicing or your employee is practicing, they both should be CA in practice. It means they must be holding a certificate of practice. Is it clear to all of you? Again repeating, this clause makes you guilty when of professional misconduct if you will allow any person to practice in your name or in your firm name other than a CA in practice. It means if only a person called CA in practice can come into the practicing profession. You all know that after getting qualified, either you can become a CA or you can become a chartered accountant. Chartered accountant means holding a COP, CA holding a COP. So they are saying that if you are a CAP holder, be your partner or employee only can practice in your name. Then in that case, you are not guilty. But if you are allowing anybody else other than a chartered accountant in practice who is neither your partner nor your employee, then sorry, in that case you are guilty under professional misconduct. Is it clear, everyone? Okay. Now, what is the explanation? The purpose of this clause is to prohibit an outsider to take the undue advantage of the CA's name or firm's name. This clause concludes that the MIP can only allow his partner or his employees to practice in his name or firm name subject to the condition that they should be a CA in practice. Now see this point. Allowing a non-member, you are guilty. Allowing a partner who is not holding a COP, you are guilty. Allowing an employee who is not holding a COP, you are guilty. Allowing another member not holding a COP, you are guilty. Allowing another member holding a COP, then also you are guilty. It means what? Either you can allow your partner or you can allow your what? Employee who are the members in practice having a COP. Now they are saying allowing another employee. Then in that case you are not guilty. Now see, another employee, he is the member of the ICA plus what? COP holder, then you are not guilty. Or allowing a partner who is a member plus what? COP, then also you are not guilty. So I hope you understood that you can allow your employee or a partner holding a COP, then only you are not guilty. Otherwise, you are guilty under clause 1. Am I correct? Now, let's see why you are guilty under clause 2. Now, in the clause 2, if you pay or if you agree to pay, it means not only you are guilty if you are paying it, even if you are entered into an agreement to pay also, then you are guilty. If you pay or if you agree to pay, if you allow your partner to pay or if you agree to allow your partner to pay your profits, your commission, your brokerage from your which services? Professional services, either in India or outside India. Again repeating, either in India or outside India, directly or indirectly to the persons other than member of the institute. It means if you are sharing your profits with the member of the institute, then there is no guilty. If you are sharing it with your partner, you are not guilty. If you are sharing it with the retired partner, you are not guilty. If you are sharing it with the legal representative of your deceased partner, you are not guilty. If you are sharing it with the other professionals from the recognized professional body, who are 53A regulation professionals, then you're not guilty. You dare to share it with any person other than these people, then you are what? Guilty. First of all, you are a member in practice, right? You are sharing your profits and benefits of your professional services, right? And not only you are sharing, you are allowing your partner to also share. Not only you are agreeing to share, you are allowing your partner agreeing to also what? Share in India or outside India, directly or indirectly, with the person other than these five. It means if these five people are not there and you are sharing with them, then you are guilty. Otherwise, you are not guilty. If you are sharing with these five people, then you are not guilty as a member in practice. Sir, what are those five people? You can share it with the member of the institute. You can share it with the partner. You can share it with the retired partner. You can share it with the legal representative of deceased partner, but mentioning that it should be provided in the partnership deed that you can share with him. And the last but not the least, other professionals who are recognized under 53A regulation. Now, look at the explanation of this clause. MIP will be guilty even if he enters into an agreement. Just now I told you it's not about you are paying. Even if you are agreeing to pay, then also you are what? Guilty. Now, who are the 53AB? 53A talks about the professionals and 53B regulation talks about the professional body. 53A talks about 8 professionals with whom you can share. It can be CS, CMA, LLB, MBA, actuaries, BE, BTech and BArc. These are the 8 people with whom you can share. That is nothing but the last line I am talking about. Are you getting the point? Which line? Last line. You can share it with another member of the institute, another CA, with your partner, with your retired partner, or with the legal representative of deceased partner. There is no problem with that. Is it clear? Now, next point. Regulation 53B includes their institutes like ICSI, ICMA, Bar Council of India, Indian Institute of Architects, Institute of Actuaries of India, and Indian Institute of Engineers, under which you are a CA, CS, CMA, LLB, MBA, Actuaries, BE, BTech, or BR. So 53A talks about the professional, 53B talks about their professional bodies. Now, next point. While sharing the profits with the retired partner, are you getting the point? While sharing the profits with the retired partner, it doesn't matter कि after the retirement, is he a member of the institute or not? Is he holding a COP or not? That doesn't matter. What matters the most is the designation. He is a retired partner. Matters the most? He is a retired partner. Is it clear? Next one, sale of goodwill in case of sole proprietor or a partnership firm. This is also one of the very important point. Let's say, for example, there is a sole proprietor. Understand the example. Let's say, for example, there's a sole proprietor who was running his sole proprietorship firm of a practice very diligently and very profitably. But unfortunately, his demise has taken place. He has passed away. So in that case, if their legal representative want, they can sell the goodwill of a sole proprietorship. Again, repeating, LLP may not allowed, partnership firm may not allowed. It is only the sale of goodwill in case of sole proprietorship. In case of what? Sole proprietorship. So the legal representative of the deceased member in practice can sell the goodwill of that firm to another member in practice. Are you getting the point? Now see this point. Sale of goodwill in case of sole proprietorship in case MIP death took place on or after 30th August 1998. So this regulation came from 30th August 1998. It is only allowed after intimating it to the council. So obviously you have to intimate to the council that your family member who was a member in practice is no longer your family member who is a member in practice is no longer in existence. He has passed away. So you have to intimate to the council. What the council will do? Council will keep this name alive, keep it in abeyance for 1 year. So within 1 year, if any other purchaser who is a member in practice does not want to purchase this goodwill, then it will be invalidated one. But it will be valid for at least for 1 year once you have from the date of the death. And you also have to intimate to the icai, कि boss, this was a member in practice who was running a sole proprietor. If anybody is looking for any purchase of this sole proprietorship, then please let us know. So the legal representatives have to intimate to the council. Next one, validity is 1 year. Validity shall commence only after being issue is resolved by the court order. Now let's say, for example, there are two legal representatives who are fighting with each other. No, I will sell, I will sell. Then in that case, this 1 year ka validity will start once their matter will be resolved in the court. So generally 1 year will start after you have intimated it to icai, but here the 1 year will start once their matter will be resolved in the court, because court will decide which legal representative will be having an authority to sell this particular goodwill, right? Next one, conditions to be fulfilled by the purchaser. Now, if you are a member in practice who is interested in purchasing this particular, what do you say, goodwill of the sole proprietorship of a member who died, then in that case, he must be a member in practice. The purchaser must be a member in practice, showing his intention to purchase to the icai. He has to show his intention that, yes, I am ready to purchase the goodwill of this particular firm by making a written application. Is it clear? Next point, must make sure that it should be purchased within what? 1 year, because after 1 year its validity will be over. Next point, shall submit the sale agreement details signed by him and by that legal representative with the details of purchase consideration. I must attach the succession certificate or the no objection certificate from another legal representative if there are two or more legal representatives. Next one, must obtain the NOC from the another legal representative in case of dispute who has not signed it. I already told you that in case of dispute, the 1 year will start from when the dispute will be resolved. Give newspaper advertisement inviting the objections, if any, with the reasonable counsel. So you have to give a newspaper advertisement कि boss, I'm going to buy this particular goodwill of a deceased member in practice, sole proprietorship firm. If anyone is having an objection, please raise your objections by this particular time. And this advertisement ka copy you have to file it with whom? Regional council. Right or not? Next point, file form number 18 with the council within 30 days of what? Approval. So once your approval, once no objection has been raised, then you finally have to file the form number 18 with the council within the 30 days of approval. Now, this is what your clause number 2. So clause number 1 was on what? Again repeating, clause number 1 was on what? Allowing someone to practice. Clause number 2 is on sharing. Now clause number 3 is on what? Accepting. Same problems which we are facing in the clause number 2 while sharing, same problems we have to see in the clause number 3 while accepting. So if you accept or agrees to accept anybody's share of profit other than the member of the institute, other than the partner and all those things, then you are guilty under clause number 3. So clause number 2 is on sharing your profit to somebody. Clause number 3 is on accepting from somebody. Is it clear, everyone? 100% clarity, right? So clause number 3 mein there is nothing to discuss. What is the clause number 3? Accepts or agrees to accept share of profit of a professional business from a person other than the member of the institute or other than the professionals who are given under 53A. Everything in clause number 2 and clause number 3 is same, but the clause number 2 is on sharing and clause number 3 is on accepting it. Now, explanation. Being very similar to clause number 2, the intention of the council is only to prevent an MIP from accepting the share of profits from someone in relation to professional work not performed by him except in the allowed cases. So what they are saying that ki you should never share it or you should never accept it. So clause number 1 is on allowing any other person other than your partner or an employee who is not a chartered accountant in practice to practice is non in your name, you are guilty. Clause number 2 may why you are guilty as a member in practice because you are sharing it with people other than those people which are categorized. And clause number 3 may why you are guilty, you are accepting it from the people other than those people which are categorized. Now, clause number 4. What is clause number 4? Entering into a partnership either in India or outside India with a person other than these three. So, what the institute or council is trying to tell that if you want to enter a partnership in India, suppose LLP in India or a partnership in India, so boss, you can enter it with another CA in practice. You can enter it with, now let me tell you one thing, you can also enter it with the CA not in practice as well. Right or not? You can enter it with the member of the council. You can enter it with the 53A professionals like CS, CMA, LLB, BARC, BTech, BE, what do you say, actuaries and MBA. So these are the 53A professionals, and you can also enter a partnership with the non-resident who is specially given a recognition under section number 4 subsection 1 clause 5 by the institute or by the central government. These are the only three people with whom you can enter a partnership with. Including this, there are 8 professionals. You can also be a partnership with another member of the council and a non-resident who is either recognized by central government or the council under section 415. Is it clear? The basic purpose of this clause is what? Why a member in practice is getting guilty in this clause? If you are going to enter a partnership with the persons other than the mentioned in the clauses. So basically what the ICA is trying to prevent you, ICA is trying to prevent you not to enter into a partnership with the people other than these mentioned below people. Are you getting the point? You cannot enter a partnership with the ACCA. You cannot enter a partnership with the CPA until and unless you do not have either the MRN with them, what do you say, mutual recognition agreement MRA with them or MOU with them, memorandum of understanding. Like I'll give you the some example with whom we can have an MOU and MRA. So on the basis of that you can enter a partnership with them. Like say for example, the purpose of this clause is to ensure that synergy benefit shall be drawn from the another professionals with an intention to have a multidisciplinary firm. So basically they are allowing you that you be the partner with the other firm, you be the partner with the other professional, but not those people which are disallowed by whom I said. Dare you be in a partnership with them, then in that case you will be guilty under clause number 4. Now example, we have a MRI, not MRI, it's MRA. It's MRA, not MRA, it's MRA, Mutual Recognition Agreement with Canadian Institute of Chartered Accountants. Like with them, we can enter a partnership firm. We have a MRA with CPA Ireland. We can enter a partner. So those entities, those institutions, those professional bodies with whom we do not have an MRA or MOU. MOU stands for Memorandum of Understanding. MRA stands for Mutual Recognition Agreement. Then in that case, we cannot enter a partnership with them. We have a MRA with the CPA Australia. We have an MRA with the ICAEW, Institute of Chartered Accountant of England and Wales. Then in that case we can enter a partnership with them. But other than these recognized one, or other than the another member of CA Institute, other than the 53B professionals, other than the like non-resident which is approved by the central government, we are not generally allowed to enter a partnership with them. Is it clear, everyone? This is major the purpose of this particular clause. So clause number 1 was making you guilty if you're allowing someone to practice. Clause number 2 was making you guilty if you were sharing. Clause number 3 was making you guilty if you are accepting. Clause number 4 is making you guilty if you are entering into a partnership firm. Right or not? Agreement, partnership agreement. Now, clause number 5 is making you guilty if you are trying to secure a professional business from a person other than your partner. You can request your partner to bring the work for you. You can request your employees to bring the work for you. You can request the work from the 53A regulations who are your partners. Are you getting the point? The purpose of this clause is that soliciting or securing the work from the people other than your partner, other than your employee, and other than the other professional is not allowed. Otherwise, you're guilty under clause number 5. But let me tell you one thing, how we are going to differentiate between 5 and 6. 5 May, we are talking about securing professional work. And 6 May, we are talking about soliciting from your client. I am not, see, in the 5 also I am soliciting. In the 6 also I will be soliciting. But here I am soliciting from a person's other than my partner, other than my employees, other than the professional under 53A. I am telling, securing the work from them. In the 6th one, you are guilty because you are soliciting from your client. It is specifically written in the clause. Soliciting from your client via advertisement, via circulars, then only you will be guilty under that. Are you getting the point? So remember one thing, 5 and 6 may so many times problems will appear. So I will to suggest that 5 and 6 you should both quote it, right? Now see, securing professional work. Explanation. The purpose of this clause is to ensure that MIP shall not demand work from the others by publishing all kinds of what unnecessary efforts like convocation and promotions and all, right? In case member makes any inquiry again and again, then it shall be treated as solicitation and also to be treated as roving inquiries. Let's say, for example, one particular tender was opened, right? And you knew that the date of that tender has also what elapsed. But you are still inquiring from the authority, is there any requirement? Is there any requirement? So if you will make the inquiries like this, is there any requirement? Is there any still need for the chartered accountant to get a panel with you? That shows your desperation that you are looking for a work. In such cases, I say is very clear ki boss, you are guilty under 5 as well as 6. Soliciting and securing work, both will be considered together in this kind of clauses. When you already knew that that particular tender ka date has been expired, then why are you again requesting it again and again? Is there any requirement? Is there any vacancy? So that will be treated as a roving inquiries. What do we call it as? Roving inquiries. Right or not? So why you are guilty under 1? Because you were allowing someone to practice in your name. Why you were guilty under 2? Because you were sharing. Why you are guilty under 3? Because you are accepting from someone. Why you are guilty under number 4? Because you are entering into a partnership with someone. Why you are guilty under 6? Because you are securing the professional work from the person other than your employees, other than your partner, and other than the 53A regulation people. Now, very, very important clause, clause number 6. Clause number 6 says that, now try to understand that. Very important clause. I will say that clause number 6 and 7 we'll do at the later stage. Let's wind up a very easy clause first. That is called clause number 8 now. 6 and 7 I'm going to teach you, but at the later stage because it takes a lot of time and we have to pause this video after some time. So that's better that we should take one very small clause which will not take more than 10 to 15 minutes to make you understand. Now that clause is known as clause number 8, right? 6 and 7 after the 8 will do, right? Now see, clause number 7. What is clause number 7? Clause number 8 says that not communicating. If you are a member in practice but you did not communicate with the previous auditor before accepting the audit engagement. See, it is one of the guideline in our icai council that when the auditor gets changed from one chartered accountant to another chartered accountant, the incoming chartered accountant must communicate in writing to the outgoing chartered accountant, the previous chartered accountant or the previous auditor before accepting the engagement. That is what the requirement by whom? ICI. So ICI क्या बोलता कि boss, in case one CA has been replaced by another CA, one chartered accountant has been replaced by another chartered accountant, the incoming should communicate with the outgoing. Reason being very simple, so that you should know कि what is the reason the company has not continued with the previous chartered accountant. Why they considered you as an option. That what you have to understand here. So what is the purpose behind it? See, it's very simple reason. Maybe the previous chartered accountant trying to give the modified opinion. Am I correct or not? But he was not allowed to. So he was forced to leave. Don't you think that the same thing can happen with you? So basically, what is the purpose of communication here? So that incoming auditor will come to know from the outgoing auditor ki what were his concerns, what were his issues, what were his objections that he did not continue, why he thought of resigning, why he was removed. If the same thing can happen with him, don't you think that the same thing can happen with you? So what is the guarantee that you will not be forced? So that's why as an incoming chartered accountant, what is your responsibility? You should first communicate with the which auditor? Previous auditor to understand his issues and concern. That is where you are held guilty in clause number 8. Now let's understand, is this communication mandatory? Answer is yes. It's not the previous year which matters, it is a previous auditor which matters. Suppose last year audit has not taken place. So last to last year audit has taken place. That auditor matters to you. So it is not the exactly previous year which matters. It is the previous auditor who matters to you, not the previous year. Next point. Objective of communication is to understand the issues, concern and objection of the previous auditor. बहुत simple सी बात है. Now, IC has made it very clear that under these following three situations, the incoming auditor simply said no and shall not proceed for the acceptance of the new engagement. Now, let me tell you one thing. Point number 1. When there was a non-compliance of section number 139 and 140, he was thrown out of, he was removed, but he was not given an opportunity of being heard. Who? Outgoing auditor. He resigned, but they never ever disclosed me the ADT3, his reasons of resignation. I asked them, where is the ADT3? Show me his reasons of resignation. At least I'll come to know that why he has resigned. Or show me the opportunity which you have given to him if you have removed him under section 140 subsection 4. So neither the clause, neither the section number 139 has been complied with, nor 140. Suppose my appointment also has not been made properly under 139. They simply told me, Rohit, please come urgent basis way, and like that they have told me. So if there is a non-compliance of 139 or 140, you should never accept the new engagement. That is one thing cleared by the institute. Second thing, if the previous auditor's undisputed audit fees has not been paid, what is not being paid? Undisputed audit fees means what? It was already been agreed between the auditor and the entity, but the entity still refused to pay him the money. So if that undisputed audit fees ka concept can happen with that particular auditor, don't you think the same thing can happen with you as well? So you should not accept it. Third case is very important. Previous auditor wanted to give a modified opinion, but he was not allowed to. He wanted to give a qualified opinion, but he was not allowed to give the opinion. So don't you think that the same force, same thing, same coercion, same undue influence can happen on you? So remember, if 139, 140 is not complied with, if previous auditor was not allowed to give a qualified or modified opinion, if the previous auditor's undisputed audit fees is not paid, the boss, in this case, you should never accept the audit assignment. Understood? Yes or no? Next most important thing. But there is one twist in the question. Sometimes they may ask you the question like that. Now, please comment in the box, right? What is your answer? Let's say, for example, let me ask you whether you are good in that particular area or not. What if the previous year ka auditor was requested by the client and the client is going through a very bad phase of, temporary financial unsoundness is going on. Temporary financial sickness is going on. So they simply requested their auditor, sir, can you please reduce your fees from, say, for example, 5 lakhs to 3,50,000? Because they were going through the sick time, right or not? The financial position of the entity was not there. Now, this is the reason why that auditor resigned. Now, please tell me in the comment box whether in this case, it is mandatory on my part to not to accept the new engagement. Because I came to know that the previous auditor refused to continue because the company requested them to reduce little bit of their audit fees because the company was going through a financial turbulence or financial sickness. Now, in this case, he did not agree on reducing the fees and then he left. Now, please tell me, now is it a case that I should not accept the new engagement or I can still accept it? I want your answer in the comment box. Please let me know. Is it clear, everyone? Iska answer I will give you at the end, right? Now, next point is mode of communication. Mode of communication, you already know that it should be in writing and it should be hand delivered. And if it is not hand delivered, at least send the registered post with acknowledgement due, so that you will have a proof of delivery ki yes, you have communicated in writing with the which auditor? Previous auditor. So either hand delivered or registered post with acknowledgement due or via email. Remember, under certificate of posting, journal posting not allowed. Again repeating, under certificate of posting, general posting not allowed. Either it should be via email or hand delivered or registered post with acknowledgement due. Next point. In case it was undelivered, not because of the fault of incoming auditor, will be considered to be delivered. So obviously, I to send, but it is not delivered because of delay in transit or lost in transit. It is not my fault. So it will be considered as delivered. General posting and UCP not allowed. Just now I told you. In case of urgency, yes. Now let's say, for example, in case of urgent situation, emergency situation, the client is pushing you, sir, please accept it, please accept it. Our old auditor has left this and that. In case of urgent situations, suppose the time to communicate is very less, then give the conditional acceptance, not the full-time acceptance. Give a what? Conditional acceptance. Sir, okay, I am agreeing to your engagement, which is left over by the previous auditor, but first I will also send the communication, and it is a conditional acceptance. If any objection will be raised by the previous auditor, and I assume that okay, I should not continue, then immediately I will also discontinue. So give a conditional acceptance, don't give a full acceptance, right? Next point. Under the following circumstances, it is mandatory to communicate. Now, under what circumstances you must communicate? If the previous engagement was audit, then to definitely, sir, is it tax audit, concurrent audit, internal audit, boss, any kind of audit assignment, you have to communicate. Second thing, if the person to whom you have to communicate was a chartered accountant, then to definitely you have to communicate. And if the previous audit assignment was reporting work, then to definitely you have to communicate. So see, if the person who resigned or got removed is a chartered accountant, must communicate. The last time ka assignment was audit, must communicate. The last assignment was reporting task, must communicate. But ICA also says that in these cases you may communicate. It is recommended. It is a healthy practice that you should communicate. What are those cases? If the previous engagement was other than audit, previous person was other than a chartered accountant, previous engagement was certificate, or the previous engagement was relating to books of accounts or liquidation, etc. In these cases, ICA says that it's a healthy practice to communicate. But in these cases, you must communicate. Is it clear, everyone? 100% clarity. Now, incoming auditor. Incoming auditor shall wait for a reasonable period of time. अब question arise होता है कि sir, what is a reasonable period of time? Say for example 6 to 7 days. Reasonable period of time doesn't mean that 3 to 4 months you have to wait. If that person is not replying you and you have a evidence that your communication has reached to the previous auditor, that is fine. Reasonable period of time means maximum 6, 7, 8 days you have to wait, and so that you can assure that yes, your communication has reached. In case of undisputed fees payment was failed due to the wrong details provided by whom? Auditor, or due to the non-delivery of the check. In such case, incoming auditor can continue to accept the appointment even though an objection is raised by the outgoing auditor. Now, what they are saying, in case of undisputed audit fees payment was failed due to wrong details provided by that. Boss, you have given the wrong account. They to deposited your money, but due to your wrong account details of the outgoing auditor, the payment did not reach to your account, and you are blaming that the company is not paying the undisputed audit fees. So that is because of your wrong account deals. That is because of your check was not deposited in the account, it got bounced back because your account number was not wrong. Why the hell company should pay for that? Then in that case, company is right. Then I can accept. In that case, I can literally accept an engagement without even communicating with the which auditor? Previous auditor. If I'll come to know that his account details were wrong, that's why the money was not credited in his account. Is it clear, everyone? Next point is what? In case the previous joint auditor does not continue in the current year, it must be communicated with the old joint auditor. So suppose last year you were two, you and Mr. A were the joint auditors, and Mr. A is not continuing. So it is again your responsibility to communicate with the previous auditor. So this is what the various things which you have to consider in clause number 8. So we are done with the total 6 clauses. 6 and 7 we will do it like just now. Now let me give you the answer for what I told you. In case it is a case of financial sickness wala case and the company has requested the outgoing auditor to reduce the audit fees, but he treated it as a different way and he gave a resignation. So in these cases, the incoming auditor may continue because that was a case of sickness. But that was his personal judgment of whom outgoing auditor not to continue. But I can continue if someone will ask me and if it is looking to me genuine case, I will not think twice before reducing the audit fees because at the end of the day, everyone passes through this phase. Today it is to the client, tomorrow it could be me also. So if I'll not help my client in such areas, then who will? I'm not saying they completely compromise, but yes, if he's requesting you to little bit reduce your audit fees, and this is the reason the old auditor has left out, then in that case, there is no prohibition on incoming auditor of not accepting it. As an incoming auditor, I do have a right, I can accept it. So this is the answer to your question, which I asked you just 5 minutes before, right? So with that, our total 6 clauses are over out of 8, except 6 and 7. Now, clause number 1 may you were allowing someone to practice in your name, that's why you were guilty. Clause number 2 may you were sharing your emoluments with a person other than the list given below, that's why you were guilty. Clause number 3 may you were accepting someone's profits and share and commission from the professional services, you were guilty. Clause number 4 may why you were guilty, you were entering into a partnership with the people other than recognized by the council. Point number 5 may why you were guilty, clause number 5 may because you were trying to secure the professional work from the people other than your employee, other than your partner, and other than the 53A regulation people. And clause number 8 may you are guilty because you did not communicate with the which year auditor, sorry, not year, which auditor, previous auditor who was a chartered accountant before accepting this engagement. The moral of the story is that we must communicate with the previous auditor, right or not? And in all these 6 clauses, what we have that member in practice was held guilty, right or not? Because we are doing the clause 1 of schedule 1, which talks about professional misconduct for the members in practice. For the members in service, we are going to have a clause number 2. So 6 and 7 will start at the later stage, and let's proceed with the same. Okay, so let's start with the 6 now and let's start with the 7 now because 6 and 7 needs a proper concentration. They are the one of the biggest clauses you have in here, right or not? So we'll start with the 6, we'll start at the 7. Be calm and be composed when I'm telling you 6 and 7. So we are done with the 8th first and now let's start with the 6th clause. Very important clause and highly important because I think major time consuming clause is going to be 6 and 7 only. The remaining clauses will not take that much of effort for me to make you understand, right? So let me just start away with the clause number 6. Okay, so this is the clause number 6 where we call it as solicitation clause. What do we call it as? Solicitation clause, right? Let's start with this. Okay, everyone. So let us now start with the clause number 6, right? So as we already know that we have done the clause number 1, clause number 2, clause number 3, clause number 4, clause number 5, clause number 8 we have done, and clause number 6 and 7 we have to do. Now put your full concentration on this clause because this is going to be highly important clause, right? Now understand in the clause number 6, what is written there? Soliciting from the client or securing the professional work from the client. Now, how it is differentiated from the 5th clause is, in the 5th clause, the problem was you were soliciting or you were securing the professional work from a people other than your partner, other than your employee, right? And other than the 53 professionals, 53A professionals. Here, you are directly soliciting the work from your client via what? You are soliciting the work from your client via circular, via advertisements, via interviews, or via personal communication. So, if you will try to solicit the work from your client via interviews, via personal communication, via advertisement and all, then this clause number 6 will be attracted on you. Now, in the clause number 6, what you need to understand is if you are soliciting the work from another practicing CA, if you are soliciting the work from another practicing CA, then this clause does not make you guilty of professional misconduct under clause 6. Again repeating, you are allowed to solicit the work from the another practicing CA and you are also allowed to reply to the tenders right or not, which are in your knowledge. Are you getting the point? So if you are applying to a tender which are in your knowledge, that also does not disqualify you or does not make you professional misconduct. And if you are soliciting the work from another member in practice, then also this clause does not apply to you. This clause only applies to you and only makes you professionally misconduct if you are soliciting the work from your client via doing personal interviews or via personal communications, via advertisement or any other mode, right? Now see, nothing in this clause prohibits you from securing the professional work from the another MIP or responding to the tenders where the requirement is already in the knowledge of MIP. Is it clear, everyone? Yes. Now see, there are various things you need to understand in clause number 6 and 7. Clause number 6 and 7 may what you will understand is so many guidelines have been issued by the ICAI, what you can do, what you can't do. So let's see those guidelines. Guideline number 1, advertisement. Only the bare statement of facts like change in address or contract number advertisement is allowed. Advertisement in ICAI journal and news journal letter is also allowed. Now what they are saying that, say for example, you want to advertisement that you are changing your office from one place to another place, you have changed your contact number from one contact number to another contact number, those kind of bare statement of facts advertisements are allowed, you are not guilty. But if you are saying that we, the chartered accountants in practice since last 40 years, are shifting our base from one place to another place, this kind of professional attainment based advertisements are not allowed. And yes, you can also advertise in the ICAI journals and newsletters. What is allowed? Your name is allowed in the advertisement, designation is allowed in the advertisement, address is allowed in the advertisement, contact is allowed in the advertisement, email is allowed. Name of the firm is not allowed when you are advertising in the ICAI journals and newsletters. Is it clear to all of you? Rule number 1. Responding to the tenders for empanelment of professional work is allowed if it is already in the knowledge of MIP. So suppose there is one tender and there is a deadline within which you have to respond and it is in your knowledge. So if you are responding to those tenders, then it is allowed. There is no problem in that. But if you are responding to such tenders whose knowledge you don't have, suppose the tender is already being closed and you are still asking, is there any requirement? Is it still open? So that shows that it is your desperation to get that work. So in such cases also you are guilty. So what is allowed? If it was in knowledge of the MIP, not allowed making inquiries again and again. But if the tenders are published with a minimum prescribed fees of audit and open for all categories of the professional, then it is allowed to respond. But if the tenders were opened exclusively for the CA category for auditing and assistance services, ADIS is not allowed to respond. What they are saying that it's a very simple thing. Try to understand. Suppose there is a tender. That tender is exclusively only for chartered accountants category. Exclusively is only for chartered accountants category and it is open for auditing and attestation services, then it is not allowed to respond to the tenders. But if the tenders are open for all categories of the professionals, then you are allowed to respond to such tender, right everyone? Next we have the telephone directory guidelines. So say for example, gone were the days when we used to have the telephone directories. So in case of telephone directory guidelines, what you can give, what you can't give, that is what we are going to understand, what is allowed and what is not allowed. Now see, in chartered accountants category only allowed. So if you want to give your name and number and contact, you have to give it in your category only in the directory of the same town or city where the member resides. You cannot give the your details in the telephone directory which belongs to another city or another town, right? Only in your city and your town registered telephone directory you can give your details. Next one, it should be alphabetic manner. Next one, reasonable payment is only allowed and can also be included in what? Trade directories. What is not allowed? Abnormal font size is not allowed. So suppose everyone's font size is 10 and you suddenly give a premium payment to keep your font size to be 12. That is not allowed. Restricting other members' entry is also not allowed. You cannot tell to the telephone directory people that okay, only write my details, don't write the details of any other member. So that kind of attitude or that kind of prescription is also not allowed, right? Next point, members involved in teaching and coaching profession. So if we are involved in the teaching and coaching profession, so we are allowed to put the hoarding and name board at a coaching premises with reasonable size only. So what they are saying that ki first of all, though, you are not allowed to have that much of advertisement like social media pay and using your designation. They are saying that simply a hoarding or a name board at a coaching premises with a what reasonable size, and that to only subjects which you take and contact details. That's it. Anything extraordinary which looks appears in your board, or suppose you have made a golden color board or very large size board, or you are advertising and you are putting the posters, everywhere across the city, that will be treated as a solicitation and you will be held guilty under the professional misconduct of clause number 611, clause 6, part 1, schedule 1. So simple size, small size board is allowed, and reasonable amount of detail should be given, like what subjects you teach and what is your fees which you charge, and all those details are required to be allowed. Otherwise, it will be treated as guilty of solicitation. Not allowed hoardings on social media. Social media platform pe not allowed. Posters not allowed. Banners not allowed. And firm's name is not allowed. I have made this, jotted down this point too much simplified for you. You will feel it very easy for this to understand. And we have already recorded the marathons in the earlier cases also, and we did get a very huge response. So I thought that this marathon also will become a very popular among you people, right? Next point, sponsorship activities. So you are not allowed to take out your firm's name while doing the sponsoring activities, or generally not allowed, but if it is conducted as per the guidelines of what? POU. Now, what do you mean by POU? There is one program organizing committee or program organizing unit under the icai boundaries. So if you are doing the sponsoring, you are sponsoring a particular activity, but as per the directions given by POU, program organizing unit, under the icai, you are allowed, otherwise you are not allowed. Note, in case of CSR activity sponsorship, only the prefix of CA is allowed before the name, logo, designation and the firm name are not allowed. They are saying that suppose it's a CSR activity sponsorship. So then in that case, only the prefix, the word CA is allowed before your name, but giving your name, giving your full name, giving your logo, giving your designation and giving your first firm's name, that is completely prohibited, especially in case of what? CSR activities, right? Next one, publication of books and articles mein your name is allowed, designation is allowed and firm's name is allowed. What is not allowed is your professional attainments. Right or not? And in case you were removed under section 140 subsection 4, what they're saying that when you get removed under section 140 subsection 4, do you get that opportunity of being heard to defend your removal or not? Like one reasonable length letter will be allowed to you to be given to the company. If it reaches before the EGM notices to be sent, it will be circulated. Else, you will be invited in the meeting to talk about or read out in front of the shareholders. That opportunity I'm saying. Section number 140, subsection 4. Company audit may we used to read that. Ki before removing you, before passing a special resolution against you, an opportunity of being heard will be given. So, if you are being given that opportunity of being heard, you just need to use that opportunity to defend your removal. Do not misuse that opportunity by taking any needless publicity. I am this and I am that, or defaming the company. If it is proved that you are taking needless publicity or you are defaming your client, in that case, that opportunity will be taken away from you, and then you cannot tell to the management saying that why this opportunity was not given to me. That is also covered under clause number 6. Now, see, they are saying if a member uses such opportunity for defending his removal, showing willingness to continue and expressing his IOI, then it is allowed. But using this opportunity for needless publicity or for defaming the client is not allowed. Is it clear, everyone? Next one, it is not allowed to accept the original professional work which is already undertaken by the another member. So let's say, for example, there is one chartered accountant, Mr. A. So he is already doing the statutory audit of XYZ Limited. So XYZ Limited wanted a tax auditor also. So chartered accountant A referred me as a tax auditor. So that client came to me, XYZ client came to me. They were extremely happy with my services which I provided them while doing their which audit? Tax audit. Now they wanted to give me statutory audit also. Even though the client is willingly trying to give me the statutory audit, but still I should say no. I should say that no, I will not do this particular work because it is unethical to accept the work of a original chartered accountant. Are you getting the point? Now see what they are saying. It is not allowed to accept the original professional work which is already undertaken by the another member who referred you another professional work, even if the client demands so. Even if the client is saying that why you are not asking or why you are not accepting it. No. ICAI says that, our institute says that, ki boss, even if it is being referred to you, even though by the original client, even though it is referred to you by the original chartered accountant, even though client wants you to change that, then in that case you should never ever accept it. It does not look ethical. So it means it's like backstabbing. You are taking away the original work of that chartered accountant. So sorry, in this case also, institute is very clear saying that not at all allowed. Next one. Giving public interviews. Make sure that when you're giving the public interviews, your name is allowed, designation is allowed, and taking your firm name is allowed. What is not allowed is your professional attainments, right or not? Or under advertisement under the PO box numbers are completely prohibited. They are not at all allowed. So I have jotted down the points in such a manner that each and every point can be a probable question in your examination. So it will not be difficult for you to, retain them, because you know that ki each and every point can come in your examination in the kind of separate question. Next one, earnest money deposit. Now, what do you mean by earnest money deposit? Suppose sometimes when we reply to a tender, you need to deposit some money, right or not? But if that earnest deposit money is deposited as per the instructions of ESB board, Ethical Standard Board, then it may not amount to any kind of disciplinary action. But if it is not as per the instructions of Ethical Standard Board, then it may amount to any disciplinary action. So if any complaints have been received by the Ethical Standard Board, then it may amount to disciplinary action, because if the members are maintaining a cost sheet and can justify the payment and deposit, no action will be taken. So you have given an earnest deposit and you can justify it. This is what I have given. Everyone else also who replied to that tender has also given this earnest deposit, and you can show your cost sheet. You can justify your payment and no complaint against you. Then no disciplinary action will be taken against you. But if anybody has complained against you, you tried to give a extra earnest deposit or you tried to secure this work by the misleading manners, then in that case you will be liable to the strict actions to be taken up by the authorities. Is it clear to everyone? Yes or no? Yes, everyone? Okay, next. Now, what is the next point they are saying? That firm's name can be mentioned on television and movie credits. So sometimes you might have seen that so many times movies may, in the beginning of the movies or at the end of the movies, you will find the introduction of the staff and all. So in such cases, firm names can be mentioned in the television and movie credits. Next one, educational videos on the social platform like YouTube, Telegram, or Instagram are allowed, but firm's name, your contact details, and website address is not allowed in such cases. So normally you want to educate the people by saying, giving them a educational videos and all those things are allowed, but firm's name is not at all allowed. Neither your contact details are allowed and nor your website address is allowed. Now note, in case of invitations and greeting cards relating to any celebration, yes, this one is also very important point. Let's say, for example, there are two partners. Try to understand, Mr. A and Mr. B. Now, Mr. A has bought the house and he has thrown a housewarming party. So, in the housewarming party of Mr. A is definitely going to go publish invitation cards and he can invite his friends, his clients, his relatives. Again, repeating, his friends, his clients, and his relatives. If Mr. A is sending the invitation to the clients, relatives, or the friends of Mr. B, even though he is his partner, you are guilty of professional misconduct, Mr. A. Are you getting the point? So, whenever you are throwing any housewarming party or any invitations have been sent for particular occasion, between the partners also they are saying that try to send this invitation to your concerned parties called relatives, your concerned friends and concerned clients only. Don't send it to anyone else. What they are saying, in case of invitations and greeting cards relating to any personal celebration, member may mention his name. You are allowed to mention your name, your firm's name and designation, but it must ensure that it shall only be sent to the concerned clients, means your clients, your relatives, and your friends of that concerned member only, not the concerned firm. Concerned member only, that is, not to circulate it to the relatives and friends of what? Other partners, else what? Guilty. Did you all understand what I'm trying to tell? Next point, sharing profits to the potential clients not allowed unless demanded by what? Them. Now, what do you mean by that? You are not allowed to share or sharing matlab profile. Like say for example, you are not allowed to share the profiles on a social platform. Ki, please have a look at my profile and all those things. If it is being particularly being requested by someone, ki sir, I would like to see your profile, I would like to see your total thing in a pull manner, right or not? They are asking you, they are requesting you. Then if you are sharing the link for your profile relating to your YouTube profile or Instagram profile or your website profile, then in that case you are not guilty of professional misconduct. But automatically you are sharing to everyone, then you are guilty of what? Professional misconduct. Now there are some website guidelines also which you need to understand in clause number 6. There is no problem on the format and color. If you are making your own website, there is no problem on the format and no problem on the color. Whatever the color you want to choose, whatever the format you want to choose, you are allowed. Members can create their own web page. Yes, members can create their own web page within the website. Right? Website should always and always run on pull technology. Now, what do you mean by pull technology? Cookies and automated posts shall not come automatically. Like it should not push you the like as and when you suppose you went to my website www.groverassociates.com. So if you'll go over there, you should not get all those things automatically. We are providing these services, we are best in the city, all those things. That is called push technology. It should be a pull technology. If someone wants to know about you, they should press that particular corner in that website and try to pull the information out of it. Instead of information being pushed, they try to pull the information out of it. Next one, not to circulate or solicit client or outsider to visit the website either by SMS or email. You are not allowed to send any SMS or email. Yes, we have created any website. We all request you to visit our website once. Not allowed. It is professional misconduct. Members name, trade name, members and firm address, partners name, qualification, contact, email, job vacancies allowed. Same is applicable in case of what? Employees. So if you want to give these details, members name, trade name, members, firms, partners name, qualification, contact, email, job vacancies are allowed. Same is applicable if, in case you are giving the details relating to your employees. Year of establishment, nature of services rendered, very important point. Again repeating, very, very important point. Year of establishment, nature of services rendered, areas of experience of partners, employees, number of articles, nature and number of engagements handled allowed only on pull technology. Only on which technology? Pull technology. If somebody wants to know that how many years you are in the market, what are the nature of services you are rendering, right or not? What are the number of areas of specialization of your partners, areas of experience of your partners and employees, number of articles, right or not, nature of engagements handled by you. Every this sensitive information should be on the pull technology, should not be on the push technology, right? Next, client served and fee charged prohibited. Yes, very important point. What are the clients you have served and what are the fees you have charged from your client? That is generally prohibited. But in case any regulator particular request you, regulator like on the request of SEBI, on the request of RBI, then you can mention that and you have to mention and give a declaration and disclaimer that this information was requested by a particular regulator. That's why we are providing it. Otherwise, we don't have to provide, right? Banner advertisement, not allowed. Any information on cyber, on unbecoming a CA, not allowed. You should not demotivate or you should not give any vlogs or you should not put any blogs which are demotivating the people to become a CA. So unbecoming CA kind of statements also that are prohibited. You are guilty otherwise. Special stationery on golden and diamond jubilee celebrations are also not allowed. Say for example, you have completed your 50 years of practice and you want to enjoy your golden jubilee and you made a special set of stationery, all those kind of things are not allowed. That is again going to be considered as a professional misconduct. Next point, yes, Fancy names of websites are not allowed, like the best chartered accountants of Guntur.com, the best chartered accountants of Hyderabad.com. These things are not allowed. Website sponsorship not allowed. What do you mean by website sponsorship? So you cannot circulate or you cannot, show your websites at the sponsoring events, right or not? Suppose you have sponsored as per, like, just now we have understood कि sponsoring websites पे, sponsoring events पे you are allowed to name yourself, but you are not allowed to name the firm's name, especially in the CSR project. Just now, 2 minutes back, we have done that. In case it is a CSR activity, you are not allowed to do that. You are only allowed to do it in the like as per the POU instructions, Program Organizing Unit instructions. So website on the sponsoring events also not allowed. Next one, passport size photos of the partners and members are allowed, right or not? But passport size photo is not allowed on what? Visiting cards. ICA logo is only allowed. Those logos which are allowed by the prescribed by the ICA, those logos are only allowed. Next one, blogs and articles, updates, amendments are allowed. If you want to update the general public, that is allowed. Chat rooms among the members and clients are allowed only, but make sure that confidentiality should be maintained. If on the chat forum any client is asking you any confidential information, sensitive information, it is your responsibility to maintain the confidentiality on the same. Suggestions and recommendations to the clients are also allowed. Then search engines which are limited to the search of professional courses and professional bodies ka website links and all those things are allowed. Database to other websites allowed with only base statement of facts like Just Dial, Yellow Pages. They do collect the data of the chartered accountants. So yes, you are allowed to give them the data, but make sure that the data should be only allowed to the with respect to the base statement of facts. Publishing the website on stationery, on the letterhead, visiting card, billboard, etc. is allowed. QR code on the visiting card is also allowed and website is also allowed. So nowadays QR code, but make sure that your QR code shall not be leading you to the professional attainment side. The QR code should be only given for the purpose of letting you know that this is a common description of your firm, right? Or not? It should not take you towards any kind of what do you say, any kind of professional attainment thing. Next one, ensure that website should always be what? Updated. So these are your which guidelines, everyone? Website guideline. Note the above list of guidelines are not exhaustive. I say may consider other violations which are not covered yet. So what they are saying that okay, whatever the guidelines we have done so far, advertisement guidelines, tender responding guidelines, TV guidelines, and website guidelines, they are not exhaustive. It may keep on changing from time to time. I say may consider a particular case, even though it is not covered in the above guidelines. But if I say things that okay, it is leading you towards any kind of other misconduct or professional misconduct, they can take care of that case on their own, right? So this is what do you mean by the clause number 6, everyone. So what was clause number 6? Was on soliciting. So tell me what was clause number 1? Clause number 1 was on allowing someone to practice in your name. Clause number 2 was on sharing. Clause number 3 is on what? Accepting. Clause number 4 is on what? Entering into a partnership firm. Clause number 5 is on securing professional work. Clause number 6 is on solicitation. Clause number 8 is on not communicating with the previous auditor. And now we are going to cover the clause number 7. So what we are going to do now? Clause number 7 we are going to understand it. Is it clear? Now, what do you mean by clause number 7? Clause number 7 is on advertising your professional attainment. Let me tell you one thing. If these two things you will find it in the examination. Again, debating. If these two things you will find it in the examination, it means this is relating to clause number 7. If you find any member doing professional attainment, talking about his experience, his awards and achievements via circulars, via interviews, via any other mode of advertisement, so you're guilty under clause number 7. Clause number 6 was soliciting the work from the client. This is completely dedicated clause to advertisement. First of all, to try to understand the difference between 6 and 7. 6 is on soliciting. 7 is on what? Advertising. Advertising what? Your professional attainments and using the designation other than chartered accountant, which we have already covered in section number 7. In the earlier session, we have covered under the section number 7, ki boss, if you are going to use any designation other than chartered accountant, you are guilty. No other designations are allowed, only suffix are allowed, like MP, MLA. These things are allowed. CA, CS, CMA allowed. But company secretary, cost accountant, member of parliament, these kind of full designations are not allowed. So if you are found guilty of advertising your professional attainments, if you are found guilty of, using the designation other than chartered accountant, the boss, clause number 7 is applicable. What is applicable? Clause number 7. So again repeat, clause number 6 is on. Yes, clause number 6 is on soliciting the client, and clause number 7 is on advertising, right or not? This is what the difference. Now, what is the explanation of this clause? Interviews and form appearances, same as clause number what? 6. So if you are giving the interviews and if the form appearance is coming on the interview, so what is allowed? Name is allowed, your designation is allowed, your firm name is allowed. Are you getting the point or not? What is not allowed? Your professional attainments are not allowed. Try to understand. Suppose there is an interviewer. Now that interviewer is saying, "Hi, we will welcome Mr. Rohit Grover. He is a chartered accountant." So name is allowed, designation is allowed, and he is a partner in this XYZ and Co. Karke. So they have given my firm's name. But what if they are saying that he is like a gold medalist in auditing subject? He is a this person. He has got all India 19 rank. He has served with these many listed companies. How the interviewer will come to know about all those things? It means you have spit it out of your mouth. That's how the interviewer came to know, na? So this is called professional attainments. So such kind of things shall never appear. So everything which we have done in clause number 6 is equally applicable to clause number 7. So again repeating, professional attainments via TV interviews are not at all allowed. Is it clear to all of you? 100% clarity? Yes, sir. Now, there is no prohibition in practicing other professions like CA, CMA, but it is subject to obtaining the permission from what? Other professional bodies. What they are saying that we are not stopping you from practicing the other profession. If the other institutes or professional bodies do not have any problem in making you practice of CS and CMA, there is no problem. But designation, you can only use one. That is called what? Chartered accountant. You want to use that designation of cost accountant and company secretary, do surrender your chartered accountancy COP first. Then only other designations are allowed, otherwise not allowed. Now, but MIP has to ensure that only chartered accountant designation can be used. Year of establishment is not allowed on the visiting card. So visiting card pe your QR code is allowed. Am I correct or not? Website address is allowed, but year of establishment is not allowed. And the same thing we have learned just now in website. Year of establishment is not allowed because that's a something which is called professional attainment. Suppose if I'll say Grover and Associate since 2012, it shows that I'm there in the market for 12 to 13 years. This is called depicting your professional attainment. This kind of thing is not allowed. So year of establishment on the website should be on pull technology, but on the web visiting card though it is not allowed. Letterhead maybe also it is not allowed. Only allowed in case of website, that too with the which technology? Pull technology. Just now we have done publishing articles. Your name is allowed, photo is allowed, designation is allowed, whereas professional attainments and payment for such publishment is not allowed. So you can give your name, you can give your photo, you can give your designation, but payment for that articles, people should come to you and demand your articles. Na? They really like your content. So you made the payment for publishing that article, that is not allowed. And moreover, your what do you say, professional attainments are not allowed. Simple base statement of fact is there. CA Rohit Grover, FCA, designation chartered accountant, that's it. This kind of information if you are giving, there is no problem. Are you getting the point? Next point. Advertisement for the client. Yes, you can advertise for your client, but at that point of time also some rules are there. Advertisement for the sale of his business. A MIP is working as a trustee, receiver or liquidator. If you are working as a trustee, receiver or liquidator and you are advertising for the sale of his enterprises, that allowed. Advertisement for the requirement of your client staff. Suppose your client is looking for some extra stuff, that is allowed. Advertisement requirement for your own staff, that is also allowed. Advertisement requirement on the behalf of the client wishing to sell or acquire a property, that is also allowed. Because in all these things you have to be very careful. Professional attainments is a big no. Are you getting the point? You need a staff, you can advertise. Your client need a staff, you can advertise. Your client may, you are working as a trustee, receiver, liquidator, you want to give an advertisement, allowed. Am I correct? You want to give a advertisement on the behalf of the client who is willing to sell his properties, allowed. Base statement of advertisement is allowed. Where is the question of giving the professional attainments? It should not be allowed, right? Next one, celebrity candidate success. Celebrating, not celebrity. Celebrating Celebrating the candidate success with a base statement of fact is what? Allowed. So suppose one of my articles got the All India rank 1. I can simply state one that congratulations on securing All India rank 1. We are very proud of you. That's it. We have made him ready. This person got the All India rank because of us. Come and join our firm because we produce the All India ranks. We are the factory and manufacturers of rank holders. All that kind of professional attainment is not like simple base statement of fact. We are congratulating you on securing your All India rank one. This paid your hard work and all those things. Simple base statement of fact is allowed. Nothing is allowed to talk about yourself and your firm. Like while issuing the reports and certificates, purpose of issuing the report with the base statement is allowed. Holding the positions in the local, national, and government like MPs, MLAs. Now, reason is why MP, MLA word is allowed. MP, MLA abbreviations are allowed. Why not full forms are allowed? Because it overpowers the public. You are overpowering the public by saying that I'm a member of parliament. I'm also a member of what? Legislative assembly. So some of the clients will get, an impression that okay, if I'll go against this politician, he may do something wrong to us or this and that. So any kind of sense of insecurity or sense of overpowerness, you are not allowed to give. You are an MP, you are an MLA, keep it very limited. I am an MP, MLA, member of parliament full designation, member of state legislative assembly full designation, that is not allowed. Is it clear? Next point. Okay. So signboards with the glowing signs and neon colors and abnormal font size is not allowed. As you all know that ki after on the outside of the client chartered accountant's office, you will find that either black and white color boards will be there. Obviously, this much of size, maximum this much of size. Are you getting the point? And blue and green color is also allowed. Glittering neon colors, having the silvers on that, very glowing colors or all those things. These kind of signboards are not allowed. Extra large signboards are also not allowed. Only the nominal size of the signboard, which is permitted by council, black and white color or blue and green color, those kind of signboards are allowed, right? Being a director in a company, name, designation, and number of directorships held are allowed, but the firm's name and your area of specialization and professional attainments are not allowed. So let's say, for example, you're also working as a director in one company. Your name is allowed, your designation is allowed. Am I correct? And your number of directorships held in, that didn't help you in holding the 20 directorships. That you can allow in which other companies you are also a director. That is all allowed. But make sure that your firm's name, your professional attainments, your area of specialization, that is not allowed to be published by the company along with your directorship details. Next one. Photo and QR code. Photo is not allowed on the visiting card, but allowed on the website with a passport size, but allowed on the website and write-ups passport size. QR code is allowed on the visiting card, but with no professional attainment. Suppose you are scanning the QR code and you are being redirected towards some professional attainments, that is not allowed. And the most important guidelines now which has come are known as network guidelines. Which guidelines? Network guidelines. पहले तो अपने को समझने आना चाहिए कि what do you mean by the term called network. Everyone listen to this very carefully. Listen very carefully. Deloitte, EY, KPMG, PwC, they are the networks. They are the networks. In these networks, our firms go and join and we become network firm. We become what? Network firm. So, sir, what is the advantage? What is the benefit of becoming a part of network? You get exchange of resources. You get exchange of information. You get exchange of expertise. There will be a sharing of profit, sharing of cost, administration sharing will be there. You will get a good exposure if you'll become a part of a big network. So, network does not do the audit. Network spreads the audit to its network firms. Are you getting the point or not? It's like a person joining a partnership firm. We as a partnership firm, we as an LLP, we as a sole proprietor joining a network. So network is a very big thing. Network is a mutual entity. Network is a company. Network is a LLP. And remember one thing. Now, how network has to be differentiated from our firms. Now, we firms may use Grover and Associates, Grover and Co, Grover and Company. Right or not? Networks may the word affiliates is used. What is the word used? Affiliates. ABC and affiliates. ABC Affiliates Private Limited. ABC Affiliates Management Consultancy Company. ABC Affiliates LLP. Affiliates word is something which is used by the networks. We use the word associates. When the people associate, creates our firm. When the firms get associated with the network, that is called affiliates. Like say for example, Reliance and affiliates. It means Reliance, including its subsidiaries, holdings, subsidiaries, and joint ventures, and what do you say? Associates. So network includes so many affiliates. So networks is a very huge thing. We become a part of a firm, network, and we call ourselves as a network firm. So what is network? See, it can be a mutual entity, it can be a firm, it can be LLP, it can be management consultancy company, but it cannot practice on its own. Networks don't practice. Network firms practice, which are the part of that network. Are you getting the point? Second thing, it's a large structure aiming at cooperation, cost sharing, profit sharing, common ownership, quality control, business strategy, brand name, and use of what? Professional resources. So, being a part of the network, these are the various benefits you get. You will get the cost sharing, you will get the cooperation, you will get the profit sharing, you will get the common ownership, you will be having the betterment of QCPPs, you will be having a brand name, you will be having a business strategy. You feel that how it good will be when I'll write on the visiting card, network form of Deloitte, network form of EY, network form of PwC. That is what the benefit of becoming a part of a network. And you will be getting the exchange of professional resources as well. Suppose I do not have one particular resource who is an expert in this particular area, but the another network is having. I can borrow that services from the another network. This is how we create it. Right? Next thing. It is all about sharing of information, knowledge, partners, staff, technical expertise, training, facility, audit fields, and technologies. A network firm is not allowed to join. Very important point. A network firm, not the network. A network firm is not allowed to join more than one network. So if you are a part of one network, you cannot be the part of another network. And network firms having common partner shall join the same network. Now let's say for example, ABC and Associates, APQ and Associates. Now, ABC and Associate is already a part of what? Deloitte, right? Now, say for example, what is a common partner between them? A. So this network firm also should join the Deloitte only. So if there are two CA firms having the common partner, they cannot join two different networks. Two firms having the common partners must join the same network firm. Did you get the one? Must join the same network, sorry. Right? First of all, though, you are not allowed to join more than what? One network. You cannot join more than one network. And the two network firms having the common partner must join the same network. Highly, highly important point. Next one, how to incorporate a network. Network बनाते कैसे? Like a company, but here ROC की जगह ICA. So first of all, तो we have to go for a name reservation. So name reservation form number A shall be filed with ICA for the approval, where acceptance or rejection will be initiated within 30 days. So within 30 days, you will come to know whether your network form is available, network name is available or not. The form number is A. Once your name is reserved, it is valid for 3 months for the incorporation. If the name is available, it is reserved for you. So like in the Companies Act, we getting reserved it for 20 days and 60 days. Here it is valid for us for 3 months. In the coming 3 months, we can incorporate a network. ICA reserves the right to cancel it even after the allotment if it appears undesirable. Suppose ICA has given you the name of the network reserved for you for 3 months, but later on ICA realized that ki boss, this name is looking undesirable, so ICA can cancel that particular network name which is being allotted to you or reserved for you. Next one, the form number A is for the name reservation. Main form is form number B. Now the network must be registered within the 3 months of the name approval, because only the approval of the name does not make it a what? Network. Obviously, name approval does not make you the network. After the name approval, you have to go for a proper incorporation. For the proper incorporation, the form number is form B. What is the form number? Form B is there. Am I correct? So form A is for the name approval. Form B is for the registration of networks. Am I correct? Now what is form C? Name approval. You have to do obviously the incorporation within how many months? 3 months. Otherwise, once your name is what do you say, unreserved, then there's no point of doing the network. Then form C, if you want to change the network, so you are a part of network 1 and you want to shift from one network to another network, means exiting one network and entering another network, to be filed with icai within 30 days of the change of network on account of entry or exit from a network. So suppose my firm was a part of Deloitte and now I want to join a network of EY. So from exiting the Deloitte and joining the EY within 30 days of such change, I have to file the form number C. With whom? I say. What is form number D? Form number D is required basically if your network is incorporated in India but consisting of firms which are formed outside India. Right or not? So basically a foreign network. So to be filed with the ICA by an authorized representative within 30 days from the date of what? Arrangement. So once you have done the arrangement, we will create a network of the foreign entities. Then in that case, within 30 days, your authorized representative should go to the ICA and file the form number D. Note, ethical requirements of the network will be same as of what? Network form. So there will be no change. Same integrity, objectivity, confidentiality, professional due and care, and professional behavior, same as it is applicable to network, which is applicable to network firm. Now, ceiling limit on non-audit fees. Now, very, very important point. See, my firm and some another firm are the part of one network. Another firm of the same network is charging a statutory audit fees. The other network firms for the same company cannot charge more than 3 times the MCOS fees from that entity. Now, let me give you one example. Suppose there is one A Limited. What is the name of the company? A Limited, right? Network is Deloitte. What is the network name? Deloitte. Now, there is one network firm 1, network firm 2, network firm 3, and network firm 4. Now, there are total 4 network firms in Deloitte. Now, NF4, network firm 4, is already doing the statutory audit of this A Limited and they have charged, say, for example, 20 lakhs for their statutory audit fees. Now, for the A Limited, they also needed MCOS services, management consultancy and other services. So, network firm number 1, network firm number 2, and network firm number 3, 1, 2, 3, put together are providing the suppose MCOS services. So, remember the amount or the fees to be charged for the MCOS services shall not be more than 3 times the fees than statutory audit. Means what? What was the statutory audit fees? 20 lakhs. So NF1, NF2, NF3 put together, whatever the MCO services they are providing to this particular A Limited, they shall not charge more than 60 lakhs. That is what the rule when it comes to the network firms. Are you getting the point? Now read the rule. If a network firm has charged a statutory audit fees for its audit services, ensure that the other network firms of the same network collectively shall not charge 3 times, more than 3 times of statutory audit fees for their rendering of non-auditing services. Are you getting the point? Maximum 3 times of the statutory audit fees is allowed to be charged for MCOS services collectively given by the other network firms of the same network to the same entity. So obviously the one who is providing the auditing services cannot be your MCOS service provider because section number 144 prohibition will be there. But if any other network firm is providing the MCOS services, they cannot charge collectively or individually more than 3 times of your audit fees. So say for example, your audit fees was 30 lakhs, they can maximum charge 90 lakhs. Your audit fees was 10 lakhs, they can maximum charge 30 lakhs. Is it clear? The MCOS fees shall not be more than 3 times the fees of statutory audit within the same network. This is what they're trying to tell. Now, incoming and outgoing auditors shall not be from the same network unless cooling period is over. So let's say, for example, incoming auditor and outgoing auditor rotation is equally applicable to the network. The incoming auditor of the same network and outgoing auditor of the same network are not allowed unless their cooling period is over. Now, network firms are not allowed to use the words network firm on their to use the word network firms on their stationery item. As I told you, if I'm a part of any network, say for example, I'm a part of EY network, so I'm allowed to use the word network form of EY on my stationery items, be it my website, be it my visiting card, be it my letterheads. Next point, network forms. When a network is incorporated, it shall use the word affiliates. That's what in the beginning I told you ki how you differentiate yourself from the like network. Network use the word affiliates, we use the word associates. That is the difference. So Grover and associates, but if I'm a network, I will use Grover and affiliates. So network can be XYZ affiliates if the network is a sole proprietor. If the network is an LLP, XYZ affiliates LLP. If the network is a company, XYZ affiliates private limited. Right? Now, every network must have a documented internal bylaws. Now, do we have the MOAs and AOAs of the company or not? Same way, to run a network, we need to have a internal regularities. We need to have a internal bylaws, rules and regulations talking about managing committee, library charges, administration, disputes, settlement, uh, you can say issue of journals and newsletters, development and maintenance of database, contributions to meet the cost of administration, everything. For all of these areas, we need to have your own word, bylaws, rules, and regulations. Next one. Insolvency professional and registered value designations are allowed to be used as on the stationery items. What they're saying, say for example, you're an insolvency professional. Remember one thing, these are the only two designations other than chartered accountant which are allowed to be used on your what do you say, stationery items. If you're an insolvency professional, yes, instead of IP, you can also use insolvency professional. If you're a registered valuer, yes, instead of using the word RV, you can use registered valuer along with your chartered accountancy designation. Especially these two are the exceptional things. So remember, this question can come in your examination. Again, repeating, instead of IP, you can use insolvency professional, and instead of RV, you can use registered valuer. Now, what are your write-up guidelines? Now, what do you mean by write-up guidelines? Sometimes for the MEF empanelment, say for example, RBI empanelment is there, or say for example, we are going for CAG empanelment. So you have to tell your details of your form. So उसे हम लोग बोलते हैं write-ups. What do we call them as? Write-up. It's like giving your biodata details. So if you are writing a write-ups, then make sure that your write-ups should be truthful and non-misleading. So see, your write-up must be honest and what? Truthful. Second thing, they should not be exaggerated. कोई extraordinary things you don't have to write. Simply write the facts and figures. They should not be exaggerated. Shall not be compared with others. You write your own information. Don't compare it with what others. Next rule of the write-up is what? Shall not contain anything which is disrespectful to what? Profession. Do not write anything about unbecoming a CA or a CA institute or anything which is providing the disrespect to your profession, right? So this is the next thing in the write-ups you have to understand. Next thing is what? In the write-ups, make sure that you shall not contain the name of your clients and what? Fees charge. Same rule applied in our website also. Same rule applies in the write-ups. Write-up is basically a biodata given to a statutory authority for the purpose of empanelment. Like we get the bank audits, we get the PSC audit. For that, we have to give them the write-ups. Next one. No mentioning of the awards and achievement. Professional attainments are not allowed except if you have earned those awards and achievement either given by central government, state government or statutory authorities. Those kind of awards and achievements are allowed which are given to you by central government, state government or statutory authorities or regulatory bodies. Other than that, no other awards and achievements are allowed. Next one. No catchy and fancy words are allowed in the write-ups. Next thing. Font size shall not exceed what? Size 14. Write-ups ka size shall not exceed the font size 14. Membership number and FRN is must. Firm registration number and your membership number is what? And shall not be violating a Chartered Accountants Act or any guideline or any regulation. So these are the basic features of your what? Write-ups. Honest, exaggerate not, do not compare with others, shall not be disrespectful. Now let's understand what are the write-ups for the members and what are the write-ups for the firm. If you are writing the write-ups for the member, particular membership, suppose you are a sole proprietor. So your name, membership number, your age, your date of becoming ACA, date of becoming FCA. Date since COP held. It is not allowed in website, but it is allowed in the write-up because write-ups are not something which you can take out on pull technology. Websites pe pull technology is allowed na. Write-ups are something which you are writing on a piece of paper. How it will be a pull technology? So you have to mention the date of establishment. But remember, if it is a website, it should be on which technology? Pull technology, not case of write-ups. Write-ups mean date of since you hold a COP allowed. Recognize qualification if you are other than CA, that is allowed. Your language is known, your contact details, your professional address, your website, your email, your logo, your passport size photo, your details of employees, how many are CAs in them, how many are assistants, professional and other employees, name of the employees and their what? Particular services rendered also you have to mention. That's why I have written star mark here and star mark here so that you can understand that this is different in case of website but very much different in case of write-ups, right? Position of a director or a MD in any management consultancy company. Don't worry about this also, we have guidelines, we are going to cover it at the end. Now suppose you are writing the write-ups as a firm, so name of your firm, firm registration number, वहां पे क्या था, the day when you became an FCA, here the year of your establishment, professional address, working hours, contact details, email. You can see that nowhere we are giving any kind of professional attainment. It's just a simple layman statement of facts. Next one, contact details, emails, number of partners and their particulars including passport size photo, CA logo, details of your employees, name of your employees and their particulars, services provided, and affiliation of the network registered with whom. I say to which network you belong, so you can mention the name of your networks. So that finally brings an end to your clause number 6 and clause number 7. Keep these guidelines in your mind. Remember, clause number 6 and clause number 7 are highly, highly, highly important. Again, repeating, highly important. So do not miss these clauses. So now our majority of the major time consumption which was required on clauses is over. Now the remaining clauses are quite easy. So let's proceed with the clause number 9. Okay, now let's proceed with the clause number 9. What was our clause number 6? Non-communicating with the previous auditor before joining the audit assignment. Now clause number 9, non-compliance of section 139 and 140. What is the name? Non-compliance of section 139 and 140. So this clause though we already had at what do you say, our clause number 8 as well. But clause number 8 may, it was given कि under what circumstances you should not join the new assignment if there is a non-compliance of 139 and all. And clause number 8 was stressing on communicating with the previous auditor. Here it is not communicating with the previous auditor. It is simply saying that कि you joined, but section number 139 was not followed. And somebody resigned or you got removed, but you were not given an opportunity of being heard as per 140, or you were not allowed to give the ADT 3, which is the reasons of your resignation. So remember how to differentiate between 8 and 9. 8 will be stressing on communication with the previous auditor. If the question is taking you towards communication side, then in that case clause 8 should be quoted, but clause 9 to be quoted if it is specially relating to non-compliance of section number 139 and 140. अब 139 140 है क्या? 139 is talking about your appointment. Your appointment was not proper. Casual vacancy was not proper. Rotation was not proper. 140 में resignation was not proper or removal was not proper. Simple. You are getting appointed. Suppose who appoints you? The members by passing an ordinary resolution in the AGM. You asked the copy of OR, they did not give you. They said that we neither conducted any AGM nor we conducted any ordinary resolution. So that is a proper appointment or invalid appointment? Invalid. So if there is a non-compliance of section number 139 and 140, you are going to quote clause number 9. So you are guilty under 911. Right or not? Clause 9, part 1, schedule 1. Now, at the time of appointment, or at the time of casual vacancy, rotation, reappointment, removal, and resignation, if these things are happening, so boss, you are guilty under clause 9. Now see, subsequent auditor was appointed by the board instead of members. Subsequent auditor is always appointed by the members in the AGM, but they appointed you with the help of board of directors. So obviously it's a violation. Casual vacancy due to resignation was filled up by the board without obtaining members' approval. You know that if the casual vacancy is due to resignation, then the board may fill up the casual vacancy within 30 days, but definitely within 3 months we need a members' approval. But the company where you were appointed as a casual vacancy auditor, no members' approval was taken within 3 months. Again, it is a violation. Section number 139, subsection 2. Then serving the same company client even after the term has already been expired. Rotation says that after your one term of 5 years or two terms of 5 years each are served, you have a cooling period of what? 5 years, but you are still continuing in the 11th year or 6th year. Then in that case, you are again violating section number 139 subsection 8. Sorry, 139 subsection 2, rotation. Then non-filing of ADT 3 after the resignation. Right or no, you resigned but did not file the what do you say, ADT 3, because that is your duty now. ADT 3 has to be filed by you within the 30 days of your resignation. In case of government company to the ROC and to the CAG, and in case of non-government company to the company and ROC. Otherwise, you are guilty. We already have 140 subsection 3 may your penalty. If you are guilty, you will be penalized with, say, for example, what do you say, 50,000 rupees of the remuneration received, whichever is lower, plus 500 rupees per day, subject to the maximum of 2 lakhs. So you did not file ADT 3, boss. It is a violation. 139 का violation हुआ, 140 का violation हुआ. You, either the violation done by you or by the company, but you didn't consider when the company was doing the violation. So boss, you are also guilty. Or say for example, neither any opportunity of being heard was given nor any special resolution was passed, but you accepted your removal, or previous auditor accepted the removal, and you joined. Now, in this case also it is a violation. It is a clear-cut violation of section number 140. Is it clear? So, this brings an end to your clause number what? 10 as well. Is it clear, everyone? Sorry, clause number 9. Okay, everyone. So, let's now start with the clause number 10, everyone. So, we have done the clause 9 clauses. So, let's do the revision of 9 clauses. So, clause number 1 was on allowing someone to practicing your name. Clause number 2 was on sharing. Clause number 3 was on accepting. Clause number 4 was on entering into a partnership. Clause number 5 was on securing the professional business. 6 was on soliciting. 7 was on advertising professional attainment. 8 was on not communicating with your previous auditor. And 9 was on non-compliance of 139 and 140. Now, what is clause number 10? Clause number 10 is very simple. If you are a member in practice, you charge or you agree to charge. What are the two words? You charge or you agree to charge. Accept or agree to accept. So what? Your fees on the percentage basis. On the fees on the which basis? Percentage basis either on the profits of the entity or percentage basis on the contingent events or findings. Say for example, you are a member in practice, right? So being a member in practice, you told to your client that okay, I will fight your case, I will fight your IT case, but in the IT case, whatever the savings you will get, if we'll win the case, suppose if we'll win the case of 4 crore rupees or 40 crore rupees of tax evasion, then in that case, on that 10% I will charge. But if we lose the case, you can pay me the nominal fees which you have to pay me. So you are basically agreeing to charge your fees on the percentage basis of the event, which is contingent in nature, which may happen, may not happen. So as a member in practice, you will be guilty in the clause number 10, part number 1 of schedule 1. So 10.1.1. So see, if you charges, and not only charges, if you agrees to charge, right? If you accept or agrees to accept your fees with respect to your professional engagement, either on percentage basis on profits or on the basis of contingent events, so boss, you are guilty of professional misconduct. Is it clear, everyone? But now, let me show you the areas where under regulation number 192, remember regulation number 192 says that these are the areas under which percentage basis of fee charged by the member in practice is allowed. So what is the regulation number? Regulation number 192. Now see, it is prohibited on the part of MIP to charge his fees on above criteria, but under the following regulation number 192, it is allowed in the following cases. So, if you are working as a receiver or liquidator, so remember one thing, in case of liquidation, if you're working as a receiver or liquidator, your fees can be based upon how much you realize at the time of liquidation, right? Second thing, If you're working as an auditor of what? Cooperative society. In the case of auditor of cooperative society, your fees is based upon the rank or the class or the award or the category of the cooperative society. You're doing the audit for. Higher the category, higher will be your audit fees. Lower the category of the society, you're doing the audit fee for, or lower will be your audit fees. So that is also the second area where percentage basis and contingent event fees are allowed. If you are a valuer of the direct taxes, obviously if you are helping the income tax department in valuation of the direct taxes, the higher the valuation you will bring it to the IT department, higher will be the revenue. So they are ready to give you the higher percentage for the same. So if you are working as a valuer of the direct taxes, then also you are going to get a percentage fee. So 192 says that these are the areas where the percentage and fees based on contingent events are allowed. Other than these areas, if you agree or accept, then in that case you are guilty under 10(1)(1). Now, if you are into the fundraising services, obviously more funds you will raise for the entity, the more will be the fees you will be getting. Then if you are into the cost optimization services, basically in the manufacturing areas, you are helping them in optimizing their cost or reducing their cost. So that is a benefit to the manufacturing unit. So on the basis of that, whatever you have optimized, whatever you have reduced and help them in reducing the cost, on the basis of that, percentage will be charged and the fees will be given to you. Next, if you are into the debt recovery services, obviously, if you are assisting any entity in the recovery of their debt, so whatever the recovery will take place, on the basis of that, percentage will be charged and you can retain that fees. So these section regulation number 192 is telling you those areas where the percentage fees is allowed. Next one, if you are allowed to charge the percentage as per the order of the court or authority. So if the court or authority is allowing you to charge the fees on the percentage basis, then also allowed. If you are giving the MCOS services under section 2 subsection 2 clause D, MCOs means management consultancy and other services. Most of these services are based on percentage and commission basis. So yes, you are allowed to charge under that as well. Any other services as specified by the council. So in the future, if 192 regulation will include any other more services, so these are the set of the services under which percentage is allowed. So remember again, percentage is allowed and contingent is allowed only if you are serving the services under regulation number 192. Other than that, if you are found charging, agreeing to charge, accepting, agreeing to accept your fees with respect to professional engagement on percentage basis or on contingent basis, so boss, you are guilty under 10(1)(1). Only 192 can save you for not being guilty. That too, if any of the following cases may you are charging it on percentage basis, then only it is allowed, otherwise not allowed. Moving ahead, clause number 11. Now, clause number 11 is saying that you are a member in practice. You are already doing the practicing profession, but you want to engage in any other profession or any other what? Business. You want to engage in any other profession or any other business. So, what the council says that I don't have any problem. You simply take my permission. One is general permission and one is what? Special permission. Now, sir, what do you mean by general permission? General permission means you actually don't have to take the permission. The permission is already granted under regulation number 190 capital A. Repeat again. Under regulation number, yes, regulation number 190 capital A के अंदर general permissions are being given and 191 के अंदर special permissions are given. Now, what do you mean by general permission? You don't have to come to the icai and apply. It is already granted. So, if you are falling into those categories of business and profession other than your CA in practice, then in that case, generally granted. But special permissions are given under 191 regulation. What is the regulation number? 191. For that, you need to apply specially to whom? ICA for getting the permission to get engaged in such business or profession. Now, in front of us, we will be having two lists to be taken care of. One is called regulation number 190 capital A and the another one is called regulation number 191. Now, under 190 capital A, we have general permissions. Under 191, we have the special permissions. Am I correct? Now, if we'll do one list of 190A, then anything other than 190A ka list is going to be appearing in what? 191. Are you able to understand what I'm saying? So anything which you are not going to cover in 190 capital A is automatically going to be covered in 191. So instead of doing both the list of 190 capital A and 191 regulation, it's better to concentrate on the one. So let's concentrate on 190 capital A where the general permissions are allowed. In the remaining, all are what? Other than that, Remaining all are 191 where the special permissions are required. Now see, if a MIP is engaging any business or profession other than practice, unless the permitted by council, whereas nothing in this clause prohibits you from becoming a director. Yes, you can become a director, general permission is granted. Explanation. There are two types of permissions to be obtained from the council. One is called general permission, which is under regulation number 190 capital A, which is impliedly or already granted. And one is special permission under regulation number 191, for which you need to take a permission. Now, permission required for the following business or profession under regulation number 190A. So again repeating, if we'll do permission number 190A, we don't have to do 191. Are you getting the point? If we'll do 190A, we don't have to do 191. Now under that, see this point number A. Employment under a CA or a CA firm. So if you want to get employed under a CA or a CA firm, then in that case 190A says that it is generally granted. You want to indulge into private tutorship, you want to indulge into authorship of both, means what? Professional as well as non-professional journals. If you want to go into editorship, so remember there's a difference between authorship and editorship. Editorship of only professional journals are allowed. Authorship of both professional as well as non-professional journals are allowed. Are you getting the word? So in case you want to indulge into authorship of both professional as well as non-professional journals, there is no problem. But editorship of only professional journal is something which is allowed under 190. It means if you want to go for a non-professional journals ka editorship, then regulation number 191 means a special permission will be required. Is it clear to all of you? Next, if you want to hold a LIC license only for the purpose of renewal commission, so 190 capital A is required. You want to attend the classes of other competitive exams or other competitive courses, so regulation number 198 gives you the special general permission. You want to be an MP, MLA or MLC, then 190A general permission is there. You want to teach on an honorarium basis as an office bearer in a charitable institutions or non-commercial institutions or educational organizations, but on a honorarium position, means what? Without charging any salary or remuneration. The boss under regulation 190A, you are allowed. You want to get indulged into a notary public magistrate or a justice to peace, then in that case regulation number 190A is allowed. You want to be into part-time tutorship with the icai, 190A is allowed. You want to be a valuer, paper setter, moderator, head examiner of any examination, so 190A is allowed. You want to be a surveyor and loss assessor, 190A is allowed. Engage, you want to engage in agricultural land or activity and you want to be a consultant for recovery in the banking sector, 190A is allowed. So make sure that 1 or 2 times you give it a reading to 190A. So whatever is not coming in 190A is automatically covered, bacha, where? 191. So 191 and 190A. These are the two permissions required to get engaged into following activities. So we have done the list of 190A. We need not do the list of 191. Anything which is not in 190A is going to be the part of 191. Now, if you are a MIP which is already engaged in attestation function with the lectureship and private tutorship, so you are already into a CA in practice doing the attestation function and you are also going to engage in lectureship and tutorship, maximum 25 hours a week is allowed. If you want to go more than 25 hours a week, the boss special permission is required. So they are saying MIP engaged in attestation function with lectureship and privateship is allowed to have maximum 25 hours in a week for the which purpose? Teaching purpose. So remember, this can be an MCQ question. 25 hours in a week for which purpose? Teaching purpose. Is it clear to all of you? Doing a course under the AMFI, Association of Mutual Fund Institute, Association of Mutual Funds of India. If you are doing a course under AMFI, there is no problem, ICAI is saying. ICAI is saying that you can do the membership course under AMFI, Association of Mutual Funds of India. But if you want to hold its practice, if you want to hold its membership and practice, so first you have to surrender the COP. Right? Doing a course under AMFI, there is allowed, but holding the membership license is not allowed unless the COP is surrendered. And if you want to get engaged into the special business of trading of shares and securities, so yes, special permission is required from the council. This is what your clause number 11 is all about. So what was clause number 11? Clause number 11 was telling us that, okay, boss, if along with your CA in practice, as a member in practice, you want to engage into any other business or profession, so take the permission of the council. Unless council grants your permission, otherwise you will be guilty under 1111, clause number 11, part 1, schedule 1. Is it clear? So quickly, let's rewind what are the 11 clauses we have done. First one was on allowing. Second one was on sharing. Third one was on accepting. Fourth was one on entering into partnership. Fifth one was on securing professional work. Sixth one was on soliciting. Seventh one was on advertising professional attainments and using the designation other than chartered accountant. 8th May, you are not communicating with the previous auditor. 9th May, non-compliance of 139 and 140. 10th May, it is charging the fees on the percentage or contingent event basis. And 11th May, you want to engage into a business or profession unless granted the permission by whom? Council as an MIP. All the 9 cases may MIP will be guilty of professional misconduct. Very important one thing which I want to tell you that in case you are giving the answer for these misconduct related areas or any such kind of area, to make sure that first of all you should mention what is your clause number, part number and schedule number, and write the whole provision which you have learned in that clause, and try to write the same negated or negative language only which is given in the ICA. Let me just show you once. Like, let's say for example, okay, let's take an example of this one right now. Okay, now let's say the example of this one. Now see, the offer document of the listed company in which Mr. D, a practicing chartered accountant director, mentions the name of D as a director along with various professional attainments and spheres of specialization. Now we already understood that, okay, boss, if you want to become a director, in any company, you are allowed. First of all, you are guilty here under 6 and 7. Why you are guilty here under 6 and 7? First of all, so you are soliciting by putting your professional attainment. Now look at this question में क्या लिखा हुआ है कि he shown his professional attainment. What we learned, as a director, you are allowed to quote your name, your designation, and your your name, your designation, and your your contact number. Are you getting the point? Your professional attainments, your area of specialization, expertise, all these things are guilty. So here what they said, that in the instant case, Mr. D would be held guilty of professional misconduct and liable for the disciplinary action. Now, why 6 and 7 has been given over here? Now, understand one thing. First of all, by showing the professional attainments, you are soliciting the people that yes, I'm that much experience, I have that much of experience, this and that. So that is called solicitation. Second thing, you are displaying and advertising your professional attainments in an offer document. Offer document means what? Prospectus, which is going to be taken up by so many lakhs and lakhs of people. Are you getting the point? So advertising your professional attainments as well as it is tantamounting to what? Solicitation. Now, my question was to let you know okay, how we are going to have a presentation. Always remember, don't give the answer in a straightforward manner. First paragraph should be dedicated to clause 6 and clause number 7, which you have learned. To write as per clause number 6, part 1 of schedule 1, of as per clause number 7, part 1 of schedule 1. This is what we have learned. After that, write the facts of the case. What has happened in this question? If Mr. D, a practicing chartered accountant, mentions the name of Mr. D, it is fine. But along with that, he has mentioned the professional attainment, which is not allowed as per clause number 6 and clause number 7. Because it is directly or indirectly tantamounting to soliciting the clients for the professional work by the member. And last my conclusion, yes, he is guilty of. So remember, your paragraph of the answer should be divided into 3 parts. First part may you are giving your provisions. Second part में you are talking about facts, and the third part में you are talking about what? Third part में you are talking about conclusion. Never write the conclusion in the beginning. Let the examiner read your provision and then let him read your facts and then let him read your what? Conclusion. This is how you have to answer in this particular area. Is it clear to all of you? 100% clarity? Is it clear? Now, let's move to the last clause and let's wind up the major clauses, and in the another 1 hour or 1.5 hours, our total professional ethics is going to be completed. Now, see, what they're saying that allowing any person allowing any person other than MIP or practicing partner to sign on your reports, financial statement and certificates. Now, most of the students get confused between clause 1 and clause number 12. Clause number 1 was allowing someone to practice other than your partner, other than your employee, who also should be a chartered accountant in practice. They should be MIP. So it means you can allow your partner to practice in your name, you can allow your employee to practice in your name, but they should also be the MIP. Otherwise, you are guilty under clause 1. Here, we are not talking about practice, we are talking about signing the document. You are allowing, see, you can sign because you are holding COP. Other than you, your practicing partner can sign. Other than your practicing partner and you, any such MIP can sign whom you have outsourced this engagement. So either the MIP can sign or your partner who is holding a COP can sign, or you can sign because you are also holding a COP. Here employee is not allowed. Employee, even though he is a chartered accountant in practice, he is not your bloody partner. He should not be allowed to sign the reports, financial statement and certificate. Remember, this clause may employee is out of the box. Clause number 1 may employee is inside. Why? Because we were allowing someone to practice. So saying that okay, I am a part of that firm is a different thing. But signing the document may only you can sign because you are holding a COP. Only your practicing partner can sign because he is holding a COP, or any other MIP can sign because he has been outsourced by us. So see, allowing other than an MIP, that is outsourced MIP, or your practicing partner to sign on reports and FS and certificates, so boss, you are guilty of professional misconduct under 12.11, clause number 12, part 1, schedule 1. Is it clear to all of you? 100% clarity. Now see what they're saying. Only a MIP and his practicing partner and other outsourced MIP can sign the above documents and records. An employee or staff or member even holding the COP is not what? Allowed. So what is the difference you found between 1 and 12? 1 may be allowed our employee also to practice in our name, but here we are not allowing him to sign the report. That too we already know under the company audit also. Can a single partner holding a COP sign all the audit reports? Yes, because when you're signing it on the behalf of the firm, but that should be your partner and he should be holding a COP. Employee, even though he's holding a COP, even though he's a chartered accountant, but he's not your partner. So other than you, only your practicing partner can sign. Boss, keep always that in mind. Are you understanding my point or not? Now understand one thing, but daily routine clerical and administrative works you can let your employees to do, like what? Like audit queries, like issue of questionnaires, like letter forwarding. These are daily clerical and administrative works, like reports and certificate drafting, like vouching, like stamping, initialization, like acknowledging the routine correspondences, making cash payments and receipts, daily vouching and accounting, what do you say, records preparation, raising the bills, representing in routine tax cases, not in the main hearing, representing in the routine tax cases. Daily attendance is required. You can send your article assistant for that. Any other routine work, including a what? Practice accounting. Are you getting the point or not? So remember one thing, for these routine and clerical and administrative works, you can allow them to sign because that is nothing but called vouching and verification kind of daily routine works. But signing a financial statement, signing an audit report, signing a certificate is quite a job of either by you or by your practicing partner or someone whom you have outsourced. Other than that, no one else is allowed. Is it clear to all of you? 100% clarity? Yes. Now, even issuing a power of attorney in the name of the favor of the employee. Suppose I am outside India, my partner is outside India. We both issued a power of attorney in the name of our employee. And he said that, yes, I can sign now because Rohit sir and another partner has given me a power of attorney. Boss, you are an employee, you can't sign. Even the power of attorney also will not hold good in this case. Is it clear 100%? Yes or no? Yes. 100% clarity? Yes. Now that brings an end to your part 1, which concludes 12 clauses. Now let's understand and widen up the next part. Next part is relating to part 2. Part 2 talks about what? Professional misconduct in relation to member in service. Now quickly please tell me what was the part number, clause number 2 and 3 in case of part 1. Sir, clause number 2 was sharing and clause number 3 was accepting. Who did that? Member in practice. Is it correct? Clause number 2 was sharing his professional services ka income and accepting somebody else professional services ka income. Now it was done by the MIP. Same thing banda MIS will do. That will be called clause number 1 and clause number 2 of part 2 of schedule 1. So if MIP was sharing his fees with people other than those categorized people, MIP was accepting the share of other person's profit other than those people, then who was guilty? MIP was guilty. Now the same thing MIS is doing. Let's say for example, now I wanted a job, I was getting rejected, right? I'm not a COP holder, I'm a MIS, member in service, right or not? Now try to understand the point. Now, I told my friend who is already doing a job in Deloitte. So I told him that, yeah, boss, please get me a job in Deloitte. I'm getting failed in my interviews. I promise you, the moment you will get me a job, I'll share the 50% of my salary with you. It means you should get the job on the basis of someone's recommendation. And for that, you're ready to share your 50% of your salary also. That is unethical. You should get the job, you should get the work, you should get the emoluments, benefits on the basis of your competencies, on the basis of your skills. That is what icai is trying to prohibit here. So as a member in practice or member in service, if you're sharing your part of profits and salaries, or if you're accepting somebody's profits or salary, you're guilty under 2 and 3 in part 1 if you're a MIP, 1 and 2 in part 2 if you are MIS. Now let's say for example, second clause now. First one was you sharing your 50% of your salary, that's why you are guilty, because you do not have the trust and confidence on your skills and competence. That's what I say. It is ashamed of us if we are paying some part of our salary to someone to get a job. Are you getting the point? That's why you're guilty as a MIS under clause number 1. Same thing, if you are accepting someone, suppose someone is saying that, suppose one legal expert is there, or say for example one any other expert or professional is saying, he's telling you that, yeah, please get me the empanelment of this company as you are already working in company. First 3 months may my out of my whole salary, I will share my 30% of the salary to you. Now you are accepting someone's salary. Now you are accepting someone's salary. Again, it is unethical. So basically, what is the idea behind icai in saying this? icai simply wants to tell you that, ki boss, if you are doing any job or if you are getting any job, you should not share your salary to someone. You should not accept someone's share of salary. As an MIS, if you are doing that, you are guilty under clause 1 of part 2 of schedule 1 and clause 2 of part 2 of schedule 1. Now see, pays or allows to pay or agrees to pay directly, indirectly to any person, any share of his benefit, his emoluments of employment undertaken by him. Objective of this clause is to ensure that job must be secured on professional capacity basis rather than entering into a what? Financial deal. ये तो deal ही होगी ना भाई, तू मेरे को contract, तू मेरे को job दिलवा दे and I'll pay you this much. This is nothing but a deal only. And same thing, clause number 2, accepts or agrees to accept any part of fee, profit, gains from a lawyer, from a CA, from a broker engaged for such companies with your help by the way of commission or gratification. तुमने क्या बोला किसी सीईओ को कि डोंट वरी आई विल गेट यू अ जॉब, डोंट वरी लॉयर को बोल दिया आई विल गेट यू अ जॉब, बट मेक श्योर दैट फर्स्ट 3 months का सैलरी का 50% यू हैव टू शेयर विद मी. इज इट लुकिंग एथिकल? So if MIP is doing sharing and accepting, he is guilty under 2 and 3 in clause 1, and if MIS is doing the sharing and accepting, he is guilty under 1 and 2. That brings an end to your part number 2 as well. Am I correct or not? Now let's move to the part number 3. What was part number 3 of schedule 1? Professional misconduct for the both member in practice and member in service. Now there are total 3 clauses. So we have done 12 clauses of part 1. We have done 2 clauses of part 2. Now we are going to do 3 clauses of what? Part 3. Now what are the 3 clauses of part 3? You are not a fellow but acting as a fellow. Clause number 1. Again repeating, you are not a fellow chartered accountant but you are acting as a fellow. Now there are so many implications, you will find it. Are you getting the point? Remember, read this clause, particularly with the section number 24, which we had done in the earlier session, falsely claiming to be a member. You will get a better clarity. So see, you are not a member of the institute, but to the outside world, you are saying that you are a FCA. You are guilty. You are a member without holding a COP, but to the outside, you are saying that FCA. Now you are guilty. You are a member holding a COP, but not completed 5 years of continuous practice. Then only you can enroll yourself as a fellow, na? Then also you are guilty. It means when you can call yourself as an FCA, you cleared the icai examination, you enrolled yourself in the register of member under section number 4, you are holding a COP, you enrolled as an associate chartered accountant, completed 5 years of practice. That makes you what? That makes you, yes, that makes you an FCA. Is it clear or not? But you are not a member. You are saying that I'm an FCA. You are a member not holding a COP. You are saying that you are an FCA. You are a member having a COP but not completed 5 years. You are saying that you are an FCA. So not an fellow but acting as a fellow. So you are guilty under clause 1, part 3, schedule 1. Clause 1, part 3, schedule 1. So always remember the first one should be your clause number, second one should be your part number, and the third one should be your schedule number. Now, what is clause 2? Now, say for example, Board of Discipline, Disciplinary Committee, Appellate Authority, Quality Review Board, ICAI, these committees and boards in the institute are calling some information from you. They want some information from you, but you are not replying at all. You are not supplying them the information what they're looking for. You are not providing them the information what they're looking for. So then you are guilty under what? 2, 3, 1. Clause 2, part 3, schedule 1. Are you getting the point? So again repeating, you fail to provide or supply information to the institute, to its committees, to DD, BOD, DC, AA, Quality Review Board. Now read it in connection with 322, which we are going to do. Now see, what is 322? Clause 3, part 2 of schedule 2. Now, when we'll reach to the clause 3 of part 2 of schedule 2, we'll understand that you are providing the information but knowing it to be false. आप इंटेंशनली रॉन्ग इंफॉर्मेशन दे रहे हो ये कमेटीज को, तो बॉस यू आर गिल्टी अंडर शेड्यूल 2 देन. बट इफ यू आर नॉट एट ऑल प्रोवाइडिंग द इंफॉर्मेशन, यू आर गिल्टी अंडर शेड्यूल 1. तो शेड्यूल 1 में वेर यू आर गिल्टी 231 एंड शेड्यूल 2 में वेर यू आर गिल्टी 322. Clause 3, part 2, schedule 2. And here, clause 2, part 3, schedule 1, 231. So if you are not supplying the information, so you're guilty under schedule 1. And if you're supplying the information but knowing it to be false to these authorities, you're guilty under what? Schedule 2. But don't worry, that point will come. We will understand that, right? Now, next point. Next point is what? Inviting professional work. Now, this is also very important. Third is very important. Now, what they are saying? Total 3 clauses. First way, not a fellow, acting as a fellow. Second may, you fail to provide the information to the authority. Third may, you are doing solicitation perfectly by compliance of clause number 6. You are doing professional attainment ka advertisement perfectly by clause number 7. So you are neither violating clause number 6 nor you are violating clause number 7. But whatever the information you are giving for soliciting the work under clause number 6, whatever the information you are giving for advertising your professional attainment as per clause number 7, you know that that information is false, but you are still allowing them to get it printed. You are soliciting the work from your client saying that I have 15 years of experience. You just 6 years back only you got qualified. You are saying that you are having 15 years of experience. I have this award, I was a gold medalist, I was this and that. You are unnecessary giving your professional attainment which you have not achieved. So you are making use of 6, solicitation. You are making use of 7, advertising your professional attainment. But whatever the information you are providing while soliciting and advertising your professional attainment, knowing it to be false, you are giving that information. Read this point. Inviting professional work from another MIP and responding to a tender within a knowledge, advertising through write-ups by confirming a clause for 6 and 7 of the part 1 of schedule, but giving an information knowing it to be false. So in total 12 plus 2 plus 3, 17 clauses are done. So please tell me what was 12 clauses. One was on allowing, then sharing. It was on MIP first of all professional misconduct relating to MIP, allowing, sharing, accepting, partnership, securing professional work, soliciting. Seventh one is advertising, 8 non-communicating, 9 non-compliance of 139, 140, 10 charging on percentage basis, 11 not securing the permission of the council and allowing someone to sign your documents. So MIP is guilty under part 1. MIS is guilty under part 2, allowing your sharing of your salary and accepting the share of someone's salary, then you are guilty as an MIC under part 2. MIC and MIP both are guilty under part 3, not a fellow, acting as a fellow. fails to provide the information or fails to supply the information, and making use of clause number 6 and clause number 7, but giving the information knowing it to be false. Clear? Let's proceed with the fourth one. What is the fourth one? Other misconduct in relation to both. What do you mean by other misconduct in relation to both? Now, what they are saying is, say for example, other misconduct means what? You have, let me give you some meaning of other misconduct. Non-maintenance of minimum balance in your bank account. It is not connected with your, practice or something. It is something which is beyond your practice. That's why they are called other misconduct. Professional misconduct, to it is connected with your practicing or your job at least. But this is something which is neither connected with your practice nor connected with your job. So you open a bank account, but you're not maintaining the minimum account balance. All these are examples, nothing but derived from a icai material only. Say, for example, you convicted for an offense of moral turpitude. Retention of client's books on the non-payment of audit fees. You do not have a right of lien, but you are exercising the right of lien. You are not allowed to retain the books of your client as per I say. Nowhere it is written that you can retain the books of your client if your audit fees is not being paid, but you are doing that. It means you are guilty of other misconduct. Next one, asking premium for providing the dummy articleship. You are taking care of the dummy articleship and you are asking the premium for the same, making material misrepresentations, right? Using article assistants for the personal work. You are not letting them do the professional work. We are using it for your personal obligations like dropping the children to the school and, anything relating to your personal work. You are using them other than the work of office. Then misappropriation of the funds as an office bearer of the regional council. You are working as a treasurer, secretary, vice president, president in a office bearer, but you were having the authority to handle those money, but you misappropriated that. Again, it is another misconduct. Not replying to the public authorities at reasonable time without any word justification. Remember one thing, not replying to the public authorities, not to the icai authorities. Because if you are not replying to the icai authorities, you are guilty under clause 2, part 3, schedule 1. Just now we have done part 3 mein, second clause. Not replying to the public authorities ke case mein, you are guilty under other misconduct. If it is icai authority, you are guilty of professional misconduct. Keep one thing in mind. Next point. Clients' records and books found at members' place of residence during the IT raids. So relative assessment took place and they found that some of the important information of the client, instead of being available at client's place, it is available at whose place? Chartered accountant's place. All these are the clear indications, all these are the examples of your what? Other misconduct. Now the question arises, sir, how many clauses? 2 clauses. Now suppose, if you have been convicted for an offense in India or outside India, by the civil court or by a criminal court. Again repeating, if you have convicted for an offense by a civil court or a criminal court for imprisonment, not exceeding 6 months. Up to 6 months if you have been sent to the jail by the civil court in India or a criminal court in India and you have been convicted for offense up to how many months? 6 months. So boss, you are guilty of other misconduct under clause number 1. You are guilty of other misconduct under the clause number 1. So sir, what if it is more than 6 months? More than 6 months, you are guilty under clause 1 of part 3 of schedule 2. So up to 6 months you are here, more than 6 months you are there in schedule 2. Same clause, only thing is greater than 6 months. Up to equals to 6 months or less than 6 months, you are guilty here. More than 6 months, you are guilty there. If your jail imprisonment is more than 6 months, you are guilty there. Else you are guilty here in clause 1. Or you have done some act which in the opinion of the council, you have done an act which brings disrespect to what? Profession, icai, council, whether relating to your professional work or not, so then also you are guilty. Are you getting now? If the council feels that you are providing any disrespect, these are nothing but disrespect. Look at this example, using the coercion or undue influence on a bank employee for loan sanctioning purposes. Are you getting? You are putting an undue influence on the bank. You know some confidential and sensitive information of that bank employee. You are telling him that I will leak it out. Otherwise, you provide me the loan at a very nominal rate or very less rate than the market may you are giving. So in that case, what you are doing, you are nothing but using your undue influence. That is again, in the eyes of the council or in the eyes of the institute, it is completely a other misconduct. You are very guilty under clause 2 of part 4 of schedule 1. So in total, 19 clauses we are done. Let's wind up the 19 clauses. So let's understand what was the clause number 1. Clause number 1 was on what? Allowing. Clause number 2 on sharing. Clause number 3 is on accepting. Then entering into a partnership. Then securing professional work. Then soliciting the client. Then advertising professional attainments and using the designation other than CA. Then not communicating with the previous auditor, then non-compliance of 139 and 140, then charging the commission or charging the fees on percentage basis or contingent events basis, then not taking the permission of the council for getting engaged in business or profession, then allowing another person to sign on your behalf, right? Then if you are sharing your fee, sharing your salary, then you as an MIS you are guilty under clause 1 of part 2 of schedule 1, and if you are accepting someone's salary as an MIS you are guilty. Then clause number 3, part number 3 was for both. So this was for MIP, this was for MIS का professional misconduct, and this was a professional misconduct for what? Both में क्या था? Not a fellow but acting as a fellow, right or not? Then you are not supplying the information to the authorities. Again, repeating, for the public authorities, it is going to be other misconduct, but for the icai authorities, BOD, DC, DD, all these things will be called as a professional misconduct. Or you're making the use of 6 and 7, but giving the information knowing it to be false, right? Then in case you are what do we say, other misconduct for the both, in case you are being convicted by civil or criminal court and your imprisonment is not exceeding what, 6 months, and second thing is what, you have done an act as per the council or as per the institute, it is looking at like a disrespect to your profession. So this is purely a case of other misconduct, right or not? The total 12 clauses were here, and total 2 were here, 3 were here, and 2 were here. In total 19 clauses of the schedule 1 we are done with. 100% clarity. So let's proceed with the schedule 2 now. Okay, so let's proceed with the schedule 2 right now. Now what we have in schedule 2, everyone, as you all know that schedule 1 was having how many clauses? 19 clauses, right? Schedule 2 is having 15 clauses divided into 3 parts, and with most of the clauses are very simple. Now first of all, before going into the schedule 2, let me tell you one thing. The offenses in the schedule 2 are very common cases of gross negligences. Are you getting the point? Misconducts which you will find in the schedule 2 are very common cases of gross negligences, right? Like we know that we should maintain the confidentiality. Here you are breaking it. Like we know that whenever the prospective financial informations or project reports we are going to get engaged with, we should never vouch the accuracy of the assumptions and sources of information given there, but we are doing it. We know that whenever there is any material misstatement we come across, it is our responsibility as an auditor to bring it to the notice of users, but we are not doing it. So those common mistakes which a chartered accountant should not even do it in dreams, those kind of common mistakes have been talked in schedule 2 part 1 for the members in practice. That's the reason the penalties in the schedule 2 are being kept very high. If you can't even understand, see, let's say for example, communicating with the previous year auditor, that is not something which we do it on like, yes, it is a part of your practice, but that is something which is required to be told to you. It is something which you should be knowing it from someone's mouth. Okay, what to be communicated, when to be communicated, how to be communicated, sharing the fees, accepting. There are so many students when I start with this professional ethics, they are not even aware of that. But when I will tell you the first 10 clauses of the part 1 of schedule 2, you will understand that, sir, this is very common sense kind of thing. That's why schedule 2 के जो offenses है and their misconducts का जो penalties है, you can see that in the disciplinary mechanism also. I told you in the morning in the disciplinary mechanism, DC takes care of the schedule 2. Are you getting the point? And DC takes care of the schedule 2 and the reprimanding the member, and they can cancel your membership permanently, because these are very some common silly mistakes what a member in practice is going to do. So that's why they kept the, what do you say, the penalty also very high, so that you should avoid these kind of what negligences. So let's start with the first one. The part one talks about professional misconduct. Part one talks about professional misconduct with respect to members in practice. What is the name of the part one? Professional misconduct with respect to members in practice. Now, what does that particular part talks about? There are total 10 clauses we are going to understand. Are you getting the point? Obviously, it is relating to members in practice. Part 1 is talking, clause 1 is talking about breaking the confidentiality. So say for example, you got some confidential or sensitive information during the course of your engagement. Your responsibility is to keep your mouth shut. Your responsibility is to maintain the confidentiality unless it is required by the law, or unless you have taken the prior permission of the client, or unless your ethics provide so, unless if you are a part of quality review or peer review, unless if you are a party to an investigation, or unless you are pushed by the statutory authority. So these are the exceptional cases under which you are supposed to break the confidentiality. Otherwise 99.99% of the cases may you have to maintain your what? Confidentiality. Am I correct? But you are not maintaining it. You are breaking it. Neither there was any requirement of the law, nor there was any investigation, nor there was any peer review, quality review, nor there was any prior permission of the client, but you broke it out. You either you did it intentionally or you did it unintentionally. Boss, you are guilty under clause number 1, part 1 of schedule 2. Now read this one. Disclosing the confidential sensitive information relating to the client during the course of engagement without obtaining the client's permission or without any requirement of the statute. Explanation: not guilty if the information was already known to the public. If the information was already available on the public domain or the websites or the Googles or all those things, you are talking about that information, then in that case, boss, you are not guilty. Because this is not called breaking the confidentiality, because if not by my mouth, they could have got the information from the public domain itself only. Are you getting the point or not? So then in that case, you are not guilty. Second thing, not guilty if the permission from the appropriate authority was secured at the whose place? Client's place. Are you getting the point or not? Now see, not guilty if the permission from the appropriate authority was secured at the client's place. Suppose board of directors did not give me the permission, but TCWG gave me the permission. Then also, boss, you are not guilty. In case MIP wants to remain silent, in such case, protection shall be granted to him under section number 126 of Evidence Act, like provided to the attorneys and advocates. So there is a act called Evidence Act under section 126 where you will be allowed to keep your mouth shut. Same protection will be given to you what is being given to the advocates and what? Attorneys. But it's a very common sense kind of things. Highly sensitive and confidential information should be kept what? Very much confidential. So you are also not guilty if you broke the confidentiality because of what? No-clar. So as we already know, no-clar means cases of public health and safety at bigger level, money laundering, criminal financing, terrorist financing. If these kind of cases were there and you trying to break the confidentiality, then in that case again, you are, boss, not guilty. You are guilty only when it was a general course of engagement, right or not? So public domain, you are not guilty. Higher authority has given you the permission, you are not guilty. And you are breaking it because of no-clar, you are not guilty. Are you getting the point? So it's better that if you want to get a more clarity on this clause, just read our fundamental principle confidentiality, which we have already done earlier. Now, second clause, moving ahead. Suppose one assignment came to you for audit, or one assignment came to you for certification of facts. Neither you audited it, neither you examined it, nor your partner examined it, nor your employee examined it, nor any MIP examined it, but you allowed your name and your firm's name to be written on that certificate or on that audit report without doing any examination. How you can allow your firm's name to be appearing or your signatures to be appearing on a certificate or an audit report where the financial statements have not been examined by you, nor by your partner, nor by your employees, nor by any outsourced MIP? So that's a fact you need to understand. So second case may again common sense. Without examination, so you should never sign an audit report. Do we sign an audit report without examining the financial statement? Then it's very easy. We will ask our client, sir, your financial statements are ready, and he will say that yes, it is ready. So okay, sir, tomorrow come and take the audit report. That is not something, examining why the person is paying you. Person is paying you to examine the financials, to bring it to the notice any cases of frauds and errors if you come across any as a watchdog. So this is a very common sense. If assignment has been given to you, engagement has been given to you, it is you who has to do the examination. So see, allowing your name or firm's name to be associated with issuing the report or a certificate on financial statement which is neither examined by you, nor by your partner, nor by your employee, or nor by any other MIP. Suppose you are guilty of professional misconduct under clause number 2, part 1 of schedule 2. Third May, you have allowed your firm's name and your name to be attached with a prospective financial information project report. And you are not only, see, whenever, remember, just keep that in mind, it will also help you in SAE. Whenever we are getting engaged for any prospective financial information or project report related assignment, make sure that you have to mention that these are the assumptions you are taking. Mention that these are the basis of my assumptions or forecast. Mention that these are the sources of information, or at least if these assumption bases and sources have been taken by the client, test their assumptions, test their basis of forecast, test their sources of information, check the reasonability, check the reliability of the information what they are providing instead of vouching the forecasted figures. But you, instead of checking their assumptions, you, instead of checking their basis, you, instead of checking their sources of information, forecast means what? Future figures. The next 7 years when you're going to achieve this revenue, next 7 years when you're going to achieve this P&L. But is it certain that you're going to achieve? Future is uncertain. At least your future forecast will be based on what? Projections. Future forecast is based on some assumptions. Some basis of forecast should be there. Some sources of information is there. Some clarity, some base should be given to you, but you have not examined that base. You have not checked that base, nor you have given any your assumptions and sources of information, but you simply said, yes, I say that company will earn this much in the next 7 years. How you can say that? You can't vouch the accuracy of forecasted figures. But if you end up doing that, the boss, you are guilty under clause 3, part 1 of schedule 2. 312. Now see this. Permitting his name or firm's name in connection with the forecasted earnings of an entity which are purely based on future contingent financial transaction. What do you mean by future contingent financial transaction? Which may happen, may not happen. Future is certain or uncertain? Uncertain, sir. But giving an impression that MI can vouch the accuracy of forecasted figures. The boss, it is expected from an MIP to follow the following measures while taking up an assignment which are based on forecast. What are the 3 measures? At least you should take or you should test the assumptions taken by the client or assumptions taken by you. Basis of such assumptions and forecast and sources of information. Dare you not do that? The boss, you are guilty under clause 3. फिर तो मैं भी ये बोल देता हूँ, give me some 10-20 crores of loan because I think that in future I'm going to be a very big person. I will earn some 40 crores of revenue from my practice. There has to be some assumption. There has to be some basis of assumption. There has to be some sources of information. Vouching the accuracy of forecasted figures which are purely future based is completely unethical and unprofessional. So that's why you're guilty of professional misconduct. Now, whenever an MIP is associated with such projects, he must assume the compliance of SAE 3400. This we will be doing in the next chapter, because such assignments are purely based on future contingent events which are what? Uncertain in nature. Right, everyone? Now, clause number 4. You are expressing an opinion on an entity. You are expressing an opinion on an entity in which either you are interested or your partner is interested, your firm is substantially interested, or your relatives are substantially interested. That we already know, boss. We know that in the entity where either me or my partner or my firm or my relatives are substantially interested, we shall never express an opinion on their financial statement, but you ended up doing that. The boss, you are guilty. Now the question arises, sir, how do we check that someone is substantially interested or not? 20% of the participation rights in their decision making makes you substantially interested. That's why you're guilty under 4. So you were guilty under first one. Why? Because you broke the confidentiality. You are guilty under 2. Why? Because you certified or audited or allowed your firm's name on the audit report without doing any examination. You are guilty under 3rd. Why? Because you vouched the accuracy of forecasted figures. You are guilty under 4. Why? Because you expressed an opinion where you, your partner, your firm or relative are substantially interested. These are very common sense related areas, but you are not even aware of these common sense areas. The boss obviously institute would like to punish you very heavily. That is why these matters are going to be taken up by the DC. Now, clause number 5, everyone, fails to disclose the material facts. You came across a very material information. Are you getting the one? Known to you. You knew that it is a material information. You failed to disclose it. You knew that it is highly important information, but still you failed to disclose it. Are you getting the point? And it was very much required, essential for the preparation or the fairness of those financial statements, but you never took any initiative. Why? So when you fail to disclose the material facts known to him, it's not that you were not aware, it was known to you. It means you intentionally failed to disclose the material facts, but not disclosed in financial statement, but the disclosure of same was necessary in making such financial statements more true and fair. So boss, you are guilty under 5. And 6 may, why you are guilty? You failed to report material misstatement. Now the confusion will come between 5 and 6. 5 may, you failed to disclose material facts. 6th में you have failed to report material misstatement. आपने fraud and error को report नहीं किया. First, 5th case में it is not a fraud and error. It was a material facts, important information, important data, important inquiry or important event. You did not disclose. But 6th में they are saying you failed to report material misstatement. There was a material misstatement in front of you, but you kept your eyes shut. You allowed that material misstatement to happen. And here also it was known to you. So 6th में material facts and 5th में material facts you failed to disclose, and 6th में material misstatement you failed to disclose. That is what the difference between 5 and what? 6, everyone. Is it clear? This clause ensures that every kind of material misstatement known to the MIP which may change the decision making of the user shall be what? Reported. Are you getting the point or not? So tell me, first May, you broke confidentiality. Second May, you didn't examine. Third May, you vouched the accuracy of forecasted figures. Fourth May, you are giving an expression of opinion on an entity where you are substantially interested. Fifth May, you failed to disclose material facts. Sixth May, you failed to disclose or report material misstatement. These are the very common mistakes what a CA should not do, especially practicing CA. That's why you are getting guilty under this one, and that's why your punishment is quite high. Seventh, ab dhyan se sunna what I'm going to tell you. Whenever clause 1 to 10, except 7, whenever clause 1 to 10 will come, you can always quote clause number 7 along with 1 with the 7, 2 with the 7, 3 with the 7, 4 with the 7, 5 with the 7, 6 with the 7, 8 with the 7, 9 with the 7, and 10 with the 7. Reason? Because this clause number 7 talks about gross negligence clause. What is the name of the clause? Gross negligence clause. So please tell me, maintaining the confidentiality was your duty or not? You broke it, gross negligent. Not giving the vouching on the accuracy of the financial forecasted figures was your duty, but you broke it, gross negligence. You were supposed to disclose the material facts and material misstatements which you found during the course of your audit, but you kept your mouth shut. You are gross negligent. Gross negligent clause will come everywhere. So that's why clause number 7 is what? Does not exercise due diligence, or MIP is grossly negligent in conduct of his what? Professional duties. So see what they're saying. This above clause can appear with every clause of part 1 of schedule 2. And MIP is not expected to be a bloodhound, but at least ensure to discharge his duties as a what? Watchdog with reasonable skills, care, and what? Caution. We are not expecting you to be bloodhound, but at least you should not be that much careless ki you are not even delivering your services as a what? Watchdog. So total 7 clauses are done. What is the clause number 8? You are expressing an opinion but without obtaining sufficient and appropriate audit evidence, without obtaining sufficient and appropriate information. Now please tell me, 500 series is purely based on audit evidence, everyone? Correct hai nahi? Now what is the purpose behind the 500 series? 500 series makes us understand that ki boss, we can only express an opinion if we will be able to draw the conclusions. Conclusions can only be drawn if we have a sufficient and appropriate audit evidences in our pocket. But you neither obtained any sufficient and appropriate audit evidences, then how you can express an opinion? That is what clause number 8. Fail to obtain sufficient and appropriate information necessary for expression of opinion, and non-collection of which may negate his what? Opinion. It means you neither collected any evidences, but still you expressed an opinion. Non-collection of SAE results into qualified or disclaimer of opinion, but even if the information is collected, which is neither sufficient or appropriate, MIP still has an opinion, has a right option to qualify or disclaim his opinion. But collecting the evidence is your important thing now. You should make sure that quantity wise your information and quality wise the information provided to you must be sufficient and appropriate. That is what is expected from you, but you are not able to deliver this one also. Again, gross negligence. I can quote 8 and 7 again here. Now, ninth May, you are failed to invite the attention on material departures from generally accepted auditing procedure applicable to the circumstance. Now, listen to this clause very carefully. Sometimes you will not be able to do what you can do. Say, for example, cash verification you wanted to do, but you didn't do. It's okay. If you didn't do, it's okay. But at least you should have shown in your audit report, ki, boss, there is a material departure I have done. I should have done cash verification, but I did not do the cash counting. That is the moral responsibility what a MIP is expected to shoulder. We are not making you guilty because you didn't do the procedure. Sometimes the situation arises that you have to depart from your, or you have to take departure from the generally accepted auditing procedures. But even if you have taken the departure from the generally accepted audit procedures, what is your responsibility? Your responsibility is to ensure that ki at least disclose the matter of the fact in your audit report ki boss, I have taken a departure, or actually I have performed an alternative procedure to carry out the same thing. In our CA examination in the standards on auditing, what do we feel? What do we learn that ki if one plan A does not work, plan B does not work, plan C. You should have done the alternative procedure, or even if you have not done it, at least disclose the matter of the fact in your audit report ki boss, I have not done that. You failed to invite the material departure from the generally accepted auditing practices which you should have done. So this clause is not punishing you because you didn't do it. This clause is punishing you because you didn't make the disclosure that you didn't do it. That's the reason this clause is punishing you. Clause number 9. What is clause number 10? Now, let's say, for example, client comes to you and client says that, ki, sir, these are my some cash payments which I have to make in the GST payments. Like, say, for example, client gives you some big amount of cash. Client gives you some big amount of payment which is required to be paid to meet his obligation in the near future. In the coming 1 week or 2 weeks, you have to make the payment because he is leaving India for some urgent purposes. So he left his money with you. What is your responsibility? Clause number 10 says that you should have kept the client's money in a separate bank account. You are not allowed to keep the client's money in your bank account. You have to keep it in a bank account, but a separate bank account shall be opened for keeping the client's money. Unless it is your advance remuneration, unless it is your advance audit fees, unless the amount or the payment is required to be made in a short period of time. Let's say, for example, the payment is required to be made in 1 or 2 days or within a week. Then in that case, CA Institute says that you don't keep that client's money in a separate bank account. You can keep it in your bank account. If it is your advance remuneration, keep it in your bank account because that money belongs to you. If it is your advance fees, keep it in your bank account. But if it is neither your advance remuneration or fees, nor it is required to be made payment in the short span of time, so you should have better kept it in a what? Separate bank account. And if you are not keeping it, you are guilty under 10(1)(2), clause 10, part 1, schedule 2. So what are the total 10 clauses? Now see, fails to keep the client's money in a separate bank account, it was required to be paid. Exception, if it was required to be paid in a short span of time or given an advance fees or remuneration. Explanation, it is expected from MIP that he shall act according to the instructions of the client and must treat it as a position of trustee and receiver by keeping the money in a separate bank account. So what were the total 10 clauses we have done? First, May you're guilty because you broke confidentiality. Second, May you're guilty because you didn't do the examination. Third, May you're guilty because you vouched the accuracy of forecasted figures. Third and fourth, May you're guilty because you expressed an opinion on an entity where you are substantially interested, right? And fifth, May you're guilty because you failed to disclose the material facts which are known to you. Sixth, May you're guilty because you failed to report material misstatement which are known to you, else would have negated your provision. Seventh, May you are not applying any due diligence, you were grossly negligent in discharging your duties. Eighth में, you're guilty because you have not obtained sufficient and appropriate audit evidences and for the expression of opinion. 9 में, you're guilty कि it's not guilty just because you have not done the audit procedure. You fail to invite the attention on your material departure which you have taken from generally accepted auditing procedures or practices. And 10th way, you're guilty because you failed to keep the client's money in a separate bank account because it was required to be made in a longer period of time and it was not your advance remuneration of fees. Then so definitely you have to keep it in a separate bank account because that is your client's money, not your money. I hope 100% clarity. So that brings an end to your 10 clauses of your what. So in total 19 plus 10, we have done 29. Let's do 29. First one is allowing someone, second one sharing, third one accepting, fourth one partnership, fifth one securing professional work, sixth one soliciting, seventh one advertising professional attainment and using the designation other than chartered accountant, then eighth one not communicating, ninth one 139 141 non-compliance, 10th one you have want to no, you are agreeing to charge the commission percentage basis fees on contingent events or on the profits of the entities. 11th one may you are an MIP already in practice, want to engage in other business or profession other than by taking permission of the council unless the council has permitted you. Next one, you are an MIP and you are allowing someone to sign the documents. Then you are guilty under those 12 clauses. Clause number 2, accept sharing and accepting by MIS. Then next 3 clauses, when not a fellow, acting as a fellow, fail to supply the information to the institute. And in the clause number 11, clause number 3, you're making use of clause number 6 and 7, but giving the false information, knowing it to be false to you. Then clause number 18 is nothing but on your other misconduct. You are being convicted for an imprisonment not exceeding 6 months by the civil court or criminal court, and you are doing an act which is completely disrespect to the icai or the council. Right? Moving ahead to the next schedule 2. Schedule 2 mein part 1 talks for 10 clauses. You broke the confidentiality, you didn't examine, you vouched the accuracy, you expressed an opinion on substantially interested entity, or you failed to disclose material facts, you failed to disclose material misstatement, you are gross negligent, you fail to obtain sufficient and appropriate information, and then you fail to invite the departure from your generally accepted auditing practices, and you fail to keep the client's money in a separate bank's account. Now, this is how you remember all the 29 clauses. Let's finish and wind up the part 2 now. Part 2 is very simple. Part 2 में total 4 clauses. First one is only where you have to understand and work. Remaining 3 are just a 10 seconds के clause. First one में what they are saying, let me tell you. Okay, so let's start with the part number 2. Sorry, part number 2. There are total 4 clauses. I was telling you that in the 4 clauses, in the first clause only you have to do some necessary homework. Remaining all clauses are very easy. Now let's say, for example, if you're violating any section of this Chartered Accountants Act, any provision of this act, any regulation of this act, any guideline of this act, or any self-regulatory measures issued by the council of this act, the boss, you are guilty under clause 1. Say for example, example wise, suppose you are violating regulation number 43. That is the engagement of article assistant. Suppose you are violating regulation number 46, registration of article assistant. Suppose you are violating 47, premium you asked from the article assistant. Suppose you regulated 48, 56, 65, 67, 68, 190. Any of these regulations, if you are violating, any of the sections you are violating, any of the provisions you are violating, any of the guidelines you are violating, the boss, you are guilty under what? You are guilty under clause number 1. Now, so many students will get confused between this clause and clause number 2 of part 4 of schedule 1 कि you are doing any act which is bringing disrespect. Remember, this is professional misconduct. That is other misconduct. This is professional misconduct. So when you will see, that's why I have given you these examples now. The moment you see these examples in your examination question, immediately you should say it is a professional misconduct clause 1 part 2 of schedule 2, 1 to 2. But if it is other misconduct like non-maintenance of bank balance, or having a right of lien over the clients, or using your coercion and undue influence on the bank to give you the bank loan, then in that case, remember, that is a other misconduct. But what we are doing is what right now? Professional misconduct. First difference. Second difference, you are violating any section or any provision, any regulation or guideline. That is something which is not connected with Chartered Accountants Act. That is something general things you have done, which are looking very inappropriate on your part. This is the parameter of this particular clauses within the act. Act के sections, act के provisions, act के regulations and act के guidelines, not general things. Non-maintaining the bank balance is a general misconduct. It is nowhere written in the act that you have to maintain like that. So act is silent, na? So when you are doing any violation of the act, then it should come here. Otherwise, it is a other misconduct. Clear hai? Right or not? So these are the examples I have given to make you understand that what kind of violation of section, provision, regulation and guidelines will come here. Now, second one. Now, let's understand. Member in practice was guilty of professional misconduct if he has broken the confidentiality in the clause 1, part 1, schedule 2. Correct? Same if the member in service is doing breaking the confidentiality of the information which he acquired during the course of his employment. So then boss, he is guilty under clause 2, part 2, schedule 2, 222. Again repeating. Now see this. Being an employee of the company or a firm, employee of a company or a firm discloses confidential information you acquired during the employment. So what was first one over there? You were breaking confidentiality being a MIP here in part 1, right or not? And you are breaking the confidentiality here being a MIS in part 2. So that was 112 and this is 222. So MIP breaking the confidentiality, he is guilty under part 1. MIS is breaking the confidentiality, he is guilty under part 2. Am I correct or not? 100% clarity. Now, do you remember the second clause of part 3 of schedule 1 where you failed to supply the information to the DD, BOD, DC, AA, ICA council? Now, here you are giving the information but knowing it to be false. That's why you're guilty under 3 here. See, failing to supply the information or failing to provide the information to those authorities, may you're guilty under clause 1. Schedule 1. But here you are giving the information, you're providing the information, but knowing it to be false. So not giving the information, schedule 1 may you're guilty. Providing the information knowing it to be false, schedule 2 may you're guilty. Now, clause number 4. Now, what is the clause number 4? Just now we have done the clause number 10. Fail to keep the client's money in a separate bank account. So you are guilty under clause number 10 of part 1. But you kept the money of the client. Not only kept, you defalcated that money, embezzled the whose money? Money received from the client in your professional capacity. Suppose he kept the money with you, suppose 20-25 lakh rupees for making the payments in the near future, but you are misusing that money, you are using that money for your own personal purpose. The boss, you are guilty under professional misconduct under this particular area. I hope you all understood what I'm trying to tell. Is it clear? 100% clarity? Yes or no? 100%. So, 4 clauses. First, you are doing any violation of section, any provision, any regulation or any guideline. Second clause, you're MIS, but you're guilty of breaking the confidentiality. Third, you are providing the information to the institute authority, DD, BOD and DC, but knowing it to be false. Fourth, you are keeping the client's money in a separate bank account or not, but you are doing defalcation, amalgamation, defalcation, embezzlement of the money received in your which capacity? Personal capacity. Is it clear to all of you? Followed by one more clause. What is the one more clause? Guilty of an offense. Do you remember the other misconduct? First one, guilty. What was the imprisonment over there? Up to 6 months. And here, if the imprisonment is over and above 6 months, then in that case, you are guilty here. Now, in total, we are done with what? 20, 35 clauses, 34, 19 clauses in the part 1, 19 clauses, and part 2, schedule 2, may total 15 clauses. So let's have a journey of complete clauses. Now, first one, allowing sharing, accepting, partnership form, securing professional work, soliciting, advertising, non-communicating, 139, 140, right? Charging percentage basis, then not taking the permission of the council, then allowing someone to sign. Not a fellow, accepting by the MIP, then sharing by the MIP, accepting by the, sharing by the MIS, accepting by the MIS, not a fellow, acting as a fellow, not supplying the information, using 6 and 7, but knowing the to be false. Next one, part 2, schedule 2. Schedule 2 में other misconduct में guilty up to 6 months plus any disrespect or disrepute to the council you are giving. Correct है? Now, next one. Schedule 2 में breaking the confidentiality, not examining anything but allowing your name on the audit report or certificate, then vouching the accuracy of forecasted figures, giving the opinion on substantially interested entity, or fails to give the material facts, fails to disclose or report the material misstatement, gross negligent, and then fail to obtain SAAE, right? And fail to mention your departure from generally accepted accounting auditing procedures, then fail to keep the client's money in a separate bank account. Next one, you violated any section, provision, or guideline or regulation, then MIS is breaking the confidentiality, right or not? And then you're providing the information to those authorities but knowing it to be false, right? And then clause number 4, you are doing the embezzlement or defalcation of the money received in the professional capacity. And last may, if you're guilty by civil or criminal, but your imprisonment was more than how many months? 6 months, right? So that was all about 35 clauses. I hope I served your purpose for the same. Now let's understand the remaining guidelines. So see, guidelines relating to logo, network, write-ups, or you can say website, advertisement, right or not? So these guidelines, etc., we have already covered in our clause number 6 and 7. Now, UDIN guidelines are something which you are going to do. UDIN, you already know that unique document identification number. This was introduced to eliminate the malpractices, to eliminate the practices of issues like bogus and fake certificates, to save the regulators from being what? Misled. Now, on the certificates, the UDIN has been made mandatory from 1/9/2019 onwards. Actually, UDIN concept came on 1st July 2019, but it was already in the pipeline from 1/4/2019. So, from 1/4/2019 onwards, it was allowed on GST attestation and tax audit. From 1/7/2019, it was made mandatory on any other auditing and assurance and attestation functions, right? This was all about the UDIN, you should have known. Then in the morning, I told you that MCC is allowed, management consultancy company. Now let me tell you the clear fact of MCC. So if you're already having a sole proprietor or a partnership firm or LLP, the boss, you can also open a MCC, management consultancy company. One fact. Second thing is that if you are a partner in here, you can also become a director or managing director in the MCC, right? But the only glitch which you have to understand is if you are already having a sole proprietor partnership firm or a LLP and you are also operating the MCC, so MCC में only MCOS services are allowed. Auditing and accounting and other practices other than MCOS you can do it in this way. So you cannot do any auditing function by opening a what? MCC. And one more thing, you just need to obtain a COP to come into the practice. But if you want to open an MCC, you need to obtain a CCOP, that is called corporate form of what? Corporate certificate of practice. Right now we call it as CCOP, corporate certificate of practice, if you want to open an MCC. Is it clear to all of you? Now let's understand some guidelines which are given by the icai relating to MCC. An MIP is allowed to incorporate a body corporate form of practice called MCC along with his sole proprietor partnership form or what? LLP. He is also allowed to be the MD, director, WTB manager in such MCCs. So, उस MCC में आप MD, managing director, WTD also you can be. Next one, MIP can still retain his what? फुल टाइम सीओपी, आप फुल टाइम सीओपी रिटेन कर सकते हो इवन दो यू आर होल्डिंग अ एमसीसी का सीसीओपी. Now, no restriction on holding equity in such MCC. So, if you are becoming a part or becoming a director or MD of a MCC, there are no restriction on your equity holding that you can hold only 1,000 shares or something like that. No restrictions on your equity holding. Next one, the only condition imposed on such MCC is it shall not be involved in rendering with services. Auditing services not at all allowed, boss. So you can't provide the auditing services if you are running a what? MCC. Next point, name approval and registration process shall be carried out by whom? I say like a normal company. Instead of going to ROC, you have to get it done with the ICAI. It shall only be engaged in MCOS services. Just now I told you auditing services not allowed. Only MCOS services are allowed. And MCC also has to take care of 6 and 7. Solicitation not allowed. Professional attainments not allowed. Designation other than chartered accountant not allowed. So just because you are running an MCC doesn't mean that all those professional misconduct and other misconduct are not applicable to you. They are equally applicable to MCC. Only difference is auditing services are not allowed and there is no restriction on your equity and you have to hold a CCOP. FCC shall not render any service to a client where a sole proprietor partnership or LLP is already serving a auditing services. Obviously, that will be a conflict of interest. 144 will be imposed. So you are already an statutory auditor of XYZ Limited. So your MCC cannot be the MCOS service provider to the such company because otherwise it will be a conflict of interest. Section number 144 will be imposed. I hope you all are able to understand everything crystal clear. Hai? Now, let's understand what are the self-regulatory measures you have. Right or not? Self-regulatory measures मतलब क्या होता है कि these are those measures on which ICAI tells you that कि it is recommended to do like this. We already know that कि we have a tax audit limit of 60 per MIP excluding 44 AD, 44 ADA, 44 AE. So if you are doing the tax audit under 44 AD, 44 ADA and 44 AE to make sure that they are not falling in the list of your 60 and the same ceiling limit is applicable in case of company audit which is called 20. For that, I would say that better you should go with 143 subsection 3 clause G of your Companies Act which we have already discussed under the disqualification of the company audit at your intermediate level. Next point. Companies not to be included in the ceiling limit are your public companies, private companies with a paid up share capital of greater than equals to 100 crores and Section 8 companies, joint audits, government company audits and guarantee company having share capital. Now, what is the third regulatory measure? Every MIP is expected to maintain the two records. One, do you remember in the early session we have done KYC of your client that was called client register and client ledger. On the second one is called cash book, right? On KYC of client ledger and second one is cash book. Now, very important thing, MIP rendering MCOS services to whom? If you are rendering MCOS services to this thing, listed company, government companies, companies and PSUs, then in that case, remember one thing, if you are providing MCOS services to listed, government, public limited companies whose turnover is 50 crores or more, they shall not charge MCOS services more than the statutory audit fees charged to such entities. Example, an MIP is charging 20 lakhs as a statutory fees of a listed entity. Another MIP charging for MCOS services to another listed entity shall not be more than what? 20 lakhs. Basically, same provision we have done it in network also. Ki MCOS services provided by your network firms collectively shall not be more than 3 times of the statutory audit fees charged by the one of the network firm in the network, right? Now here what we are trying to understand is, try to understand it very carefully what I'm saying. Listen, the ICAI, the institute does not want to promote, any kind of MCOS services to take over our main auditing and accounting practices. Institute still wants that the members should focus more on what? Auditing and accounting practices, because in the MCOS may, if we'll not put a limit of the remuneration, what will be the implication? The implication will be what? More and more chartered accountants will be interested in what? They will be interested in going into MCOS services rather than practicing our auditing and accounting services, because which is our main bread and butter and main source for which people recognize us. So they have put the MCOS का limit कि MCOS fees shall not be more than statutory audit fees. तो let me give you one example. Suppose एयरटेल एंड जियो की बात करते हैं. ओके, लेट्स नॉट टॉक अबाउट दिस. जिंदल स्टील्स एंड वाइजेक स्टील्स की बात करते हैं. सपोज जिंदल स्टील्स में वन स्टैट्यूटरी ऑडिटर इज चार्जिंग 50 लाख रुपीस एंड यू आर प्रोवाइडिंग एमसीओएस इन द वाइजेक स्टील प्लांट. तो सर, बट बोथ द कंपनीज आर डिफरेंट ना. Even though both the companies are different, they are trying to tell you that if you are in the same industry, or if you have already charged some statutory audit fees to a listed entity, to a PSU, or to a entity with a public entity with a turnover of 50 crores or more, then similar to other entities if you are giving the MCOS services, I'm not saying same entity में तो allowed ही नहीं है. Other entities में if you are giving and they are similar to where you have already rendered your statutory audit fees, so your MCOS services charges shall not be more than your statutory audit fees. That's what they are trying to tell you. Next one, a firm with 10 or more partners doing head office audit. So suppose you are a head office auditor, you are a parent auditor, and in your firm 10 or more partners are there. Then in that case, you should not raise any objection if the branch audits are given to another statutory audit firm with less than what? 10 partners. So what they are saying, a firm with 10 or more partners doing HO audit shall not raise any objection if the branch audit is allocated to a firm having less than what? 10 partners. But your objection will be considered if as a HO auditor, you want to raise an objection, your objection will be considered if that branch is a dependent branch on HO. Their books of account, their financial statements are prepared by whom? HO. Then your objection raised will be considered. Second thing, such branch is a major contributory in a group. If you think that that particular branch is a major contributory of a group, so as an HO, you should only do the audit of that particular branch. Then in that case, giving the audit to another branch auditor for that particular branch is not a good idea. And that is where you can raise an objection. Am I correct? So generally, you should not raise the objection if you are having 10 or more partners and branch audit is given to the firm which is having less than what? 10 partners. But these are the two exceptional cases under which you can raise the objection. Branch is a dependent branch on HO and such branch is a major contributory in a group. Note, it does not restrict the HO's auditor's right. Are you getting the point? It doesn't mean that you are not the branch auditor, that's why you can't visit. We already understood under section number 143 and to 146 that what are the rights of being a statutory auditor. In such cases, you have to make sure that the HO auditor's rights cannot be taken away. Is it clear? And the last topic, a firm with 5 or more. Okay, now the last self-regulatory measure we are left with, suppose there is a firm with 5 or more partners, shall not raise the objection if the another firm of less than 5 partners is going to be their joint auditor. Sometimes क्या आता है, यहाँ पे ego problem आ जाती है. What do you mean by ego problem? Suppose my firm is having more than 5 partners and another firm is having less than what? 5 partners. So as a joint auditor, I don't want to work with that audit firm. So this kind of ego clashes and this kind of unnecessary arrogance kind of things should not appear in you. So if the another joint auditor is having less than 5 partners and you are also having more than 5 partners, so we should give the opportunity to the other firms to come into picture so that they can also have an opportunity of doing the joint audit with the big firms. They will be able to learn it. So basically, icai is trying to push that small firms should work with the large firm so that the smaller firm can fetch some experience and technical expertise from the large firm, right? Next one, last one is every firm must maintain 1:5 ratio as a qualified to unqualified. So in case in your firm there are 5 unqualified persons, for them at least 1 qualified staff should be there. This is called qualified staff to unqualified ratio, that is 1:5. So staff to its qualified staff is 1:5. For every 5 unqualified staff, there has to be 1 what? Qualified staff. But what do you mean by unqualified staff? Unqualified staff does not include articles, does not include audit assistant, typists and peons. Other than that, if any unqualified staff is there, for every 5, you need to have 1 qualified staff. So that brings an end to your professional ethics total revision. I hope I was able to deliver it properly. I hope I met your expectation. Now, let me tell you one thing very clear now. Liabilities of an auditor I will teach you, but unfortunately, that sections which I am going to teach you are no longer the part given in your I say material. Earlier, liabilities of an auditor was a very huge topic where we used to teach every section where the auditor is going to be what? Liable for. But yes, don't worry, I will teach you the areas where the auditor is liable. But remember, these sections you will not find it in your ICA material. I will tell you all the sections of Companies Act where the auditor is going to be held liable for, all the sections of Income Tax Act where the auditor is going to be liable for, and all the other areas of professional ethics. So we have done. So only two areas we have to touch. One is liabilities of an auditor under the Companies Act, and one is liabilities of an auditor under the Income Tax Act. So almost I think it will be not more than half an hour discussion to make you understand. Half an hour 45 minutes में अपना ये भी topic पूरा हो जाएगा. With that, your 16 to 17 to 20 marks are going to be there in your portion. So I hope you all found it very good, and let's start with the next topic in the next video, right? Thank you. Okay, so everyone, let's start with the next topic. The next topic which we have is known as liabilities of an auditor, right? So first of all, let me give you the introduction of this topic. As I told you earlier also, this topic is sections. You will find it missing in your ICA material. But I will suggest you that you should go through at least these sections, because you never know, anything may come into your examination, because those sections are something, it's not like you have never gone through. It is something which you have already done at your chapter called Company Audit and Accounts of Companies, right? So, borrowed from the CA intermediate level, they may definitely ask you these sections in your examination. So, you should concentrate on these areas, right? So, let us start. So, the name of the topic is liabilities of an auditor. In the liabilities of an auditor, there will be two types of sections we have to do: penalties under section Companies Act and penalties under section Income Tax Act, right? Penalties under professional ethics we have already covered under section number 24, 24A and 25, right? In those sections we have already covered 26. So there is no requirement of recording those sections or doing those sections again and again. Now, let's understand section number 147. You already know that in the company audit there was one section called 147 which says add a penalty to the both company as well as to the company auditor, right? Now what they are saying, if the company is in the violation of section number 139 to 146, again repeating, if the company is in the violation of section number 139 to 136, 146, then the company will be liable to a penalty of minimum 25,000 and maximum 5 lakhs. Officers in default is minimum 10,000, maximum 1 lakh. Now, what do you mean by 139 to 146? It is nothing but your whole company audit chapter only. But in case auditor is in the violation of section number 139, 143, 144 and 145. Again repeating, if the auditor is in the violation of 139, 143, 144 and 145, his punishment is minimum 25,000 and maximum may 5 lakhs will be compared with 4 times of his remuneration, whichever is lower, right? But if he is found guilty of, deceiving the IT department, shareholders, creditors and, anyone in the entity, then in that case, his penalty will be what? His penalty will be minimum 50,000 and maximum will be 25,000, which will be compared with 8 times the remuneration received, whichever is lower, or imprisonment up to 1 year or both. This is your penalty under section number 147. I'm just going to make you through these sections so that you can do it on revision basis. Next one, penalty imposed by the NFRA on the members found guilty of professional misconduct or other misconduct. You all know that we had one section called section number 132 that was talking about National Financial Reporting Authority. There was powers of the NFRA were given, and under those powers, NFRA has said that if you are in firm of a chartered accountant or if you're a chartered accountant and if you are found guilty of professional misconduct or other misconduct, so in that case NFRA has a right to put penalty on you. So remember one thing, now there are two authorities who can penalize us. One, so you already know, ICAI, where the ICAI knows that if you are guilty of professional misconduct or other misconduct, what to be done, that is disciplinary mechanism. The second authority is known as NFRA, National Financial Reporting Authority. Now, National Financial Reporting Authority says that, boss, if you will come across me and if you are found guilty of professional misconduct or other misconduct, then in that case, what is going to happen? Then in that case, if you are a member in practice and you are a sole proprietor, found guilty of professional misconduct or other misconduct. Again repeating, if you are a member in practice and you are a sole proprietor found guilty of professional or other misconduct, then in that case, minimum penalty will be 1 lakh and maximum will be 5 times the remuneration received, and ban from being practicing and being holding a COP for minimum 6 months and maximum what? 10 years. In case you are a sole proprietor MIB. But in case the MIP is other than sole proprietor, means partnership firm or LLP, then in that case, minimum 5 lakh rupees. What is the amount? Minimum 5 lakh rupees or 10 times the remuneration received, and a ban of minimum 6 months to maximum what? 10 years. Debarred from practicing for minimum 6 months to maximum 10 years. This is what the NFRA can do. Yes, penalties will be imposed by icai as well, but in those areas where the NFRA is making you guilty or where the NFRA is taking care of your case, so in such cases, icai is not allowed to interfere. Is it clear, everyone? Now, next penalty. Section number 140, subsection 5, removal ka penalty. You all know that when you are getting removed, right, especially in case of tribunal, so obviously when the tribunal interferes in removing you before the expiry of your term if you are found guilty of being involved in a fraudulent activity directly or indirectly, either happening on the company or by the company. So in case it is being proved that the auditor was involved in a whatever fraudulent activity which has happened on the company and resulted into a fraud, then in that case, tribunal definitely will debar you from practicing anywhere in India for at least what, 5 years, and penalty under section 447 also will be imposed on you. You know that penalty under section 447 is, it is broadly classified into two manner. On the left side, what is the penalty? If the fraud amount involved is less than 1% of the turnover or 10 lakhs, whichever is lower, then the penalty is fine up to rupees 50 lakhs or imprisonment up to 5 years or both. And if the fraud amount involved, right, is greater than equals to lower of the 10 lakhs or 1% of the turnover, then minimum fraud amount, maximum 3 times the fraud amount, and a minimum imprisonment of 6 months and maximum what? 10 years will be imposed on you. And if it is a public interest related entity or listed entity, then minimum 6 months will be substituted with a minimum 3 years. This is what do you mean by the penalty under section 147. Then penalty under section 140 subsection 3. This is penalty imposed when you fail to file ADT 3 with ROC. You all know that we need to file the ADT 3 with whom? ROC. Within the 30 days of resignation. So it is 50,000 rupees or remuneration received, whichever is lower, plus 500 rupees for every day of delay, and the total penalty subject to the maximum of 2 lakh rupees, right or not? So you can see 50,000 or remuneration received, whichever is lower, plus 500 rupees for every day of delay, subject to the maximum of 2 lakh rupees. Is it clear to all of you? Yes. Now, next penalty, section number 143, 12, 13, 14 and 15. This is a penalty when the auditor was doing an audit, being it a statutory auditor, cost auditor or secretarial auditor, and while doing an audit, you came across any material misstatement, any fraud, omission, right? Then it is your responsibility to bring it to the notice of the central government. Who is central government? Secretary of MCA within how many days? Within 60 days. Is it clear? Within how many days? Within 60 days. Now, as per the rule number 13 of CAR rules 2014, if the fraud amount is less than what? 1 crore. If the fraud amount involved is less than 1 crore, then you need not report anything to the government. Your story ends and your duty ends when you have reported it within 2 days to the audit committee or the board of directors, right? But if the fraud amount is greater than equals to what? 1 crore, then report the same to the audit committee of board of directors within 2 days and wait for 45 days for their justification. After 45 days, if they will reply or if they will not reply. If they will reply, attach their comments with your report, or if they do not reply, then do not attach those comments with your report, right? But make sure that in the next 15 days, your report must be ready. So 45 days of wait and 15 days of preparation of report, 45 plus 15 put together makes it to 60 days. And you know that you have to report it in form number what? ADT 4. Are you getting the point? Now, ADT 4 report is required to be sent to the Secretary MCA via post, that is called registered post with acknowledgement due, or speed post with email confirmation. and failure of which, if you do not do this reporting within how many days? 60 days. Then in that case, it will be treated as what? Then in that case, it will be treated as penalty of minimum 1 lakh rupees, a flat penalty of 1 lakh rupees if it was a case of unlisted company, and penalty of rupees 5 lakh rupees if it was a case of listed company. So this is also the penalty on auditor if he fails to report the fraud to the central government under section number 143, 12, 13, 14, 15. Are you getting the point or not? Now, I would like to ask you the question now. Can you please tell me what is the penalty of the auditor on violating section number 143 under section 147? Now, please comment below your penalties. I'll be waiting and I'll be telling you the answer then. Anybody would like to answer? If the auditor is violating section number 143, yes, yes. 143 is his duties. He's not doing his duties properly. Yes. Yeah, just now we have done section number 147 penalizes you, right? Yeah, please, Amma, tell me. 143. Okay. Yes, correct. If you are guilty of violating section number 139, 143, 144, 145, then in that case, your penalty is what, Amma? Minimum 25,000. Yes, minimum 25,000, maximum. Yes, maximum 5 lakh rupees or 4 times the remuneration received, whichever is lower. So keep these penalties in your mind, right or not? These are the perfect questions could be asked in what? Examination. Is it clear, everyone? Now, let's understand the next point. Now, next penalty is section number 34 and 35. One is called criminal penalty. One is called criminal penalty and one is called what? Civil penalty. Now, what do you mean by criminal penalty? Criminal penalty under section number 34 and civil penalty under section number 35. Now, see, these both the penalties are connected with what? Prospectus. And you know that while drafting the prospectus, we really need the MIPs, members in practice, to get associated. So when 34 is applicable and when 35 is applicable, when criminal penalty and when the civil penalty. Let me tell you one thing. 34 is about criminal penalty and 35 is about civil penalty. Now let me tell you 134 first. Now in case the company has issued a misleading prospectus and the prospectus includes a misleading information and untrue or unfair information, and the people who authorize to issue it, again repeating, people who authorize to issue it are guilty of what? Under section number 34. So, sir, what will be the penalty? Penalty will be very simple. Everyone who authorized that prospectus to be issued, including the person who was engaged in preparing it, that is a chartered accountant. You know that every prospectus is required to be divided into 4 parts. Part A talks about general information. Part B talks about financial information. Part C talks about clarification, in which a chartered accountant in practice has to sign whatever is written in part A of the prospectus and whatever is written in part B of the prospectus is true and fair. So due to that involvement, you also get associated with the issue of those prospectus. So in such cases, what will happen? In such cases, you are liable to get penalized under section number 34 because that prospectus which you helped them in drafting and certifying containing a misleading information. So section number 447 will be imposed. This is how 34 penalty is going to be taken care of. But when 35 will be imposed, try to understand. 35 section ka penalty will be imposed if somebody believed that prospectus. Right or not? You issued that prospectus and somebody believed that prospectus, and on the basis of that belief, he bought the securities. And he bought the securities and suffered a loss. If these extended things are being proved in the court of law, so you will not be charged under 34. You will be charged under 35. That is called civil penalty. Which penalty? Civil penalty. See, if the charges on the company are only that the prospectus contains a misleading information. Which information? Misleading information. Then section number 34 will be imposed. That is called penalized under section 447. But if it is proved that somebody believed that prospectus, bought the securities and suffered a loss, then in that case, section number 447, so definitely there, plus compensation without any limits. No limits will be imposed. Anyone, whosoever will be asking any compensation, if the government or the tribunal or the court thinks it is fit, then in that case, that compensation will be awarded. Are you getting the point? That is what do you understand in this particular topic called what? What do you say? Penalties in relation to prospectus. So what we have done the penalty under section 147. We have done the penalties under section 132. We have done the penalty under section 140 subsection 5. We have done the penalty under section 140 subsection 3. We have done the penalty under section 143, 12, 13, 14, 15, and we have just now done the penalty under section 34 and 35. But yes, in the 34 and 35, you also have a escapism points. If you can prove to the court of law that my information or statement made by me was immaterial in nature, right or not, and even up to the date of issue of prospectus, even I believed it to be true. And how you can escape from the civil liability? Ki boss, I withdrawn my consent before the issue of what? Prospectus, right? And even though the prospectus was issued without my consent, I immediately gave a public notice. And you know that what do you mean by public notice? Public notice means by which you tell to the outside world that, boss, do not believe on this particular prospectus. You have given the public notice in such case. Right, everyone? And last but not the least, he gave such a statement believing that I believed on someone's statement and that someone was an expert. An expert was competent enough. He also did not withdraw his consent. And he also agreed on the same thing. So I believed an expert. So expert later on found out to be a untrue person. So in that case, you can't do anything. You can very well escape from the penalty under section 35. Is it clear? So these are all the penalties which you needed to know under the Companies Act. Right or not? Again repeating, section number 147, 143, 12, 13, 14, 15. Then 140 subsection 5, 140 subsection 3, 132, section 34 and section 35. These are the various sections you need to keep into consideration. I will suggest from wherever the sources you have done at your intermediate level, please make sure that you should go through those sources only. Right or no? Or if you think that these notes are looking good to you, you can go through these sections at one place as I have made it available for you. You can go through that. Now, next the penalties under the Income Tax Act 1961. Now, what are the penalties under Income Tax Act 1961? There are 4 penalties: 278, 288, Rule 12.8 and 271J. Now, what is section number 288 is saying? Section number 288 talks about disqualification of the chartered accountant to appear before the income tax authority. It means under what circumstances you are disqualified to appear or carry out any tax representation in front of whom? Income tax authority. That is what this section is all about. Now see, let's say for example, if you were removed or dismissed from the government service on or after 1/4/1938. If you have been removed as a chartered accountant or dismissed from the government service on or after 1/4/1938, since then, if you have been removed or dismissed from the government services, the boss, you are permanently disqualified to appear in your IT authorities ka proceedings. Next point, if you are convicted under the Income Tax Act or if you were charged with any proceeding or penalties, then Commissioner of Income Tax Department, Chief Commissioner of Income Tax Department, and Principal Chief Commissioner of Income Tax and Principal Commissioner of Income Tax. Any of these 4 people will decide your period of what? Disqualification. So your period of disqualification will be determined by any of these 4. Again repeating, if you were dismissed or removed from the government services on or after 1/4/1938, so boss, you are permanently disqualified. You can never appear before the IT authorities for any kind of proceeding. But if you have been penalized under the Income Tax Act or convicted under the Income Tax Act, then your period of disqualification will be decided by these 4 people: Chief Commissioner of Income Tax, Commissioner of Income Tax, Principal Chief Commissioner of Income Tax, and Principal Commissioner of Income Tax. Any of these 4 people can determine your period of disqualification. Next point is in case of insolvency. In case you have been declared insolvent, till the time your insolvency does not again turn back to the solvency, till your insolvency continues, the boss, you are what? disqualified. And if you are convicted by a offense of fraud by the court, as you remember, we already had that point in our disqualification. You have been convicted for an offense of fraud by the court, then the disqualification will be 10 years or service of imprisonment, whichever is later. So these are the disqualifications under section number 288, which a chartered accountant has to face. Now, what is 278? Inducing or motivating. Again repeating, inducing or motivating assessee in evasion of taxes. So if you have motivated an assessee in the evasion of taxes, in the evasion of penalty, in the evasion of interest payment, then in that case, if the evasion amount is greater than what, 25 lakhs. If you help the assessee in evading the tax or the penalty or the interest and amounting to more than 25 lakhs, so minimum penalty is 6 months, maximum penalty is 7 years in jail. Minimum is 6 months in jail, maximum is 7 years in jail, and the fine will be depending upon case to case basis. And if the tax evasion was less than equals to 12 months, if the tax evasion was less than equals to 12 months, then minimum 3 months, maximum 2 years in jail with a fine again based upon case to case basis. That is what section number 278. So 288 talked about what? 288 talked about what do you say? Disqualification, and 278 talked about what? 278 talked about your what do you say? Evasion of taxes. When you're helping it. Now, what is rule number 12A? You are helping an assessee in filing wrong documents which are asked by the IT authority. So IT authority has asked some assessee to produce the books of accounts, and you are helping the assessee in manipulating those books of accounts and producing the wrong books of accounts, knowing it to be false. You already know that whatever the assessee is producing to the IT authority, you are not directly producing. Assessee is directly producing the books of accounts, and but you know it to be false, and you know that you are involved in that. And IT department came to know about it. Then in that case, your penalty is imprisonment up to 7 years and with what? Fine. That is what rule number 12A. And what is rule number 271J? Rule number 271J simply says that if you are a CA in practice or a merchant banker, and any report or certificate has been asked from you by the IT department, and you have given a fraudulent report and you have given a fraudulent certificate knowing it to be false, so rupees 10,000 per certificate or rupees 10,000 per audit report issued by you will be charged from you. The penalty is rupees 10,000 per report or certificate issued. So this is what brings an end to your topic called liabilities of an auditor. What is the name of the topic? Liabilities of an auditor. Is it clear, everyone? So that finally brings an end to your topic called what? Professional ethics and liabilities of an auditor. Is it clear? Yes. Okay, everyone. So let us start with the next chapter. The next chapter which we are going to start is known as audit reporting chapter. What is the name of the chapter? Audit reporting. Now, audit reporting chapter mein, what we are going to cover? We are going to cover definitely a CARO 2020 plus your essay 700 ka full series, right? Including 720. And plus we are going to understand some sections of some subsections of section number 143. Now, if you'll carefully see the icai material, you will find out that so many sections of 143 has been introduced, like 143, 1 has been told about, 143, 3 has been told about, 143, 12, 13, 14, 15. I have already made you understand in liabilities of an auditor topic mein, but here we are going to cover these two sections plus 700 ka full series plus CARO. So let us first start with the CARO. Now CARO itself is also a section number 143. So 143 subsection 11 is nothing but called CARO. Now CARO, you all know that Company Audit Report Order 2020. It is the better version of the CARO 2060. Well, now in the CARO, there are total 21 clauses you need to report upon. First of all, though, we have to understand some basic information about the CARO. So first of all, CARO is required to be performed by a statutory auditor in addition to his overall examination of what? Financial statement. The CARO is not a part of your audit. It is in addition to your statutory audit of examination of financial statements. Second thing, CARO is not a separate report. So we do not generate any separate report for the CARO. CARO is basically required to be attached in the main audit report as an annexure. That is the second thing you need to understand about the CARO. Ki CARO is not a separate audit report. CARO is nothing but a annexure to the main statutory audit report, right? While doing the CARO, auditor must consider the propriety element. Now, what do you mean by propriety element? Try to understand in the overall examination of financial statements, sometimes we are not able to check the things exhaustively, right or not? So, central government has done what? Now, let me give you the meaning of first CARO. CARO ka full form is what? Company Audit Report Order. Am I correct? Now, in the company audit report order, what is the meaning of the term called order? Central government is ordering a statutory auditor that ki boss, after doing your overall examination of financial statement or during your overall examination of financial statement, anyways, as a statutory auditor, you have to express an opinion. But I want you to concentrate on these 21 areas more. That is what central government is trying to tell to whom? An auditor. Okay, boss, whenever you will come across these 21 areas, make sure that in these 21 areas, you should definitely talk more. You should definitely see propriety element in that. Now, what the propriety has come from the government audit. Now, what do you mean by propriety? Propriety means looking the justification behind the things. Looking that the things are not needless. Understanding that the things are not done by the company wasteful manner. Understand that the company is not doing any fraud or any kind of error. So propriety means checking the justification behind the transaction, right or not? So we would like to see those 21 areas where the central government has ordered a statutory auditor. Ki boss, these are the 21 areas where you need to be more careful and prepare a report on that and attach it as a part of your statutory audit report. That is what you mean by ki CARO mein we have to check which element, everyone? Propriety element we have to check. Is it clear? Now, CARO is not applicable to consolidated financial statement. So CARO only applicable to standalone financial statement. CARO does not apply to consolidated financial statement. Next one, it is expected from the statutory auditor to be more exhaustive. Just now I told you कि in the normal audit may we do not take care of the things that much, but in the CARO it is expected that you make sure that everything which is coming across to you, your eyes, must be done or must be audited exhaustively. That is what the purpose behind the CARO. Is it clear, everyone? 100%? Yes. Okay. So now let's understand what CARO is all about. CARO is basically divided into four parts. In the part number one, we'll understand the year and the applicability of the CARO. Right or not? The year and the applicability date of the CARO. Part number two, may we'll understand applicability of the CARO, to which entities, not to whom it is not applicable, to whom it is applicable. Part 3 may we'll talk about its 21 clauses, and part 4 may we'll understand how to express an opinion. So let's understand the part 1. Part 1 may date of notification 2002-2020. It's not 20, it's 25. So 25th February 2020 को CARO 2020 replaced the CARO 2016. Are you getting the point? So 25th February 2020 replaced CARO 2016 with what? CARO 2020. But unfortunately, due to the two pandemic situations we had, one year after another, so CARO was deferred by 2 years. Actually, it was supposed to get started, or it was supposed to be applicable from 1920 financial year, but due to the pandemic situation and lockdown number one, it was deferred for the 2021. Again, in the next year, another lockdown happened. That's why it was again deferred for 21-22. So even though it came in 25th February 2020, but it is made applicable from 21-22 financial year and onwards, because it was deferred for 2 years. Supposed to be starting from 1920, but it was ultimately ended up in 21-22. So 2 years deferment took place. Are you getting the point? Now this is what para number 1 of the CARO is talking about. Date of applicability, date of notification is 25th February 2020, and date of applicability of the financial year is 21-22 financial year onwards. Now applicability. Now see, very simple. CARO is applicable to all the companies in India, including what? Foreign companies under section 2 subsection 42. So being a Indian company, so definitely Caro is applicable on you. But even if you are a foreign company, means incorporated outside India, but having a place of business in India, then also Caro is applicable to you. Are you getting the point or not? Now, when the Caro is applicable to the foreign companies as well as the Indian companies, some companies have been shortlisted by the Companies Act on which Caro will not be applicable. So Caro is not applicable to Section 8 companies. So if you are a Section 8 company, for you Caro is not applicable. Caro is not applicable to banking companies because they have the another regulation, Banking Regulation Act to take care of. So Caro is not applicable the banking companies. While doing the audit of banks, also keep that in mind. Caro is not applicable to banking company, but yes, Caro is applicable to NBFCs and to the financial institutions. NBFC को applicable है, but it is not applicable to the banking companies. Is it clear? Now, Caro is not applicable to the insurance company. Again, regulator of the insurance company is IRDA. So, as per the IRDA requirements, insurance companies are not required to report under Caro. So, not applicable to Section 8, not applicable to banking, not applicable to insurance, but NBFC and financial institution ko it is applicable, right? Now, OPC, one person company, Caro is not applicable. Caro is not applicable to small companies also, but Caro is not applicable to the private limited companies. Caro is not applicable to the private limited companies, but only if four conditions are satisfied. If all the four conditions will be satisfied, then Caro will not be applicable to the private limited company. It means to get the non-applicability of the Caro, a private limited company has to satisfy the four conditions. How many conditions? Four conditions, right or not? So let us understand those four conditions. But before that, Caro is applicable to the private unlimited company. Are you getting the point? If it is private limited company, Caro has to become Caro applicable, there has to be four satisfaction, or there has to be not to become applicable on the private limited company, the private limited company has to satisfy the four conditions. But if you are a private unlimited company, then Caro is automatically applicable. There is no such conditions imposed to get the non-applicability. Caro itself will become applicable. So again repeating, private limited company mein four conditions to be satisfied to get an exemption under Caro. And private unlimited company mein Caro is automatically one applicable. So Caro is not applicable to Section 8, not applicable to banking, not applicable to insurance, not applicable to OPC, not applicable to small companies, not applicable to private limited company, which is satisfying the four conditions. Right, everyone? Now let's understand what are the conditions to be satisfied by the private limited company for the non-applicability of the Caro. You all know that such private limited company which wants an exemption under the Caro should neither be a holding of a public company nor be a subsidiary of a public company. आपका किसी पब्लिक कंपनी के साथ होल्डिंग सब्सिडरी रिलेशनशिप नहीं होना चाहिए. तो कंडीशन नंबर 1 इज कि सच प्राइवेट लिमिटेड कंपनी नाइदर अ होल्डिंग नॉर अ सब्सिडरी ऑफ अ विच कंपनी? पब्लिक कंपनी. नाउ two words have been used here, holding and subsidiary. It means having a joint venture relationship or having an associate relationship. There is no problem when it comes to Caro applicability. Are you getting the point? So if you are having a holding relationship with the public company, Caro is applicable. If you are having any subsidiary relationship with the public company, Caro is applicable. But if you are having any joint venture relationship with the public company or an associate relationship with the public company, then Caro is not applicable. So we are doing these four conditions for not making Caro applicable to you. When the Caro is not applicable, if all these conditions are satisfied. So neither a holding nor a subsidiary of a public company. Second, its paid up share capital plus free reserves. Its total paid up share capital plus free reserve shall not exceed what? 1 crore. Its paid up share capital plus free reserve shall not exceed what? 1 crore. So if your total paid up share capital plus free reserve is not exceeding what? 1 crore, then also the Caro is not applicable. The moment it will exceed, Caro will become applicable. Now, what does the paid up share capital includes? Paid up share capital may your equity share capital, preference share capital, minus your allotment money, minus share application money, whose allotment is pending, minus calls in areas, minus calls in advance. So this is the same formula you have to apply while calculating the figure of paid up share capital. And free reserves में all reserves you have to add. While calculating all the reserves you have to add, either they are statutory, non-statutory, capital revenue, All the reserves as per Schedule 3 are required to be added in Caro. Even the securities premium you have to add, even the revaluation reserve you have to add, monetary, non-monetary, every reserve you have to add. But only one problem. If you will find any debit balance of P&L, debit balance of P&L nothing but represents the loss. So then you have to first reduce that loss from where? You have to first reduce that loss from free reserves, and if the loss is still bigger, it is still not resolved, then in that case you can deduct it from the paid up share capital. Is it clear? So this is the condition number 2. So condition number 1 is what was the condition number 1? Condition number 1 was neither a holding nor a subsidiary of a public company. And what is the condition number 2? Its paid up share capital plus free reserve shall not exceed 1 crore. Condition number 3, its total outstanding borrowings individually or aggregate at any point of financial year from all the banks and financial institutions shall not exceed 1 crore. Are you getting the point? Any kind of loan will be taken, even a credit card bill, even an overdraft limit, term loan, CC loan, working capital loan, short-term loan, long-term loan, put together, the limit of all the loan outstanding shall not be more than what? 1 CR. And remember, when we are checking the borrowings limit, we don't have to check it on the last day of previously audited financial statement. We have to check it at any point of time during the financial year. The moment, even if one time it has touched at any point of time more than 1 CR, the boss Caro will become applicable irrespective of the fact that 31st March its balance is less than 1 CR. Is it clear, everyone? So what things you need to consider? The limit to be checked at any point of time, even the credit card bills or letter of credit, bank guarantees are to be included. Sir, any kind of loan you have to add. Next one. In case of ODs against FDs, so generally हम लोग क्या करते हैं? Suppose you have done an FD of 80 lakhs and your OD is 1 crore. So you take a net of 20 lakhs. No. In case the ODs have been taken against the FDs, you have to take gross figure. You have to take which figure? Gross figure you have to take. So suppose your OD is 1 CR and FDs are 80 lakhs. So you have to take 1 CR only. Gross figure of the ODs is required to be considered. Do not take the net figure while calculating the Caro. Is it clear? Next one. Condition number 4, the revenue of the turnover from the continuing operations as well as the discontinuing operations put together shall not exceed 10 crore. So if you have having any revenue from your continued business activity and you were running one business activity but unfortunately it got discontinued, so दोनों का turnover, दोनों का revenue put together shall not be more than 10 CR. But remember, trade discount and sales return. Trade discount and sales return, you have to reduce it. Sir, sales return of any year? Yes, any year ka sale return happening in this year, you have to reduce it. So trade discount and sales return is required to be reduced. Rest everything has to be ignored. And if GST or excise, GST or custom is given inside the turnover, then remove them, because GST and custom is not the revenue of the company, it's a revenue of the government. If it is included in the turnover, then reduce it. But if it is given separately, then ignore it. We need a revenue. We need a turnover details. We need a revenue details and turnover details. So turnover from continuing operations plus turnover from discontinuing operations, you have to take minus if any trade discount is given, minus if any sales return is given, nothing else you have to do. And yes, if GST and custom is added, then do the minus. If the GST and custom is not added, then in that case, leave it as it is. Is it clear to all of you? 100% clarity? Yes or no? Yes. So these are the 4 conditions to be satisfied in case the private limited company does not want to get covered under Caro. So condition number 1, such private limited company should neither be a holding nor a subsidiary of a public company. Second, such private limited company should not have its paid up share capital plus free reserves exceeding 1 crore. Such private limited companies' outstanding borrowings in individually or aggregately shall not exceed 1 crore, and such private limited revenue or the turnover from continuing operation plus discontinuing operation shall not be exceeding 1 crore. If that is the case, then Caro is not applicable. If any of the condition is dissatisfied, then the Caro will become what? Applicable. Is it clear to all of you? So this is what you need to understand about the applicability or non-applicability of the Caro. I hope I made myself very clear. So that brings an end to your part 1 and part 2. Part 1 may we understood the date and the year, and part 2 may we understood the applicability of the Caro on private limited company. Now part 3, the major thing. I will tell you how to remember these clauses. Total 21 clauses. How many? 21. So in between, I'll make you understand the clauses in such a way that I will ask you the total clauses in a sequence, in a reverse sequence, right? So like that, you have to keep that in mind, because in the examination, the question will come from the clauses only. So suppose a particular question is coming and you automatically have to understand ki which clause they are talking about. So like in the professional ethics, we used to quote clause number, as per clause number 3, part 1 of schedule 1. Here also you have to do like that. As number clause 3 of Caro 2020 under para 3 under section number 140 subsection 11. Let me tell you one thing. You write this line, explain the clause. Explain the clause, then explain the facts of the case, and then write the conclusion. I can guarantee you will get the superb marks. See, definitely, let me tell you one thing. In the final examination, the fight is never ever between the right and the wrong answer. Fight is between the right, a good answer, and a better answer. If someone is quoting the clause number, para number, Caro 2020, section number, definitely as an ICI examiner or a valuer, he or she has set a bar. So I have to compare your answer with that answer. So on the basis of that, I have to give you the marks. Are you getting the point? On the basis of that only, I have to give you the marks. You have to understand it very carefully कि basically it's the presentation which matters in your essay, and do not compromise the language. Don't write the simplified language, write the technical language. Because after final, you are not going to learn anything else in your life. No one is going to teach you ever after. This is the high time you should understand how professionally looking answer is required to be given. That is what I'm trying to tell you. Did you get the point? So let's understand there are total how many clauses? 21 clauses. How many everyone? 21. Clause 1 talks about plant, property and equipment. Now plant, property and equipment, I have 5 issues. Issue number 1, relating to records. I need quantitative records to be maintained separately, intangible records and location wise records. So it is basically Caro is nothing but a conversation between you and the what? The auditee. Are you getting the point? So as an auditor, I'm just put up a list of 21 areas. I will just go and simply see. We have to check propriety element. We have to go little bit more exhaustive. We have to go little bit behind the bars. We have to check the justification. So I have every right to ask them these set of questions because I am being ordered by the central government. तो पहला एरिया क्या है? प्रॉपर्टी प्लांट एंड इक्विपमेंट में फर्स्ट एरिया, सब एरिया नंबर 1, रिकॉर्ड्स. आई नीड द 3 टाइप्स ऑफ रिकॉर्ड्स, योर क्वांटिटी वाइज, your location wise, your intangible wise. Next thing. Second thing I am concerned about is ownership and title. What I am concerned about? Ownership and title. Ki why some of the plant and machinery are not in your name? In whose name you bought it? What is the description of those properties? What is the period of holding? And what is the gross carrying value? Your boss, why you are not holding the ownership on this plant and machinery? That is first question. You justify me. In whose name you are holding it? What is the gross carrying value? Right or not? What is the description of the property? Are you getting that? And what is the period of holding? Right or not? So all these questions I'm going to ask when it comes to ownership and title. फिर मेरा third area, मैंने उसको क्या बोला कि are there any property, plant and equipment on which any pending cases relating to Benami properties are going on in the court of law? Is there any property, plant and equipment under the Benami properties one litigation is going? If yes, tell me the disclosure of those pending litigations under Benami Properties Act. Right or not? That is my question number 3. So question number 1 was record, 2 was on ownership, and third one was on Benami property. Fourth way, do you actually conduct the physical verification of your property, plant and equipment at regular intervals or not? Why you are not doing the physical counting? Because it is nothing but if the assets are of lower size or smaller size, but the value is high, there are very much chances of MOA, misappropriation of assets. Are you getting the point? So you should carry out the physical verification of your property, plant and equipment at the regular intervals. That is what my question number 4. Question number 5 was what? Ki whether you have done any revaluation to your plant, property and equipment greater than equals to 10%. either upside or downside. If you have done any revaluation, I need to know the report of the registered valuer who has helped you in doing this revaluation, either upside or downside, and did you make an adequate disclosure in the financial statements or not. That's it. So my first area was on what? My first area was on records. I needed three types of record: location wise, intangible wise, and what do you say? Location wise, intangibles, and quantitative wise. Second was on ownership and control. Ownership and control mein why you have not bought these properties in your name, in whose name, description, period of holding, gross carrying value. Third में any pending litigation under the Benami Properties Act. Fourth में physical verification required to be carried out at regular intervals. And fifth case में did you do any revaluation over and above 10%, either upside or downside? Show me the registered values report, and did you make adequate disclosure in the notes to accounts? అయిపోయింది. First one over. Second clause is relating to inventory. Inventory में what do we check? Inventory में same question. Did you make the proper records or not? Right or not? Do you do the physical verification of your inventory at the regular intervals? When you do the physical verification of your inventory at regular intervals, what is your period of coverage? What is your procedure involved? How do you carry out the physical counting? Do you do it on your own or got it outsourced? ये सब कुछ चेक करना है. And second case में, did you take any working capital loan by giving inventory as a security amounting to greater than equals to 5 crores? If the amount of the loan, working capital loan, by giving the inventory as a security is more than 5 crores, then you should have filed quarterly stock statement with that bank and financial institution, and is your balance is reconciling it with your books of accounts or not. Khatam. Over. Look at this. Whether the physical verification at regular intervals were conducted, frequency of checking, procedures followed, and coverage shall be examined. Ensure that proper records are maintained. And if the client has obtained any working capital loan or a cash credit limit against the inventory greater than equals to 5 crores, check whether the quarterly stock statement filed with the banks and whether the balance is reconciled with what? Books of accounts. हो गया. तो first clause was on property, plant and equipment. Second clause was on inventory. Third clause is on related party loans. So in that case, there are total 6 questions you have to pose to your client. Now what are the 6 questions? Question number 1. Give me the list of your total loans, out of which let me bifurcate how much you have given to related party and how much you have given to unrelated party. Again repeating, take the total list of loans and bifurcate how much given to the related party, how much given to the unrelated party. Point number 1, it means you narrowed down your zone. Your concentration is on related party loans. Next thing, check out their legal terms and conditions by obtaining the agreement papers. I would like to see whether the terms and conditions are looking regular or not. Third way, I would like to see whether the related parties who have taken the loan from you are repaying your principal and paying your interest on or before due date or not. That is my concern number 3. Concern number 4, if there is any related party which is overdue for more than what? 90 days, did you take any remedial actions or not? Remember, here remedial action need not be a legal action. Remedial action means just a reminder notice. At least you should have sent to the related party ki boss, your payment is due, please make the payment. Need not be a legal action. Next point. Fifth point mein, I'm talking about any related party came to you for the renewal of the loan, for the any fresh loan or for any extension of the loan. ये 3 word याद कर लो. Any related party came to you for renewal, for fresh loan or for any extension. That was the 5th point. 6th point mein, is there any related party loan you have granted which is granted as a demand loan? Or is there any related party loan granted by the entity which is granted without any determination of terms and conditions? If all these answers are looking good, if you are okay with that, report, and if you are not okay, report the negative. And remember, you have to report on each and every clause. Either you are reporting positively or negatively, you have to remark on each and every clause. Even if that clause is not applicable, remark that this clause is not applicable. That's why I'm not reporting. You can't leave it empty. Every 21 clauses are required to be remarked by you. Are you getting the point? Now, investor, what is the third area? Related party. Tell me the 6 points. First, we segregated between related party and non-related party loans. Second, we check the terms and conditions. Third, we check the regular payment and repayment of the principal and interest. Fourth, overdue for more than 90 days. Did you take any remedial actions or not? And fifth, we checked anybody came to you for extension, renewal, or fresh related party loan. Sixth, which related party loans you have given as a demand loan and where the terms and conditions have not been determined. Clause number 3 is over. Clause number 4, everyone. What is clause number 4? Compliance of section number 185 and 186. Simple clause. If you find out your client has given any loan to the directors, again repeating, if you find out your client has given any loan to the director, you have to tell your client and check whether they have done the compliance of section number 185 or not. And if you see that your client has given any intercorporate loan, check the compliance of section number 186. Bhai, I'm not against you giving the loan to your directors and giving the loan to the another. I am only concerned कि if you are giving a loan to the whom related part, if you are giving a loan to the intercorporate loans, if you are giving the loans in the form of what? Loan to the directors, I just need you to comply with section number 185 and 186. If you are doing the compliance with 185 and 186, then why the hell I would create any kind of issue? Are you getting the point? So we don't have an issue if you are following the section number 185, 186. That is clause number 1. Jaldi se repeat karo. What are the 4 clauses, sir? Clause number 1. Yes, property, plant and equipment. Clause number 2, inventory. Clause number 3, related party loans. Clause number 4, intercorporate loans and loan to director ka compliance of 185 and 186. So 185 is on loan to directors and 186 on intercorporate loans. 4 to 1, compliance of 185, 186, related party loans, inventory, property, plant and equipment. Moving ahead to the 5th one, acceptance of deposits. Now, what the auditor needs to check here in acceptance of deposits? See, one thing very clear. Your client can accept the public deposits only if it is an eligible public company. So, first of all, you have to check कि did you accept any public deposits or not. Because if your client has accepted any public deposit, he has to be, or it has to be, which company? It has to be a eligible public company. Now, what makes you eligible public company? Either its net worth should be 100 crores or more, or its turnover should be 500 crores or more. Point number 1. Okay. He said that, yes, we have accepted the public deposit. Second thing, check the compliance of section number 73 to 76. Because when you accept any deposits, either from the member or from the public, the whole chapter of 73 to 76 is applicable to you. So we have to check whether you have complied with the section number 73 to 76. Then 4th point. Is there any interference done by the RBI? Remember one thing, whenever the public deposits are being issued or member deposits are being raised, always remember the RBI interface by specifying the rate of interest. When the RBI specifies the rate of interest, you cannot charge a rate of interest more than specified by whom? RBI. So we have to check that 3rd thing. 4th thing, we have to check कि boss, is there any NCLT order imposed on you? Because when the NCLT interface, if the company fails to repay or company fails to repay the public deposits or member deposits on time, then the NCLT order comes. So that will give us an indication that company is regular in the repayment of their deposits on maturity or not. So point number 1, did you accept any public deposits? Compliance of 73 to 76. Any RBI, your rate of interest shall not be more than specified by RBI, and any NCLT order has been received. Yeah, this is 1, 2, 3, 4. This is how total 5 clauses are already over. Right, everyone? Next, clause number 6, relating to cost record. Now, यहाँ पे सबसे बड़ी दिक्कत क्या है कि most of the students get confused कि sir, cost audit is done by the practicing CMA. So why we are interfering? Boss, we are not interfering. Yes, still the cost audit will be done by the practicing CMA only by examining the cost records. We are simply talking to the client कि boss, I see that you are a manufacturing, production, mining, extraction, processing and assembling company. If you are any of these 6 category company and your turnover is greater than equals to 35 crores, then as a statutory auditor, not as a cost auditor, as a statutory auditor, what is my responsibility? To simply ask the client कि boss, did you start maintaining cost records along with your normal books of accounts or not? Simple सी बात है. Normal books of accounts under section 128, so you have to prepare. You also have to prepare the word cost records. You also have to start preparing cost records. I'm not going to do the audit of the same. Auditing and examining is whose problem? Cost auditor under section 148 subsection 1 who is appointed. I'm here to just ask you, did you start maintaining cost records or not? Don't show me, just tell me, did you start maintaining cost records or not? That's what ends our clause number 6. So remember, focus is not on examination, focus is on a maintenance of cost records. Cost audit is nothing but the duty of the cost auditor, who is a practicing CMA, not ours. We are the statutory auditors doing the CARO provision. So as per the CARO provision under the Limited Act, we are just asking, did you start maintaining the cost records or not? So that brings an end to your 6 clauses. Tell me 1 to 6. So first one, property, plant and equipment. Second one, inventory. Third one, related party loans. Fourth one, compliance of 185, 186. Fifth one, the acceptance of deposit. And sixth one, cost record. Seventh one, statutory dues. What is the seventh one? Statutory dues. Now, auditor has to check that whether the client is regular in payment of undisputed dues or not. See, what do you mean by undisputed taxes? Those taxes which you agree to pay, at least pay them on regularly, pay them on time. So we are checking the regularity in the payment of undisputed taxes. Point number 2, I'm interested in those areas which are pending still for more than what? 6 months. Up to 6 months, I'm not interested. I'm interested in those pending areas which are pending for more than what? 6 months. Areas outstanding dues which are pending for more than 6 months. Give me the list of that. Third, are there any disputes going on in any forum or tribunal or any kind of court? Like suppose if the income tax dispute is there, ITAT, if the excise related or say for example GST related is there, stat is there. So in which forum your case is pending and what is the amount of dispute involved? That's it. This is what do you mean by statutory dues. Point number 1C, regularity in payment of undisputed taxes. Second, information on those areas which are pending for more than 6 months. Examine the amount of dispute involved and in which court or forum your case is going on. This is what brings an end to your 7 clauses. 1/3 to karo ho bhi gaya. What is the clause number 8? This is a new clause, unrecorded income. Now, say for example, you have been raided by the income tax department. Some income tax assessment has taken place on you, right or not? And during the raid, they found some unrecorded income. What they found? Unrecorded or undisclosed income, which you have already surrendered. Now, please give me a very logical answer. They found some unrecorded income. You already surrendered that income. Am I correct or not? They found unrecorded income. You already surrendered that income. And when you surrendered that income, please tell me one thing very carefully. Is it already being taxed by the government? Yes, you already paid the tax on that undisclosed and surrendered income or not. Now, second question is कि once it is already surrendered and disclosed to the IT department, you have to start recording it in your what? Books of accounts. That is what my concern. Examine whether the company has disclosed or surrendered any undisclosed or unrecorded income under its income tax assessment conducted under IT 1961, and if so, whether such income has been reported in books of accounts or not. That brings an end to your 8 clauses. Tell me 8 to 1 now. Sir, unrecorded income 8. 7, payment of statutory dues. Then 6, cost records. 5, deposits. 4, compliance of 185, 186. Then 3, related party loans. 2, inventory. 1, property, plant and equipment. Is it clear, everyone? Next point is what? Repayment of the borrowings. Now, what is the repayment of borrowings? In this, we have the 6 concerns to be taken care of. How many concerns? 6 concerns. Concern number 1. Sir, did you make any default? If yes, give me the lender-wise list along with the amount involved. Simple. Did you make any default? If yes, give me the lender-wise detail and amount involved. Second, have you been declared as a willful defaulter by any bank or financial institution? Willful defaulter, any bank or financial institution? If yes, give me the list. Now, what do you mean by willful defaulter? It's not that you can't pay, it's that you don't want to pay. Are you getting the point or not? Willful defaulter hota hai, you want to default. And that is a more rigorous situation as compared to what? Getting defaulted due to insolvency or bankruptcy. So point number 1 mein, we are simply asking, did you default any loans taken by you, borrowings taken by you? Give me the lender-wise details and amount involved. Second mein, have you been declared as a willful defaulter by any bank or financial institution? Third mein, whatever the loans you have taken, are you using it for the purpose for which it was taken or not? It means basically we are checking, is there any misuse of the end use of the borrowings or not? Suppose they told that they are taking the loan for something, but they are using it for something else. Am I correct or not? Next point is what? Fourth point. And now, did you take any short-term loan to meet your what long-term requirements? If yes, that is also a problematic area. So fourth में, first में default, second में willful default, third में purpose we are checking. Did you misutilize any end use of the borrowing? And fourth में we are checking any short-term borrowings have been taken, but you are using it for long-term purpose. Fifth में, as a parent company, you have taken a loan, but for meeting the obligations of your components. So as a parent company, I'm asking you a question, okay, did you take any borrowing to meet the obligations of your components? Right or not? And sixth May, I'm asking, okay, as a parent company, did you take any borrowing, but by pledging the securities of your components? Are you getting the point? So if these 6 areas are to be covered, that brings an end to our clause number what? 9. Right? So what was the clause number 9? Tell me now. Sorry, clause number 1, clause number 9, repayment of borrowing. 6 areas. Point number 1. If you have defaulted any borrowings, lender-wise details and amount involved. Second, are you a willful defaulter? Third, if you have misused the borrowings. Fourth, if you have taken a short-term borrowing to meet your long-term requirement, right? Sixth, fifth, if you have, as a parent, you have taken a loan, but for meeting the obligations of your what? Component. And sixth, as a parent, you have obtained a borrowing, but by pledging the securities of your what? Components. That is what clause number 9. Right or not? Now, what is clause number 10? Application of funds. So, if your client has raised the funds via IPO, FPO, right or not, public offer ke through. So, my 3 concerns are: concern number 1, why there is a delay in the application of funds? You already obtained the funds. Why you are delaying in using the funds? Second, then if you wanted to delay only, why did you obtain the funds very recently? You could have obtained the funds then only. Correct है नहीं है? So why did you delay in application of funds? Second, why did you default in the application of funds? आपने default क्यों किया? आपने वो पैसा उस पर्पस के लिए यूज ही नहीं किया. You didn't use the money for the purpose for which it was raised. And third, later on, why did you do the subsequent rectification in the application of funds? You first used the money for the wrong purpose, inappropriate purpose, and later on you are bringing the money back to use it for the use it for the right purpose. You are doing the subsequent rectification. So if your client has raised the money capital via IPO and FPO, remember one thing: what is the difference between 9 and 10? 9 is on borrowings, it's on loan, debt funds. 10th is on capital funds. In both the cases, you are taking the money from outside only. Borrowings you are taking from the banks, but the capital you are taking from the public. Anyways, it is not your money, na? But you are supposed to use the money in a proper manner. Here also, why there is a delay in the application of funds, why there is a default in the application of funds, why there is a subsequent rectification in the application of funds. And if your client has raised the money via private placement or preferential allotment or convertible debentures, that is section number 62 and 42. So my simple one question is, why there is no compliance of section number 42 and 62? If you have done the compliance, it's good and fine. But if you are not doing the compliance, I will give a negative remark. And second thing, why the reason you misutilize the funds, if any? If so, mention for what purpose you have used it and the amount involved. So, clause number 9 and 10 mein, what is the difference? Clause number 9 mein, we were talking about misapplication of borrowed funds. And clause number 10 mein, we are talking about misapplication of capital funds, which you have obtained via IPO, FPO, private placement, or you have obtained via convertible debentures or via preferential allotment. That's what the difference between what and what? Between the 9 and 10. The 9 is on debt funds and 10 is on capital funds. Clause number 11, fraud reporting. Just now we have done one extra clause has been added here. Point number 1, we are asking our client, did you notice any fraud happening on the entity or not? Are you getting the point? And if we as an auditor also have to ask ourselves, did I notice any fraud happening on the entity or not? And if I have noticed any fraud which is less than 1 crore, so then my responsibility ends if I have communicated it to the audit committee or the board of directors within how many days? 2 days. But in case the fraud amount involved is greater than equals to 1 crore, so I should have informed to the central government via form number ADT 4 or not. Within how many days? 60 days. That is what we are doing here under this one. Are you getting the point? And third thing, I have to ask my client, ki, do you have any whistleblower policy? If he says that, ki, yes, we have a whistleblower policy, tell me, sir. So in the third point, what we are basically asking is, ki, do you have any whistleblower policy or not? If you have any whistleblower policy, what do you mean by whistleblower policy? Where the protection will be given to the protection will be given to those employees and associates who are facing the victimization by their senior officials. So we just simply have to ask the question to my client, ki, boss, do you have a whistleblower policy? If he says yes, how many complaints you have received and how many complaints you have resolved during the year? So that brings an end to your clause number 11. So total how many clauses are over? Out of 21 clauses, we are done with 11. Tell me the 11. First one, property, plant and equipment. Second one is inventory, right? Third one is related party loans. Fourth one is compliance of 185 and 186. Then next one, compliance of 185, 186. What is the next one? Next one is deposits, right? Next one is what? Cost records. Next one is what? Statutory payments, right or not? Next one is what? Unrecorded income. Next one is what? Repayment of borrowings. Next one is what? Application of funds. And the next one is what? Fraud reporting. So now let's move to the 12th clause, which is talking about Nidhi company. See, it's a very simple thing. As a Nidhi company, you are basically a chit fund company. Am I correct? So what is your business? Your business is to obtain deposits from the public and make sure that you are helping the public only when they are in the need of the money. So basically, it's like accepting the deposit from the public, from the people, from the members of the Nidhi company, and lending the money to the members of the Nidhi company. So basically, here we have to check that if your client is a Nidhi company, remember this clause will only be applicable if your client is a Nidhi company. If your client is a Nidhi company, you have to check that they have to maintain 1:20 ka ratio. Sir, what is 1:20 ka ratio? 1:20 means what? 1:20 represents that their okay. What do you mean by 1:20? 1:20 means what? Their own funds to deposit ratio shall not be more than 1:20. What does that mean? Say for example, Nidhi company is there, right? Its own funds are 100 crores. These are what? Own funds are 100 crores and they are accepting the deposits. They are accepting the deposit into 20 times maximum 2000 crores worth of deposits this company can accept it. So own funds to deposit ratio shall not be more than 1:20. Again repeating, own funds is 1 and maximum deposited 20 times of your own funds. This is the ratio every Nidhi company has to maintain. Second thing, out of your total asset size, means your asset side or asset size into 10% should be in the form of liquid assets. We call them as unencumbered securities. What do we call them as? Unencumbered securities, securities which are having no charge or having no lien on them. Is it clear, everyone? 100% clarity. So again repeating, at any point of time, it shall maintain 10% of its total assets in the form of which assets? Liquid assets. Because at any point of time, depositor may come and he may ask what? He may ask you to, depositor may come, he may ask you to, prepay the deposit. Like before maturity, they may come for some unpredictable demands. So you should always be ready with some money to make sure that that particular unpredictable demands can be fulfilled, right? So this is what about the Nidhi company. With that, our 12 clauses are over. Is it clear, everyone? Okay, everyone. So let us start with the clause number 13. Now, in the clause number 13, we are going to talk about the related party transactions. Now, you know that related party transaction. Remember, don't get it confused with clause number 3. In the clause number 3, it was a related party loan. But in the clause number 13, it is a related party transaction. Are you getting the point? There's a difference between the two. Now, very simple thing you have to understand. Related party transactions are covered under section number 188. It's a very simple logic. Auditor wants to see that if the company is doing the related party transaction, there is no problem. But if the company is doing the related party transaction, they must have done it with the prior permission of section number 177. What do you mean by section number 177? It is nothing but called audit committee permission. Now remember one thing, whenever the company does any related party transaction, uska permission is required to be taken from the which committee? Audit committee. Audit committee is under section number 177. Audit committee gives us a omnibus approval. Which approval? Omnibus approval, which is valid for 1 year. Omnibus approval, which is valid for 1 year and with a specified limit. So if you do not have the omnibus approval, if you will not show that omnibus approval to the auditor, definitely he will report negative in this particular area. So what they are saying, auditor must assume that, ensure that the related party transaction must have been entered in compliance with section 177 and 188. Obtaining the copy of the prior approval of the audit committee omnibus approval and check that the transactions occurred are within the terms and conditions of such approval at arm's length price and within the validity of what? 1 year. So remember one thing, it is a audit committee which gives you the permission or which gives you the authority to go for a what? A related party transaction, but make sure that transaction should be carried out at what? Arm's length price. Transaction should be carried out at what? Arm's length price. Now, let me ask you next thing, what do you mean by arm's length price? Arm's length price is a reasonable price, the market price. And who is the audit committee? Audit committee is nothing but the committee incorporated with the 2/3 of the members to be the independent directors. So they would like you to have entered into the related party transaction at an arm's length price, means at a genuine price. And moreover, auditor has to say that okay, you have done the related party transaction, there is no problem, but you should have made adequate 5 disclosures in the notes to account. Disclosure number 1, name of the related party. Disclosure number 2, nature of the related party. Disclosure number 3, amount of transactions involved, nature of transactions involved, and frequency of transactions involved. So this is what all about the clause number 13. So again repeating, clause number 3 is relating to related party loan and clause number 13 is related to related party transaction, right or not? Now let me pose some question to you so that you can let me know whether you have understood so far whatever we have done or not. Okay, so anybody can tell me in the inventory case of things, in the clause number 2, how much is the limit of working capital loan should be taken by the company so that uh, quarterly bank statements are required to be filed with whom? Banks. Yes, quarterly stock statements are required to be filed with the banks. What was the limit under which you have to check that? Remember, and let me know at the end of the, and you guys please let me know in the comment box कि in the inventory clause में how much is the limit of working capital loan you should have taken so that you have to file the quarterly stock statements with the bank. So I will ask you this question again and I'll give you the answer at the end. You also please comment in the comment box whether this particular answer you are aware of or not, right? Next thing, let's talk about the clause number 14 now. Now, clause number 14 is on internal audit systems. So, as we all know that as section number 138 says that looking at the size and the nature of the entity, internal audit system must have been installed. If my client or if my entity or if my client's company is covered under section number 138 and it is falling into one of the criteria of applicability of internal auditor system in 138, then in that case I have to ask that did you install the internal audit system or not? The question number check number 1 is whether it has installed an adequate internal audit system according to the nature and size of the business. Second thing which we have to check that as a statutory auditor, did I make the use of the work of what? Internal auditor. So this question is on myself. Did I make any use of any work of the internal auditor or not? So here you have to answer. Did you make any use of the work of the portions of internal auditor or not? That's it. Two questions are about the total 14 clauses. Tell me everyone, what is the clause number 7? Now let me ask you Jumble. What is the clause number 7? Yes, clause number 7. Yes, statutory payments. What is the clause number 2, everyone? Inventory. What is the clause number 11? Fraud reporting. Very nice, very nice. What is clause number 1? Property, plant and equipment. Yes. What is the clause number 4? Compliance of section number 185, 186. What is the clause number 11? Fraud reporting. I can ask you again. What is the clause number 12? Nidhi companies. What is the clause number 13? Related party transaction. What is clause number 9? Yes. What is clause number 9? It says repayment of borrowings. What is clause number 10? Application of funds. So remember to keep these clauses as it is in your mind. And remember the question which I asked you about the inventory. I'll give you the answer at the end, right? Next point, non-cash transaction clause number 15. It's a very simple thing. If the company is doing any non-cash transaction with the director, or the directors are doing any non-cash transaction with the company. Again repeating, if the company is doing any non-cash transaction with the director, or directors are doing any non-cash transaction with the company, as an auditor, if we'll come across any such kind of transaction, we just simply have to check that the transaction must have been carried out as per section number 192. What is the section number? 192. So if the company has followed section number 192, there's no problem in that. Are you getting the point or not? There's no problem if the company has followed the section number 192. That's it. We just have to simply check if there is any non-cash transaction occurred between the company and director, compliance of section number 192 should take place, right or not? Next point, clause number 16. Now, clause number 16, everyone. Clause number 16 is on NBFC. Simple 4 questions we have to ask. Question number 1. If you are an NBFC, did you go for registration under section number 45 with the RBI Act 1934 or not? Simple question. If you are an NBFC, did you register yourself under section number 45 IA with RBI Act 1934 or no? Second thing, if yes, you have registered, I would like to see your certificate of registration. And remember, certificate of registration is very important because without which you are not allowed to commence and run your business activities. So question number 1, did you go for any registration? Question number 2, I would like to see your certificate of registration. Question number 3, everyone, very important. In your total, are you a CIC NBFC? Sir, what do you mean by CIC NBFC? Core Investment Company. What is the CIC ka full form? Core Investment Company. So what does that NBFC do? Out of its total assets, out of its total asset side, minimum 90%, minimum how much percentage? 90% should be in the form of what? Investments. Should be in the form of what? Investment. That's why it is called CIC. Now, what do you mean by CIC? Core Investment Company. What is the name? Core Investment Company. So if you're a CIC, make sure that your 90% of the total asset side should be in the form of investments, and out of that 90%, 60% should be in the form of investment in the form of equity. Where we will come to know, you will come to know in the chapter called Audit of NBFCs. So when we'll reach over there, I will make you understand what is CIC. And remember, either you are a exempted CIC or you are a registered CIC. Again repeating, either you are an exempted CIC or you are a registered CIC. You always have to maintain this criteria. Otherwise, your status of CIC will be taken away by RBI. Sir, it doesn't mean that you are not registered with RBI, doesn't mean that you will not be covered under the RBI guidelines. RBI still covers you even if you are unregistered with whom? RBI. Is it clear to all of you? Yes. And fourth point where we are understanding ki out of your total group, how many NBFCs are in the form of CIC? Out of your total group, how many NBFCs are in the form of what? CIC. These are the total 4 set of questions we have to ask in the clause number 16. So what are the set of questions? Question number 1. Are you registered? Question number 2, if registered, show me your certificate of registration. Question number 3, if you are, what do you say, CIC, then you should have maintained the criteria of minimum 90% in the investments. And fourth one, out of your total group, how many are CICs? Is it clear? Next point, clause number 17. Now, what do you mean by clause number 17? Clause number 17 is on cash losses. So we just simply have to ask 2 questions to my client. Question number 1, did you incur any cash losses in the current year as well as in the previous year? What are the 2 years? Current year as well as the previous year. And if yes, what is the amount involved? That's it. These are the 2 questions we have to ask in the clause number 17. Right? Clause number 18. Clause number 18 is on resignation of statutory auditor. Because someone has resigned, that's why only you have come now. So you simply have to ask your client, is there any statutory auditor resigned during the year? Then if you have come in place of that resigned auditor as an incoming auditor. You all know that we have covered 811 in professional ethics. As an incoming auditor, what was my responsibility? I should have communicated with which? The outgoing auditor, to understand his concerns, to understand his issues, to understand his objectives before saying objections, before saying yes to the disengagement. So this basically clause is on me. Did I come on the resignation of any statutory auditor, and did I communicate with the previous year auditor or previous outgoing auditor or not? Is it clear, everyone? Read the clause number 18. So this is check if there is any resignation of statutory auditor took place during the year, whether we have communicated with the outgoing auditor to understand its concerns, issues, and objections. Is it clear? So this is what clause number 18 is all about. So everyone, please let's understand what are the clauses we have done 1 to 18. Clause number 1, property, plant, and equipment, sir. Clause number 2, quickly. Clause number 2, inventory. Clause number 3, related party loans. Clause number 4, compliance of 185, 186. Clause number 7. What is clause number 7? Clause number 7. In between. I will definitely ask you in between only. Clause number 7 is on payment of statutory dues. Clause number 5. Clause number 5 is on deposits. Clause number 4, compliance of 185, 186. Clause number 6, cost records. Clause number 9, repayment of borrowings. Clause number 8, unrecorded incomes. Right or not? Clause number 10, application of funds. Clause number 11, fraud reporting. Clause number 12, Nidhi companies. Clause number 13, related party transaction. Clause number 15, ah, clause number 15, it's a non-cash transactions. Yeah. Clause number 14, internal audit system. Clause number 16, NBFCs. Clause number 17, cash losses. Clause number 18, sorry, resignation by the statutory auditor. Now let's move to the clause number 19. Very important clause. Basically, this is called GC clause, or we can also call it as solvency clause. So what do you mean by that? So we have to understand ki whether the entity's ability to continue as a going concern is still valid or not. Right or not? Like we check it in SA 570. Here also we are checking. How we'll check it? We will check its financial statements. We will check the aging of its financial assets. We will check its significant accounting ratio. We'll calculate some significant accounting ratios. Then we will check regularity in the debt payments. We will check discussion with the management and TCWG about their what? Future plans. Once we'll check all those things, at least we'll get an idea ki is it certain that ki this company is able to continue as a going concern or not. That will come to know. Are you getting the point? So on the basis of above analysis, he shall express an opinion. Who is he? Auditor shall express an opinion ki there is no material uncertainty. Yes, everything is cool and company is capable to continue as a going concern. It can pay off its it can pay, sorry, it can pay off its all debt not only now but also in the coming what 1 year from the date of its what balance sheet. Is it clear, everyone? So this is what we have to understand about this particular clause. So overall what we are checking is, overall we are checking your GC and your solvency. Are you able to continue? If you remember one thing, GC is always being considered. Assessment period of the GC is how many months minimum? 12 months, which we have to consider. That's why we see in the coming 1 year from the date of its what? Balance sheet. Will you be able to pay your debts or not? And all that we can only say once we'll analyze, critically analyze these 5 areas of the entity. So in this particular clause, you have to express an opinion whether the entity is ability to continue as a going concern or continue to pay its liability is sufficient and appropriate or not. Now, moving to the clause number 10, 20, CSR obligation. Both simple sa clause hai. Try to understand. If your client is doing the CSR obligations, right, towards ongoing project and towards non-ongoing project. Now the question is, sir, what do you mean by ongoing and what do you mean by non-ongoing? Now listen to this very carefully. Ongoing projects are those projects which may take more than 1 year to maximum 3 to 4 years to get completed. Non-ongoing projects are those projects which will get completed within 1 year. Now, if your client is going through a ongoing project, it's a which project? Ongoing project. Now, ongoing project mein, if some money has been saved, sorry, if that money has been unspent. So ongoing project means what? 3 to 4 years, right or not? So suppose in 1 year, you were supposed to incur 1300 crores, right or not? But you incurred only 950 crores. Am I correct or not? So it is not saved money, it is unspent. Because this 350 crores which you have not spent so far can be spent next year. So it is required to be deposited. It is required to be deposited to the unspent CSR account. To the which account? Unspent CSR account within 30 days from the end of the financial year. So it is required to be transferred to unspent CSR account within 30 days from the end of the financial year. But if it is carried forward for more than 3 years, and after 3 years, remember one thing, after 3 years, you are not allowed to carry forward this amount. This amount will be transferred to CSR fund within 30 days from the end of the 3 years. Are you getting the point or not? So remember, for the next 3 years only, you can carry forward this unspent amount. After 3 years, if you have not yet spent this unspent amount, it will be transferred to what? It will be transferred to the CSR fund within 30 days from the end of the third year. And second thing, if your client is spending the CSR money on non-ongoing project, what is the name of the project? Non-ongoing project. Non-ongoing project के case में, he needs to ensure that if any money is saved, say for example, your project was supposed to be completed in 1300 crores, but you completed that project in what? 1100 crores. So 200 crore is saved. So company is not allowed to take back this profit back. Company has to transfer this profit where? Company has to transfer this profit to the government. Where? In the government there is one account called CSR fund under schedule 7. So there you have to go and transfer this money within 6 months from the end of the financial year. The moral of the story is, if the amount is unspent in case of ongoing projects, then the amount will be transferred to unspent CSR account, right or not, within 30 days from the end of the financial year. But if the amount is saved in case of what? Non-ongoing projects, then the amount will be transferred to CSR fund within 6 months from the end of the financial year. And there comes the last clause, clause number 21. Now, what is this clause number 21? You are a parent auditor. First of all, let me tell you one thing. Don't get confused in this clause ki, sir, you to already said na ki CARO is not applicable to consolidated financial statements. Yes, I said and I stick to my words right now also. Here we are not talking about consolidated financial statement. You are a parent auditor. You are a which auditor? Parent auditor. You are just simply going to ask your component auditors, ki boss, you also have done the CAROs of your own respective companies? They will say, yes, sir, we have done the CARO. Is there any component auditor who has given qualified or adverse remarks on any of the components' standalone financial statement while doing their CARO? If yes, tell me the name of the entity, tell me the name of the component auditor, and the para in which you have given a modified remarks. Simple. I'm a parent auditor. I'm asking all the component auditors, did you do the CARO of your respective companies or not? They are saying, yes, sir, we have done the CAROs of our respective companies. So, all of you who have done the CARO of the respective companies, please let me know, is there any component auditor who has given a adverse or modified remarks or qualified remarks on any of the para of your standalone financial statement of that component? If yes, let me know the name of the component, let me know your name, and let me know the para or the clause under which you are given the negative remarks. That's it. This is called this clause number 21. So we are done with the 21 clauses. Let's do from 21 to 1 now. And after that, I'll give you the answer for that question, inventory wala. Now, let's involve it 21 to 1 now. Now 21 to 1 means what? Now please tell me 21. 21 is relating to asking for the adverse or modified remarks, right? 20th was relating to CSR activities. 19 was relating to ability to pay liabilities. 18 was relating to statutory auditor ka resignation. And 17 was relating to cash losses. 16 was NBFC. 15 was non-cash transaction. 14 was internal audit system. 13 was related party transaction. Is it correct, everyone? 12, Nidhi company. 11, fraud reporting. 10, we are going reverse. 10, 10, 10, 10, 10, 10. Application of funds. 9. Repayment of borrowings. 8. Unrecorded incomes. Then we have, what do you say? 7. Payment of statutory dues. 6. Cost records. 5. Deposit. 4. Compliance of 185. 186. What is the third one? The third one was, what was the third one? Yes, third one was on related party loans. What was the second one? Inventory, and the first one, property, plant, and equipment. Finished. So within 1 hour, we have finished the whole caro, which generally takes 6 to 7 hours to understand. You can see that within 1 hour, right or not? So it's just that you need to catch the nerve of the topic, right or not? Now, let's understand para number 4, the last para. For that, I will give you the answer now. Now, para number 4, I hope you all have written your answers in the comment box. I will check the comment box and I'll make sure that you have given the right answer, right? The question was in the case of inventory wale clause mein, how much working capital loan you should have taken against the inventory, due to which you have to file the quarterly stock statement with the ROC. Now see, para number 4, opinion paragraph. Point number 1, though I already told you, boss, be it a what positive remark or be it a what negative remark, you have to remark on every clause. Are you getting the point? You have to remark on every clause. Point number 2 may says that boss, definitely if you are giving the modified remarks or qualified or adverse remarks, definitely they deserve to know the reason behind that. What do you mean by reason? They deserve to know why I have given the qualified remark, why I have given the adverse remark. So you need to support your remark with a suitable reasoning behind it. Without giving a proper reasoning, you are not going to put any kind of remark. So it means your remark should be supported with a sufficient and appropriate audit evidence, right? Third one, in case in some of the areas may client is not providing the information, client is not providing you any kind of evidences, he is putting a limitation on your scope, he is not allowing you to access that particular area, then obviously you have to disclaim, you have to remark as a disclaimer, but make sure that fact that you are unable to express an opinion and the reason why you are unable to express an opinion, that should be mentioned here. So that is what point number 3. So this is what brings an end to your Caro section number 143 subsection 11. Now, everyone ready for the question? What was the question, everyone? Inventory ke case mein, yes. What is the answer? The answer is 5 crores. What is the answer? 5 crores. Remember one thing, in the bank audit also you will understand this thing, right? And now give me one more question ka answer. In the plant property and equipment ke case mein, how much is the, or what do you say, how much is the revaluation ka percentage you have to take? Revaluation ka percentage. Yes, revaluation ka percentage. Correct. 10% or more, either upside or downside. Very nice, very nice. And one more thing. Okay. Yeah, Nidhi company के केस में what is the deposit is to own fund ratio? Own fund to deposit ratio shall not be more than 1:30, 1:40, 1:20, 1:10. Yes, 1:10. 1:10. 1:20. What is the right answer? 1:20. The own funds to deposit ratio shall not be more than 1:20. Next point is what? Let's say, for example, okay, how much liquidity funds you have to keep it? How many liquid assets you have to keep it out of your total assets? In the case of Nidhi company, 10%. We call them as what? Unencumbered. Right? Tell me the 4 conditions relating to private limited company, everyone. What are the 4 conditions relating to private limited company? Immediately. Write down. Those who are watching online, please write down. And those who are in the class, write down right now. Please tell me what are the 4 conditions of private limited company not to get covered under CARO? Neither a holding nor a subsidiary of what? Yes, public company. Second, paid up share capital plus free reserve shall not exceed 1 crore. Turnover, including continuing and discontinued operation, shall not exceed 10 crores. And outstanding borrowing at any point of time shall not exceed what? 1 crore. I hope that brings an end to your what? To your what do you say, Karoka discussion. Am I correct or not? So this is what brings an end to your Karoka discussion. Now remaining section number 143 mein 143.1 and 143.3 section we are left with. The remaining sections I have already made you understand. 143, 12, 13, 14, 15 we have done in liabilities and 143.11 we have done. 1 and 3 we are left with. That's do it, right or not? That's okay. Now, everyone, let us start with the remaining topics in our this chapter called audit reporting. So, in the audit reporting, now we are left with some few more sections. Section number 143, subsection 1, and then we have a section number 143, subsection 3, that is called duty to report on certain matters. I've also given the list of all the 143 sections. Just make sure that you should go through it. But only the two major sections which we are left with is 143, subsection 1. Now, what is 143, subsection 1? Now, please understand one thing. Doing the inquiry is very much the duty of an auditor as and when he enters a client's place, right or not? There are so many gray areas. Remember, there are so many gray areas where you need to go and directly start doing the inquiry, right or not? Now, here in the course of inquiry, make sure that you are not going too much extensive in nature, but at the end of the day, you need to be skeptical throughout the inquiries, whichever you are making to a client. Now, there are total 6 queries which you need to make. Query number 1, make sure that check that the loans and advances granted shall be fully secured and the terms and conditions shall be favorable. Are you getting the point? And shall not be prejudicial to the interest of the company as well as to the members. Now, see, you have to go to the loan profile of your client. If the client has granted any loans and advances, then you have to check that those loans and advances must have been given on proper security. They must be fully secured loans given by your client. And the terms and condition को check करने के लिए you have to obtain the loan agreement paper to check that the terms and conditions should look favorable to your client. It should not be prejudicial to your client. Say for example, you are given a loan to some entity at the rate of 7%, whereas the outside, if you could have given a loan to some another entity, that entity was ready to pay you 8.5%. So you have given lower than the market price. So that is nothing but unfortunately the loss to be borne by the company only. So make sure that whenever your client is giving loans and advances, they should be looking proper, secured. And second thing, the terms and conditions should look proper and regular in the favor of the company as well as to the members of the company. Second thing, verify that the sales and purchase are not mere the book entries. So basically, in the near end of the financial year or the quarter end months, most of the companies would like to go for a bogus sales and purchase. What do you mean by bogus? Fake sales and fake purchases. So at that point of time, it is your responsibility to ascertain that the sales and purchase should be actual, should not be bogus. They should not be only looking like a mere book entry. Sir, आप कैसे पता करें कि whether the sales are actual or not? Go and check and reconcile it with their inventory. Suppose if the sale will take place, definitely the outflow of the inventory will take place. If the purchases are genuine, definitely inflow of the inventory will take place. Go and reconcile with those particular dates of sale and purchase whether there is any movement in the inventory or not. You will automatically come to know whether the sales and purchase made by your client are looking genuine or they are just mere the book entries. That is your area number 2. Area number 3, everyone, ki personal expenditure shall not be allowed to be debited to P&L account. Obviously, in the P&L account of the company, only the official and the business expenditure should be allowed. Personal expenditure shall not be allowed to be debited to P&L. You have to be very, very careful. Never ever allow the personal expenditures of the MDs, CEO, CFO to be debited to the P&L account. Next one, ensure that if your client is a non-investment company, if your client is a which company? Non-investment company, they should not have sold their investment below the cost. Now, let me give a very clarification. Now, say for example, Motilal Oswal is a investment company. Reliance Industries Limited is an investment company. Non-investment company. Motilal Oswal is an investment company. Now, what is the Motilal Oswal being an investment company? What is their major transactions? Their business itself is their business itself is what? Their business itself is to make sure that buying and selling the properties of the other entities. Now, when you do the buying and selling of the securities or properties of another entities or securities or shares of another entity, definitely making the loss and sometimes making the profit is very ordinary nature of activity for you. So it's your operational activity. But being a non-investment company, you have done some investment. So obviously you would like to sell off these investments only when the price will go higher. But being a non-investment company, if your client is a non-investment company and it is selling its investment below its cost, so that is a point of inquiry for you. So what are the 4 points of inquiry? Point number 1, loans granted must be properly secured and terms and conditions should be regular. Second thing, sales and purchase shall not look mere book entries. Third, personal expenditure shall not be allowed to be debited to the P&L account. Fourth, being a non-investment company, your client should not have sold its investment below its cost. If they have done that, you have every right to ask them the query, sir, why the reason you have sold your investment below your cost? Is it clear to all of you? Now, moving ahead to the next point. What is the fifth one? In case of paid up share capital, yes, that is also very important point. Now, say for example, you are showing the 200 crores of paid up share capital. Am I correct? But when I checked your cash register, a plus bank statement, you are able to show me only inflow of 180 crores. So what do you mean by paid up share capital? Paid up share capital, matlab you have received that capital. Am I correct or not? But as per your cash statement, as per your bank statement, we are getting only the total of 180 crore. It means why there is a difference of 20 CR. Am I correct? Either this 20 CR should be the payment of, underwriting commission, or this 20 CR should be the payment to the promoter's remuneration, or this 20 CR should be the, payment towards or capitalization of profits in the form of fully paid up bonus shares. If you are able to prove that any of these three things have happened, either they have given the underwriting commission in the form of shares for a consideration other than cash, to the promoters remuneration for a consideration other than cash, or they have given the fully paid up bonus shares recently they have issued for a consideration other than cash. So in all these cases, this 20 crore difference will look justified. Otherwise, you have the duty to inquire why this 20 crores of difference is coming. Is it clear, everyone? And what is the sixth duty to inquire? Ensure that loans and advances made by the company have not been categorized as deposits. Now, most of the companies, what they will do, just to improvise their, now let me show you by example. Let's say, for example, this is a balance sheet, right? And in this balance sheet, let's say, for example, yes, current asset की side में, suppose deposits are 1 CR and loans are 100 CR, and suppose at the rate of 10%, right or not? Now, basically, your income is how much? 10% at the rate of 10% on 100 crores, it comes to 10 CR. So basically, you are earning the 10 crores worth of income, but you are nothing but preparing this balance sheet by manipulating, by doing the window dressing. Under the current assets heading, you shown deposits as what? 100 CR, and now loans at what? 1 CR. Are you getting the point or not? Now, deposits are non-income generating assets like security deposit, like telephone deposit, like all these kind of deposits which are not generating any income. So, by manipulating this into this and this into this, you are nothing but hiding your income. You were supposed to show the 10 crores as an income, interest income, but now you are showing it only 1 crore at the rate of 10% makes it to what? 10 lakhs. You are successful in hiding 1 crore 90 lakhs of income in your P&L. Without showing it, you are able to be successful to hide it. So this is also one of the gray area which the auditor has to consider to make sure that loans and advances of the client, what everyone, loans and advances of the client shall not be categorized in the form of what? Deposits. So this is what your sixth duty to inquire. Is it clear to all of you? This is your sixth duty to inquire. So quickly tell me, what are your six duties to inquire? Duty number one, loans given must be properly secured, terms and conditions should be regular. Second, personal expenditure shall not be debited to P&L. Third, being a non-investment company, you are not allowed to sell your investments below your cost. Fourth one. Yes, a paid up share capital should have been issued, should be also being recorded and received in the main respect, and make sure that if there is any paid up share capital issued for a consideration other than cash, that disclosure must have been made to the auditor. Next one, loans and advances shall not be categorized as what? Deposits. And most importantly, sales and purchase shall not look near the book entries. Are you getting the point? And personal expenditure shall not be debited to the P&L account, right? So this is what another section which you should have concentrated, that is called section number 143, subsection 1. Now let's move to the section number 143, subsection 3. Now, what is section number 143, subsection 3? Try to understand this section as it is applies in your audit report as per SS 700. If you remember, in your audit report, one of the content is OLRR para, other legal and regulatory requirements para. What is the name? Other legal and regulatory requirements para. Now, in that paragraph, you will find out that there are total J clauses. How many clauses? J clauses. So make sure that you have to report on all these J clauses. Now I will make you understand what each and every clause is relevant about. Clause number A talks on information and explanation. First of all, to try to understand the keywords. Clause number 8 talks about information and explanation. So what do you mean by this clause? Now, according to this clause, we have to tell that whatever the information and explanation you have asked, whatever the information and explanation you required from an entity, whether you have been properly given or not, and if not given, what is it going to impact on the client's financials. So basically, in this particular clause A, we are saying that whatever the information and explanation I have asked from the client, whether it has been properly given to me or not. That is clause number A. Clause number B is on books of accounts. So we have to also give and express an opinion. I have checked their maintenance of their books of account and they are adequately maintained, and they are maintained as per section number 128 books of accounts. Clause number 3 is on branch audit reports. What is that clause number 3? Branch audit reports. So you have to check that whether you have received the branch audit reports adequately or not, or whether the branch auditors have sent their findings to you or not. Clause number 4 is on financial statements. So remember, throughout the year, what do we prepare? Books of accounts. And at the end of the financial year, we prepare financial statement. The financial statement should be in agreement with what? Books of account. Now, clause number 5. What is the clause number 5? Financial statement must have been prepared in accordance with Ind AS or accounting standard, whatever you are made applicable. So, total 5 clauses we have done. So, A was on information and explanation. B was on books of accounts ka maintenance. C was on branch audit findings and branch audit reports are received or not. D was on financial statement should be in agreement with what? Books of accounts. And E was on what? Ki financial statement should be prepared in accordance with AS and Ind AS. Is it clear to all of you? 100% clarity. Now, moving ahead. What is the next clause number E? Now clause number F, sorry, not E. 5 clauses are over. F clause talks about if the auditor has given any adverse or modified remarks on the functioning of the company. If the auditor has given any adverse or modified remarks on the functioning of the company, that you have to quote it in clause number F, right? Clause number G is talking about that director's special disqualification. Are you getting the point? So we are basically asking the client, do you have any director who is specially disqualified under section number 164 subsection 2? Sir, what do you mean by disqualification under section 164 subsection 2? If you are a director and the company failed to file financial statements and annual returns for continuously the span of 3 years. What are the two documents? Financial statements and annual returns with ROC. The company has failed to file for continuously 3 years and you are the director during those 3 years of default. So boss, you will be disqualified to be a director in any company for the next what? 5 years. That is a special disqualification number 1. Special disqualification number 2. Your company has failed to repay deposits, failed to repay debentures, fails to repay loans, fails to repay interest, fails to repay dividend on preferences, and this default continued for 1 year. And you were a director at that point of time, then that director will be disqualified to be a director in any company for the next what? 5 years. So basically in the clause number G, we are asking our client, do you have any directors in your board of directors who are disqualified under section 164 subsection 2? Remember, these are known as special disqualifications. Which disqualification? Special. So A was on information and explanation. B was on books of accounts. C was on branch audit report. D was on financial statement in agreement with books of accounts. E was on financial statement as per the compliance of accounting standards and Ind AS. F was on giving modified or adverse remarks, and G was on director's special disqualification under section 164 subsection 2. Now H, if you are given any adverse or modified remarks or qualified remarks on the books of accounts of the company. See, what is the difference between 6th and 8th clause? In the 6th one, you are giving the adverse or modified remarks on the what? Yes, on the functioning of the company. Here you are giving the adverse remarks on what? Books of accounts of the company. Is it clear, everyone? And there comes the I clause. I clause is basically a clause where the auditor is expressing an opinion on the client's internal financial control system, IFCS. What is IFCS? Internal financial control system, that he has checked it and whether it is looking adequately maintained, placed, designed, implemented, executed by the entity or not. Now remember, this clause number I is not applicable to you if your client is an OPC, if your client is a small company, and if your client is a company having a borrowings of less than 25 crores and turnover of less than 50 crores. So remember, this clause is on IFCS. So total 9 clauses we have done out of 10. How many? 9. Because 10th clause mein there are amendments. There are some amendments. Now let's understand. First one, what is the first clause? On information and explanation. Second clause is on books of accounts. Third is on branch audit reports. Fourth is on financial statement in agreement with books of accounts. Fifth is on financial statement as per ASN Ind AS. Then seventh is on any director is sixth is on adverse remarks on the functioning of the company. Now seventh is on any of the director disqualified under section 164 subsection 2. Then clause 8 is on any adverse remarks on the books of accounts, right or not? 6th was on functioning, so 8th is on books of accounts. 9th is on auditor expressing an opinion on design, implementation and execution of what? The internal financial control systems. And this clause is not applicable to if your client is a OPC, client is a small company, and client is a what? A company whose turnover is less than 50 crores and borrowings are less than 25 crores. Now, clause number J, everyone. In the J clause, there are 6 subclauses, right? In the J clause, first clause, we have to examine whether the client has shown the impact of pending litigations on his financial position or not. Now, let's say, for example, your list of contingent liability is very huge. And so many of the contingent liabilities are going to turn into actual liabilities. So it is your responsibility as an auditor to check and ask, did you start showing the impact of your pending litigations on your financial position or not? That is the subclause number 1. Subclause number 2, all these are under the J only. Subclause number 2, if your client has entered into future derivative long-term contracts. Again repeating, if your client has entered into future derivative long-term contracts, so we have to start asking our client whether you have started making up provisions for the future forward derivative long-term contracts or not, because they are all future-based contracts and future is certain or uncertain. Uncertain. You may achieve the target or you may incur a huge loss. So we have to create an adequate provision for the same. That is what the auditor is asking from the client. Did you start creating the provision for the same or not? Now, subclause number 3. You all know that we pay the dividend within the 30 days from the date of declaration in the AGM. After that, if it is an unpaid dividend, we put it into the unpaid dividend account. Now, from the unpaid dividend account, it is kept in that account for 7 years. And after 7 years, this unpaid dividend account is transferred to what? Investors Education and Protection Fund. So what we have to see is there any delay? What I am asking to the client, did you make any delay in transferring the funds from your unpaid dividend account to the Investors Protection and Education Fund or not? And if there is a delay, what is the reason behind that delay? If it is a justified reason, it's okay. If it is an unjustified reason, then we have to report it here. Again repeating, subclause number A was on showing the impact of pending litigation on financials. Second was on making the adequate provision for the long-term derivative contracts entered by your client. Third was on the yes, why there is a delay in transferring the funds from the unpaid dividend account to the Investors Education and Protection Fund. And the fourth is on, ab dhyan se sunna. In the fourth clause, we are going to the management. So I, as an auditor, will go to the management and I'll simply ask one question. Did you loan somebody? Did you finance somebody? Did you invest in somebody? Or did you assist somebody other than those parties which you have already mentioned in notes to accounts? It means those parties which are already mentioned in notes to accounts, that too I know that you have loaned them, invested in them, financed them and assisted them. Other than those parties which are mentioned in notes to accounts, are there any other more parties to whom you have given a loan and not disclosed in the notes to accounts? If the management is saying, no, Rohit, we have not loaned anybody, we have not given any money to anybody, we have not invested in anybody, we have not assisted anybody, take the WRL on the same. Written representation you have to obtain. To obtain the representation that management has not loaned or invested anybody other than those parties which are mentioned in notes to accounts. That is a WRL number 1 you have to take. Now, iska vice versa question number 2. So what is vice versa question number 2? Ask the same client, did you take any money? Now, did you borrow any money from the parties other than those parties which are already mentioned in what? Notes to accounts. Are you getting the point or not? See, what is the difference between these 2 points? In the first point, you are asking, did you give any loan to somebody? And in the second one, did you take any loan from somebody other than those parties which are already mentioned in notes to accounts? Because those parties which are mentioned in notes to accounts, I know that you have taken the loan from them. But if you have taken any loan from somebody who is not mentioned in notes account, you can please disclose me. In this case also, if the client says that no sir, we have not taken any loan from anybody, then simply do one thing, take the WRL on the same. So you have taken WRL on 1, we have not loaned anybody, and WRL 2, we have not borrowed from somebody. And if you have taken the 2 representations in written, there's no reason for you to doubt on the integrity of the management. So that's what the clause number C. Now see what they're saying. This is on financing anybody WRL. This is the WRL number 2, that you have not taken any borrowing for somebody. And in case representation is received in both the cases, there's no reason to doubt on such statements. Next point, we have to check that company has declared and paid the dividend as per section number 123 of the Act. So whenever the company has paid any dividend or declared any dividend, make sure that the payment and declaration of the dividend must have been made as per section number 123. And last but not the least, from 1/4/2020 onwards, listen to this point very carefully, because the same point is going to come in our internal audit chapter as well. From 1/4/2023 onwards, audit trail feature in the accounting software of the client has been made mandatory. Again repeating, audit trail feature in the accounts of the companies, in the accounting software of the company has been made mandatory. Now question is, sir, what do you mean by audit trail feature? Audit trail feature is a feature by which auditor will come across if any necessary changes have been made in the client's accounting software, then who has made, when it was made, and what was changed. All that information will come in front of him, because whosoever make the changes, the edit log files will be created for the same. So basically, audit trail feature helps you in understanding the digital footprints of the person who has made the necessary changes in the accounting software of the client. Let's say, for example, before me coming to the client's place, so many entries have been deleted, changed, modified, inserted. I will come to know why it was done, who has done it, when it has been done, by using the feature called audit trail feature. Is it clear to everyone? 100%. But it has been made mandatory from 1/4/2023 onwards. It means this financial year ke audit mein, you will find this point also to be appearing in OLRR, other legal and regulatory requirements para of any listed company or financial statement. If you will download along with the audit report, in the audit report under the clause number J as a 6th point, you will definitely find this audit trail. So that brings an end to your section number 143.1 and section number 143 subsection 3. With that, your CARO is over and your total section number 143 is over. Now we are going to start with the 700 series. Which series, everyone? 700 series, right? Okay, now let us start with the 700 series, everyone. You all know that in the 700 series, we have the 6 standards: SA 700, SA 701, SA 705, SA 706, SA 710, and SA 720. Let's wind up this series. Now, in the SA 700 series, the first standard is forming an opinion and reporting on financial statement. First of all, though, we have to understand why it has been named like this, because the objective of the standard itself is also the two. This standard will teach us how to form an opinion, right or not. Now the question is, now my question to you is, how do we form the opinion? We form the opinion, try to understand, we form the opinion on the basis of conclusions. We form the opinion on the basis of conclusions. Conclusions are drawn on the basis of evidences which we have obtained. So it means if there are no evidences, there will be no conclusion, there will be no conclusion, there will be no opinion. That is what do you mean by forming an opinion. And what do you mean by reporting on financial statement? How do we report? We give a written report. We give a which report? Written report. It could be a hard copy or it could be electronic audit report. So in the name itself only, you will understand what this particular standard is going to teach you. And this standard is also going to teach you how this particular standard may ask in the examination, or how they may ask you to draft the particular paragraphs in the examination. Now see, this standard deals with an auditor to understand how to express your opinion in the form of what? Audit report. What are the objectives? I already told you. If you break down the name of the standard itself, only two objectives will come in front of you. Objective number one, how to express an opinion, or expression of the opinion is based on conclusions. Conclusions are based on what? Evidences obtained. And how to report on financial statement? We report on financial statement by expressing an opinion in the form of written report, which could be issued in the form of electronic form or in the physical form. So as per SS 700, there are two types of opinions which we can draw. One is called modified opinion and one is called unmodified opinion. Actually, these are known as the reports. Modified report, unmodified report. Opinions can be four types: clean opinion, qualified opinion, adverse opinion, and disclaimer. Qualified, adverse, and disclaimer we are going to understand in 500, and in this standard we will understand how to express a unmodified opinion. Now, when do we express a unmodified opinion? Remember one thing, the most important thing in the standard is to keep the integrity of the standard intact, keep the respect of the standard intact, keep the wordings of the standard intact. Always remember, try to use those words which the examiner is looking for in your examination. Like say for example, how do we call unmodified opinion? Unmodified opinion is an opinion when the auditor concludes. When the auditor concludes. What is the meaning of concludes? He has an evidence in his pocket. Then why? That is the reason only why he is saying that he concludes. An unmodified opinion is an opinion when the auditor concludes, after obtaining a sufficient and appropriate audit evidences, that financial statements are looking free from material misstatement. This is the integrity of the language you have to maintain. Again repeat, unmodified opinion is an opinion when the auditor concludes that after obtaining the sufficient and appropriate audit evidences, he can conclude that yes, financial statements are looking or are free from material misstatement. Now why he is saying that they are looking free from material misstatement? Because financial statements are prepared as per what? AFRF. That is what we expect. So if the client's financial statements are prepared as per AFRF, we have no finger to be raised. Sufficient and appropriate audit evidences were fully obtained. Whatever the evidence I was looking for, I was able to obtain it. No barrier came. Internal control system is adequate and operating effectively. What do you expect by doing TOC, testing of controls? That the internal control system of the client should look good, and it was running very good and it was operating very effectively. That's why it is free from material misstatement. What is the fourth reason? Financial statements are prepared in compliance with Schedule 3 and Ind AS. That is what we expect. Schedule 3 format should be followed and should be prepared as per the compliance of Ind AS. Then again, we can conclude that financial statements are free from material misstatement. What is the fifth reason? Accounting policies were properly selected and what? Implemented. So your client has properly selected and implemented accounting policies. Like that, there are hundreds of reasons you can give that the financial statements are free from material misstatement. But remember, having an evidence only you can say that financial statements are free from material misstatement. So remember, the word conclude you are only able to write when you have a sufficient and appropriate audit evidences. Now question arises, sir, how do we give the modified opinion? Modified opinion could be in two manner, with evidence or without evidence. Now see, when an auditor is able to conclude, what is the written? When an auditor is able to conclude. Again, the word conclude is written. It means auditor is having sufficient and appropriate audit evidences that on the basis of the evidences obtained, financial statements are not free from material misstatement. Now, what is the difference you found between unmodified and modified? There he was able to conclude that financial statements are free from material misstatement. Here he is able to conclude that financial statements are not free from material misstatement. Why he is saying that? On the basis of the evidences obtained, it results either into qualified opinion or what? Adverse. Obviously, when you don't have an evidence, then it may result into qualified or disclaimer. But when you have an evidence and say that if financial statements are not free from material misstatement, then it is definitely resulting into either qualified or adverse based on materiality and pervasiveness of the transaction. That we'll understand in 705. Right? Now, this you are able to see because you are able to conclude because you have an evidence. Now, when an auditor is unable to conclude, now why he is unable to conclude here? Because he is not obtained the sufficient and appropriate audit evidence. He was unable to obtain sufficient and appropriate audit evidence, and due to that he is unable to conclude that ki financial statements are free from material misstatement. So he is unable to conclude that financial statements are free from material misstatement due to non-availability of evidences. In these kind of situations, it may either result into qualified or what? Disclaimer opinion based upon materiality and pervasiveness of what? Transaction. So standard essay 700 with there's nothing. Only the major concept is you need to understand the elements. Now see, what do you understand by the term called what? Material misstatement. Now see, the difference between what you should have reported and what you have reported, if the difference between the two is something, that is called material misstatement. What do you mean by that? Difference between accounts, balances, classification and disclosures as per your reportable applicable financial reporting framework you have done, and actual ABCD you have reported. So it's like difference between your budgets and actuals. Same is the case here. Difference between your reportable AFRF and reported AFRF, if any difference is coming, that is called material misstatement. I'll put it in a very simple manner to you. Now let's say for example like this. Suppose we have an inventory. We bought it at 70 CR, but today its NRV is only 22 CR. So please tell me, as per AS2, inventory valuation is cost or NRV, whichever is lower. So this is something you should have recorded, right? So reportable AFRF says that you should record 22, but I'm recording 70. So what is reportable and what is actually reported by you as an entity? So 22 is reportable minus reported by you is 70. 22 is reportable minus reported by you is 70. Are you reporting 48 crores extra or not? Yes. So this is called material misstatement. It could be either fraud or it could be an error. But let's say for example, 70 is the cost, 22 is the NRV. What is reportable is 22 and what you are reporting is also what? 22. Any difference? No, zero. So it means it is what? There is no material misstatement. So material misstatement comes when there's a difference between your reportable applicable financial reporting framework and actual financial reporting framework which you have adopted. That is the difference between the two. So what do you mean by ABCD? ABCD stands for accounts, balances, classification and disclosures. Now let's understand what the 700 teaches to you. 700 says that boss, our audit report should look like this. Every audit report shall start with the first heading called title. The title of the every audit report is going to be Independent Auditor's Report. What is going to be the title? Independent Auditor's Report. Second thing, addressee. What is the second thing? Addressee. Addressee is generally the members of the company only. So you will always find in the audit report to the members of the company, except if it is a special purpose financial statement. If it is a special purpose financial statement, then the addressee would be that intended user on whose request we have prepared that financial statements. Are you getting the point? So generally our addressee is members of the company and the normal users. But if it is a special purpose financial statement, then our addressee would be the one who has requested that special purpose financial statement to be prepared by the entity. Is it clear? Next point. What is the third paragraph? In the third paragraph of the audit report, you will find the word opinion. What is the word you will find? Opinion. Opinion paragraph. Now remember one thing. Opinion paragraphs are always subdivided into two subparagraphs. In the first paragraph, we introduce our audit. In the second subparagraph, we actually express our opinion. Now, in the first subpara, it is broadly classified into two subparas. In the first subpara, following shall be disclosed. अब auditor को क्या क्या disclose करना है? Point number 1, we have audited. What is the point number 1? Declaration that we have audited. It means it shows that you have done the audit of these standalone financial statements of the entity. So we have audited. Second thing is the name of the entity. We have audited the standalone financial statements of ABC Limited. So name of the entity also you have to give. Third thing, period of audit. We have audited standalone financial statements of ABC Limited as on 31st March 2024. So we have audited came, name of the entity came, period of the audit has come. Now name the financial statements you have audited, because sometimes you can be hired for a single financial statement or single account, single balance or single element. So if you have done the audit of total financial statement, to name all the total financial statement we have audited. Now look at that. We have audited standalone financial statements of ABC Limited as on 31st March 2024, including balance sheet, P&L, cash flow statement, notes to account, statement of changes in equity. Is it clear to all of you? Including balance sheet, P&L, cash flow statement, notes to accounts, and statement of changes in equity. Reference given to the disclosure of accounting policies in the notes to accounts. Simple. So if you are being asked in the examination, draft the opinion paragraph. This is how your first subpara should look like. Now moving to the second subparagraph. As per the information and explanation given to us, in our opinion, we express that standalone financial statements are presenting true and fair view or not true and not fair if you are giving adverse. Qualified, it is presenting true and fair except or subject to the various circumstances which are given in the basis paragraph. So like that, you have to express an opinion in the sub two paragraphs. So sub paragraph number 1 gives about we have audited the declaration. Second, name of the entity. Third, period of the audit, name of the financial statement, and disclosure of accounting policies with further information in notes to accounts. Is it clear, everyone? Now moving ahead, the basis paragraph. What is the next paragraph? And I already told you second subparagraph includes your actual expression of opinion, which could be either qualified, adverse, disclaimer, or unmodified. Now, fourth paragraph in your audit report is known as basis of opinion para. What is the name? Basis of opinion paragraph. So remember one thing, whenever you are giving the basis of opinion paragraph, these 4 declarations must be present in your paragraph. Declaration number 1. We have concluded our audit on the basis of or on in accordance with standards on auditing. We have done the compliance of standards on auditing. We have followed the ethical requirements and the code of ethics issued by the Institute of Chartered Accountants of India. That is a second declaration which should appear in your paragraph. Third, we have obtained the sufficient and appropriate audit evidences on the basis of which we have expressed our opinion, and this is my auditor's responsibility. And for the further clarification, there is a separate paragraph given below in the name as responsibility of an auditor. Now remember one thing, why these 4 declarations we are giving? Declaration number 1, we have done our audit on the basis of standards on auditing. We are basically disclosing ki boss, this is my basis of expressing an opinion. On this basis, on the basis of my standards on auditing, on the basis of my code of ethics and ethical requirements which I have issued, on the basis of my sufficient and appropriate audit evidences, and if you are further looking for my auditor's responsibility, there is a separate paragraph given below. All these 4 declarations must appear in your basis paragraph. Is it clear, everyone? Yes, sir. So see, conducted in accordance with essays, auditor's responsibility given below, as per ethical requirements and code of ethics issued by icai, and evidence which we have obtained is known as sufficient and appropriate. उसके बाद फिफ्थ पैराग्राफ आता है गोइंग कंसर्न पैरा. What is the name of the para? Going concern. Let me tell you one thing, this para is basically optional para. This will only and only appear if the auditor has something to say about entity's inability to continue as a what? Going concern. If he thinks that everything about the going concern is superb, no indicators are there, no negative thing is there, assessment period is same, then this paragraph should not appear in your report. This paragraph only should appear if the auditor has something to talk about what? Going concern. Is it clear to all of you? 100% clarity? Moving ahead. Now, what is the next paragraph? CAM. It is known as key audit matters. Anyways, we are going to understand this in detailed manner in 701. So, key audit matters are those matters which you have communicated with the TCWG, which in auditor's judgment are of very much important for the better understanding of users of financial statement relating to current year, and they are the most significant matters. Anyways, we will understand in more detail in 701. So, first one is title, followed by addressee, followed by opinion, followed by basis, followed by GC, which is optional, and then CAM. Then there comes EMP paragraph and OMP paragraph. For that, we are having a dedicated standard called 706. There we'll discuss. But let me tell you one thing. There is no specific place for EMP and OMP. EMP and OMP may come before CAM or after CAM. That is nothing but the choice or the professional judgment of an auditor where he would like to place those paragraphs, right? Next point is what? The others matters paragraph, EMP, as I told you, we will understand them in 706. Then the main important paragraph which comes is known as other information matter paragraph. What do you mean by other information matter paragraph? This paragraph comes if there is any problem relating to other information in the audit report, annual report. Sometimes you will find out that there is an inconsistency, material inconsistency between the financial statements and the other information given in the annual report. You will come to know in 720. If that material inconsistency appears, you can also give the which information para? Other information para you can give, right? Then there comes management responsibility para. Now, what do you mean by management responsibility para? Management responsibility para, why? What is this paragraph doing in my report? Boss, I have to make sure that users of financial statement who are going to read my report must know that these are the following management responsibility, like preparation and presentation of financial statement. Whose problem? Management's problem. Internal control system, whose problem? Management's problem. AFRF is whose problem? Management's problem. Then selection of accounting policy, whose problem? Management's problem. Making accounting estimates is whose responsibility? Management responsibility. So I'm just trying to tell to the users of financial statement, ki boss, this paragraph is dedicated to the management responsibility. Whatever you are seeing in this paragraph, I have nothing to do with that. But immediately after the management responsibility paragraph, you will find my paragraph, that is called what? Auditor's responsibility paragraph. Now, in this paragraph, I have to talk about myself. Now, tell me, what are my responsibility? My responsibility is to express an opinion. My responsibility is to decide the extent of checking. My responsibility is to comply with standards on auditing. My responsibility is to select the adequate audit procedures and audit techniques, so that user shall be able to bifurcate the responsibilities between the management and auditor. So that's why management responsibility paragraph separate and followed by that auditor responsibility paragraph. So in total, 11 titles, Now point number 1, title, addressee, opinion, very good. Next, opinion basis, very nice. GC, you forgot GC. GC comes optional, and then CAM, and then EMP and OMP, actually there is no perfect place for them. Then other information para, then management responsibility para, and auditor's responsibility para. And here comes, just now we have wound up one section, 143 subsection 3, OLRR, other legal and regulatory requirement. Exactly section number 143 subsection 3 ka clause A to J, copy paste you have to do. Are you getting the point or not? And there comes last mein signature. Signature mein you have to understand that there are total 7 elements comes in signature. Signature mein first thing comes name of the firm, followed by firm registration number, followed by signature of the partner who has signed the audit report, followed by name of that partner who has signed the audit report, followed by his designation in that firm, whether he is a managing partner, designated partner, or a partner, followed by his membership number, and followed by UDIN, unique document identification number. So these 7 things will appear in the signature, and finally we'll put our date and place of signature. So this is how your 700 looks like. I hope you understood the 700. Is it so, everyone? 100% clarity. So this is what your 700 is there. Main thing is what? You need to give a due respect to the language. Try to use the word free from material misstatement, concludes. This literally gives an impression to the examiner that yes, student is well aware of what he is writing in the particular paper. Is it clear, everyone? 100% clarity. Let's move to the next standard. The next standard which we have is known as 701. Communicating the key audit matters in the independent auditor's report. Okay, so let's start with the next. As I told you, it's 701, communicating key audit matters in the independent auditor's report. Now, what do you mean by key audit matters, everyone? First of all, we need to understand it very clearly. Key audit matters if you want to learn, there are 5 things you need to understand. How many? 5 things. First of all, key audit matters are those matters which we discussed with TCWG. First condition is what we discussed with TCWG. Second, in auditor's judgment. In whose judgment? In auditor's judgment. Third, they are looking most significant matters. Tell me the 3 things. Key audit matters are those matters which we discussed with TCWG, which in auditor's judgment are looking most significant matters relating to current year. Linked into which year? Current year, for the better understanding of users of financial statement. If you are able to understand these 5 things properly, then the boss, it is known as key audit matters. Again repeating, key audit matters are those matters which are the most significant matters in auditor's judgment. Am I correct? Discuss with TCWG relating to current year financial statement for the better understanding of users of financial statement. If you are able to see any of these 5 things, all the 5 things available to one particular matter, the boss, that will become the part of your key audit matters paragraph. And this is how you have to communicate the key audit matters in the independent auditors report. Now read the name of the standard. Name of the standard is communicating key audit matters in the independent auditors report. Right or not? So let's understand what are the objectives. To ensure that the auditor's report shall be made more communicative and transparent towards the users. So we want the users to know more about the entity. We want the users to know more about the environment of the entity. We want the users to know more about the significant management estimates has been used in the financial statement. I want the users to know that what management significant estimates have been used. I want to make the user understand more about the entity. I want to make the users understand better about the environment of the entity. That's the reason it is our responsibility to communicate the key audit matters to the users of financial statement. Next thing, to assist the users and understanding of those matters. Obviously, I'll be assisting them in understanding it in a better manner. Now, what do you mean by key audit matters? Such matters which in whose professional judgment, auditor's professional judgment, are of which nature, most significant in nature, relating to which period, current period of the financial statement. Discuss with whom? Discuss with TCWG. For the whose better understanding, users better understanding. So if you're this word, professional judgment, most significant, current period, discuss with TCWG for the better understanding of users. If these 4 points are appearing in one particular subject matter, the boss, that is known as what? Key audit matters. Now, so key audit matters applicable to all the entities. See, 99.99% of the cases it is applicable only to the listed entities. It is applicable only to the listed entities. Read the second point. But if the circumstances arises when the auditor decides to include it, in case the auditor wants to include it, he can include it, but 99.99% of the cases, it is required to be included in case of reporting on which entities? Listed entity. And when there is a requirement of law and regulation. So these are the 3 circumstances under which key audit matters can be included in your audit report. So point number 1, for the listed companies, whenever the auditor thinks fit, and third, if it is required by law and regulation. Now, what is the benefit of introducing the key audit matters in my auditor's report? इसका क्या फायदा होता है? What are the advantages we get? Advantage number 1, it enhances the communicative value of my report. ये मेरी रिपोर्ट की communicative value को increase करता है. Am I correct? It increases the communicative value of my report. Now, if you carefully analyze any report of listed company, you will find that key audit matters consume the largest portion of your report. It will sometimes end up in 3 to 4 pages. Your total audit report itself is 2.5 pages. In which if the key audit matters will include, that will become 6 pages. So it means majority of the communication of your audit report is included in which matters? Key audit matters. Is it clear? Point number 1. Point number 2, it provides greater transparency about the audit. It gives the transparency to the users, to the users of the financial statement, stating that how I did my audit, how I raised the issue with the TCWG, and how they addressed my issue. At least they will not be in a picture having a knowing a fact that the auditor might have gone inside, he might have been bribed or corrupted. So it provides a greater transparency to the users of financial statement. Third thing, it makes the user understand the entity, its financial statement in a better manner. I will make the user understand financial statement better, its entity better, its environment better manner, and most importantly, it also helps the user in understanding the areas where the significant management estimates are involved. Remember one thing, management estimates could be making the use of management bias as well. Their assumptions, their basis of assumptions, their forecasted figures. If management has kept any management estimates in the financial statement, it is my responsibility to bring it in the front of whom? Users of financial statement. So basically, CAM paragraph is nothing but the responsibility of an auditor towards the users so that users can understand the financial statement and the entity in the best possible manner. This is what the benefit behind what? this particular thing. So what are the four advantages? It enhances the communicative value, provides greater transparency, makes the user understand the entity better manner, helps the user understanding the areas where the management estimates are involved. Now, CAM is not a substitute of, remember one thing, CAM has a separate place in your auditor's report. CAM is not a substitute of EMP, not a substitute of OMP, not a substitute of management responsibility para, not a substitute of notes to accounts, not a substitute of going concern, not a substitute of basis para, and CAM does not support any separate opinion on the same. CAM has its own relevance in the audit report. Via CAM, auditor is trying to communicate to the users, ki, boss, this is what the doubts I got. I went to the management. That is how management has cleared my doubt. And these are the evidences for the same. So CAM is not a substitute, because if it is a substitute of any of these paragraphs, then in that case, there's no relevance of introducing the CAM. And anyways, CAM is one of the new standard in the 700 series. Now, let me tell you one thing very clearly. When I qualified in the year 2012, there was no CAM. CAM actually came in 2016-17 and finally got implemented in 2018. From then onwards, we started using the relevance of what CAM. So CAM is not a substitute of EMP, OMP, basis, MRP, ARP, basis paragraph, separate opinion. No, CAM has its own relevance. So CAM is not a substitute of notes to accounts, management responsibility para, not a substitute of basis para, not a substitute of going concern para, not a substitute of EMP, OMP, and it does not contain any separate opinion. And remember, whenever we will introduce the CAM, always remember to define the CAM first. What does this paragraph includes? That is the auditor's responsibility to give the meaning of the CAM. Followed by that, once your CAMs are being given, before that only you have to give a disclaimer कि we do not have any separate opinion on these matters. It is whose responsibility? Auditor's responsibility. And it must be related to current year. Prior period related issues will not be discussed in CAM. These are the three things you have to remember. Point number one, meaning of the CAM is very important. Point number two, you have to give a separate disclosure that ki boss, this includes a separate disclosure that ki this includes we do not have any separate opinion on these matters. And the third one, ki boss, क्या बोलते हैं, this is required before, and it is relating to which year? Current year only. And remember, all these three things you have to tell before starting the matters and how it has been addressed. If you carefully Google it, you will find one financial statement along with that auditor's report. You will find that CAM is broadly classified into two cameras on the two paras. On the left side, you will find out that the matters which has been brought to the notice of TCWG, and on the right side, you will find that how they address the matter. That's it. So CAM is not a substitute of any other para. CAM has its own relevance. How to determine whether a matter is CAM or not? अब हम कैसे पता करें कि particular matter is a CAM or not? Remember one thing very, very carefully. Very, very carefully. If these three conditions appear in front of you, then boss, that is a CAM. If these three things appear in front of you, boss, that is a CAM. Point number one. If there is any significant management estimates and accounting estimates are involved, significant management estimates and accounting estimates are involved, so that is the area you must communicate with TCWG and definitely bring it to the notice of the users by communicating into a CAM para. Point number one. If there is a significant higher ROMUM assessed by you, if there is a significant higher ROMUM assessed by you, that is also going to be a part of CAM. Third, if there is a significant event has taken place or occurred during the year, that is also something you require to bring it to the notice of entity. Let's say, for example, you have done a 4,000 crores of drawing. Significant matter. I'm not saying that is wrong. Significant matter. Bring it to the notice. You have created a provision for doubtful debt, which is suddenly spiked up 2 times this year. Management is ready to give you the justification. You are satisfied with that. Bring it to the notice. So any significant management estimates, any significant ROMUM assessed by you, or any significant event occurred during the year, that is something required to be told as CAM. So CAM के 3 formulas हैं. This is how you determine that something is a CAM or not. Significant management estimate, significant management ROMUM, significant ROMUM assessed, higher level of ROMUM assessed, and significant event occurred during the year. Then in that case, it is definitely a case of what? CAM. Is it clear to all of you? 100% clarity? Yes or no? Now, next point. Those significant events which occur during the year in the now see areas which are higher assessed risk of material misstatement, areas where the significant management judgments are on, then those significant events which occur during the year. So any of these three things will be treated as what CAM. Following shall never appear or prohibited in CAM. Remember one thing, if any particular area is prohibited by law and regulation, that should never appear in CAM. Rule number one. If law and regulation has prohibited any area, because you are not bigger than law. When the law itself is saying it is prohibited to be disclosed, it is not required to come in CAM. Point number two, if you think that if you will make the disclosure and the information which you are disclosing via CAM is highly sensitive and highly confidential, may result into breaking the confidentiality. If you think that information which you want to disclose in the CAM is highly sensitive, highly confidential, and may result into the breaking of what? Confidentiality, the boss, it should not appear in the CAM. Third, if you think that the wordings of your information may lead to the adverse consequences, if you will include this information, it may lead to the adverse consequences, it should never appear in the CAM para. And one more important thing, if you are giving disclaimer opinion, CAM itself should not appear. In the first three cases of prohibited by law and regulation, breaking confidentiality wala case, and third case of adverse consequential, these events should never appear in CAM. These things should never appear in CAM. But if the auditor is giving disclaimer of opinion, remember CAM itself should not appear. So it means disclaimer of opinion and CAM can never come together. Sir, iska reason batao. See, in the CAM, you went to the TCWG, they gave you the evidence, and that's how they resolved and addressed your matter. So when you already have an evidence, how the hell you can give a disclaimer opinion? Disclaimer opinion, when do we give? When we are unable to conclude that financial statements are free from material misstatement because of the non-availability of evidence. So on the CAM, you are saying that I got an evidence. On the opinion, you are saying that I don't have an evidence. You are contradicting your own opinion only. So remember one thing, in case of these areas, CAM should never appear in case you are giving the disclaimer of opinion. And these three things should never appear in CAM para. Prohibited by law, highly sensitive and confidential, and significant adverse consequences. Clear? Now, what are the examples of CAM? Now read this point. Examples of CAM, say for example, you saw that assessment of impairment loss. Fair market value is less than a cost. You saw that provisions for losses and contingencies have been made. That's what I'm telling you. Management estimates are involved. You saw that there is a evaluation of financial instruments. You see that revenue recognition criteria or matters have been changed. Taxation matters like deferred tax liability, deferred tax asset. These kind of areas are those areas where you would like to go to the TCWG and have what? Clarification. If they are giving the clarification, then definitely include it in the CAM. And remember, most important point, whenever you are including something in your CAM, make sure that before finalizing the CAM paragraph, discuss the wordings with the TCWG, and in case need arises, change the wordings. I'm not saying change your opinion. Change the wordings if it looks inappropriate. So before discussing, not only in CAM, before discussing EMP, OMP, anything, you should better discuss the CAM paragraph with the TCWG to bring down the necessary objections, if any, if they have relating to the wordings, right or not? And last but not the least, we have to write this disclaimer. This is what I was telling you in the paragraph. Our opinion is not, we are not giving any separate opinion in respect of this matters, right or not? So this is also again brings an end to your another series, another standard of SS 701. So let's start with 706, right everyone? Okay, so let us understand the next standard, SS 705. Now see, in the SS 705, we are nothing but we are going to understand how to modify your opinion. We know that there are total 4 types of opinion, right? So everyone, unmodified opinion, modified opinion. Modified opinion may qualified opinion, adverse opinion and disclaimer. Now please understand, in this standard we are going to concentrate on the word called materiality and pervasiveness. so that we can decide कि should we go for qualified or adverse, or should we go for qualified or disclaimer. Is it clear, everyone? So what is the name of the standard? Modifications in the opinion of independent auditors report. Now this standard deals with the auditor's responsibility in issuing a modified report wherever the circumstances arises, following up the circumstances which leads to modified opinion. What is the circumstance number one? When an auditor is able to conclude that financial statements are not free from not free from material misstatement, it means he is having an evidence that financial statements are not free from material misstatement. So we will also give it may result into qualified or adverse. And when an auditor is unable to conclude that financial statements are free from material misstatement due to non-availability of the SAAE, it may either result into qualified or disclaimer. That we already know. Now, what are the factors which will lead to the material misstatements? Now see, factors. The modified opinion is dependent upon the following factors. Factor number one, if the material misstatement has occurred and an auditor has the evidence for the same. So you know that there is MM and you have an what? Evidence. And if the material misstatement could have occurred. What do you mean by could have occurred? It means it is not evident that it has occurred because you are not granted to have an access over something. So there is a possibility of occurrence of material misstatement, and it could be material as well as what? Pervasive. So try to understand. In case there is a material misstatement and you have an evidence for the same, that is a one case. In case there is a material misstatement could have occurred due to the non-availability of evidence for the same, it means there is a material misstatement, could have, but you do not have what? Evidence. So when the auditor's judgment on such MM or possible MM is pervasive in nature, it will either result into adverse or it may either result into qualified. I will make you understand via one chart also at the end how you can keep these opinions very much intact in your nature. So let's understand qualified opinion first. Now remember one thing, qualified opinion appears two times. It may also come along with adverse, it may come along with disclaimer. Are you getting the point? Now see, qualified opinion can be drawn with evidence also, without evidence. And let me tell you one thing, qualified opinion is very near to clean opinion. Whenever we express the qualified opinion, we never use the word not true and not fair. We always use the word true and fair. Now, on due to what reasons you are giving the qualified opinion, that is required to be given in the basis paragraph. So, how the wording is going to be? We, in our opinion, we say that financial statements are true and fair except to the circumstances which are expressed or judgments which are expressed in the basis of qualified opinion paragraph. So you will never write the reasons for your qualified opinion in the opinion paragraph. The reasons are always given in basis paragraph. Is it clear, everyone? So qualified opinion can be given with evidence also, and qualified opinion can be given without evidence. So sir, how we will be differentiating? It depends upon materiality and not pervasiveness. Qualified opinion में always you will find that कि material misstatement is material but not pervasive. Material misstatement could be material but could not be pervasive. So let's understand its definition first and then I will make you understand along with that. Now see, when an auditor has obtained SAAE, when an auditor has obtained SAAE means you have an evidence and concludes that there exists material misstatement which individually or aggregately is material but not looking what? Pervasive to the financial statement. Now the question arises, sir, what do you mean by material but not pervasive? See, it might be looking very important from the user's point of view, but it is not at all impacting auditor's opinion. Why? Because this particular material misstatement is not a substantial part of financial statement. It might be related to a particular account balance. अब छोटे से account के related MM है, छोटे से balance के related MM है, you cannot say that the whole financial statements are untrue and unfair. So some material misstatements might look material but might not look what? Pervasive. Until and unless it is not touching pervasive level, you can't go to adverse and disclaimer. Till that time you have to. I'm not saying that deny the fact that there is no material. There is a material misstatement which looks material but not pervasive. The impact of such is not huge that it is impacting the whole financial statement as a whole. Until and unless FS as a whole is not getting impacted, it is not known as material. Even if you have an evidence, even if you don't have an evidence, both the cases you have to give a qualified opinion. Now see, in the case number one, you have an evidence which individually or aggregately says that ki there is MM, but that MM is material but not pervasive. Look at the second. When an auditor is unable to obtain SAE, when the auditor is unable to obtain SAE, it means now you don't have an evidence. Now, due to which he concludes that ki there is a MM or there is a possibility of MM. There is a possible effects of undetected material misstatement which looked could be material but not what? Pervasive. See, remember one thing, when you have an evidence, you say that there is a material misstatement. When you don't have an evidence, you say that there could be a material misstatement. When you have an evidence, you say that there is an impact of material misstatement on financial statement. When you don't have an evidence, you say there is a possible effect of undetected material misstatement. Why? Because that is not been detected by you. You are not having the evidence for the same. So how you can say that there is a MM? You will say there is a possible effects of what? Undetected material misstatement of financial statement. That could be, not that is. That now see, there is material but not pervasive. Here we are using that could be material but not pervasive. But what is a common thing? Whenever the MM or possible MM, again repeating, whenever the MM and possible MM you found, but they both are looking material but not looking what? Pervasive, you will always end up giving a which opinion? Qualified opinion. Expression. Now see explanation. Whenever the auditor expresses qualified opinion, in his opinion paragraph, he shall mention that if financial statements are true and fair. I already told you, you always have to mention that financial statements are true and fair except to the circumstances which gives rise to material mistake but not pervasive, and shall disclose the same in the basis of qualified opinion paragraph. Never ever write your reasons in the word paragraph. You should always write your reasons separately in the basis paragraph, not in the opinion paragraph. Is it clear? Always remember, and this is the word you have to use, except to, means leaving those things behind, remaining everything is looking true and fair. That is how you give a which opinion? Qualified opinion. Now, let me borrow the same qualified opinion in the point number 1. Now see, if I'll remove this word from here. Now read the whole sentence. Sir, when an auditor has obtained SAAE and concludes that there exists material misstatement which individually or aggregately is material but pervasive to the financial statement. When you remove the not, it will become the adverse opinion. Now read the adverse opinion. What is it being on? The auditor expresses an adverse opinion having obtained SAAE when he concludes that there exists the material misstatement and the impact of such misstatement is material on financial statement is individually or aggregately are both material and pervasive. What was in the qualified? Material but not pervasive. Now, in this case, now this is adverse scenario. It is a which scenario? Adverse. In this case, you will not write the financial statements are looking true and fair. You will simply write financial statements are not true and not fair subject to the because of the matters which are specified in basis paragraph. Simple. Qualified may you have to write it is true and fair. Here you have to write it is not true and not fair. Now see, in the opinion paragraph, he shall mention that financial statements are not true and fair view because of the reasons, but the reasons for the same shall be mentioned in the word basis paragraph. Now question is, sir, what do you mean by disclaimer? Now let me borrow the disclaimer also from the qualified so that you can understand. Now see, could be material but not pervasive and not, let me remove. Up what is written? Could be material as well as what? Pervasive. Now what they are saying? Now see, an auditor shall disclaim an opinion due to non-availability of SAAE on which he concludes that possible effects of undetected material misstatement on the financial statement could be material and what? Pervasive. Possible effects are also looking material as well as pervasive. Even though sometimes, acha, one very big confusion with the students will be having, ki sir, it means not having an evidence only means disclaimer. No, that is completely wrong. Sometimes you have an evidence, but you think that that evidence is not enough to support your opinion. You can still give a disclaimer opinion. Also, bolte material uncertainty. What is the word we use? Material uncertainty. Even though you have an evidence, but you can still say that, boss, even though I have obtained sufficient and appropriate audit evidence, but still it is looking not at all appropriate for me to express an opinion, therefore you can disclaim an opinion. Now see, sometimes even though he has obtained SAE, but if he concludes that there exists material uncertainty, he may still shall express a disclaimer opinion. Now explanation, in this opinion paragraph, auditor shall directly write the words. अब मेरे को ये बताओ, you don't have an evidence, that's why you are unable to express an opinion. So what is the wordings? We do not express any opinion on financial statement due to non-availability of SAE. Therefore, we disclaim our opinion, and the reasons for the disclaimer of the opinion must be mentioned in the basis of disclaimer opinion paragraph. That's it. This is what do you mean by qualified opinion, adverse opinion, or disclaimer. So let's wind it up in the meaning of one chart. I think chart I might have made them right below. Okay, now let's understand this in a chart manner. Now let's focus upon that. Now let us see. Right? Now see, let's understand. Now this is right. Now see, situation, auditor's judgment. ध्यान से देखना. Material misstatement exists, but not exists, but not pervasive. Possible exists and now see, exists but not pervasive. Exists but pervasive. Right or not? Now see, let's say for example, this is our situation. Now look at the situation. Situation number 1. Auditor has SAAE. Now auditor has SAAE saying that there is a material misstatement but not pervasive. There is a material misstatement but not pervasive. The individual and collective impact of that material misstatement on a financial statement is material but not pervasive. In this case, he will give a what? Qualified opinion. But if he concludes on the basis of SAE that there is a material misstatement and the individual and collective impact of that material misstatement on financial statement is material as well as what? Pervasive. So he shall give what? Adverse opinion. Which opinion? Adverse opinion. Is it clear? Now, situation number 2, he is not having SAE. Now, when he is not having SAE, there is a MMO, there is a possible There is a possibility of material misstatement exists in the financial statement, but that could be material but not pervasive. So again, he will give a what? Qualified opinion. And if he thinks that the possible impact of material misstatement on the financial statement could be material as well as what? Pervasive, so he will give a what? Disclaimer opinion. Which opinion? Disclaimer. So this is how you understand the whole concept of what? SA 705. Now let us understand what do you mean by the term called what? Pervasiveness. Now see, what do you mean by the term called pervasiveness? The term pervasiveness is used in context of material misstatement whose effect or possible effects on financial statement are much, very much significant in nature. Now see, remember one thing, until and unless your material misstatement is not touching pervasiveness level, you cannot call it as ki something huge has happened. You cannot give either adverse or disclaimer. You may end up giving qualified, no problem, but adverse and disclaimer will only come when the term pervasiveness is certain. Right? Now see, following shall be treated as pervasive effect in the auditor's judgment, which are not limited to ABCD. Remember one thing, if the material misstatement is limited to a particular account, to a particular balance, to a particular classification, or to a particular disclosure, small amount of material misstatement, which is only impacting a particular account, a particular balance, a particular what? Classification, and a particular what? Disclosure. The boss, it is not pervasive in nature. Only and only if it is impacting FS as a whole, then only it will be known as what? Pervasiveness. Second thing, if the material misstatement represents a substantial portion of what? Financial statement. If it is huge, say for example, your financial statement ka balance sheet total is 1100 crores. And there's a material misstatement in inventory which is 900 crores. So is 900 crores a very substantial portion of 1100 crores or not? Yes. So now you can say that it is material as well as what? Pervasive. So when a material misstatement represents a substantial portion of financial statement, then you can call it as pervasive. Next one, whose impact of financial statement is going to be huge. Now, financial statement के ऊपर huge impact दे रहा है, huge impact. Say for example, non recording of the say for example, not recording the inventory as per the AS2. Right or not? Your inventory is a NRV value. Let's take the same value. NRV value is 22 CR, whereas your cost is 190 CR. Are you getting the point? अब मेरे को ये बताओ 190 CR की जगह you have to record 22 because that is what NRV, but you are still recording what? 190 CR. Now please tell me, what is having an impact? Is it increasing your gross profit to the huge impact? Is it increasing your net profit to the huge impact? Yes. So boss, that is also known as what? Pervasive. And when which is very much fundamental to the decision making of what users, which definitely impact the user. That's why we use the word material and pervasive. We never use the word pervasive and material. So first, definitely it is impacting. If it is definitely impacting the fundamentals of the decision making of users for financial statement, then to definitely it is pervasive. But we have to understand other four aspects also. Maybe it might be very much impactful to the users, but not to me. So I will call it as it is material but not pervasive. So what are the four tests to be called as something as a pervasive to reach to the adverse and disclaimer? It should not be restricted to ABCD. It should be a substantial portion of financial statement. The impact of such event on the financial statement should be huge, and the most importantly, it's very much fundamental to the decision making of users of what? Financial statement. Is it clear, everyone? 100%? Okay, next point. What are the courses of action to be taken in case of management imposes any limitation? See, it's a very simple thing. Sometimes management does not allow you to, go ahead with some of the things which you wanted to. So in such cases, request the management to remove such limitation. Now, if the management refuses to do so, then raise the issue with TCWG and check if any alternative procedures an auditor can do or not. Obviously, when the management raises their hand up, we always knock the door of whom? TCWG. Now, if the TCWG also fails to resolve the issue, then withdraw from the whom? Engagement. There is no other option. Withdraw from the engagement unless law and regulation allows you to. Agar law and regulation prohibits you to engage in between, to disengage in between, then you better disclaim your opinion on financial statement. Are you getting the point? But if the auditor initiates to withdraw from his position of statutory auditor in which company? Listed entity, following is the procedure. Now try to understand this procedure. Let me make you understand in a best manner. Suppose this is a situation. Let's divide it into 4 quarters. Quarter 1, quarter 2, quarter 3 and quarter 4. And this is, say for example, 31/3/2024. Now understand, if you are a statutory auditor of a listed company, now let's divide this quarter in between. Let's divide this quarter in between. If you are resigning in the first 45 days of the quarter 2, if you're resigning in the first 45 days of quarter 2, quarter 1 already ended here, na? So quarter 2 is ending here, and the first 45 days of the quarter, in a quarter almost 90 days are there. In the first 45 days of the quarter, if you are resigning, the boss, before leaving, you have to do audit or limited review of quarter 1. Now, this is what the implication here. If you are resigning in the next 45 days, these are the next 45 days of the quarter 2, then in that case, before leaving, you have to do audit or limited review of quarter 1 plus quarter 2. You can't resign without doing the limited review of them at least, or audit of these two. Same rule applies if you resign in the first 45 days of quarter 3, then you have to do audit or limited review of quarter 1 plus quarter 2. And if you are resigning in the next 45 days, then in that case, boss, you have to do audit or limited review of quarter 1 plus quarter 2 plus quarter 3. And very important point, if you leave on any day in the last quarter, on any day in the last quarter, if you're resigning, then in that case, you have to do audit or limited review of quarter 1 plus quarter 2 plus quarter 3 plus quarter 4. Basically, the whole year ka review or limited review or audit you have to do. This is what the new regulations for the statutory auditors who are resigning from the listed entity. Now the question arises, sir, what if I leave in the first quarter or the second quarter? Boss, previous quarter is nothing but relating to previous financial year that is already been taken care of. Are you getting the point? We are talking about this quarter. So this problem will arise in the quarter 2, quarter 3 and quarter 4 only. Quarter 1 means no such problem. If you leave in the quarter 1, then definitely previous quarter is been taken care of by the statutory auditor previous year only. Na? It has nothing to do here. So again repeating, if you are, now read this point, if he resigns in the first 45 days of a quarter, ensure to complete the previous quarter audit. If he resigns in the next 45 days of a quarter, ensure to complete the audit of previous and past quarters. Previous and present quarter. And this applies to, and the same rule, these two applies to the Q2 and Q3. And if he resigns on any day in the last quarter of financial year, he shall complete the full year audit before what? Resigning. And this rule is equally applicable, and mostly it is applicable to the statutory auditors of which entity? Listed entity. And that brings an end to another standard called SA 705. Is it clear to all of you? 100%. Let's proceed with the next standard, right? Okay, so now let us start with the SA 706, everyone. Now, in the SA 706, we are going to understand the relevance of the two paragraphs. One is called EMP and one is called OMP. EMP stands for emphasis of matters paragraph and OMP stands for other matters paragraph. Now, first of all, though, you need to understand, sir, why there is a requirement of the like paragraphs called EMP and OMP. Now, understand this in a very clear manner. See, if the auditor wants to have a additional communication in his audit report, if an auditor wants to make the things clear out in the heads of the users of financial statement, in such cases, he makes the use of EMP and OMP. So, sir, how CAM is different from EMP and OMP? What is the relevance of CAM? And how CAM is going to appear differently from EMP and OMP? Now, try to understand this very carefully before starting this standard. See, CAM में I told you 5 things. Point number 1, it refers to those matters which are discussed with TCWG. In EMP and OMP, you do not discuss anything with whom? TCWG. Are you getting the point or not? First difference. Second thing, CAM makes you understand the most significant matters. If, say, for example, a matter touches the most significant matter ka criteria, then in that case, it will definitely appear in CAM. But if it is not appearing in the CAM, then definitely you have to bring it down to the EMP, right or not? Third thing, CAM includes those matters which are required relating to current financial statement and which are required for the better understanding of users. EMP includes those matters which are already disclosed in what? Financial statements. But auditor felt from inside that it is required to be disclosed separately, right or not, for the better understanding of users. So that's why it includes the EMP. So in the, be it a CAM, be it a EMP, be it an OMP, if I have to tell you the ranking, which is a bigger paragraph when it comes to relevance and importance, CAM comes first. If the things are not getting in CAM, and CAM usage is very limited, because the reason is CAM is applicable to the listed entities. EMP, OMPs, there's no such thing only in case of listed entities. Anywhere you can include it. Are you getting the point? So CAM ka usage is very limited. First of all, it comes only in case of what? Listed entities. Second thing, in the CAM, you will find it that it is relating to the matters which are discussed with TCWG. So you have to set up a column also. EMP mein there is no such requirement of column. You simply start your paragraph by saying that I would like to draw your attention to this particular matter. So suppose there is one particular matter which you think that is required to be known to the users of financial statement, even if it is already disclosed in financial statement, you can make the use of what? EMP in that case. Am I correct or not? Now coming back to the OMP, sir, what is the relevance of OMP? OMP is also an additional communication to be made by the auditor. Now see, it's a very simple thing. Try to understand. OMP is required in case the matters which are not disclosed in financial statement, but auditor feels that it is very much important for the user's understanding of entity, user understanding of auditor's responsibility, and user's understanding of his auditor's report. So the difference between EMP and OMP is what? EMP talks about those matters which are already disclosed in financial statements. OMP talks about those matters which are disclosed other than what? Financial statement, which auditor felt that the user should know about it. And obviously, in both the cases, be it a EMP or be it a OMP, in both the cases, you have to give a declaration कि we do not modify our opinion in respect to these matters. दोनों में declaration आएगा. Like we have given the declaration in the CAM कि we do not have any separate opinion for these matters. Here also you have to give a declaration. We do not have a separate opinion on or modified opinion on these matters. Is it clear, everyone? Yes. Now, let's understand EMP and OMP. This standard deals with additional communication to be made by the auditor to draw the user's attention, which he thinks necessary to do so. The objective of this standard is to have a better understanding of intended use of the financial statement by communicating the following information in addition to expression of opinion, right? Now, look at this. All those matters, even though appropriately presented and disclosed, all those matters, even though appropriately presented and disclosed in financial statement, but they are of such importance that they are required to be disclosed in auditor's report as well. So we are now talking about the EMP paragraph. So EMP only talks about those matters which are already presented in financial statement, but auditor felt that it is required for the better understanding of users. He may make the use of EMP. Now, OMP, it includes those matters other than presented and disclosed in the financial statement, which shall be communicated in auditor's report for user's understanding, for auditor's responsibility, and auditor's report. So look at the difference here. Here we are only doing it because it is already being presented and disclosed in the financial statement, but auditor felt it important to draw the user's attention. Here, I'm making them aware of their better understanding. Not only that, I'm making them aware about my responsibilities and the effectiveness of my auditor's report. So that is what the difference between EMP and OMP. So EMP includes those matters, like say for example, let me give you one example. Suppose bad debt recovery, right or not? Now bad debt recovery is disclosed on the credit side of the company, credit side of the P&L of the company, and it is disclosed under a heading called exceptional item bad debt recovery 45 lakh rupees. Now it is adequately disclosed. As you know that bad debt is a non-recurring, bad debt recovery is a non-recurring item. So it is required to be disclosed separately. That is well deserved disclosed and presented by the management. But auditor feels that the user may not understand what do you mean by bad debt. User may not understand what do you mean by the term called drawing. User may not understand what do you mean by the term called provision. So I would like to give a clarification to the user ki boss, this is what do you mean by bad debt recovery, this is what do you mean by drawing, and this is what do you mean by provision, by drawing their attention to that point. So how do we write the paragraph? We would like to draw your attention to this part. We would like to draw your attention to that part. This is how we talk in what? EMP, right? OMP mein I would like to tell them. So we never start the OMP ka paragraph ka starting with we would like to draw your attention, because that is not already specified in financial statement. It includes those matters other than what? Financial statement. That is what do you mean by OMP. I hope you are understanding now. Right? Now see, let's understand EMP and OMP. It includes such matters which are appropriately disclosed in financial statement, but in auditor's judgment are of so important that he would like to reframe it in an auditor's report for the user's understanding. And what about those? It includes such matters other than those presented in financial statement. Now see, which are disclosed in financial statement, it is other than those disclosed in financial statement, which in the auditor's report for the better understanding of users, for the better understanding of his responsibility and better understanding of his report. This is what the difference between EMP and OMP. It includes those matters which are already disclosed in financial statement, and it includes those matters which are other than disclosed in financial statement. Second point, it is required to be disclosed under the separate heading. It is also required to be disclosed under the separate heading. But let me tell you one thing, there is no perfect place available for EMP and OMP. You can use it either before CAM, after CAM, or here and there near MRP or ARP, Auditor Responsibility Para. Next one, must include a declaration that auditor is not modified on such matters. Here also must include a declaration that auditor is not modified on such matter. includes information which is already disclosed in financial statement, and it shall not include information which is prohibited by law and regulation. Same point which is applicable to CAM. So obviously, why the management might not have disclosed some information or event, because that is prohibited by the law or regulation. So something which is prohibited by the law or regulation, why you are putting that information in your OMP paragraph? So you are also not allowed to disclose anything which is prohibited by law and regulation. Is it clear, everyone? Now, it generally starts with the wordings, we draw your attention. It generally starts with your wordings, we draw your attention. And here, the auditor discloses the facts directly. Right or not? The situations which may warrant the EMP, like say for example, alerting the users that financial statements are prepared as per special purpose framework. Now let's say for example, in the financial statement, there are two types of financial statement. One which are prepared as per general purpose framework, and one which are prepared as per special purpose framework. So it is whose responsibility? It is auditor's responsibility to let the users know that, boss, these special purpose financial statements are for the intended use of some specific users only. There's a restriction on its usage. You should not use this. You should use only those financial statements which is prepared as per the general purpose reporting framework, not as per the special purpose framework. This is the reason number one. Reason number two, alerting the users that even though the disclosures may look unacceptable, but the fact that it is prescribed by the law and regulation. So these are the two situations which may warrant an EMP. Now let's understand what may warrant an OMP. Disclosing such events which occurred after the what? Balance sheet date. Now suppose balance sheet date के बाद कोई event हुआ, which I assume that it is very much required to be known to the users of financial statement. I can disclose that event. Uncertainty relating to the future, which may result into exceptional kind of what? Litigation. There is a litigation, or there is a development in the litigation which has happened, which I came across during the course of audit, which I would like to tell to the, or say for example, let's say for example, the total revenue is being shown 1,40,000 crore. Now, people may assume that this revenue of 1,40,000 crore belongs to the single company, but actually what he is seeing is CFS, Consolidated Financial Statement. So this revenue does not belong to the single entity. It includes its subsidiaries revenue, associates revenue, joint ventures revenue. So it is my responsibility to let them know that this 1,40,000 crores of revenue is not the revenue of the company alone. It includes the revenue of its subsidiary, its associate, and its what? Joint ventures. Are you getting the point? For this purposes also, you may include the paragraph called what? OMP. Right or not? Now, next point. If an auditor expects to include EMP or OMP in his report, he shall first communicate with TCWG the understanding of the wordings before finalizing it. That we already understood in our earlier CAM also. Whenever you disclose EMP, OMP, CAM, even your total total audit report, you should always prepare the draft of these paragraphs first. Go to the TCWG, have a wording with them, have a communication with them. Sir, this is my expectation and this is what I'm going to include in your audit report. If you have any problem relating to wordings, please let me know. We can do the necessary changes. This is what you have to tell in the EMP and OMP. Is it clear to all of you? Next point. You also have to make a declaration that our opinion is not modified in this matter. That is definitely for sure, because remember one thing, if your opinion is getting modified in EMP or OMP or CAM matter, definitely it is going to be the part of what? Basis para. It will never become the part of your EMP or OMP. Is it clear, everyone? 100% clarity. Now, let me just make you understand how the questions may appear in the examination. Now, wait for that. Now, let's understand one question which is clear-cut, will let you know what is the difference between EMP and OMP. Now, look at this question. In respect of the audit of BDS Limited, the statutory auditor of the company noticed some matters, right? The statutory auditor wants to draw the user's attention towards such matters through his opinion is not modified in such matters. It means the question is clearly indicating with these words that we are talking about what? EMP and OMP. This is just written to draw the user's attention. Draft the relevant paragraphs of the audit report of the following matters. Now, you have to read the matter carefully and automatically, you will come to know that is it a clear-cut case of EMP or clear-cut case of OMP. Now, I will make you understand why it is EMP and why it is OMP. Now, see, company has a plans to resume its construction activity with respect to one of its thermal power project. The activity of such thermal power project was suspended in the financial year 2021, right? The thermal power project comprises of plant and equipment amounting to 5.95 crores and capital work in progress of 147.5 crores. Now, clearly it is mentioned that कि the thermal power project का जो asset which is planted, which is written in their financial statement, it already comprises of plant and machinery and equipment worth rupees 5.95 crore and capital work in progress worth rupees 147.5 crore. Is it already mentioned in the property, plant and equipment or not? Is it already mentioned in the property, plant and equipment or not? Yes, it is already mentioned. So as an auditor, I would like to draw the user's attention on this particular point कि boss, thermal power project includes the property and equipment amounting to 5.95 crores and capital work in progress of 170.5 crores. Are you getting the point? So please tell me clearly, if it is already mentioned in the financial statement, in the project comprises, it is written na thermal power project comprises of plant and what? Equipment. It is already mentioned. So is it a case of EMP or OMP? It is a clear-cut case of EMP. And nowhere we are giving any negative assurance. Nowhere we are giving any negative opinion. That's why it is a clear-cut case of what? EMP. Is it clear to all of you? It is a clear-cut question of EMP. Now, let's understand the next one. From where we'll understand, is it a question of EMP or OMP? Now see, the financial statement of 5 branches are included in standalone financial statements of BDS. So it means when we see the BDS ka financial statement, there are 5 branches are included in that, whose financial statement reflect the total asset of what? 90 crores and total revenue of what? 40 crores. Now, please tell me, is this 90 crores of total asset and 40 crores of total revenue belongs only to BDS or BDS plus 5 branches? BDS plus 5 branches, but they have nowhere disclosed it. So, it is my responsibility. Now, see, they have written that financial statement of these branches have been audited by what? Branch auditor. Now, please tell me, who would like to bring it to the notice of users? Auditor. By giving a EMP paragraph or OMP. In the second case, I would love to give a OMP paragraph. Reason? Because this is not the standalone financial statements of BDS. This standalone financial statement also includes the 5 branches as well. So it is my responsibility to let the people know कि boss, this total assets and total revenue figure which is given 90 crores and 40 crores is not only the BDS, it includes BDS plus 5 branches. Now see the solution. See the solution. Emphasis of matters paragraph. Now, look at the language. We draw your attention to the following notes. And look at the language. We did not audit the financial statement of 5 branches included. Now, see, this is emphasis para. This is others matter para. First one is EMP. Second one is OMP. We did not audit the financial statement of 5 branches and whose financial statement reflect 90 and total revenue is 40. The financial statement of these branches have been audited by the branch auditors whose reports have been furnished to us, and our opinion is as far as is related to amounts and disclosure included in our report of these branches. Now see, this is what I was telling you. Here also statutory declaration you have. Our opinion is not modified in the respect of this matter, and same statutory declaration in OMP, our opinion is not modified in respect of this matter, and same statutory declaration in CAM, we do not have any separate opinion on these matters. This is how exhaustively you should learn your standards. So look at this definition also, how it is starting. We draw your attention. It means it is already mentioned in financial statement. And here he did not use this word. He simply started stating the facts. Ki boss, branch audit we have not done. We have only done the audit of BDS. This is what the differentiation between EMP and OMP. So you should know before going for a particular examination ki now that's what I was telling you. Better go for the icai material. Icai material is the supreme material, best material. It is my responsibility. I'll bring you to those questions and answers, but make sure that you should also do the same. Now, how to differentiate between KMP, EMP and OMP? I already told you KNP में if 5 conditions are satisfied, suppose it is discussed with TCWG, most significant relating to current year, professional judgment of an auditor, and for the better users entity. If these 5 criteria are being set in that particular event, the boss, you have to make sure that it should be included in what? CAM paragraph. And in case, if it is not fitting in the CAM, then you should fit it in EMP if it is already disclosed in financial statement. And if it is not disclosed in financial statement, therefore it is neither fitting in EMP nor it is fitting in CAM, then better to fit it in what? OMP. Now, what does the CAM gives you the information? CAM gives you the information on entity. CAM gives you the information on management accounting estimates. CAM gives you the information on the financial statement ka better understanding. EMP gives you the information on those matters which are already disclosed in what? Financial statement alone. Only that much. So which one is broader? CAM is broader than what? EMP. OMP makes you understand the entity. OMP makes you understand auditor's responsibility. OMP also makes you understand what? Auditors report very well. So if you think that there is something via which you would like to tell your responsibility, via which you would like to tell about your report, so it means definitely you're talking about what? You're talking about OMP. So this is how you have to differentiate between CAM, OMP and OMP. Not KMP, it's CAM, EMP and OMP. Right? Now see, if the matter required auditor's attention plus user's attention, यहाँ पे auditor की attention भी required है and users की attention भी required है, तो definitely it is a CAM. Are you getting the point? It requires auditor's attention and user's attention. Definitely, it should appear in CAM. And in addition to, if it gives a better understanding of the entity, audit, and significant management accounting estimates, then definitely it is a which para? CAM para. Now, how you will differentiate it in EMP? Now, if a matter required only user's attention, that too, which is already disclosed in financial statement, then you should go for what? EMP. And if a matter nowhere connected with financial statement but required for the better understanding of auditor's responsibility and his what? Auditor's report, then OMP. No confusion. It's simply very much cleared in itself. And next, most important of all, in all the above 3 cases, we are not challenging the integrity of the management. Separate disclosures, we do not have a separate opinion, modified opinion, or anything on such matters. That brings an end to your another paragraph, another standard called SS 706, everyone. Is it clear? Yes. Now let's understand 710, everyone. What is 710? Comparative information, right? Comparative information, corresponding figures, and comparative financial statement. Now let me straight come to the point. This standard is having a very much relationship with the 510. You should not do this 710 without understanding 510, and 510 is incomplete without what? 710. There's a correlation between these two standards. Now understand what this standard is saying. This standard is simply saying that see, financial statements always carry at least 2 years ka information. Are you getting the point? Always carry 2 years ka information as per the schedule 3 requirement. One is current year financials and one is previous year financials. You all know that ki financial statement mein 2 years ka financials will be given, current year financials and previous year financials. Am I correct? As per schedule 3? Yes, sir. Now, understand it very carefully. When the rotation takes place, even though, let's say for example, you are the auditor for 23-24 financial year, but when the financial statements will be prepared, the 22-23 financials also will be what? Displayed. But 22-23 financial statements have not been audited by you. That is audited by a predecessor auditor or second circumstance that has not been audited at all. Extreme situation. So either it is audited by the predecessor auditor or second circumstances you have not, company has not got it audited. But you are the only auditor of what? 23-24. Now, when this problem appears, when the rotation takes place, try to understand. After 5 years or after 10 years of your term, some incoming auditor will come. But when he is coming, he is doing the audit of, say, for example, 23-24 financial year, but he also has to express an opinion on 22-23 financial year, which is already been audited by predecessor auditor, previous auditor, because he is being appointed to express an opinion on FS, and FS includes 2 years information, current year as well as what? Previous year. That's the problem. अब I'm not saying that I'm going to challenge the integrity, competency, qualification, and knowledge and expertise of the previous auditor. He must have done his audit very perfectly. I'm not challenging, because that person is also a member of whom I say. But challenges will automatically come, which you need to face. So the purpose of this standard is to take you out of that situation and make you understand कि boss, if this kind of situation appears, this is what you have to do. अब सुनो, now that is the reason the name of the standard is comparative information, corresponding figures, and comparative financial statements. Are you getting the point? Now, this standard deals with auditor's responsibility in relation to comparative information and corresponding figures. The objective of this standard is to enable an auditor to establish his duties on responses to be given in following different circumstances. Now, the biggest problem is that this always comes when the previous audit was done by another auditor. It means predecessor auditor was different, or last year audit itself has not taken place, then also this problem may appear. Now, issue number 1, predecessor auditor was different auditor. Issue number 2, previous year no audit has taken place. Now, this corresponding figures and comparative and this figures and definitions, I'm going to leave it on you. Let's understand the major requirement of SA 710. What 710 is telling you. Now, following are the audit procedures which are expected from the auditor to perform in relation to comparative information. Now, see, you are a current year auditor. Last year audit was done by some another auditor. So what do you expect from the entity? At least last year ke closing balances have been properly carried forward in the current year as a what? Opening balances. Are you getting the point or not? And what is the second thing you expect? Ki comparative information should be included in the financial statement in such a manner ki user shall have the better understanding of the financial statement or not. That's what the 2-3 things I have to carry out here. Now see, he's expected to ensure that comparative information which is included in financial statement must have been prepared for the better understanding of whom? Intended users. Second thing, ensure that comparative information agrees with the amount and other disclosure presented in what? Prior period. What does that mean? Last year के जो figures है, last year के जो balances है, same balancing should appear in the current year or not? Yes. Obviously, audit of last year has already taken place. There could not be any change in those financial unless any exceptional circumstances have come. Are you getting the point? So simply what do you expect? That comparative information agree with the amount and other disclosures which are presented in the which period? Prior period. He also has to ensure that the opening balances of the current period has been properly brought forward without any presence of material misstatement. These are the 3 things which I expect from the entity to do when they're presenting the comparative financial statements. Is it clear, everyone? 100%? Yes. Now, ensuring that accounting policies are applied consistently. Last year की जो accounting policies है, current year में should be applied consistently, and even if there are any changes, if they are properly disclosed, properly accounted, properly treated, properly presented, I don't have any problem. And show me the justification ki why there was a need of change in what? Accounting policies. You know that ki accounting policies are required to be changed only when the need arises. What is the need number 1? Need number 1 could be your, what do you say, better presentation of financial statement, requirement of the law, or amendment in the standard. If you have changed it, then also I don't have a problem if it is properly presented, disclosed, and accounted and presented, treated. My problem is that accounting policies are generally required to be consistent. If they are consistent, my workload will be reduced. If the closing balances are properly brought forward as the opening balance of the current year, my workload will be reduced. That is what you have to check on the entity ki are they doing their job properly or not while presenting and preparing the financial statement. Is it clear to all of you? Yes. Note, the moment auditor becomes aware of any possible material misstatement in the comparative financial information, following he shall do. अगर मेरे को कोई फाइनेंशियल मटेरियल मिसस्टेटमेंट मिलती है तो व्हाट इज माय रिस्पांसिबिलिटी इन दिस केस? Perform the necessary fabs to obtain the better SAE. Obviously, whenever you get any higher chances of ROMM to be present in financial statement, we definitely go for alternate, we definitely go for making the revisions in our further audit procedures to get a better evidence, right? Second thing, obtain the WRL from the management declaring that they take the full responsibility. That is very much natural. You obviously, be it a current year or both the years financial statement, it is prepared and presented by who? Management. So they should take the full responsibility. They take the full responsibility of preparation and presentation of comparative financial statements as well. उसके लिए WRL भी ले लो. So what are the 2 things expected from you, buddy? Point number 1, make sure that what do you say, necessary further audit procedures you should do if you see that there's a possibility of material misstatement. Second thing, you have to make sure that you have to obtain a WRL from the management. Now, there are total 3 circumstances which you may come across in this particular standard. Let me get it very straight to you. Circumstance number 1, ध्यान से सुनना. Predecessor auditor gave a modified opinion. Purana auditor, predecessor auditor gave a which opinion? Modified opinion. He gave a modified opinion, right or not? And you are a current year auditor, and when you are doing an audit, you came across of a fact that his modifications are still present in current year and they are unresolved in the current year. It means that shows the incompetency of the management. Am I correct? Predecessor auditor gave a modified opinion. What do you expect from the management? That those modifications should have been properly taken care of and the remedial actions should have been taken or not? Yes, but the management has neither taken any remedial actions nor they have corrected those material misstatements. And moreover, those material misstatements of last year's modifications are still present in which year? Current year. And not only they are present in current year, they are looking unresolved. And not only they are looking unresolved, they may impact my current year financial statements. So my question is, as a current year auditor, if you see that last year modifications are present and they are unresolved, so what you should do? You should also modify your opinion. You should also what? Modify your opinion. Now let's see. In such situation, if the current year auditor detects that last year modifications are still present in the which year? Current year, and remain unresolved, then if such modifications are affecting the current year financial statement, so obviously if such modifications are affecting your current year financial statement, what is expected from you? You should also modify current year ka audit opinion. And sir, when we modified the audit opinion, we have to give a reason. Yes, for reason, go to the basis paragraph and write that the basis, he shall mention that previous year modifications were impacting the current year financial statement, due to which he expressed which opinion? Modified. बहुत simple सा reason आपको देना है कि why you are giving the modified opinion, क्योंकि last year के modifications are still present in what? Current year. That's why you are modifying your opinion. Clear? But what if last year के modifications are not affecting my current year financial statement? Boss, whether it is affecting or not affecting, still current year auditor shall modify his what opinion. But sir, this time in the basis paragraph, what will write? In the basis paragraph will write I have modified this opinion because this last year ka modification which are still unresolved in the current year were impacting the comparability of financial statements. Not impacting your current year financial statement, not making modified your financial statement, but they are impacting the comparability of financial statements. What of the financial statement? Comparability of financial statement. Are you getting the point or not? So what is the moral of the story? Last year auditor was different. Last year auditor gave a modified opinion. His modifications are still present in the which year? Current year. And they current year mein, they are not only present, they are impacting your current year, the present and unresolved. Impacting your current year financial statement, so you have to modify it. Even if it is not impacting your current year financial statement, then also you have to modify. Is it clear or not? Now, difference is only in the reason in the basis paragraph you have to give. If it was impacting your current year financial statement, what is your reason? It was impacting my current year financial statement. That's why I modified current year financial statement. What if it is not impacting your financial statement? You have to give the reason कि boss, those unresolved modifications were impacting the comparability of financial statement. How a modified financial statements can be compared with unmodified? That you also have to modify it so that it become comparable. Understood the point? Right? Now, second point is what? Situation number 2. What is situation number 2? Predecessor auditor gave a unmodified opinion. Predecessor auditor gave a which opinion? Unmodified. Sir, but this is the very good news, na? Good news. No, but listen the full case carefully. Predecessor auditor gave a unmodified opinion. Correct? Now, when he gave the unmodified opinion, but I was doing the current year audit, and during my current year audit, I found some evidences that previous year auditor should have given modified opinion, but actually he gave a which opinion? Unmodified opinion. Did you get the point? Actually, he gave a which opinion? Unmodified opinion, but he should have given what? Modified opinion. Now, what should I do? Now, do I have an evidence or not? So, I will bring the matter to the notice of the management and TCWG and will ask them what to do in this case. Your last year auditor should have given modified, and I have an evidence that he should have given modified, but he has given what? Unmodified. So, as a current year auditor, what is your course of action? Boss, you also give a modified report. You also give a modified report. But bring it to the notice of the management and TCWG, and you shall modify your opinion either in the form of qualified or adverse. Why not disclaimer here? Because you have an evidence. Last year auditor should have given what? Modified opinion. You have an evidence. So when you have an evidence, you never give what? Disclaimer opinion. Am I correct? So you should give the adverse or qualified, but not disclaimer. And one more thing, you must take the help of OMP para. You must take the help of what? OMP para as per 706. Now, sir, why OMP? Because that is not something which is disclosed in the financial statements. As simple as that. So why not EMP? Because EMP we only take because something which is already presented and disclosed in financial statement. We are taking OMP because this is a matter which is not disclosed in what? Financial statement. So we have to take what? OMP. Now, once you will declare the OMP paragraph, what are the three statements you have to write? Simple. Statement number one. Last year audit was done by the predecessor auditor, so that people should not catch my collar. Last year audit was done by the predecessor auditor. Second thing, last year auditors ka date of audit report. And third, last year auditors ka audit opinion. So what audit opinion he has given, what was the date of his audit report, and last year audit was done by the predecessor auditor. Nothing one word extra, not one word less you have to write, because we never write any modified things in the OMP paragraph. You just simply declare the facts. Is it clear to all of you? Yes. So situation number one was what? Last year auditor gave a modified opinion. His modifications are still unresolved and present in the current year. As a current year auditor, you also have to modify your opinion. If it's impacting, then basis paragraph you will write the reason it was modified. It was impacting my current year financial statement. That's why I also modified. And if it was not impacting your current year financial statement, you will simply write it was impacting my comparability. That's why I modified. Here, what are you writing here now? Now, last year, auditor should have given what? Modified opinion, but unfortunately, he has given what? Unmodified opinion. But while doing your audit, you came across an evidence that he should have given a modified opinion. Then in that case, raise the issue with TCWG and you also modify your opinion. But in your opinion audit report, make the use of OMP paragraph and write the three disclosure. Okay, last year auditor was a predecessor auditor who was a different auditor. Second thing is date of audit report. Third thing, and this is what the opinion expressed by him. Situation number three now, the last situation. Sir, last year audit itself has not taken place. Now, this is the worst situation. Our problem is there's no one to blame also. There's no base also for giving you current year opinion. Last year audit itself has not taken place. So in such situation, remember one thing, your workload little bit increases. What at least you have to do extraordinary examination, or at least you have to apply audit procedures on opening balances to detect is there any presence of or not. क्योंकि लास्ट ईयर के क्लोजिंग बैलेंसेस विच आर योर करंट ईयर के ओपनिंग बैलेंसेस आर अनऑडिटेड वन. There could be a presence of material misstatement. So again in this situation you will take the help of OMP para. Which para you will take the help of? OMP as per 706. And include it and fit it in your report and say that last year audit has not taken place. What is the declaration number one? Last year audit has not taken place. Second thing, I have applied my audit procedures on audit opening balances. I have applied my audit procedures on opening balances and I declare that the opening balances are not showing any signs of material misstatement. Or if there is a material misstatement in the opening balances, then you know that you have to modify your opinion. Now see this. In such situation, he shall incorporate an OMP paragraph and state the following. Last year, no audit has taken place. That is a point number one. Second thing, but it does not release the auditor from his responsibility of obtaining SAAE on the opening balances which due to contain any material misstatement that may affect the which do not contain obtaining SAE on the which do not contain any material misstatement that may affect the current year financial statement. I'm not saying that material misstatements can't be there. If there are any material misstatement, you are definitely allowed to modify your opinion. But what I'm trying to tell you is that because last year audit has not taken place, little bit extra responsibility will come on your shoulders. Ki now you have to exhaustively check at least the opening balances and assure that ki at least opening balances do not contain any material misstatement. Because for you in the current year, opening balances only matters, not the closing balances. Closing balances of the last year, which are the opening balances of the current year, only matters to you. Remaining audit though you will do belonging to current year only. Now, what do we carry forward from the last year is only the opening balances. On that, if you will apply your audit procedures and you get to know that there is no material misstatement in the opening balances, then simply give an opinion accordingly. But better make a use of the paragraph called what? OMP. So that also brings an end to your another standard called SA 710. Is it clear to all of you? So 700 में what we learned in the 700, what we learned? We learned how to express an opinion and how to report on financial statements, right? In 701, what we learned? How to communicate the key audit matters in the independent auditor's report, right? And in the 705, what we learned? How to modify your opinion. In 706, we learned how to include EMP and OMP in your report. And in 710, we learned what you need to do in case previous year auditor gave a modified opinion, unmodified opinion, or the previous year audit has not taken place. So that brings an end to your 700, 701, 705, 710, and 706. The only standard what we are left with is 720. Let's understand the standards and let's wind up this chapter also called what? Audit reporting. So what is the name of the standard? 720, auditors' responsibility in relation to other information. Which information? Other information, right? Okay, so now let us understand one more question, right? I found it in the ICI material. It was a very implementational question, right? The answer for this question, I'll show you at the end of the video once our 720 also will be over. But read out the question very carefully because sometimes you need to understand that what actually ICA is asking from you in the question. This is definitely going to improvise your what? Reading skills. Are you getting the one? You should be very much good in your reading skills. You should understand the crux of the question ki what ICA is basically asking for you. Now look at this question. PTD Limited is engaged in the business of what? Executing construction contracts for its clients. So they are into the business of executing the contracts of construction and on the behalf of their clients. There are non-current receivable outstanding in the financial statement as on 31st March 2023 worth 500 crores ke non-current receivables are outstanding. Such amounts represent the claim raised by the company on its what? Clients relating to cost of overruns necessitated due to the delay caused by the client. So many times the company has imposed these claims on the clients for the unnecessary delays which are caused by the client. So basically this is the amount payable by the clients to the company. And sometimes due to change in work specification, suddenly you raised a demand, you made a specific changes in the contract and related matters. Besides negotiation, company has also gone for the arbitration in some of the cases. So out of the court settlement also company has gone for. Now, the management of the company has considered above amounts to be fully recoverable as stated in notes to account. What the management of this company, PTD Limited, thinks that this amount is fully recoverable. So they think that it is fully recoverable and they have mentioned that in what? Notes to accounts. Next. CA Piyush, the auditor of the company, has relied upon the management representation in this regard. So CA Piyush went to the management. Sir, how you can say that these are recoverable amount? So management has given him a WRL. What the management has given him? WRL, written representation letter as per SFI 80. Sir, we think that they are recoverable. CA Piyush, auditor of the company, has relied upon the management representation in this regard. He only accepted the WRL. Besides, he has decided to include the said matter in the emphasis of matters paragraph in his audit report. First of all, though, he accepted the WRL and over and above, he decided to include such matter in the emphasis of matters paragraph. Read the question carefully. How do you view the decision to include above matter in EMP paragraph by the auditor of the company? The question is saying that, do you think that the what do you say, decision taken by CA Piyush to rely on WRL and including that matter in EMP para is correct point of view of Mr. CA Piyush or not? That you have to tell me. Just wait for the lecture to get over. After that, I will give you the answer. So that now read it again. There was so many receivables of 500 crores of outstanding. Company says that ki yes, they are fully recoverable and they have given the WRL to CA Piyush also on the same, and CA Piyush on taken and WRL, and not only that, he also considered that matter to be included in the EMP. Now you have to tell me ki whether the action taken by the CA Piyush is looking relevant or not, right or not. So after that, we'll immediately go to the answer and I'll make you understand also ki what is the basic requirement to be written in this particular kind of question. Now let's understand the last standard, everyone. The last standard, which is SA 720. What is the last standard? Auditor's responsibility relating to other information. Now very important standard. Now basically, let me tell you one thing, what happens in this standard. You all know that the big companies will have one document called what? Annual report. What is the name of the document? Annual report. Now in the annual report, in some parts, half of the annual report contains financial information and half of the annual report contains other information also. Obviously, we are the auditors of only what? Financial information and financial statement. We don't have any concern with the other information. But, while reading the annual report, the statutory auditor came across that whatever is written in financial information is looking inconsistent with written in what? Other information. Say for example, financial statements where profit is given 73,000 crores. What is the profit given? 73,000 crores. Say for example of Reliance Industries Limited, profit given is 73,000 crores. But in the other information, they are claiming that they have earned 80,000 crores of profit. Now, obviously, either financial information is right or other information is right. Both the information relating to the same year giving the two different figures cannot be right. या तो फाइनेंशियल इंफॉर्मेशन राइट होगा या अदर इंफॉर्मेशन राइट होगा. ऑन द बेसिस ऑफ दैट ओनली दिस स्टैंडर्ड हैज बीन क्रिएटेड. Understand again, on the basis of that material inconsistency which is coming between financial information and other information, this standard has been created. So basically this standard says that in case there is a inconsistency between what is written in financial statement, financial information, and what is written in other information, what is the auditor's responsibility in relation to that? We call it as material inconsistency. How you have to deal with this particular standard, how you have to deal with this particular situation. And one more thing, if this is going to be a relevant paragraph, this is going to be a relevant discussion between you and TCWG, so you have to include one para called other information para. Remember, it is not other matters para, it is other information para. If you remember, 700 series mein we have already understood it. Is it clear to all of you? This is how you have to deal with this particular situation. Are you getting the point? So let's understand how we are dealing with it. Now see, SA 720. What is the number? 720. What is the name of the standard? Auditor's responsibility relating to other information. This standard deals with the auditor's responsibility relating to other information included in annual report. The annual report में दो information होती है, financial information as well as other information. But when you find a material inconsistency between these two information written at two different places, then this standard arises. Next one. The information does not, this standard does not cover information given under the prospectus. So remember, 720 is not applicable to prospectus. 720 is not applicable to preliminary announcements made by the entity. 720 only and only covers annual report. It covers a which report? Annual report. Other than annual report, nothing is being covered in 720. Now, the objective of this standard to consider, is there any material inconsistency between OI and FI? What is OI? Other information. And what is FI? Financial information. Whether the auditor has obtained SAAE on such inconsistency or not. So obviously, when you will find any material misstatement or inconsistency, what is a major thing the auditor does? He tries to obtain sufficient and appropriate audit evidence. Remember, after that, we have to do that question as well, right? Now, next point, to identify, is there any inconsistency between OI and FI and OI and auditor's knowledge? Now, OI and FI is a major concern. Let me give you the example of OI and auditor's knowledge also. Say, for example, according to auditor's knowledge, there are total 12 directors in the company, but somewhere in the annual report, it was written we have 14 directors. So this is called the inconsistency between auditor's knowledge and other information. Other information is saying they are having 14 directors. Auditor's knowledge says that they have only 12 directors. Are you getting that? This is the case where auditor need not worry because both the informations are other only. Are you getting the point? Both the information are other and it has nowhere have any impact on financial statement. In such case of inconsistency between auditor's knowledge and other information given in the annual report, then in that case you can ignore. But never ignore if the inconsistency appears between OI and FI. Other information and financial. So if this is inconsistency between other information and auditor's knowledge, it is absolutely fine until and unless it is not raising any integrity on the financial statements, right? Now, once we come to know about the material inconsistency, once we obtain the SAAE, how we are going to have an impact of such on my reporting, how to respond accordingly and appropriately when he comes across such material inconsistency. So to report, you have to report other information only in accordance with SA 720 in this case. Is it clear? So note, if auditor finds inconsistency in financial statements, remember one thing, for the financial statement 700 to 710 will be used. But if it is relating to inconsistency in annual report, then in that case 720 will come. Are you getting it? Now, question is to understand some definitions. What do you mean by other information? Other information could be financial information, could be non-financial information, but definitely that information which is other than disclosed in financial statements and annual reports. It means that information in annual report, which is neither included in financial statement nor included in auditor's report, any information other than financial statement, other than auditor's report is known as other information. Other than financial statement, other than auditor's report is known as what? Other information. This other information could be financial in nature, could be non-financial in nature. This is what do you mean by other information. Now see, other information is such information which is first of all included in annual report. Again repeating, this standard does not cover prospectus, it covers only annual report, which could be financial or non-financial in nature, but other than those included in financial statement and auditor's report. Then only see, financial statement and auditor reports को अपन FI मानते हैं, and anything other than financial statement and auditor's report, we call it as OI, other information, right? Now, what do you mean by annual report? Annual report is a document containing the information on entities, financials, entities, operations. Annual report is basically a mix of everything. Every information about the company, be it financial, non-financial, operational, production, CSR related, every kind of information you will find it. On the Google, if you will Google it, you will find the hundreds of annual reports of the company. Download the Reliance or Adani's, you will automatically come to know what do you mean by annual report. It contains both financials, operations and other information like recent developments, risk profile, uncertainties, future outlook and governance matters. So basically the fight is happening is that something was other information written in annual report and I did the audit on financial information. There is inconsistency between OI and FI and that inconsistency is material in nature. How you have to proceed in such kind of situation, right? Now, what does 720 tells you to do that? Auditor shall ensure to have discussion with the management for availability of annual report document on timely basis. First of all, so you should tell to the management ki boss, when you will print your annual report, at least send me the draft copy or finalized copy to me before making it public to the outside. Before publishing it or before making it on public domain, at least give me one copy of annual report so that I can also read out and can see is there any material inconsistency between what other annual report, other information and financial information. So at least give me one copy and make sure that that copy should be available to the auditor on timely basis. Which basis? Timely basis way. Next one. What do you mean by timely basis? At least it should not, if it is not available, try to obtain WRL before signing the audit report. Let's say, for example, their annual report is not yet ready and you are about to sign your audit report. At least take the WRL ki yes, they are going to give me the annual report. Am I correct or not? And take a WRL that annual report preparation is a prime responsibility of whom? Management. Or if the WRL is also not available, at least try to obtain the copy of annual report or WRL before making of its circulation to the which parties? Third party. This is put two points put together is known as what? Timely basis. So what do you mean by timely basis? First of all, to tell to your client, I need a copy of annual report. If he's saying that annual report copy will take some time, give me the WRL. If he's saying WRL also is not going to be given to you, at least try to obtain annual report copy or WRL before making it circulated to the third party. Before it is going in the public domain, either of the annual report or the WRL should reach into the hands of the auditor, because anything coming after signing the audit report is of no use to an auditor. It is not at all acceptable. Now, once you get the annual report copy, you have to give the necessary reading. To give a necessary reading to the annual report document to find out whether there is an inconsistency between OI and FI or whether there is an inconsistency between OI and auditor's knowledge. Just now I gave you the directors wala example. That is an example of inconsistency between OI, inconsistency between the OI and auditor's knowledge. Then in that case, there is no worry until unless it is not impacting your financial statement. But major worry you have to do if it is the inconsistency between OI and FI. If between OI and auditor's knowledge, resolve immediately by communicating it with the management and TCWG. Simply management के पास जाओ, बोलो कि sir, you to told me there are 12 directors, but in the OI you are writing what? 14 directors. They might tell you that okay, 2 directors came in between, we forgot to tell you, we are ready to give you the WRL on the same. Then get it resolved immediately. Problem is never between OI and auditor's knowledge. Problem is when there is a material inconsistency between FI and OI. Is it clear, everyone? Yes, sir. Now, if there is a material inconsistency between the OI and FI, following are the procedure. Now, understand one thing very, very carefully. If auditor comes to know about such material inconsistency, yes, there is a inconsistency between OI and FI. Let's continue with the same example. OI says that we have earned 80,000 crores of profit, and FI says that, which I have audited, as per that 73,000 crores only coming. So there's a huge, humongous difference of 7,000 crores. So definitely this is a material inconsistency. Had it been 1 or 2 crores or 20 lakhs or 30 lakhs, I could have ignored. But 7,000 crore is a very huge difference, right or not? Then problem, now here the timing factor will be very important. When did you come across this material inconsistency? If the auditor comes across such material inconsistency before signing of audit report, before signing of what? Audit report, what you need to do? You need to bring this to the notice of the management. You need to bring this to the notice of management and get it corrected. You need to bring it to the notice of management and get it corrected and tell them that please correct your OI information. It is looking inconsistent with what? FI. But what if the management fails to correct it? Then go to the TCWG for the correction. First, you have to approach the management for the correction. Then if the management fails, then go to the TCWG for correction. Now, if the TCWG responds appropriately, what do you mean by that? TCWG says that, okay, we will do the correction. There is no problem. It's okay. But if the TCWG responds appropriately, perform the necessary procedures, but no further intimation or no further examination required. Are you getting the point or not? If TCWG responds appropriately saying that, boss, we will do the proper rectification, there is no other further action required. But if the TCWG does not respond appropriately, then try to withdraw from the engagement. आप engagement से withdraw करो. If it is practically possible. What do you mean by practically possible? If the law and regulation allows you to. But if the withdrawal is not possible, then act accordingly. If the withdrawal is not possible, then act what? Accordingly. Now, what do you mean by act accordingly? Now, if the OI is wrong and FI is right, matlab 73,000 crore wala figure was right and 80,000 figure wala wrong, so you should be thankful to the God. Okay, God, at least my audit related area is right, OI is wrong. Simply include one OMP para and bring it to the notice of the users. Ki boss, in the annual report, this particular figure of 80,000 is not 80,000. You should read it as 73,000 because FI is right and OI is wrong. Take the help of 706. But if the OI is right and FI is wrong, so boss, you have given me a wrong information. It means there was a profit of 80,000 crore, but you shown me only 73,000 crore. तो then तो definitely I'll modify my opinion as per SA 705. Are you getting the point? And I got the evidence. Either it will be qualified or it will be adverse depending upon materiality and pervasiveness. This is how you have to respond before signing if you will come across that there is a material inconsistency between FI and OI. Let's start from the beginning, right? Point number one, you came across there is an inconsistency before signing the audit report. You went to the management to get it corrected, but if the management fails, you raise the issue with the TCWG for correction. If the TCWG responds appropriately, there is no requirement of any further intimation or action. But if the TCWG responds inappropriately, then in that case, try to withdraw. But if the withdrawal is not practically possible, then act accordingly. What do you mean by act accordingly? If you'll come across that OI is wrong, but FI is right, take the help of 706 by using the OMP paragraph. But if you think that OI is wrong, OI is right and FI is wrong, then modify your opinion as per SA 705. 100% clarity. Okay. Now moving ahead to the other side. What if the auditor comes across that there is a material inconsistency after signing the audit report? Obviously, bring it to the notice of the management and get it corrected. Management is not responding properly. Bring it to the notice of the TCWG and get it corrected. TCWG responds appropriately. No further intimation required. But if the TCWG does not respond appropriately, try to withdraw from the engagement, but subject to the condition that such audit report shall not be circulated. If you are allowed to withdraw, you are saying that no, bhai, now after signing the audit report, and problem is that after signing the audit report, you have already given the audit report to the management. And you have to make sure that if they will allow you to also disengage or withdraw, you have to make sure that your signed audit report shall not be circulated, because that is wrong, that is unethical to circulate that report. Am I correct? Make sure that such audit report shall not be circulated. But suppose they are neither ready to surrender your audit report, nor they are allowing you to withdraw. So, आप एक काम करो, this is a course of action you have to do. Right. Now, if the report is already circulated, if your audit report is already circulated, annual reports are also circulated, then in that case, the things have gone out of your hand. And see, if the OI is wrong and FI is right, still it is good that your FI was right, at least, but it's still your responsibility is to give a public notice by taking an appropriate action after seeking a which advice? Legal advice. But if you come across that OI is right and FI is wrong, take the help of SA 560 and proceed accordingly. So what is 560? It is nothing but called subsequent events. Called which events? Subsequent events. So this is how you have to respond. It depends upon the timing. Did you come across this inconsistency before signing an audit report? And did you come across this inconsistency after signing the audit report? Now, if you are taking the WRL, remember one thing, if you are taking the WRL in respect of listed entity, as per the LODR regulation, where the WRL is received or expected to be received, either of that can be mentioned in auditor's report. तो आप ऑडिटर्स रिपोर्ट में मेंशन कर सकते हो कि you got the WRL or you are about to receive the WRL in your what? Auditor's report. But if it is a WRL in case of what? Unlisted company, only to be mentioned if the WRL is received or partially received. But remember one thing, if it is not received at all or they are telling you that in future we'll give it, that is not allowed to be mentioned in the unlisted company के case के audit report में. Now the question arises कि sir, we understood how to deal with the material inconsistency between other information and financial information. What to do next? The next thing is very simple, reporting requirements. आपको एक separate heading डालनी है. And what is a paragraph? I told you, other information para. What is a paragraph? Other information para. Again repeating, it is not other matters para. It is a other information para. Other information paragraph में आप क्या लिखोगे? The statement that management is responsible for the preparation of annual report. क्योंकि annual report you तो have not prepared. Who has prepared? Management. So statement that management is responsible for the preparation of annual report. Second thing, a statement that auditor is only limitedly responsible for the other information as it is out of his coverage area, because we were only engaged for expressing an opinion on financial statement. We were not engaged for expressing an opinion on other information. तो ये आप अपनी responsibility also define. Yeah, I am not at all responsible for OI. It is just that I came across that there is material inconsistency. That's why I am doing so. And next point, whether the WRL is received for the same or not, that also you have to write. Okay, did you receive the WRL or not? And if he has included that in OMP declaration that he does not modify his opinion on such information matters, definitely you know that whenever whatever we include in OMP, we always give a declaration that boss, that is not modifying my opinion on such matters, right? And documentation the same as it is as per SA 230 you have to give. You have to preserve all this documentation also for the 7 years, and you need to assemble it within 60 days of signing the audit report, right? So this was a very simple standard where there is a material inconsistency between the OI and FI. Now let's come back to that question. What was the question? There was a company whose non-current receivable standing around 500 crore rupees because of some challenges they face while dealing with the clients, but company is of assurance that they are fully receivable, and they gave the WRL to Mr. Piyush. Am I correct or not? Mr. Piyush took the WRL, and not only WRL, he included the EMP paragraph. The question was whether Mr. Piyush is right in including that EMP paragraph, and whether Mr. Piyush was right not doing any further audit procedures and simply relying on WRL or not. Now, what is your answer? Answer is Mr. Piyush here is wrong. Why Mr. Piyush here is wrong? Mr. Piyush should not. Now, what do we learn in 580? Everyone, please tell me. What is 580? WRL. Even though the management has given the WRL, what is the mota letter mein written in 580? WRL is neither a sufficient nor an appropriate audit evidences. Obtaining the WRL does not make you escape from your responsibility of applying your further audit procedures to collect a sufficient and appropriate audit evidences. WRL is neither a primary evidence nor a secondary evidence, not a sufficient as per quantity wise, not appropriate as per quality wise. Then Mr. Piyush only relying on WRL is wrong. Are you getting the point or not? I'm not saying he's wrong in including that matter in EMP, but first he should have applied. He's wrong because he relied on what? WRL. He should have applied the further audit procedures to collect SAE, whatever the company is saying, genuine or not, then recording it in the EMP paragraph, he was right in doing that. Now look at that. This is a straightaway answer given in your icai material. Now look at this. First of all, look at the presentation of the answer. They are saying that as per SA 706, emphasis of matter paragraph is a paragraph. So we are defining what this paragraph is there, which includes those matters which are already presented and disclosed in financial statement for the better understanding of uses of financial statement. फिर 706 में ऑब्जेक्टिव क्या है? ऑब्जेक्टिव है to bring out the two types of information which are additional in nature. Right or not? Additional communication, those matters which are already presented and disclosed, and those matters other than which are presented and disclosed. But the purpose of both the paragraphs is to enhance the user's understanding on financial statement. So here we are talking about EMP and here we are talking about OMP. It means ICA is expecting from you to mention the whole standard ka crux. Question was on EMP. First they defined EMP. Then it is belonging to 706. So definitely you are expected to quote both the standard, because 706 only does not talk about EMP. It talks about both EMP as well as OMP. Understood? Now let's understand the main point. Further, the auditor shall include EMP paragraph in the auditor's report, provided auditor would not be required to modify his opinion. When do we include the EMP? And EMP mein what is the statutory declaration there? We are not expressing or we are not having any modified opinion on such matters. But this 500 crores worth of receivables, don't you think they are looking modified? So including it in EMP is not wrong, but including it in EMP without doing the further audit procedures depending only upon WRL, that is the wrong action taken by the whom? Management. Now see this. In the given situation, auditor has relied upon the management representation letter only. He has not performed any other audit procedure like verifying contracts with the customer. He could have done that. Status of arbitration proceedings. He could have done that. Since management representation by themselves do not constitute sufficient and appropriate audit evidence, it is clearly mentioned in 580, boss. WRL is neither sufficient nor appropriate audit evidence. performing necessary audit procedures may lead to auditor to conclude that ki modification in opinion is what? Necessary. Again repeating, performing necessary audit procedures may lead to auditor to conclude that modification in opinion is necessary. In such circumstances, matter cannot be included in what? EMP. If you think that you are giving a modified opinion, then so definitely it is not at all a case of EMP. Please tell me, EMP and OMP, what is the declaration we write? We do not have any opinion, or we do not have any modified opinion on such matters. So if it is coming modified, how it can become the part of EMP? Neither it will become the part of EMP, nor it will become the part of OMP. It will directly go to the basis paragraph. Now, what they are saying, therefore, auditor should form his opinion by performing necessary audit procedures and obtaining sufficient and appropriate audit evidences. It is only when he concludes that modification of the opinion is not required. If he thinks that it is unmodified opinion, then it is very much justified to include this information in the EMP paragraph. If he thinks that after collecting the necessary audit evidences, after performing his procedure, if he thinks that modification is very much necessary, then including the EMP is not at all a right option. Then he should have expressed a modified opinion as per 705. तो यहाँ पे 3 standards का relevance आ रहा है. 3 standards का 580, 705, 706. Now what they are saying, it is only when he concludes that modification of the opinion is not required as a result of said matter in terms of what 705, then the said matter may be included in emphasis of matters paragraph. This is what you have to understand, everyone. This is what the presentation is looked from you. This is what the expectation from you. Let me tell you one thing very clear. Auditing examination mein everything is going to be interpretational. You just can't scroll around 706. You can see that in a single question, 3 standards have been asked. 580 WRL, 705 modification, 706. So it means what we are reading in the standard is definitely relevant to the extent. You have to make sure that you should do it. I hope I made myself clear. So what is the moral of the story, boss? If you think that your opinion is going to be modified, then definitely these paragraphs will not appear in your this information shall not appear in those paragraphs. But if these informations are such that they are leading it to the modified opinion, then in that case it should go to the basis para instead of EMP. But in case you think that your evidences show that this information is leading to unmodified opinion, then you may choose to include that information in your EMP paragraph. So 706, 705, 580. This is what I'm telling you. Read all the questions of ICA. I'm guaranteeing you May 24 is going to be the easiest paper for you if you'll rely on ICA material. Nothing can serve you better than ICA material. Nothing can serve you better than ICA material. Understand that point. I hope you all understood that. 100% clarity. Sure, everyone? Chalo. Let's proceed with this. Our standard and our chapter called audit reporting is also over. Right, everyone? Chalo. See you guys in the next video. Let's proceed with another chapter. Right? Okay, everyone. So now let's start with the next topic. The next topic is going to be very interesting, everyone. So far we have understood everything about, everything we know about essays, right? Standards on auditing. Then I told you that key standards on auditing. First of all, though, you need to understand this thing very carefully. See, understand, when you are a member in practice, when you are a chartered accountant, you may be engaged for assurance engagements, right? Or you may be engaged for compilation engagements. Which engagements? Compilation engagements. Now, under the assurance engagement, there are 3: audit, review, and assurance engagements, right? Now, audit and review always takes place on HFI, historical financial information. Means once the financial year will be over, these things will take place. Am I correct? So, audit and review are both nothing but the expression of opinion. Review may we give the limited assurance, and auditing may we give a reasonable assurance. But either it is auditing or it is a review, both are going to be connected with historical financial information, right? Now, when it comes to assurance engagements, SAEs, we do it on PFI basically. Prospective financial information. We call it a prospective financial information like project reports and all. All these three put together are known as assurance engagement because either we express an opinion or we express a conclusion. Now remember one thing, when we use the word SREs and when we use the word SAEs, we do not use the word called opinion, we rather use the word called what? Conclusion. What do we use the word called? Conclusion. Now here you follow essays, here you follow SREs and here you follow SAEs. Now essays are total 35 plus 3, 38 in number, including from your 200 series to 800 series, right? In that 800 series is specialized series, that also we are going to cover. Then SREs are nothing but only 2 in number. How many are? 2 in number. Then SAEs, there are total 3 in number. How many? 3. Actually, there are so many SAEs, but we have been notified only 3, 3400, 3420, 3402. Right? And then there comes the compilation engagement. Sir, what do you mean by compilation engagement? Compilation engagements are those engagements where you will be ending up doing AUPs. What do you mean by AUPs? Agreed upon procedures. What do we call them as? Agreed upon procedures. You will be doing those procedure only which is agreed between you as an auditor, between your management of the entity and the intended user. What he wants me to do that. Basically, compilation engagements are those engagements where there is no expression of opinion or conclusion. We never express any opinion. We never give any kind of conclusion. That is called compilation engagement. Second compilation engagement में you may be engaged for helping the management. You may be engaged for helping the management in preparation and presentation of financial statement. I'm again repeating, you are helping the management in preparation and presentation of financial statement. You are not preparing the financial statement. You are helping, assisting the management in preparation and presentation of financial statement. So obviously either it is agreed upon procedures or if it is a second kind of compilation engagement, no opinion, no conclusion. Are you getting another one? No opinion, no conclusion. In these kind of efforts, in these kind of areas, we follow SRS, everyone. What do we follow? SRS, Standards on Related Services. That chapter, we are going to do it now. It means we are not going to talk about auditing. We are not going to talk about review engagements. We are not going to talk about assurance engagement. We are only going to talk about completely different types of engagements, which most of the chartered accountants, which most of the students are not even aware of. But let me tell you one thing, when we got qualified in 2012, this used to be the part of our portion. Then it was eliminated for 10 consecutive years. And again, it has been re-included in your May 24 onwards examinations. Let me tell you one thing, they are very relevant. You know, these literally gives you a different vision towards our practicing profession. Right or not? Because I feel that the generation of chartered accountants who got qualified in the last 7 to 8 years are not even aware of these standards. So these are known as compilation engagements. What do we call them? Compilation. No opinion, no conclusion, because you are helping the management in preparation and presentation of financial statement. You are doing everything what the management is telling you to do. That is called agreed upon procedures. So in both the cases. So this one is 4400 and this one is 4410. Are you getting the point? So let us understand what do you mean by the term called related services, SRS. So basically in this chapter, we are going to make the use of what? SRS, Standards on Related Services. Is it clear, everyone? Let's understand what this standard is going to teach you. Now, next, what do you mean by related services? It is an engagement in which a practitioner, first difference, we never call ourselves as an auditor, we never call ourselves as an assurer, we never call ourselves as a reviewer, we only call ourselves as a practitioner, because you are a practicing CA, but practicing CA getting involved in compilation engagement. So it is an engagement in which the practitioner, what is the first word? Practitioner, it neither expresses any opinion nor gives any conclusion. Because when we do the review, we express the conclusions, and when we do the auditing, we give what? Opinion. Are you getting the point? But in compilation engagements, neither we are expressing any conclusion nor we are giving any opinion, and we are neither an auditor nor a reviewer. We call ourselves as a practitioner. Next thing, these engagements are designed just to enhance the degree of confidence of intended users. Now, let me ask you a very simple thing. Reliance Industries also want their financial statements to look very much better, to look more presentable, to look more fair. So definitely they may also hire the services of the chartered accountants practice who will be helping them in enhancing the confidence of the intended users. So if your financial statements are looking good, appropriately as per AFRF, everything is looking good, then definitely the confidence of the intended users will increase, and confidence of the intended users will increase more when they will come to know that a chartered accountant was involved in preparing and presentation of this financial statement. Like they do place the reliance on our auditing opinion, they do place the reliance on our review conclusion, they also place the reliance on our prepared financial statement. But again telling you, you are not preparing it, you are only assisting the management in preparing the financial statement. Right? It makes the user confident that chances of information being incorrect is very diminished. Now, obviously, remember one thing, be it any kind of engagement, your ethical requirements will remain same. Here also, we will be maintaining the independence, even though it will not be written. It will not be written in our compilation engagement, but here also we will maintain our independence ethical requirement. If I feel that they are asking me to do something which is unjustified and misleading, then I can simply give an withdrawal from the engagement. So yes, it makes the user confident that chances of information being incorrect is what? Diminished. Let's say, for example, your financial statements are getting prepared by a BCom qualified person or any other person, but your financial statements are getting prepared by taking an assistance of a chartered accountant. So obviously, your intended users' interest will be more enhanced if a CA is engaged in that. And they will be very much sure that, okay, now we can relax that there will not be any information which is going to be misleading, and chances of incorrectness are going to be what? Diminished. Am I correct, everyone? Now, next thing, frequently performed related services are preparation of tax returns. You can also be engaged for the preparation of tax returns, preparation of management and tax consultancy services, agreed upon procedures, that is called SRS 4400, which is going to be the next topic, and compilation of historical financial information, that is SRS 4410. This is what we have to in our portion. So let's start with the first one, SRS 4400, engagement to perform agreed upon procedure regarding the financial information. So, sir, what is this standard is telling? There are three parties involved. First of all, so you are not auditor, you are not a reviewer, you are not an assurer, you are just a practitioner. There are three parties involved. One is management, and one is intended user, and one is you as a practitioner. Now, this intended user wanted some information from the management, right? This intended user wanted some information from the management. So, he requested the management to do some procedures. But management engaged me to do such procedures. That's why it is known as agreed upon procedures. Agreed between the three parties. Who are the three parties? Me as a practitioner, my responsible party called management, and the intended user who wants that information to be carried out. So, engagement to perform agreed upon procedures regarding financial information. It deals with the auditor's professional responsibility to perform agreed upon procedures. We will call them as AUPs. Agreed upon procedures. It also deals with the form and content of the report. But sir, you told that no expression of opinion, no conclusion. Yes, opinion paragraph will be eliminated, conclusion paragraph will be eliminated, but rest remaining reporting you have to give. Here also you have to give the reporting, did I do the agreed upon procedures properly or not. Now, objectives, enabling auditor to perform agreed upon procedures agreed among the three parties. Who are the three parties? Auditor, the entity, and appropriate third party. I would say that instead of auditor, you should use the word called what? Practitioner. What is the word? Practitioner. So it is an agreed upon procedure between the practitioner, the entity, that is a responsible party, and the intended third party who is looking for that information. So let's say, for example, a creditor wanted to check the credit worthiness of my client. There's a huge creditor of my client who wanted to check the credit worthiness of my client. So creditor my client and me agreed upon doing some procedures which is going to bring out to the intended user, the creditor, the credit worthiness of my client. So he told me, okay, do this, do that, I want this information, that information. So basically this is not a assurance engagement, not a review, not an auditor, it is a compilation engagement. Here you're going to only and only restrict yourself to agreed upon procedure, neither 1% extra, not 1% less. And that too, which is agreed between the three parties, between you, the practitioner, the entity, the responsible party, and the intended user, the appropriate third party. Next one. Once you will do the agreed upon procedures to report only the factual findings of agreed upon procedures, you don't have to do any substantive procedures, you don't have to do any TOCs or something, only the factual findings which you will get by doing the AUPs that you have to give. No opinion, no conclusion, no assurance. No opinion, no conclusion, no assurance. Next point, to deliver it to the user, who the third party, who themselves will analyze the findings and draw their conclusion. You don't have to tell what you think about it. तुम्हारा काम क्या है? AUPs करना. Your work is only to do the agreed upon procedures, which is agreed between the three parties. Get your factual findings and give it to the intended user. Boss, this is my information, this is my data, this is my findings. He will analyze your findings and he will take the conclusion. He will take the opinion. You are not allowed to give any opinion or conclusion. You need to keep your mouth shut. Your work ends once you have delivered your factual findings to the intended user. He himself will analyze the findings and draw their own conclusion. Next one, this report shall be restricted to be used by the intended party, because obviously this report is going to be used by the intended user only. So you can add one paragraph in your report, restriction on use and distribution. What is a paragraph? Restriction on use and distribution, because this is a specific requirement of that intended user, may not be used by every other user. It is only and only good to be used by that person because you have performed only AUPs. You have not done the normalized substantive procedure, TOCs, ROMM, RAPs and all. You simply did AUPs. So this is going to be restricted to be used by that intended user only, right? This engagement is completely different from audit because unlike the audit, it only reports on factual findings. Audit method, we give the factual findings as well as express our opinion. But here you are only and only going to report on factual findings of your audit, like agreed upon procedures, with no assurance given to any user. No opinion, no assurance, no conclusion. Nothing is going to be given. Now, what are your general principles to be considered while performing this particular assignment? Obviously, first one, integrity. I told you that either it is compilation engagement or assurance engagement. You have to follow everything. Integrity, you have to be honest and sincere towards your work. Objectivity, be impartial and unbiased, and be confidentiality. You have to maintain the secrecy of the sensitive and confidential information. You will get it across your compilation engagement. Professional competence and due care, you should be updated and upgraded according to the requirements of the engagement. Professional conduct means your professional behavior, and definitely you have to follow your technical standards. What are our technical standards? We are following SRS. And you have to declare that in your report also. If this particular engagement has been conducted as per SRS 4400. Are you getting the point or not? Now, nowhere you will find the word called independence there. You will nowhere find the word called independence. But let me tell you one thing. Even though independence is not there, you still have to maintain little bit of independence. And in case you are not maintaining the independence, listen to this point very carefully. In case you are not maintaining the independence, then do mention that in your report that boss, I am not maintaining the independence, so that other parties can understand that you completely remain dependent in this particular engagement. See this point. Note number 1. Independence is not the requirement for the AUPs, but auditor still needs to comply with it as per the code of ethics. But if he is not independent, give a disclaimer that he is not independent along with his what? Factual findings. If you are independent, then you generally you have to maintain your independence. There is no problem. But the second case, what they are saying, if you think that you are completely not independent during the engagement, this compilation engagement, give a disclaimer that boss, I'm not independent along with your what? Factual finding. I'm telling you, sir, these standards I'll smoothly put it inside your head and you will never forget it. Now, what are the terms of engagement between the auditor, the entity and the third party? Now, what are the AUPs which we agreed? Point number one, there shall be clear understanding on the following matters. So there has to be no guessing or no doubt between three of us. There should be clear understanding. What is a clear understanding? Boss, it is neither an audit nor a review. So therefore, no assurance will be expressed. My job is to do the AUPs, get the factual findings, bring it to the notice of the intended users. Once I delivered my factual findings, my job is done. As a practitioner, he will see the factual findings, he will analyze the factual finding, and he will express an opinion. I have nothing to do with that. So there should be clear understanding. It is neither an audit nor a review. And then second, stated purpose of the engagement, only to report the factual findings. That's what I am telling you. I have no other obligation to deliver anything else. Only and only what I have to deliver is factual findings. Next point. Identification of the financial information on which AUPs will be applied. Yes, I do have to mention in my report, boss, these are the areas where I have applied the agreed upon procedure. So you have to identify, like suppose you applied the agreed upon procedures on balance sheet. Suppose you applied it on a P&L. Suppose you applied it on somewhere else. So you have to mention that these are the identified areas where I have applied my agreed upon procedure. No confusion is required. All these things should be super clear between all the three parties. NTE of specific procedures to be applied in case the need arises in addition to AUPs. If I am performing any specific procedures, the nature, timing and extent of those specific procedure also I have to disclose in my report. But remember, your report will be without any opinion paragraph and without any assurance paragraph. If limitation on in distribution and use should be clearly indicated. I already told you that this report is specially required to be prepared as per the directions given by the intended user. So there may be a possibility that you can add one paragraph called restriction on its use and distribution. You have to clearly mention that this is not for every user. This is only for this intended particular user. Clear? If the auditor thinks that this engagement conflicts with the legal requirements, do not accept the engagement. अगर आपको लग रहा है कि आपके ethical requirements, your legal requirements, and you should not accept it by any chance, say for example, that agreed upon the intended user is your one of your party where you do the statutory audit. Are you getting the point? So anything which is coming across your fundamental principles, your integrity and everything, or your legal requirements, say for example, you may get disqualified if you accept this compilation engagement, so better not to accept it. So these are the total 6 clarifications. First one, neither an audit nor a review. Second one, make sure that the purpose of this engagement is only to report the factual findings. Third, AUPs, identify the areas where you are applied AUPs, and if you have done any NT or specific procedure, that also you have to identify. Limitation on its use and distribution, that also you can include. And one more important thing, if you think that it is going against your legal requirement, don't accept it. This is something you need to clarify before accepting the engagement. Now, let's understand how do we plan this. Planning compilation engagement is like same thing how we plan our other engagements, right or not? We have to acquire the knowledge of client's business, little bit inside and outside knowledge. We have to form a team who can end up doing this AUPs. That's it. Only to ensure effective engagement. Like make a good team, have a good set of people in your team, and have acquired a limited knowledge of client's business, whichever is required to deliver this particular engagement. Now, what are the procedures and evidences? Procedures definitely are only one procedures, my friend. AUPs, agreed upon procedures, neither 1% extra, not 1% less. So only the agreed upon procedures, and in case the need arises, which procedures? Specific procedures you have to apply. Evidence is only and only for the purpose of factual findings. So you are not going to collect any evidences for your expression of opinion purpose or conclusion purpose. You only need those only for the purpose of what? Factual findings. And following are our AUPs. What are our AUPs? We generally inquiry and analysis. Same techniques which we do in our RAPs. Are you getting the point? Inquiry and doing the analysis, recomputation on estimation based areas, doing comparisons like analytical reviews and other checking arithmetical accuracy by doing the testing of details, doing observation in case inspection doesn't do well, doing inspection in case you need a specific evidence on that particular area, and the level of assurance level of factual finding you are looking for is very high, and obtain confirmations. So these are your AUPs, this is what your evidence, and this is what your procedure. That's it. Now let's understand how do you report in SRS. Obviously, the report will start with the title. What will be the title of this report? Independent Practitioners Report. What is the title? Independent Practitioners Report. Again, repeat. What is the title? Independent Practitioners Report, right? On audit agreed upon procedures. Now, addressee is definitely your intended user who has appointed you. Am I correct? Now, what is the next point? Identification of specific and what? Agreed upon procedures. Which agreed upon procedures and which specific procedures you have done. Then, performance of those procedures which are agreed upon with what? Recipient. Any additional procedures if you have agreed upon with the intended user. Then, a declaration that this engagement was done as per SRS. That is what I told you. You have to include one paragraph where you are completely declaring that this engagement was done as per the standards on related services. Don't forget to mention that. The same audit report like things are there, but you will not find one paragraph. Which is a paragraph? Yes, opinion and conclusion paragraph you will not find. Next one, identification of the purpose of engagement. What was the purpose of this engagement? You have to write that I was engaged for the definitely serving of this purpose. List of those specific procedures which you have performed in addition to your agreed upon procedures. Description of your factual findings. I told you your only purpose is to obtain factual findings and deliver it to the users, not for any expression of opinion and not for any expression of conclusion. Is it clear to all of you? A declaration that it was neither an audit nor a review and no assurance is expressed. That is clearly indicated that, boss, this was just a compilation engagement. We are not here for expression of any opinion and not expression of any assurance. Next one, a declaration that had the auditor perform additional procedures or audit or review, other matters would have come to the line. Yes, we will also give a declaration to keep ourselves on the safer side. If the intended user or the entity would not have put any restrictions on my procedures, had I performed any additional procedures, then I would have called it as an audit and review and I would have known about something more other than what I have known by just applying the AUPs. So you are simply telling that boss, I'm not the one who restricted myself. It was restricted by the intended user and it was restricted by the entity. Right or not? They told me to not to perform those additional FAPs and SPs. Otherwise, I would have known something more. Right or not? Next one, restriction on distribution and use para, that I already told you. Make sure that in case you do not want this report to be gone into any other hands, so you can use this paragraph, to alert the readers that boss, this is not for your use. This is only for the intended purpose of a particular person. Next one, a statement that this reports relate to ABCD, accounts, balances, classification or disclosure on whatever the cases you have applied your AOPs, date, place and signature, everything. And remember, here also you have to give UDIN. Yes, UDIN will be applicable here as well, right? Documentation, same like we do the documentation in case of companies, in case of our standards on auditing. So you have to make sure that it should be documented as per the SRS requirement. Means whatever the AUP procedures you have done, documented. On which areas you have done, documented. If you have taken any external confirmation or outside consultation, documented. If you have made the use of the internal auditor's work, document it. How you planned it, how you performed it, and what are the communications taken place between you and the management, document it. Same like auditing, but only thing what you don't have to document, neither there is any opinion and nor there is any conclusion. So that brings an end to your first SRS, that is called SRS 4400, called what? Engagement to perform AUPs, agreed upon procedures. Is it clear to all of you? 100% clarity? Yes or no? Yes. Okay, so let's understand the another SRS, everyone. SRS 4410, which is talking about compilation engagement. Now here, one thing very important you have to understand here, so definitely you have to use the word called practitioner. Plus, you are not preparing financial statements. You are assisting the management which is preparing the financial statement. Point number two, in case you think that if there is a material misstatement in the financial statement, you would like to communicate with the management and TCWG, and in case they do not agree to rectify the situation, you always have a right to give what? Withdrawal from the engagement. So these are the additional things. So remember how 4410 is different from 4400. 4400 you were only and only doing AUPs, that is a limited procedures. But here you are helping them in compilation of preparation and presentation of financial statements. So this standard deals with practitioner's responsibility who is engaged to assist the management in preparation and presentation of historical financial information without obtaining any assurance on that information. The boss, you are here doing the compilation engagement. So obviously this again is an engagement where you are neither going to express any opinion nor going to express any conclusion. Second thing, this standard also deals with reporting responsibilities on the engagement, and it can be a compilation engagement for FI, financial information, or a compilation engagement for a non-financial information, or both the engagements can be adopted by the same standard. So they are saying either your compilation engagement is for, say for example, helping in preparation of annual report, which is mostly containing non-financial information, or you are being engaged to help in preparation of what financial statements, which is basically a purely FI information. Either you are being engaged for FI compilation or non-FI compilation. This standard is going to be used in both the cases. That's what they're trying to tell you here. Next one, SQC1 will be applicable along with QCPPs as per SA 220. Now what they are saying that your documentation, your QCPP, quality control in policies and procedures, ethical requirements, acceptance and continuance of the client's relationship, everything, whatever we have learned in SQC1 and SA 220, that will be equally applicable. Only difference is you are not an auditor or reviewer, you are a practitioner and you are not expressing any opinion, not expressing any conclusion. That is the only difference. Here also you will issue a report, and report mein aap definitely likhoge it is neither an audit nor a review. Next point, what is compilation engagement? Now see, an engagement in which practitioner applies his accounting, financial reporting expertise to assist the management in preparation and presentation of financial information as per its AFRF. Now see, obviously here you are being hired to help the management in preparation and presentation of financial statement. So your more than auditing skills, we need to incorporate our accounting skills more. Am I correct or not? So that financial statements can be prepared in a better manner and which will enhance the confidence of the intended users. In this engagement, only PA in PP can assist. It means in case you want to understand and if you want to deliver compilation engagement, member in service is not allowed, only member in practice is allowed. Okay, this is one of the practicing profession. If you remember, in professional ethics, we have done a member deemed to be in practice if he is practicing in accounting. So that's why here also again you have to be a PA in PP. What do you mean by PA in PP? Professional accountant in public practice. Next one, there are following purposes of this engagement. Purpose number one, to comply with mandatory periodical financial reporting requirements as per the law and regulations. So sometimes if suppose it is a listed entity, so you have to go there quarterly to help them in compilation of financial statement because it is a requirement of law and regulation. For purposes which are not mandatory in nature, maybe for internal use of the management, maybe they are hiring you and helping you, or they are hiring you to compile the financial statement for their internal purpose. Suppose they see, first one is case of the financial statement which you every year has to prepare as per AFRF. That could be the purpose. So financial statement तो mandatory matter है ना. Non-mandatory matters क्या है? Maybe the management has hired you to help them in compiling the financial statement for their internal purpose. Suppose they wanted to take some decision, they wanted to have some decisions on the basis of financial statement, or they may be as an obligation put upon by the funding body for the continuation of the grant. Suppose there is one entity which is giving you the grant and that entity is saying that ki boss, we will only give you the grant if you will show us your financials as on ending on, say for example, 28th February 2024. Right or not? We want to compile your financial statements as on a particular date. This is a requirement of a particular grant funding entity. So it could be for internal purpose of the management, it could be by the demand raised by the funding entity, or it could be changes in entity's ownership and financing structure. Right or not? Maybe the entity is going for a merger or acquisition and they want to know that after the merger and acquisition, what will be the financial statement look like. So either you can be hired for the mandatory purpose or you can be hired for the internal purpose which are non-mandatory. Note, it is not an assurance engagement, so there is no responsibility on the practitioner either to test accuracy or to completeness. Obviously, we are not here, it is just that financial statements you are helping them in prepare. whatever the information they are going to give you, you are just assisting them in putting them at the right places. आपको TOC नहीं करना है, you don't have to do TOD, you don't have to do substantive procedure, simply information they are giving and you are helping them in compiling that information in the right place. That's it. So extraordinary brain of testing the accuracy, testing the completeness is required or not required? Not required. But remember, if you see any don't keep your eyes shut completely. If you see any and if you think that that is something to be rectified and they do not respond, you have every right to withdraw from the engagement. Right or not? You're only here for only here for compilation, neither for any opinion and nor for any conclusion. Objective. To assist the management in preparation of financial information by applying the accounting and financial reporting expertise. So, आपके auditing skills are not required क्योंकि auditing skills are required if you are expressing any opinion or conclusion. We need your accounting and financial reporting expertise. Reporting in accordance with SRS, I already told you this is what the sentence you have to mention in your report. Okay, I did this compilation engagement in accordance with SRS. One should be very careful while providing such an instance because it could be engagement where the management has already prepared HFI in draft or preliminary form. So sometimes क्या होता है, management would like to test you whether you are good in you are good in preparing the financial statement or not. They might be hiring you to test your integrity, to test your quality, to test your way of compiling the financial statements, right? Because they already have prepared the financial statement in a draft or preliminary form. So you should be very careful in such cases because they might be using you as a tool to test whether you are capable of being joining at the later stage or not. Next point. Judgments and estimates responsibility, selection, implementation of accounting policy is 100% responsibility of management. Again and again, I am telling you, you are here not preparing the financial statement. You are assisting the management in preparing the financial statement. Try to understand what I'm trying to tell. So remember one thing, judgments made, estimates made, accounting standards, accounting policies, selection, implementation, internal control system was, is and will be remaining the responsibility of whom? Management. It is not your responsibility, but especially if it's a special purpose framework, historical financial information, then consider the nature of the entity and intended user for such SFI. Suppose if you are being hired for preparing general purpose framework financial statements, then it's okay. Okay, you already know that 99.99% में this is going to be the case. But if it is a special purpose framework financial statement, you have every right to understand the nature of the entity, who is the intended user, and for what purpose is going to use that financial statement. Be careful in this case and be careful in this case. That's what they're trying to tell. Now, ethical requirements, same as what we have done in 4400. Independence, objectivity, confidentiality, professional skill and competence, professional conduct, and technical standard. But again, independence is something which you need to understand, right? And I already told you, if you think that you are not independent, give a disclaimer that okay, I have done this engagement by not being an independent. Now, terms of engagement for acceptance and continuance. Obviously, before accepting and before continuing the engagement, these are some of the clarities you need to have. Clarity number one, what is the intended use? Is there any distribution of such HFI along with the restrictions, if any? So let's say, for example, if it's a special purpose framework, so there may be a case that intended users are only going to use this HFI, and it is to alert the readers, are there any restriction required or not? So this kind of clarification you should have with the management before accepting this engagement and thinking that should I be continuing this engagement or not. Second thing, clear indication of the AFRF, whether it is a general purpose framework financial statement or it is a special purpose framework financial statement. Responsibilities of the practitioners and the compliance of ethical requirements. Understand that your responsibility is only to help them in compiling the financial statement. Your responsibility is not to express any opinion, not to express any conclusion. Only, but at the same point of time, you don't have to compromise on your ethical requirements. That is also you have to keep it in mind. What is the objective and scope of compilation engagement? What are your boundaries? What are your parameters? What is the exact purpose they are hiring you? You should be clear. So you should be clear on restrictions, if any. You should be clear on GPF or SPF. You should be clear on your responsibilities without compromising the ethical requirements. And you should be clear about your objective and scope. And moreover, you should be very much clear about the management responsibility. Take the WRLs from them. What is a WRL number one? They are responsible for the preparation and presentation of HFI. Second, they are responsible for design, implementation, and maintenance of ICS. Same what we do in auditing, we are doing it here as well. Because I don't want to be the finger, I don't want to be the person who will, on whom the fingers will be raised and said that no, 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 you should take the responsibility. No, boss, I'm here only for assisting you. I'm not going to take any responsibility. It was, is, and will be your responsibility only. Be it a preparation and presentation of financial statement, be it a designing, implementation, and maintenance of internal control system. And moreover, it is being clearly said in the standard, you are not going to do any TOCs or TOD. So I'm not here for checking any accuracy, completeness of the records. I'm only here for assisting you. And judgments involved in the HFI is also completely whose responsibility? Management. So be it the management estimates and accounting judgments, be it the preparation and presentation of financial information, be it the design, implementation, and maintenance of ICS, and be it accuracy and completeness testing. Everything is whose responsibility? Management responsibility. Be assured that they should know that you are not going to interfere in any of these things. And expected form and content of practitioner report is something else which you need to understand. Now, put all the above terms in a written form and get it signed and acknowledged by the management. That is what I told you, obtain WRL. But mention, now understand that, like, do you remember in 210 we say that if it is a recurring engagement, we don't have to send the audit engagement letter. Same is the rule applying here. If it is a recurring engagement, no need to send it again and again unless there are considerable changes. Are you getting the point? So simple management को AEL भेजो. AEL क्या था? ऑडिट एंगेजमेंट, सॉरी आपको बोलते कंपाइलेशन एंगेजमेंट लेटर बोल देते हैं, एंड टेल देम कि साइन दिस, साइन दिस, साइन दिस, ऑल दीज आर योर रिस्पॉन्सिबिलिटी. But you need not send it again and again if every year you are being hired for doing this same compilation. So my bad, I was not telling about WRL, I was talking about compilation engagement letter. So write all these things on your letter, write about your scope and objective, identify it as a GPRF or SPRF and restriction any imposed on you, and get it signed by whom? The management. And no need to send it again and again if it is there is any considerable change, right? Now performing the engagement. Performing the engagement हम लोग क्या करते हैं? Planning. Must obtain the understanding of the client's business, client's operations, AFRF, its accounting system and accounting records, because without this you can't understand and help them in preparation and presentation of financial statement. So you need to understand your client, his nature of operations, his accounting system, his accounting records, his applicable financial reporting framework. Now, must compile the financial information based on the records, documents, information, explanation, judgment provided by the management. Again telling you, you don't have to retrieve the information. Let them provide you the information, because you are not here for auditing and assurance or review. You are here for compilation. So be it records, be it documents, be it information, judgments, explanation, everything let them provide. You just need to fit in at the right place, right? Must discuss with the management and TCWG about some significant judgment if looks what appropriate. That's what I told you in the beginning. In some areas, if you think that something is required to be discussed with whom? Management, then do discuss it with the management. Don't take a step back. If you think that this is a significant management estimate which you should discuss, better you discuss it with the management. Next, must read their AFRF, obtain the better understanding of the management's integrity before accepting the engagement. Right? You have to check that their applicable financial reporting framework is looking good, and check the integrity of the management. Like same point, SQC1 में भी हम लोग यही करते हैं ना, acceptance and continuance of client relationship. What do? We check the integrity of the management. We will be checking our competency and capabilities of our team. We will be also checking whether my ethical requirements will be allowed to be followed or not. Same thing, you have to do it here. Only difference is you are not here for expression of any opinion and conclusion. Next thing, during the course of engagement, if the management is providing incomplete, inaccurate or unsatisfactory information, I already told you, if such kind of incident comes to your knowledge, raise it with the management. If the management does not rectify the same, raise the same thing with the whom? TCWG. If the TCWG also not responding appropriately, then the practitioner shall withdraw from the engagement by giving a reasons in writing. Because remember one thing, even though you are in the compilation engagement, I told you your ethical requirement should not be compromised. If you think that they are giving you inaccurate, unsatisfactory, incomplete information, and without this, the compilation of financial statement itself is not possible, then in that case, how the hell you can continue to go into this particular engagement? Then in that case, you have to understand one fact very clearly, ki boss, you have to tell to the management, I am not comfortable in this particular engagement. It's better that I would like to what? Disengage from here. Am I clear or not? So this is what you have to understand in this case. Next one, if the practitioner comes, ये तो हो गया case if they are providing you inaccurate, unsatisfactory or incomplete information. If the practitioner comes across that ki boss AFRF is looking improper, some amendments must be made for the compilation, else it will be a misleading financial statement. And compiled HFI is already what? Misleading. See, what is the difference between this point and this point? They are giving you incomplete information, inaccurate information, dissatisfying information without which compilation is not possible, withdraw. But if you think that AFR itself is looking inadequate, already prepared HFI are misleading, or if you will prepare the HFI according to the information provided by the client, it will be misleading, then practitioner must propose the amendments in such case to the management. And if the management is non-responsive, then withdraw from the engagement by giving a reasonable notice in writing. क्योंकि आपको पता ही है, if you want to resign, you have to give the notice. But if the withdrawal is not possible, then determine your professional and legal responsibilities. Take a legal advice and understand what you can do better in this case. Right or not? Or suppose they are not allowing you to withdraw, तो simply एक काम करो ना, must take a written acknowledgement from the management that they take the full responsibility of the final version of this compilation of HFI. क्योंकि बॉस यू तो रियलाइज कि इट इज मिसलीडिंग, यू तो रियलाइज कि एफआरएफ इज इनएडुकेट, यू तो रियलाइज कि बॉस इट इज 100% अनट्रू एंड अनफेयर, एंड विड्रॉल इज ऑल्सो नॉट पॉसिबल, दे आर नॉट अलाउइंग यू टू विड्रॉ. तो आपके पास ऑप्शन क्या बचता है? ओनली वन ऑप्शन लेफ्ट इज व्हाट? सिंपली टेल टू द मैनेजमेंट कि बॉस राइट वन लेटर WRL and give it to me कि you are taking the full responsibility for the final version of what? HFI. Right? Note. At regular intervals and on timely basis, practitioners shall communicate with the management and TCWG to draw their attention if it looks what? Appropriate. Now we have to understand how the practitioner's report will look like. Title will remain same, Independent Practitioner's Report. Second one, addressee. Third, declaration that he has assisted the management in compilation of HFI. Management responsibility para. Do you remember 4 responsibilities? Accounting estimates, preparation and ICS ke related, GC assumption ke related, anything, testing the accuracy, all that is whose responsibility? Management. Identification of AFRF, whether you were hired for the general purpose reporting framework or you were hired for preparing or helping them in preparing special purpose framework. Identification of financial information including its period and date. For which financial statement you were hired for? Were you hired for the complete set of financial statement, single set of financial statement? What is the period of coverage? Was it full financial year, 2 quarters, 1 quarter, semi-annual, 3 quarters, and along with the date? What is your responsibility? So again, you can see that auditor word is not written. What is the word written? Practitioner's responsibility para. And definitely you have to give a declaration that you have done this whole compilation engagement accordance with SRS without compromising your ethical requirements. Explanation, it is not an assurance engagement, so it is neither an audit nor a review, and you have not tested any accuracy and completeness, because testing the accuracy and completeness was already mentioned in the management responsibility para, as it was their responsibility. And if it is a special purpose framework, then who are the intended users, nature of the entity, for what purpose they are going to use this financial statements. Finally, ending with the date, signature and place. This is what your compilation engagements are looking like, right? Note 1, engagement partner takes full responsibility of his QCPPs. वो तो आपको लेनी पड़ेगी, क्योंकि as it is being told in SQC1 and SA 220, you always have to take the full responsibilities of your QCPPs relating to overall quality of what? Compilation engagement. Now, what are your documentations to be included? See, here, your documentations will be little bit extra as compared to AUPs, which we have understood in 4400. Point number 1, it includes significant matters which arise and how they were addressed. Suppose you came across any significant management estimate, you brought it to the notice of management and TCWG, and how they responded, make a document of that, because boss, your peer review and quality review will take place at that point of time. You will not be given a chance why it is missing in your documentation. right or not? So remember one thing, you have to document everything. Whatever the significant estimates you have come across, you went to them, how they addressed, how they responded, make a note of it. A record on information and explanations provided by the management. Whatever the information you needed, whatever the explanation you needed, how they provided it, in which manner, oral, written, everything has to be documented. Final letter. Do you remember that? Final letter where they are taking the full responsibility of the final version of what? HFI. A final letter where the management and TCW is taking full responsibility of the final version of HFI. This letter is so highly important because then only you can escape from your responsibility of not being engaged into it if something will happen wrong. And other records including trial balance, significant accounting records, etc. So this was your SRS series comprising of 4400 and 4410. Is it clear to all of you? I think I made it very clear and very simple to you. The 4400 was on agreed upon procedures, and this is on helping the entity in preparing and preparation and presentation of what? Financial statements, right?